8% to 1.1% on the Nasdaq. What powered the gains? The fact that the inflation print, which actually came through on Friday after a long run, remember we're not getting any kind of economic data out of the US at all, thanks to the government shutdown. But finally, that CPI number that came in for September, that was a shade below expectations. So it's keeping the market very, very excited about the possibility of a rate cut as soon as this week itself. So let's quickly run through the numbers and what the US CPI print actually told us. CPI is up 0.3% month on month. It's up 3% year on year, which was, as I said, slightly lower than estimates. And even core CPI was up just 0.2%. The expectation was a 0.3% rise. And that's what got the market super excited. So we saw equities move higher, not too much of a move actually in bonds. The 10-year yield has been very, very range around that 4% handle, and that did not change much on Friday. The dollar also little changed. The prospects are that the Fed will deliver a 25 basis points rate cut as soon as this week itself. If you go by the Fed watch tool, then the probability of that 25 basis points cut is as high as 98 to 99%. So that's what we're looking at with respect to the Fed. Now let's talk trade. And all of those conversations are stemming from the ASEAN meet that happened in Malaysia. So first things first, it seems that U.S. Treasury Secretary Scott Bessent, as well as the trade representative Jameson Greer, they've managed to thrash out contours of a deal between China and the U.S. And this framework should keep those 100% additional tariffs at bay that the U.S. president was threatening to levy starting November 1. And it should keep the supply of rare earth and other critical minerals and metals also going to the U.S. And in fact, Scott Bessent referred to this, saying that I think we have a very successful framework for the leaders to discuss on Thursday. Let's actually listen in to the U.S. Treasury Secretary talking about this all-important meeting. Remember, President Trump and President Xi are set to meet on Thursday this week.
This was the fifth meeting that I've had with my Chinese counterpart, the Vice Premier, Hu Lifeng, and we covered a wide range of issues, and I think we've reached a substantial framework for the two leaders who will meet in Korea next Thursday. So, on the table, the president had given me maximum leverage when he threatened 100% tariffs if the Chinese imposed their rare earth global export controls. So I think we have averted that so that the tariffs will be averted. And we have a regular quarterly meeting with the Chinese. It was scheduled for November 10th. Or before November 10th. I don't think we will have to have that. So we have been rolling the tariffs quarterly. So we agreed on that. We also agreed on substantial agriculture purchases for U.S. farmers. We agreed that the Chinese would begin to help us with the precursor chemicals for this terrible fentanyl epidemic that's ravaging our country. So I would say that it was a very good meeting overall.
Okay, so that's U.S. and China, but it's not U.S. and China. There was trade talk among a lot of nations, including Brazil. Let me move to that. Again, it stemmed from the ASEAN meeting where where Brazilian President Lula said, and I quote, that we agreed, that is, Brazil and the U.S. have agreed that our teams will meet immediately to advance a search for solutions to tariffs and sanctions against Brazilian authorities. So Brazil has hope floating. The U.S. signed a raft of trade agreements or frameworks with a bunch of Asian countries as well, including Malaysia, Cambodia, and Thailand, capping the tariffs at 19%. Some of the tariffs will go down to zero on some products coming in from these countries. And Malaysia, for instance, has assured U.S. that it will keep supplying rare earth. So it was all about trade talk. Now, the question for our market is, like Rima was saying, all global markets are hitting all-time highs. Will we hit all-time highs? And a lot of global economies are striking these trade agreements with the U.S. So will we get our trade agreement with the U.S. or not? That really is the critical question. The Nifty managed to spend the last week in consolidation at higher levels. But the sense is that because global momentum is very, very strong, if we get a breakout above 26,100, that could really turbocharge bulls and resume the upside momentum once again. And the supports, 25,600 to 25,700, which is about the 32%, 33% retracement of the current up move, that serves as a firm support for the market. So, Nigel, let's see if the bulls can build on their advantage and get to that all-time high this week.
Well, that's right. Uncertainty on the timing and the contours of the India-US trade deal, that's what's giving the bulls a little bit of jitter, and that's why we're not able to sustain at higher levels. But the last couple of days, there are a couple of factors that are not concerning. So let's highlight that first. The FIs, from being net sellers, they actually have either turned flattish or they've turned mild buyers. So that's good news. The second point is, yes, the Nifty ended lower. But the India VIX, which is now aligning for the new series, well, that cooled off a little bit. So the VIX is not indicating any kind of panic. It appears the weaker hands gradually are getting cleared out on that front. Moving to what is not looking very, very good. Well, one is that the Nifty for the last couple of trading sessions, we have come off 150 to around 200 points from the high point of the day. So unable to be sustaining at higher levels. That's point number one. The FI short covering as well, that's the second point I want to make. We saw 50,000 short contracts come down, and the Nifty rallied more than 1,000 points. If you look at it, from this 24,600 odd mark, we went up more than 1,000 points, and the short contracts came down considerably. Now, in the last two trading sessions, the short positioning has come down by close to around 30,000 contracts, but the Nifty actually hasn't moved up. So the law of diminishing marginal utility seems to be catching up. That is, in fact, you're getting the short covering, but the markets are not moving up. So now we'll have to see some cash market buying, and also the Nifty needs to protect lower levels. So let's get straight to that itself. What is the positioning right now? Yes, the FIs are still short, but they're 75% short now from around 94% at the start of the series itself. Moving to the couple of strikes, and remember the PCR from around 1.3, it's come down to around 0.76, which is moving to the lower end of the range, which normally risk-reward turns favorable sub that 0.7 odd mark. And you have two strikes, 25,900 call, 25,750 put. So you just punch in the premiums and look at the technical levels. The near-term resistance comes in at around 25,975. Last couple of trading sessions, we're trying to get that mark, and that's got rejected. On the downside, since we saw some bit of writing at around the 25,250 put, that's the level you don't want to break on the downside for today's trading session. So that's the one we're looking at. Going to the Nifty Bank, well, that ended pat in the middle of the high and the low in Friday's trading session, ended at around 57,700 odd. You'll want it to get closer to the high and make a fresh high, because the Nifty Bank has been leading the way. It needs to resume to its winning ways. Stocks that we're looking at, there were two stocks I highlighted in Friday's trading session towards the end. Possibly it goes into the F&O ban. That's what happened. SAIL as well as Sammaan Capital. We'll keep an eye out on both these two stocks. They moved into the F&O ban. And if you look at it in an index, since the commentary coming out with regard to the US-China trade talks, there's some industrial data, there's hope of, the industry, the economy on the whole getting some kind of stimulus, the metal index will continue to remain on my radar. So I'll keep an eye out on that index as well.
That is the tailwind driving all Asian markets higher. And adding to the cheer on China today is China's industrial profits data. Data is just out. Profits have gone up by 21.6% in September, the biggest jump in nearly 2 years. And this follows an August print of more than 20% on a year-on-year basis. So data coming out of China is very strong. The Chinese index is up 1%, but across the board, Asia is up 1 to 2%. And the GIFT Nifty, too, is pointing to a stronger start. Dow Futures, too, by the way, is up close to about 250 points. Mark Matthews of Bank Julius Baer & Co. is now joining us on the show. Mark, thank you very much for joining in. You take us through the setup as you see it right now, and where are we headed?
Well, one thing that you haven't talked about is the earnings season in the United States. And this is the big week where the bulk of the earnings will be coming out this week, including the big technology companies. But what we can say based on I think about 140 companies that have reported so far is the beats are exceeding both the beats last quarter and the 10-year average. So the beat rate for the companies that have reported so far is 83%, and the blended earnings for the S&P, in other words, actuals for the companies that have reported already, and then forecasts for the ones that haven't, is 9.2%. Now, when we began the reporting season, the consensus was looking for 7.8%. So I think, one good thing that you didn't managed to talk about yet, but is the earnings, and ultimately those are the most important thing for the stock market. The guidance seems to be quite optimistic too.
Does that mean the U.S. markets continue to move higher and higher? And plus, there is a potential Fed rate cut that's lined up this week. I mean, what's the outlook now from here on after this kind of a rally?
Barring black swans, and we had a potential black swan, it's still kind of lurking, which is the private debt market. And there was another bankruptcy in the auto lending space last week. Barring black swans, I don't think the auto loans are actually systemic. I suspect it has more to do with the repatriation of illegal immigrants. Then, yeah, the trajectory is that we will go higher into the end of the year. One reason for that is that this has been a retail-led rally. The institutions were skeptics, and they are looking embarrassingly underweight stocks. So I think that there will be a temptation on the part of many a fund manager to at least neutralize their positions relative to benchmarks, so they don't look like they're big pessimists in a bull market. And then I might actually point out an interesting technical setup, which is the NASDAQ 100 clearly is the big technology companies and innovative companies. Unless it declines 2.3% this week, it will have a up month, and that'll be the 7th consecutive up month in a row. Now, looking back in the history of that index, there were only 4 other times that the NASDAQ 100 had 7 consecutive up months. And if you look at what it did in the 12 months that followed those up months, there were double-digit returns in all of them, and the average was 17.5%.
All right. Hi, Mark. Good morning. Good to see you. And as always, what about these expectations of the India-US trade deal? We thought our turn was coming. It seems it's coming, but may not be as soon. How are you reading the commentary and the comments that have come through on this front? And what's your view on the Indian markets? What do you like out here?
Well, I thought that the Financial Times made an interesting observation last week when they pointed out the regions and countries that have basically agreed to Trump's terms are the ones that rely on U.S. military protection, like Japan, South Korea, and the European Union. The Chinese certainly do not rely on U.S. military protection, kind of the opposite, actually. And we have seen clearly in Chinese exports that the U.S. It matters, but not nearly as much as it used to, because globally, exports from China to the entire world are up over 8% in September to a new record amount this year in dollar terms, even though exports to the United States are down 27%. And as a percent of global imports, the United States is only 15% of global imports. So I think what we're seeing is that the exports to the United States, which would have been, of course, very important for many economies back in the 90s, back in the 2000s, even in the 2010s, are not anymore nearly as much. And therefore, I think we're seeing, in China and other places, these deals coming through. Now, the thing is that President Trump makes it up as he goes along. So, he just slapped another 10% on Canada because he didn't like what a premier of a province there did. So we don't know what he'll do with India. But I would say, broadly, the trajectory is positive. And the Indian market, as we know, has been a laggard in global terms this year. It wouldn't have been if there hadn't been this huge amount of foreign selling that we've seen so far this year, which I believe is basically just a reallocation into China. So I suppose the only bad news for India is that the better China does, the more it takes attention away from India.
Absolutely, Mark. And I was just coming to that because if we add it all up, at the end of the day, a global fund manager has many markets to go to. And it seems that the U.S. has thrashed out a deal with the Chinese. So, the rare earth issue, at least for now, has been sorted out. In that context, do you see any reallocation towards India? Because we still don't have clarity and specifics on our trade agreement with the U.S. The only other thing that we can kind of call out is the fact that earnings here have been looking good. Second quarter numbers are so far so good. People do expect a better second half. So how would you look at India in the global context?
I look at it favorably because I do believe the earnings will be higher than what the consensus forecasts. The consensus was too bullish last year. And so therefore this year it's playing it safe. But I think all of the cuts in taxes and fiscal stimulus and other parts that we've seen, and of course the cuts in interest rates will translate into a higher earnings growth than is the current consensus forecast. So I'm fine with it, but I don't think it's on many people's radar screens right now. They're probably trying to catch up on China because for 5 years, basically, global fund managers just forgot about China. They didn't look at it. And then all of a sudden this year, it's come out of nowhere to surprise them. They have a lot of homework to do, a lot of catching up to do. And I think that eats up their time, gives them less time to look at other emerging markets.
Thank you very much, Mark. Always great chatting with you and throwing in the perspective about the U.S. earnings too. So far this year, the Nifty is up about 9%, while the Chinese market, Shanghai, is up close to about 20%. Let's tell our viewers what we've lined up, the interactions on the show today. So first up, coming up at 8:35, the management of Brigade Hotel Ventures will discuss their Q2 earnings. 9 o'clock, we'll be joined by the Gantharia of Green Edge Wealth Services to discuss Kotak Mahindra Bank's Q2 earnings and the RBI guidelines on capital market credit. 9:20 will be our market master for the day, Dheeraj Agarwal of Ambit Investment Managers. 9:30, the management of Coforge will talk about their Q2 earnings, and following that, Shweta Daptardar of Elara Securities will be chatting with us at 9:40 to discuss her expectation from the NBFC sector ahead of earnings. 9:50, Amit Thawani of Nomura India and Rajesh Kumar, former chairman, State Bank of India, will join in as Blackstone plans to invest nearly 6,200 crore in Federal Bank for a 10% stake. And towards the end of the show in Indianomics, Lata will speak to veteran banker Zareen Daruwala, former MD and Standard Chartered, and Srini Varadarajan on RBI allowing banks to do acquisition finance and on the new foreign banks' interest in buying shares of Indian banks.
Time to slip in a short break. We've got a lot of stock-specific action to track for you today. We get to that in just a bit in our special Top 10 segment. I give you a sneak peek now, though. Dr. Reddy's, Coforge, SBI Life, eClerk Services, NCC, PTC Industries, Auto Pharma, and Laurus Laboratories. All of them will react to positive news flow, while Kotak Mahindra Bank as well as SBI Cards could see a mixed reaction. And no stock from our Top 10 will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. You're watching Bazaar Morning Call. It's a Monday morning. The cues are looking up. Asia is strong. The handover from Wall Street was positive, and the Gift Nifty is suggesting a stronger open. But what about stocks? This is our research team standing by with CNBC-TV18's list of top stocks for the day. And the first up is Kotak Mahindra Bank. Gaurav, how did the numbers look?
Well, yes, when we look at the numbers, those were inline set of numbers, and let me take you through them. First, when we look at net interest income, that increased almost by 4%. Net interest margins now that have declined almost by 11% on a sequential basis, but at the same time, it was a bit lower than the street's expectation. But management says that from here on, we will see some net interest margins increasing going ahead. When it comes to PPOP, we saw around 3% growth there, and the reason being that OPEX that was flat on a year-on-year basis in this quarter. When we look at profit, now that has declined almost by 3%, but it was almost in line with what the street is expecting. Now, what remains another key positive is that the credit cost that has come down almost by 14 basis points, and now management says that from here on as well, we will see some kind of moderation in credit cost. There were a few positives in terms of deposit growth as well, because CASA that led the deposit growth. CASA deposits grew almost by 7% sequentially. When we look at advances growth, that was highest if we compare it with other peers, and at the same time, credit cost is also likely to decline. But there is another room for discussion is that when we look at the brokerage's estimates and expectations, the profitability is still a question, given that bank is currently trading at a premium when it comes to valuation, and that is the reason why we may see mixed reactions, because inline set of number is what we saw from Kotak Mahindra Bank, but from here on, how the bank performs is a key thing to watch out for.
Okay, all right. So Kotak Mahindra Bank is going to be on our radar. Thank you, Gaurav, very much for that. Well, we also had another biggie. Dr. Reddy's report numbers, post-market hours. Ekta, morning, how do the numbers look?
Well, they look good. The revenue was up around 9% this quarter. The margins came in better than expectations at 26.7%. The street was anticipating around 25.7%. And the profit growth was better than expectations as well. So it came in at around 1,426 odd crores. North America, as expected, declined around 13% year on year. So that was expected. But we had Europe, which did well because of the acquisition that they did for an anti-nicotine or anti-smoking therapy drug. So basically that did well. So it was up around 138% year on year. India did well. It was double-digit growth around 13%, and emerging markets performed well as well. So all of the other geographies really made up for the pressure that was expected in the US markets because of Revlimid generic going generic, seeing more price erosion. Now, Dr. Reddy's, the big trigger is going to be semaglutide, where they will be one of the first players for semaglutide in CY26. Canada is going to be something where they could get approval in the next couple of weeks. It'll be a big trigger. They've received approval in India as well, and they will be launching in 2027 once it goes generic. So that'll probably be another big trigger to watch out for Dr. Reddy's. And if there's any kind of negativity in the numbers, it'll be cushioned by semaglutide, which is the next big thing to watch.
Okay, all right. Thanks a lot for that, Ekta. We're going back to Gaurav. Gaurav, tell us about SBI Card.
Well, yes, it was a bit of a miss when it comes to numbers, and I'll tell you why. What happened is that in second quarter, at the end of second quarter, we saw festive season kicking in, and that is the reason why when we look at SBI cards, the revolver, they decline. As a result, when we look at interest income, that has come down. Almost that remained flat on a year-on-year basis, and this was seen in the net interest margins as well, because when we look at yield on funds, that declined almost by 52 basis points on a sequential basis, and net interest margins that remained flat on a sequential basis. Apart from that, what happened is that because of the festive season, again the operating expenses, they increased because of the promotions, and as a result, when we look at operating profit, that declined almost by 10% on a sequential basis. Now, when it comes to credit cost, we are seeing a sign of relief because credit cost has come down to 9%. Remember, this is the fifth consecutive quarter where they are actually reporting credit cost at 9% or above. But at the same time, management says that from here on, credit cost is likely to remain below 9%. So that is a sign of relief. But apart from that, when we look at profit, that declined almost by 20% on a sequential basis because of all these factors. Now, going ahead, what is positive is that credit cost, which is likely to decline and sustain below 9%. Second is that net interest margins, that they are guided to remain range bound. And third is that third quarter, they believe that we will see some kind of bounce back in terms of yield. So that is something which is positive. But in terms of numbers, specifically in Q2, weak set of number, and that is the reason why we may see some kind of mixed set of reaction on SBI cards today.
Oh, okay, all right. Got that, Gaurav. Thanks very much. So mixed performance, but at least there's some relief on asset quality and credit cost. Got that. Rima, Coforge, once again, top honors in terms of growth, leading the charge for the sector?
Indeed, very strong growth. So the top line growth came in at 5.9% on a quarter-on-quarter basis. EBIT margins expanded by 80 basis points to 14%, again ahead of street estimates. And the bottom line too, aided by a forex gain, was strong. Now, in the prior quarter, there were some concerns because of the free cash flow. The company had announced a capex in the data center. Margins were a bit subdued. So the street was a bit nervous. But these numbers have allayed all the concerns. The company also, says that H2 will have robust growth. On margins, they're saying that we achieved 14%, which was a goal in Q2. Now, for the full year, we could maintain about a 14% growth. But thereafter, we don't plan to expand margins. Our focus is going to be on growth. And again, even on free cash flow, their guidance was 75 to 80%. In Q2, they managed to do better at about 85%. So, it's allayed the concerns. It's done very well. It's beaten expectation. So the street is quite excited with this performance.
Okay. Actually, we'll be speaking with the management at 9:30 a.m. We will have the top boss at Coforge join in for more color on what's been another robust quarter. Sudhir Singh is going to join in, and he'll give us an outlook about the rest of the year on what the strategy is going to be like. Okay, with that, let's move on. SBI Life had reported numbers just as the market was closing out on Friday. Let's look at the fine print now. Yash, morning. Tell us more.
Well, good morning. So the numbers look better than what the street was anticipating on most counts, and hence I'm going with green on the stock to speak about specific numbers. The new business premium has come in line with what the street was anticipating, but a strong growth of about 27.5% on a year-on-year basis. The total AP, that has come ahead of street estimates. It's grown by about 10% in the second quarter. Retail AP growing at about 5% in the second quarter. Importantly, a very strong growth has been observed as far as value of new business is concerned, which has grown at 14%, coming in at about 1660 crore rupees, also ahead of the street estimates. VNB margins, they've been ahead of the street estimates, growing at 100 basis points in the second quarter, coming in at about 27.9% as compared to 26.9%. The stock hasn't done much. It's up about 1.5% in the last 3 months, 3% in the last 1 month. Not particularly the most expensive, but not the cheapest stock as far as the sector is concerned. With the strong numbers, the stock positioning, going with green on SBI Life.
Got it. Thanks for that, Yash. Hopping across to Vinny. She's here to tell us about eClerx. Morning, Vinny.
Hi, good morning. So in terms of numbers that have come in for eClerx, good set of numbers from the company. When you're looking at it in terms of revenue growth, quarter-on-quarter basis, around 7% revenue growth. Margins have seen an improvement as well of around 300 basis points. And profits have seen a growth of around 31% on a quarter-on-quarter basis. Constant currency growth, that has also seen a good improvement. 5.4% growth in terms of constant currency in Q2 FY26. Now, what is positive? Obviously, the new deal wins, that has continued to see a growth sequentially. $46 million of new deals, ACV deal wins worth is what the company has received in Q2 FY26. Overall, they managed to see a broad-based growth across industries. Where there was a bit of a miss coming in or a lag was BFSI segment as well as fashion and luxury. That segment didn't see as much as a growth as the other segments saw coming in. Apart from that, obviously, the company has also announced a buyback of around 300 crores. Tender offer price is around 4,500 rupees per share. The cash and cash equivalent on the books as on Q2 FY26 is at around 1,250 crores. Important to keep an eye out on that, but green is expected on the screen for the stock today. Good numbers.
Okay, all right, got it. Thank you very much for that, Vinny. Well, let's move on back to Ekta then for more details on Aurobindo and Laurus Labs. Ekta?
Well, interesting that they are in focus, and again because of Hetero, which is basically an unlisted pharmaceutical company, and they've received a Form 483 now for their warehouse, which is quite scathing from the US FDA. So the read-through for Aurobindo and Laurus would be positive, because if in case they do face compliance issues from the US FDA, which is likely because this is second Form 483 that they've received for the same inspection, then that means that it could be a positive for Laurus and Aurobindo because they are in the same business. Hetero's ARV or antiretroviral business could be impacted, and that means that the likes of Aurobindo and Laurus, which basically have an overlap with Hetero, could possibly gain. Just want to point out that in terms of the observations, it's important to just put some color on it. The access to the warehousing or where they store the APIs for the US market was not made readily available for the inspection. The facility was not even disclosed to the US FDA. So the compliance issues seem to be quite serious. The windfall gain or maybe a marginal amount of gain could be for Aurobindo as well as for Laurus. So maybe those stocks would be in the green on account of it.
Thank you, Ekta, for that. It's over now to Vivek for NCC and PTC. Vivek, NCC seems to have won a very large order.
Well, that's right. Just to put this particular order in context, the company had given an order inflow guidance of close to 22,000 to 25,000 crore, and this particular order itself is close to 7,000 crore, 6,800 to be precise. So it's a significant chunk, and it goes a long way in actually helping the company going ahead and achieving its order inflow guidance. Let's have a look at the order itself. The company has received a letter of award from Central Coalfields, which is a subsidiary of Coal India. Now, this is for a project in Jharkhand where NCC will extract as well as transport coal to the Shivpur siding facility. Contract value is a little over 6,800 crore. Total contract period is 7 years, which includes 360 days of development period. Remember, at the end of Q1, the company's total consolidated order book stood in excess of 70,000 crore. At the end of Q1, the company had received 17% of their order book, or order inflow guidance rather, of 22,000 to 25,000. So this goes a long way. The other stock in focus is PTC Industries. The company has received a large purchase order from Gas Turbine Research Establishment, which is an arm of DRDO, which is the Defense Research and Development Organization. This particular order is for ready-to-fit single piston turbine blades and vanes. Now, the company has not quantified this order given the sensitive nature of this particular order, but they have said that the purchase order is significant and expected to have a positive impact on the company's revenue.
Okay, all right. So two companies in focus on the back of order wins. We'll keep them on the radar as well. Thank you for that, Vivek. Let's quickly recap our list of stocks to watch then. The ones that have positive news flow around them this morning would be Dr. Reddy's, Coforge, SBI Life, eClerx Services, NCC, PTC Industries, Aurobindo Pharma and Laurus Laboratories. Kotak Mahindra Bank and SBI are likely to open on a mixed note, and no stocks really on the red side of the screen today. Okay, so that's the equity list for the morning. Let's go across to Manisha for all the headlines from the commodity markets. Manisha, good morning. I'm sure even the commodity markets are looking out for that all-important Federal Reserve meeting. What's the big headline for you?
Oh, well, absolutely. U.S. Federal Reserve meeting is one, and then you have European Central Bank, Bank of Japan. So there are three, policy meetings that are coming up in this week, and the market's clearly jittery ahead of that. But I'll start with the gainers first, and the crude oil prices, after gaining 7.5% in the previous week, have started this week on a positive note as well. Well, U.S. announcing sanctions has been one thing, but the expectation or a trade deal possibility between U.S. and China has been very, very strong, and that is what is keeping many of these industrial commodities on the higher side. So not just crude, when you look at the base metal prices, aluminum is trading in the positive. Copper prices trading near 3-month highs. The threat of 100% tariff from U.S. to China is off the table, is what we've seen or heard over the weekend, and that clearly seems to be supportive. But yes, the safe havens like gold and silver, after that very sharp decline in the previous week, have continued to decline in this week as well.
Okay, all right. Thanks a lot for that, Manisha. Well, we'll slip into a short break. On the other side, we'll get some fundamental analysis going. We have Dharmesh Kant, Head of Research at Chola Securities, who joins in. Welcome back. Hope you're having a good morning. Well, as promised, let's get in Dharmesh Kant on the show. Hi, Dharmesh. Good morning. Good to see you win. Dharmesh, you got a lot of results over the weekend. Dr. Reddy's, Kotak Mahindra Bank, and various other names. Anything stood out for you in terms of an earnings reaction that could turn into an actionable?
Yeah, good morning, Nigel. Thanks for having me on the show. The results were more or less in line with estimates across the board. Dr. Reddy's was a bit of a disappointment, particularly the North America kind of a business. But its foray more into Europe and Africa and other Asian countries may, stabilize the things going forward. So but that we have to see. We are having a neutral rating on that. But Kotak Mahindra Bank stood out on the results front, particularly the asset quality front, which was a problem last quarter. This quarter, there seems to be out of the woods. The things have improved both on gross NPA and net NPA. Trade cost has also come down by 14 bips if you look at sequentially. At the same time, slippages were lower. Advances were quite great. I mean, 15% kind of advances goes as compared to, say, ICICI or HDFC, which has grown by 11%. NII growth was not that great, 6.5%, but that was more to do with the dip in the NIMS, which I think is the last quarter of dips, provided there is no further rate cut coming from the RBI going forward. That can again be a NIMS dilutive going forward for next 2 quarters. So net, taking the valuation into account at 2.3 times price to book 1 year forward multiple, it looks a pretty attractive bet. So Kotak Mahindra Bank looks good from a buying perspective. And ITC Hotels was another counter which looked, particularly great. Seeing the kind of, euphoria in travel and tourism across the board, we think the disposable income which is there in the hands of the people, quite a chunk of it is going to go into this side. And there, I think hotels are particularly well placed. ITC Hotels being there, at the same time, Taj VK or East India Hotels, one can look from the valuation perspective, which is comparatively cheap compared to their peers. So this is the sector which we think for next 2 quarters, healthy investment trading bets can be played out.
You'll want to listen in to the next conversation, Dharmesh. In a bit, we'll have the management of Brigade Hotel Ventures also joining in. But before that, I wanted to get your views on Reliance Industries, because there is a big announcement from Reliance Industries. The company has joined hands with Meta. They will be forming a joint venture which will develop enterprise AI solutions. The new entity will be called Reliance Enterprise Intelligence Limited, REIL. This was announced by Mukesh Ambani at the AGM. 70% to be held by Reliance, 30% by Meta. And initially, there will be an investment of $97 million. Now, considering that India has sort of been starved of these AI plays, and this would be an AI play. It starts off small, but there is going to be the data center, etc., cutting edge. How would you approach this news from Reliance Industries and the step that they have taken?
Yeah, good morning, Reba. It's again a positive development on the part of Reliance Industries, and they have been doing the right things across the divergent verticals. So AI is one platform where the focus has been quite high, including the data centers and all. And we believe that the discounting of the SOTP-based kind of valuation has still not happened for the AI business and the new energy vertical business, which is there with Reliance Industries. The present market cap discounts the other 4 or 5 verticals which are there in the play. And there too, we think that retail division is undervalued. I mean, 2 times the sales, whereas others in the same basket is trading at 6 times the sales. So there again, a rating is needed, and market will definitely do that. Reliance Industries happens to be our top pick in the Diwali pick from this summer to next summer. I think it's, if you are holding it for a multi-year, 2 to 3 year kind of a play, as the discounting of AI vertical and the new energy business comes into play. So it's definitely a multi-bagger to my mind. I mean, double X from where we are. But from a 1 year perspective, we are penciling in a target of 1650 for Reliance Industries.
Okay, all right. Dharmesh, I request you to stay with us. For the time being, let's welcome our first management on the show, Brigade Hotel Ventures. That's the first management on the show. They reported a softer set of numbers in the second quarter, but the debt repayment has boosted the profitability. To discuss this and more, and what's to be ahead, we are joined by Nirupa Shankar, the Managing Director at Brigade Hotel Ventures. Hi, good morning, and good to see you in, as always, Nupur. Well, the last quarter was a little bit softish, Nirupa. But tell us, what kind of numbers should we look at, in the second half of the year? Whether it's with regard to the RevPAR, whether it's with regard to the occupancy, how do you see things shaping up, and what are the targets on that front? Nirupa, go ahead.
Yeah, good morning, everybody. Thank you for having me, Nigel. Our quarter two has actually been pretty good. Quarter two, as you know, in the hospitality sector is one of the softer quarters, but we have managed to show a 20% increase in revenue. We've managed to show a 13% increase in RevPAR, and we've also managed to show a 58% improvement in profitability. So according to us, the quarter went pretty well, and we're pretty happy with it. Obviously, the only thing is with the EBITDA margins, I would say we had a one-time additional expense. So that reduced the EBITDA margins slightly. But if that was not the case, our EBITDA margins were also on track. Same store EBITDA margins, we would have shown about 36% of EBITDA margins. So overall, the quarter went pretty well. Coming up, I think, as you already know, the second half of the year for the hospitality industry is generally the stronger year, with the wedding season kicking in, a lot of MICE and conferences taking place in the second half of the year. So we believe that especially the coming 2 quarters will be extremely strong, especially with months of November, December also looking very strong in the coming quarter.
All right. What is the target ARR though? You have that 5-star property that's going to be coming in on stream. So if you could help us out on that front, what should it look like? Directionally, where does it head to?
Typically, the ARRs that we conservatively take is around 10%. I mean, you want to take either high single digits or low double digits for an ARR growth as a conservative approach. But overall, if you look at the top line that we typically aim for with the same store hotels, if we just do a like-to-like, then we are looking at least mid-teens to high teens kind of a growth rate. And I think that's a very sustainable growth rate. Of course, some quarters you might do better, some quarters you might do worse. But overall, for the year, I think something in the range of mid-teens to high teens is a very acceptable and a sustainable growth projection.
So, Nirupa, hi, morning. So, just to talk about this going forward, when you say second half is going to be stronger, I mean, can you quantify that? Let's also talk about how many more rooms you'll be adding or how many more keys you'll be adding this year. What the rollout is for the next year plans, and then therefore that gets us to the question of investments and debt as well. So what are you working with in terms of debt levels this year and then rolling over into next year?
So, our current debt is extremely healthy. We just completed our IPO process, so we were able to reduce our debt level significantly. Our cost of borrowing also came down from about 8.6 to 8.2%, which is again one of the healthiest in the industry. Current debt levels are not very high. It's only about 200 odd crores, of which about 160 crores is to the parent and another 40 odd crores is an overdraft facility. In terms of debt to EBITDA, I would say the ratio is 1:1, but debt is to equity is currently 0.22. So, and this is gross debt. If you look at net debt, it's actually negative. We have more cash and cash equivalents on the book. So our net debt is actually negative, but the gross debt is around 200 crores, as I mentioned. So it's in very healthy percentages. Going forward this year, as you know, we're a development company. Hotels do take their time to develop, but we have a huge number of hotels in the pipeline. Currently, we have 9 operating hotels, and we are in the process of building out 9 more. Most of these hotels will come out after the year FY 28, 29, and 30. So they're under various stages of design, development, and construction as we speak. So we are building out, like I said, we're doubling up our portfolio. Today we have 9 hotels and 1,600 odd keys. The portfolio will double up in the years to come to 18 hotels and 1,700 keys. And these are hotels where we've already signed up the brand. The kind of investment we're looking at, a lot of our portfolio will undergo a bit of a change because we are moving into more of a 5-star luxury deluxe category. So the average cost per key investment that we're looking to put in, if you look at the construction cost, land, internal accruals, debt, all the pre-opening expenses, etc., it should be about 2 crores a key. Which amounts to about 3,400 to 3,600 crores overall that we would look to put into this company as in terms of investment.
And that's going up to FY 28, right? This is investment
Over the next 4 to 5 years, I would say. Some hotels will start coming into the portfolio in FY28, but the hotels will, like I said, the 9 hotels will start coming in 28, 29, 30. So I would say this investment, you can say, is going to come in over the next 5 years. I would put it that way.
Nirupa, hi, this is Reema here. I remember our last conversation around the time of the IPO, and you said that we're planning to do in the next 5 years what we did in the last 16 years. And, you know, you're on track in terms of doubling of keys. From 1,600, you're planning to add another 1,700 keys by, you know, in the next 4 to 5 years. Just, you know, talking about the near term right now, can you give us an indication of the kind of advance booking you have for the October, November, December quarter, or even for Q4 FY26? What could the potential occupancies look like, considering it's a strong quarter for you?
Currently, the occupancies our portfolio is trending around 75%. It's the way hospitality is. The advanced bookings are not a good reflection because the time to book is actually reducing. You know, so you get a more accurate picture maybe 2 weeks in advance rather than a few months in advance. But like I said, our portfolio is trending at around 75-76%. I expect this to continue to trend in a similar way or go up by 2-3 percentage points, which is what we have sort of stated, where we are seeing the major growth coming from the ARR. In fact, our ARR growth has been about 14 to 15% for the entire portfolio. But if I just look at the Bangalore hotels, where most of our hotels are currently based, at least 40 to 50% of our hotels are based here, it's almost 20%. So there's been a push for ARR drive. Occupancy, like I said, our hotels are 75 to 76% is a pretty healthy occupancy rate for the entire portfolio. So while it may go up by a few percentage points, but our focus is on actually on the ARR, which is where we're seeing more of the growth.
Okay, we'll leave the conversation here. Nirupa, thank you very much for joining in. So the key metric to track for Brigade Hotel Ventures will be the ARR growth, the average room rent. In Q2, 14%, but in some of the key properties in Bangalore, it's at 20%. And as the company moves towards a more premium offering in terms of hotels which are in the pipeline also, the company expects the ARR to remain very strong. Get into a break then. On the other side, Sudarshan Sukhani and Mitesh Thakkar will join in with some technical trading ideas. Stay tuned. Welcome back. As we prepare for opening, let's go across to Hormis now, who joins in with a list of companies you should have on your radar where the shareholder lock-in ends today. Hormis.
Morning, Rima. And 10 companies whose shareholder lock-in ends today. Interestingly, 6 of them are trading below their IPO price. And shares worth almost 17,000 crore rupees free up for trade. And a lion's share of that comes from Vari Energies. That around about 16,000 crores comes from that itself. Of course, we need to mention that the lock-in period ending does not mean that all of those shares will be sold in the open market. They just become eligible to be traded. You take a look at this list briefly. You look at Atlanta Electricals, around shares worth around 150 crores free up for trade. The stock has done well since its listing. 1 month lock-in ending today, 40% higher than its IPO price. Seshasai Technologies, the stock saw healthy subscription in its IPO, but the stock is still down around 10% from its IPO price. That will see shares worth around 112 crore that will be freeing up for trade today. GNG Electronics has done well again from its IPO, 37% higher from issue price. That shares worth around about 100 crores free up for trade today. The three-month lock-in period ending. IndiCube stock around about its IPO price, but still below it, around 150 crore worth of shares, 3% of its outstanding. And here too, there is a 3-month lock-in period ending today. Jaro Institute was another IPO that was in the news, down about 25% from its issue price. Shares worth around 54 crore free up for trade today. Solar World, another one, 12% below from its issue price, 4% outstanding frees up today. There's a 1-month lock-in ending. Anand Rathi, that has done well from its IPO. It's up around 23-24% from its issue price. The 1-month lock-in ending today, 54 crore worth of shares here as well. In this, 138 crore shares worth of shares and freeing up here. Ganesh Consumer is one of them. Another 5% outstanding freeing up for trade today. Brigade Hotels, that's a 3-month lock-in ending. Almost 2 crore shares free up for trade today. 5% of the outstanding. The stock is still below its issue price of 90 rupees. And of course, the lion's share coming from Vari Energies. That's a 1.5 year and beyond lock-in ending today. 4.5 crore shares will free up for trading. Almost 16% of the outstanding, and that is 15,840 crores. And that's the only one among the list that has more than doubled from its IPO price. Of course, that's a long trading history, but still has done well, has Vari Energies.
Okay, all right. Thanks a lot for that, Hormus. Well, let's turn our attention to select counters that are going to be in focus this week on account of court hearings. The likes of Vodafone Idea, Vedanta and IEX. So Darshan's compiled the neat list with, and he's joining us to tell us what to track. Hey, sir.
Good morning, Nigel. So it's a big week, not only for earnings, but also for 3 important cases. First one is Vodafone, it's related to AGR. Second one is Vedanta, it's related to demerger. And third one is IEX, which is related to market coupling. And all these 3 cases would be heard in different courts. So first, talking about Vodafone, Idea AGR case. It will be heard by CGI-led bench, and the case is going to be heard today. Remember, it's been more than a month. First time Vodafone Idea's revised plea was heard on September 19. Good part in this case is this time both Supreme Court as well as Centre want the resolution to this case ASAP, or say at the earliest. In the last hearing also, Supreme Court wanted Centre to just take a decision or take a stand and let the court know what exactly that stand is. So the expectation would be that Centre in today's hearing comes out with its stand on the AGR case related to Vodafone Idea. Second case is Vodafone demerger. It would be heard on October 29 and it would be heard at NCLT. Now, the last time in September when the case was heard at NCLT, and the reason it was deferred because certain objections were raised by Oil Ministry, or say Ministry for Petroleum and Natural Gas. So the expectation is also at this place also that finally NCLT will come out with its verdict. Last one is market coupling case. Since the CRC order was announced and that was against IEX and was in favor of other power exchanges. So in August, IEX had approached Appellate Tribunal, that is Electricity Appellate Tribunal, and on October 13, the last order had come in which IEX was asked to file the revised plea and also have more parties like Power Exchange, Grid Corporation of India and others. So IEX was asked to file the revised plea in a week from October 13, and all the other parties were asked to file the reply to the plea filed by IEX before October 30th. So that also would be important. And remember, all these 3 stocks have seen a big uptick in the last few sessions.
Oh, yes, absolutely they have. And this is great context, very helpful to revise our memory. So thank you so much for that. So 3 important court cases impacting those companies and perhaps those stock prices as well in focus this week. Dharmesh, before we let you go, I just wanted to get your call on Coforge and really what lies ahead for the stock. I don't think the numbers leave any room for complaint. Growth remains very, very robust. The stock has also been fairly ranged. I mean, it's cooled off this year so far. It's down some 7-8%. So, is this a great entry point for Coforge, or do you think that perhaps, the kind of bull run that we've seen on the stock, that's kind of behind us now?
Yeah, good morning, Surabhi. Absolutely no point of complaint as far as Coforge numbers are concerned. Excellent set of numbers on all parameters, even though there was a good margin expansion. And the geographies have been doing well, particularly the North America part. And if you look at the IT companies, be it Persistent, Coforge, Signity, these are the companies which are into services support system, be it implementation or system integration and application integration or various softwares into play. And these companies are doing well as compared to the product IT companies. So we do believe that this continuity is likely to go forward, whether the product is AI enabled, ML enabled, or a simple product, all will lead implementation and services to support for the ongoing execution. And there, I think these companies will continue to find traction in the business traction. Valuations are a bit expensive if you look at on a PE multiple terms and compare it with the margins of the bigger ones. But I think the margins are catching up with double digit at mid-20s kind of a margin in next 3 to 4 years can likely be there. So one last leg of rally, I think, is still due from a short-term period. So we have been recommending Persistent and Coforge as our portfolio wise, and Signity now adds to the list. So these 3 companies look pretty exciting to us.
Okay, all right, got that. Dharmesh, we'll leave it on that note for today. Thank you very much for joining in. You have a good day. We'll take a quick break. On the other side, we'll have the pre-opening rates, so almost 9 o'clock. We'll also be in conversation with Digant Haria of Green Edge Wealth Services. We'll talk about a slew of these bank earnings that have come through. A whole lot of bank deals have come through. And remember, we had important RBI guidelines that limit the capital market exposure that banks can take. We'll discuss all of this and more in just a bit. Welcome back. Just a minute to go before we start getting in our pre-open rates, and a whole raft of stocks are going to be reacting to their numbers, the likes of Kotak Mahindra Bank, SBI Card, Dr. Reddy's, and so many others. Okay, we've got the first rates in on the Nifty, 0.5% up. Let's see, 25,910.11. Remember, the market was getting a little tired around 26,100 thereabouts. Those were the highs that we had touched last week, and from there was a bit of a cool off. So let's see if this week is going to be the all-time high week. We've got our technical experts, so let's straight away get to them. Sudarshan Sukhani as well as Mitesh Thakkar. Gentlemen, good morning and happy Monday to both of you. So that's the question, right? Mitesh, you go first. Is it going to be the all-time high week or not? And I mean, you were rightly cautious and you had advised profit taking at higher levels last week. What is your strategy for Monday?
Good morning, Survi. Yeah, last week, what happened was that we had a good rally starting from 24,590, and during Thursday last week, we had rallied by about 1,600 plus points, and we were near the previous highs. There was also a gap which was there, and we were overbought on the intraday hourly to hourly chart. So I think a profit booking was a good objective. I think that was very a high probability event, which has played out. Now, on the downside, I was looking at possibility of 25,800, which was tested and held. I think we got a closing just around that level. And then, in the worst case scenario, 25,600. So the directional bias is still on the upside. I think we will at least, if not get past, attempt the earlier highs again. So on the upside, I think, the first target would remain around 26,150 to about 26,250. And till you break or close below 25,600, I would clearly maintain a positive stance.
Okay, fair enough. By the way, the market's now turning a little wobbly. It's a volatile start to the pre-open session. Nifty is lower by about 25 to 30 points at this juncture. So let's see how it settles this session. Sudarshan's also with us. Good morning, Sudarshan. How are you approaching trade?
Yeah, good morning. Well, if I remember correctly, on Thursday morning when we had that gap up, I had said this gap up will not sustain, get out now. And that was a good call because from that point, we fell almost 400 points. This is a rally which we are likely to see today after a brief correction. This is always a good place to be in. So I would say, look to buy this market. We had an uptrend, we had a sharp correction. The chances are the uptrend would resume, but there's no rush. Don't buy a large gap up. Wait patiently for markets to stabilize. Keep a stop at 25,800 and stay on go long whatever levels you have below the opening price.
Morning, gentlemen. Happy Monday to both of you. So what about stocks, Sudarshan? What do you have on your radar?
Well, it's an all-buy list. Vedant is a buy with a stop under 485. MGIL is a buy with a stop under 1280. 1280. PI Industries is a buy with a stop under 3510. And finally, Siemens is a buy with a stop under 3100. This market is in an uptrend. There's a party going on in all over East Asia. We are not part of that, but still we should see small up moves anyway.
Okay, and Mitesh, let's come to your stock list as well.
Yeah. I have a mix of buys and sells more towards the buy side. So the first stock is Overall Reality, which I would recommend buying the stop at 1670 for targets of 1765. Then a buy on Asian Paints with a stop at 2479 and a target of around 2550. Conditional buy on Indus Tower. See, the chart setup is good, but there's a historical pivot at around levels of 363. So let it cross that. 364 should be a trigger to buy. Above that, buy with a stop below 358 for a target of 378. And one sell call, that's Supreme Industries. Keep a stop at 4070. Look for targets of around 3850.
Thank you. 3 reasons to watch Indus Towers. 1, on the technical front, as Mitesh pointed out. But 2, results today. And 3rd, the Supreme Court hearing the Vodafone Idea AGR case. So there are implications for Indus Towers too. But let's talk about the banking space because RBI has announced draft rules for allowing banks to finance acquisitions. Ritu joins in with the details.
Well, yes, RBI has finally put out these draft rules on capital markets and acquisition financing for banks, setting some clear limits and safeguards for this kind of lending by banks. Now, a bank's total total exposure to capital markets, both direct and indirect, for instance, is going to be capped at 40% of the Tier 1 capital. Within that, the direct exposure, which includes investments plus acquisition finance, cannot exceed 20%, and specifically acquisition finance alone is capped at 10% of the Tier 1 capital. Now, on acquisition financing, much awaited for the first time, RBI allowing banks to lend to Indian companies that want to buy stakes in other companies, whether in India or abroad. But RBI says these deals must be strategic, aimed at long-term growth and not short-term profits. The bank's total exposure to these acquisitions cannot exceed 10% of Tier 1. But to qualify as well, these acquiring companies have to be listed, have a positive net worth, and must have been profitable for the last 3 years. Banks can also only fund up to 70% of the deal value, and the rest has to come from the company's own equity. And also after the acquisition, the debt to equity ratio, RBI strictly says, cannot be more than 3:1, and the loan must be fully backed by shares of the target company as security. Next, let's also quickly talk about the capital market intermediaries, where banks can lend to them only if the loan is fully secured and the collateral actually belongs to the borrower. They also can't finance them for proprietary trading or investment of their own. When it comes to IPO, FPO and ESOP financing, banks can lend up to 25 lakh rupees per person, but covering only 75% of the subscription value. And finally, loans against securities for individuals, banks can lend up to 1 crores. Within that, 25 lakh rupees can be used for buying shares in the secondary market. Now, overall, bankers we've been speaking to have welcomed the move, but not all their requests have been addressed. They are going to seek certain clarifications. For example, whether banks can also finance foreign companies that are looking to buy in India, not just Indian companies making acquisitions. Also, there's been some concerns about the clause on acquiring company being a listed entity, the profitability, and the 3:1 debt to equity cap after acquisition, because, especially for deals involving distressed assets, this could be this particular thing could be a concern. Public comments are invited by the 21st of November, and final rules will kick in from the next fiscal year.
Okay, Ritu, thanks very much for that. That's a great framework to have and to keep in mind. Lots and lots of norms coming in on both acquisition financing as well as the capital market exposure. Now, is this really going to help boost growth? That's the literal question that we have. Digant Haria is with us. Digant, let's start right there. So there is an enabling framework. The RBI seems to be getting a little more liberal when it comes to capital market exposure, but still the aggregate, like Ritu explained, still capped at 40%. On acquisition financing, now, given the current caveats, the net worth criteria, the listed entity criteria, will this really take off? Or are there too many checks and balances to make a material, impact when it actually comes to, credit offtake on the wholesale side or on the corporate side?
Morning, Zurbi. See, I think it's a good start. RBI, if you look at the history last 20-25 years, RBI has been very allergic to allowing banks to finance two sectors. One has always been real estate, and second, it has been this entire capital market linked, whether it is for shares, whether it is for M&A, or, whether it is share swaps or things like that. So I think what we are seeing now is a good start. And in a way, it is also an acknowledgement by RBI that a lot of growth in the future is going to come via the acquisition route. We see that a lot of large sectors in India have slowed down. So I think acquisitions will be the next leg of growth for the next 5-10 years. And, rightly so, RBI has started. See, there's always more to desire, right? The first draft can never be perfect, but I would just say it's a good start. Till now, the last 10 years, we had this route called structured financing, where guys like JM Financial or, Edelweiss or Yes Bank of the past used to do those deals. Some of those deals will come in the banking domain, but I think a lot of deals will still remain in that structured finance domain where banks are not very, very active. So I think it's a good start, and we'll pick it up from here. I think, RBI also keeps on tweaking guidelines, but the intent of RBI is very clear that we want to allow growth via all different things.
So Digant, so you don't see any implications for NBFCs or the private credit market? That will continue to thrive. You don't see banks taking away market share from them to finance this? And have you spoken to anyone in the industry? What could be the response? These are draft guidelines. It's open for feedback. What has been the feedback from the community?
Yeah, morning, Rima. See, the banking sector over last 8-10 years, they've completely shied away from this kind of financing, right? Because we saw what happened in the last 10 years. So I think banks will take time to build those expertise, to understand the product, take some risks. So I think it's a slow journey for banks. Most of them are not even very keen to do corporate finance. Like if you just look at corporate lending, except for the PSUs, the privates, they don't really have are very gung-ho on even corporate lending. Let's M&A financing and these capital market related financing, that comes a stage later. So I think it takes a lot of time. I don't think it will push growth immediately for any of these banks. The private credit market, the structured finance market will continue to do well. And guys like JM Financial, who have been doing these for ages, I think they benefit more because now they can even partner with banks for their funding. They don't just need to partner with the private equities or the sovereigns or the institutions.
Okay, all right. Hi, Digant. Good morning. Good to hear your thoughts as always. A quick word, Digant, on the banking numbers that came over the weekend, namely Kotak Mahindra Bank. Numbers look pretty okay. Some argue that valuation-wise, it's a little expensive, but that's always been the case. So your take?
Yeah, morning, Nigel. See, there were 15 or 16 banks which reported results over, last 3 or 4 working days, sparing the Diwali holidays. I think one theme, Nigel, is that margin compression, we were expecting anywhere between 15 to 18 bips at a sector level, but that has only come to like 7 or 8 bips. So I think the whole sector that way has done much better than what had been our anticipation. Coming to Kotak specifically, I think they had a slightly higher margin compression than, say, an ICICI or even an Axis Bank. Maybe because they were very heavy on, microfinance, personal loans, all these new products which they did in the last 2-3 years. So I think now we are at the bottom even for Kotak. Nothing to, read negative in the results. But yeah, it's just that, the good results is probably December or March is when we really enjoy the results as well. But nothing negative, Nigel.
Okay, nothing negative. Digant, unfortunately, we're out of time because we're running into market open, but we look forward to a longer conversation on some of these aspects. There are earnings, there's the regulatory change, and then there are deals galore in the BFSI space, right? So look forward to talking to you again in more detail. By the way, we continue talking banks and financial services even at 9:40. That is the fulcrum of our discussion. We'll be having an investment banking head who's actually participated in some of the deals. I'm talking about Amit Thawani of Nomura India. And of course, a veteran who knows it all, Mr. Rajneesh Kumar, former chairman of SBI. Spate of deals, regulatory relaxation. Is it a new approach from the RBI that's triggering so much of interest by private equity as well as foreign financial institutions? We discussed that at 9:50. But for the time being, we have a market to deal with. So let's quickly get back to our technical experts for some final trading cues. Sudarshan, which stock will you go with?
I'll go with Siemens, buy with a stop under 3,100.
Okay, and Mitesh, your stock?
I'll go with the buy call as well, a buy on Asian Paints for targets of 25.50.
Okay, all right, gentlemen. Thanks a lot for that. Well, I'm focusing on the steel stocks because InCred has come out with a note on steel and they're sounding more optimistic after a while. Let's take it piece by piece. On Tata Steel, they've upgraded to add from a reduce. The target price is around 224 rupees per share. They're saying that it's a leverage play on India's industrial upcycle as well as Europe's post-war reconstruction boom. Now, they go on to mention that the Russia-Ukraine conflict, it's nearing an end. And Europe is ready to rebuild, the entire economy out there. And that could be estimated at a big number. More than $80 billion or thereabouts is what they're talking about in terms of fresh demand. And that will be a tailwind for steel. Back home, policy protectionism as well as strong domestic growth, that's what's anchoring visibility all the way till 2030 odd. On Tata Steel, they're saying that yes, the captive mine auction may lift costs, but India's self-reliance push, that's what could hold the margin line as well. So on Tata Steel, upgrade coming in there. Similar is the case with SAIL. They have upgraded the stock to add. The target price has almost doubled, 158 rupees now. They're saying that the company is a tactical play on the protectionist stability and not just a cyclical swing. They also go on to mention that the fully integration with regard to iron ore, that's a key benefit and key advantage for the company. They go on to state that, in fact, on the operating leverage, that's driving recovery, volumes rise, finished steel mix as well will get strengthened, and staff costs could inch up only marginally, which has been a problem otherwise. So that's why they're positive on SAIL. And on JSW Steel, they retain the reduced rating, but the target price they've upped from around 770 rupees earlier to around 939 rupees. They say the street loves its flawless execution, but valuations test gravity, as the stock is trading at 4 times price to book value. And they're also talking about the consensus is talking about EBITDA of around 34,000 crores for the year. But at the half-year mark, it's only at around 14,000 crores. So they're retaining their reduce, but they've upped the target price. So steel stocks in focus for today.
Okay, all right. So we'll watch out for the ferrous names. And we're all set for an opening, which will be almost 50 points higher on the Nifty. 25,830, 840. This is the vicinity around which we have opened up. Let's straight away look at Kotak Mahindra Bank. Kotak is down 2.5%. So some are saying that, perhaps the margin issue is still playing out. Remember, some of the other banks like ICICI did a lot better on the margin front, where the compression was not as much as what was feared. But for Kotak, they have taken that over 10, I think it's 11 basis points hit on the margin. So maybe it's just that 2% lower for the time being. Let's see if we can pull up SBI Card before we get to the rest of the Nifty. SBI Card is down 3.5% right now, 3.5%. Because remember, like Gaurav was explaining, while asset quality is improved, credit cost is improved, their revolver rate is still leaving a lot to be desired. The net interest income has not risen as much as what the street would have wanted. So that's a stock that's under pressure. Anyway, the Nifty is charging ahead. So let's focus on the good. 70 points higher. SBI Life is a stock that's running away. Good numbers coming in. That's one that's reacting well. And the ferrous names like Tata Steel that Nigel was just talking about, 1.5% higher. There's Tata Consumer, there's the Shriram Finance, and it's the big boy itself. Reliance charging up the bulls this morning with a gain of about 1% thereabout. Even some of the tech names like HCL Tech, Tech Mahindra, all on the upside. So overall, it's looking good for the Nifty. The only stocks in the red, actually, Kotak Mahindra Bank, Reddy's is subdued after numbers. And Infosys seeing some profit taking. Remember, it was one of the biggest gainers last week.
Sorry, Infosys goes ex-dividend by 23 rupees. Yeah. So that explains the fall.
That explains the fall. But other than these 3-4 names, Kotak, Infosys and Reddy's, otherwise Nifty is looking good. 80 points higher.
Well, that's right. Let's focus on a few more names. Coforge, that's the stock of the morning, flying away up 5.5%. So that's the big result reaction from the broader markets. In the next 15 minutes, you'll have the management with us on the show. Vikran Engineering, that one won an order, so that stock is up close to 3.5%. SBI Life as well. Yash told us that those numbers look better than expected. The street was in position for it as well. So that's why that stock up and about in today's trading session. Saman Capital, well, that has moved into the F&O band. That stock is up close to 100%, but it's moving on large volumes. SAIL as well should come up for your screen because you have Tata Steel that's reacting to the upgrade. You have SAIL as well that's reacting a little bit positively, and SAIL as well has gone into the the F&O band. So that explains why that stock in fact is up and about. Cigniti is up close to around 6.5%. Remember, it's moving in step with Coforge. That's the new owner out there. They've been sounding quite positive on prospects as well in the integration. So 6.5% move on that particular name. All in all, a good start. Holding on to the start is going to be important. Last 2 trading sessions, we have come off 150 to 200 points from the high point of the day. So the bulls will like to sustain this big opening.
Well, Brigade Hotel Ventures, we were talking to the management earlier. They're talking about doubling their key count from 1,600 to 3,300 by FY30. That stock has opened out with a gain of nearly about 4%. eClerx too is reacting to a good set of numbers, plus there is that buyback, and eClerx has a positive start. We should pull up Latent View too. That also reacted to numbers. Numbers looked okay, but the stock I think is down close to about 2.5%. There is some news in Godrej Properties, so that's pushing the stock higher. NCC, more than 6,000 crore order win, 6,600 crore. NCC is gaining ground. On the way down, Bharat Rasayan has a 7% downtick. I think there is some board meet, bonus issue, etc. on Bharat Rasayan. And the other one is Zentech. Disappointing set of numbers. So Devyani points out the revenues are down 28% on a year-on-year basis. And the company says that Q2 performance was subdued because RFPs were delayed due to priority for Operation Sindoor emergency procurement. But the company goes on to say the long-term revenue visibility remains strong. But Q2 was weak with a decline of 28% in their top line. Other than that, you've got softness in some GK Energy. You've got Pace Digitech. This is also one of the recent listings. You've got SCI on the softer side. Ola Electric has given up some ground, but about 0.25% up on the Nifty and the Sensex. Not quite the roaring start that you had across the rest of Asia, but mid-cap's doing better, up half. On the
rest of Asia also has, so much of deal excitement going for it, right? Including some of those regional ASEAN markets at the end of the ASEAN summit. But nonetheless, I mean, the bulls are trying to hold their ground, 70 points higher. So it's not slipping, and that's good news. And that's what the market will hope for. Reliance is the big torchbearer, so to speak, along with big names like SBI and L&T. Some of these big boys are firm at the crease right now. So let's see. Decent start.
This Kotak Mahindra Bank, there is a JM Financial downgrade. And they say that given the 10% rally in the stock price in the last 1 month, the current standalone valuation is 2 times price to book. That's about a 10% discount to HDFC Bank and ICICI Bank. And therefore, based on the valuations, they are downgrading the stock to a reduced target price stays at 2100.
Okay, all right. Let's then discuss banks and more with our next guest. Our market master of the day is Dheeraj Agarwal, Managing Director at Ambir Investment Managers. Dheeraj, great to have you with us. Hope you had a fantastic Diwali, and greetings of the new somewhat to you and your team.
Thank you so much.
That's the real question, right? Like, in the absence, the moment this India-US trade deal comes through, we'll have a different conversation. But as of today, in the absence of that clarity, I mean, are earnings giving enough ammunition to the bulls to sustain above all-time highs and to decisively head higher from where we are?
Not at this moment, no. But the hope that the next quarter earnings will be significantly better is high, because the festival season demand has been pretty robust, triggered by festival season itself, obviously, and the GST cut impact flowing through. So I hope that the December quarter earnings are significantly better than what we have seen in the last few quarters. And that will be very, very essential, as you rightly said, to keep the market sustained at a much higher level.
So, Dheeraj, let's talk about financials, right? Because that's where the excitement really is, whether it's numbers, whether it's deals. It's all about financials now, finally. First, let's talk on just purely on P&L, what you've seen from large lenders so far, or even large NBFCs. Like most point out, the margin compression has been lower than anticipated. Now, Kotak could be an exception, and therefore Kotak's kind of lower today. But what is your read-through looking at Q2 earnings so far and the commentary?
I think if you see Q2 earnings so far, barring either a small margin beat or a small margin slip, which I think is too much of micro-analyzing, results have been by and large in line. So there are no big positive surprises, there are no big negative surprises. And once again, going forward, I would link financials to the strong festival demand that we have seen in the month of October. Indian financials are a lot more linked or leveraged now to consumer demand as compared to capex demand, right? Because everybody is growing the consumer book much faster than the industrial book or the corporate book. And hence, if the consumer uptake that we have seen in the last 1 month sustains, I think credit growth also picks up at least by 200 basis points. And that will be good news for financials too. So to sum it up, I am positively inclined towards financials.
What percentage of your portfolio will you allocate to financials, NBFCs, the capital marketplace?
Yes, NBFCs and financials for sure.
And what percentage of your portfolio?
Yes, I will be overweight, meaningfully overweight.
Meaningfully overweight. So if, banks account for what, 35% of the Nifty?
30%,
Approximately
31,
32%. So how high would you go?
That's a tricky one, but I personally am comfortable going up to 40, 42.
Oh, okay.
Yeah.
All right. Hi, Dheeraj. What about tech? How are you placed out there? You get the signals that are coming there, rather mixed. The next management as well, I request you to, tune into that conversation. We'll have Sudhir ji who will be talking about Coforge's numbers. And Coforge as well as Persistent have continued good growth. And that's why the street rewards them with good multiples. So how would you place yourself on tech, between the large cap, the smaller cap names, and what do you like?
So tech is a very, very bottom-up space at this point. So industry as a whole is struggling for growth. The industry as a whole, the growth is now at best mid-single digits, which doesn't make the outlook for the sector as a whole very exciting. Valuations haven't yet come down to, my benchmark is valuations have to come down to 2016-17 levels, and there's still another 20%, 25% low for the sector valuations to go to reach there. To say that even the current low growth is now fully discounted and one can now buy as a bargain buys. So tech is, you can't even differentiate tech into large, mid and small and bucket it saying mid and small is doing better than large. There are few individual names, as you rightly pointed out, which are continuously outperforming in the earnings, and markets are rewarding them with much higher multiples. But overall tech, I would continue to be cautious till such time valuations kiss 2016-17 levels. I mean, that's my broad benchmark.
Okay, that's IT. Dheeraj, what else? What else are you studying, observing? Maybe don't have a straight-out buy as yet in this market. I mean, there are a lot of the new age plays as well, or plays that are quasi-linked to new technologies now, whether that's EV or whether that's data centers. Anything that catches your fancy?
So one clear space, we started the discussion with strong consumption demand, but we didn't discuss the consumption sector. So consumer discretionary with an element of premiumization, that is one clear space which I think should stand out. And again, I'm qualifying this slightly by saying one hopes that the December quarter numbers are strong and this momentum continues at least for a few quarters more. There is also an expectation that the 8th pay commission, once it comes into play next year, sometime mid of next year, will also help consumption. So, but more positive on discretionary as compared to staples. I mean, staples has its own challenges, and a little bit of price cut doesn't really move the demand needle for staples, but it does move for discretionary.
But discretionary, Dheeraj, allow me to ask you, because discretionary itself is a very wide umbrella. So, I mean, it could include alcobev companies, it could include jewelry companies, and so on and so forth. So, if you could kind of give us some more clues and hints, what part of consumer discretionary looks good to you?
So, I classify even automobiles, I mean, the personal use automobiles, not commercial vehicles, as discretionary consumption. So, that would be my number one bet, because automobiles, the price elasticity, the demand elasticity to price is reasonably high. And I would be surprised if demand growth does not pick up and sustain for a prolonged period of time. Once you go below that, then it's very, very individual, stock specific. I think jewelry should do well generally as a basket, now that the gold price is trying to settle down at a slightly lower level as compared to the recent peak. Typical consumer behavior is when the gold price is rushing, they sort of hold back on jewelry purchases. When it cools off a little bit and settles down, the jewelry purchases come back. So jewelry could be another sector. Consumer durables, white goods, brown goods, those would. So the segments which are typically price sensitive, air conditioner prices goes down by 10%. You say, chalo le lete hain, bahut din se postpone kiya hai. Same thing for cars, etc. So higher ticket consumption and more premiumization consumption as compared to lower ticket. I think that should pretty much classify where my thinking is.
Dheeraj, any initial thoughts on Lenskart? There is a press conference scheduled today. We know it's a very popular brand across age categories. The company has grown very fast. As of FY25, the company's top line is 6,650 crore rupees. I mean, so it's grown fast. The only thing is, when you look at the valuations, I think it's going to come up, fairly steep. Trailing, it's more than 200 times. FY25 PE, I believe, is more than 200 times. Market cap will be 70,000 crore. I mean, have you any initial thoughts on this? Not a buy or sell, but considering it's a consumer company and that's a space you're interested in.
So it's seeing a very, very strong growth, right? So typically, any company which has that kind of a growth, we always find markets struggling to figure out what the right pricing is. So I think it should get a good response. I think it should do a good listing as well. How far the listing gains actually sustain will depend upon can they sustainably deliver the growth in the next 2 or 3 years. But typically, very high growth companies tend to get rewarded with excessive valuations in the market. So I think Lenskart falls in that category. They've executed really well. So on the whole, on the IPO itself, I'm positively biased, but let's see long term.
All right, Dheeraj, a quick word on renewable energy. I think that was the theme that you said has a bigger runway. How do you approach it? Because there are various verticals, whether you're going for solar, the different other types of energy, maybe another way of looking at it. So tell us more about this theme that you like, renewable energy.
So as a percentage of total energy consumption, renewables will keep going up. I mean, there is a clear government thrust. There is a clear need with respect to pollution, environment, and climate. And every company involved, I mean, including NTPC, which has historically been a thermal energy company, has been investing a lot in the renewable space. So the entire ecosystem within the renewable space, whether it is battery storage systems, panel makers, the energy companies itself, etc., will see a very strong business environment for the next 10 or 15 years. To convert that into stock picks is, however, a little bit more challenging. So, for example, if BSS takes off, the T&D investment required will be lesser than what we believe will happen at this point of time. So one needs to take cognizance of that. The lots of new emerging technologies which can disrupt linear thinking, that this will require more T&D, hence just go ahead and buy T&D companies at any valuations. And the third that one needs to take cognizance of is many of the companies which are leveraged to renewable energy space are already trading at pretty steep valuations. And one of my observations in the market at this point of time is markets have become valuation sensitive. We have seen quite a few stocks, despite good growth, but valuations being steeply high, actually not performing in this market.
Dheeraj, always a pleasure chatting with you. Thank you very much for joining in. But do listen in to the next conversation. We've got the management of Coforge joining us on the show. It's a very strong performance. Revenue growth came in at 5.9%. Margins expanded to 14%, as has been the company's guidance. And they're talking about a robust H2 as well. Sudhir Singh, CEO of Coforge, will now be joining in. And some of the things that we'd like to discuss with him is what's driving this confidence about the second half of the year, the outlook on margins after the company's achieved 14%, and what beyond the $2 billion revenue run rate that the company had put out, because now it's within sight now. Sudhir, thank you very much for joining in. This is Rima here. Tell us about H2 and how you see it. You sounded very confident in the call, but because Q3 is a seasonally weak quarter, but you expect a bounce back in Q4. I mean, what are we looking at?
I think you put it very aptly. Q3 is a seasonally weak quarter. We believe the entire year, given what we've already logged at the end of H1, which is almost 26+% growth, is going to be an extremely robust year. There will be the usual moderation that happens in Q3, and then we would expect things to normalize in Q4. We expect, on the whole, fiscal year 26 to be a robust growth year for the firm, as we'd indicated at the beginning of this year as well.
And on margins, now you're talking about 14% margins at an aggregate basis for FY26. Is that correct?
That's absolutely right. And we, incidentally, you would have noticed this, we've logged in 14% EBIT in Q2 itself, which was almost 250 bips higher year on year. Our outlook for the full year again is 14% EBIT, and it's our intent to make sure that we get there.
Okay. And what will be the impact on account of wage hikes in Q3 on your margins? And you also spoke about how that beyond 14%, you don't plan to expand margins. The priority will be on growth. So take us through that too.
Right. Q3, we've already declared annual increments for the entire workforce effective the 1st of October. That's going to be a headwind. There are also tailwinds on the margin front because the ESOP cost is going to fall materially in Q3 again, just as it did, and just as it fell in Q2. So Q3, with the wage hikes, which will be a headwind, with the tailwind put together, we'll try to make sure that we turn in numbers that across Q3 and Q4 land us at the 14% that we need to land at.
All right. Hi, Sudhir. Good morning. Good to see you, Ben. Quick question. 80 basis point margin expansion is what we saw in the last quarter. How much of it was because of the rupee depreciation?
There was an element of the rupee depreciation in play, but the one thing that I do want to call out about our results is we also take our hedge losses and gains to the top line. We had a headwind of 78 bips because the hedge losses this quarter were higher. So we had headwinds of 78 bips because on account of the hedge losses higher than Q1. We had a tailwind of 20 bips because ESOP costs were lower. In total, our net headwind was 58 basis points. And after that headwind, we have reached the 14% EBIT that we did call out for Q2.
Okay, all right. So that's encouraging to hear then. You're already going at a run rate of around $1.8 billion approximately. You were talking about around $2 billion, right, in FY27 at some point of time.
Is there a possibility next couple of quarters you move to that $500 million a quarter run rate, which in turn means that you've got to the $2 billion run rate?
Well, we don't give a revenue guidance, but obviously, as you can imagine, the intent is to get to the $2 billion run rate at the earliest. We believe, within sniffing distance of that $500 million per quarter, which is the $2 billion annualized run rate. The intent is to keep the feet on the pedal and to get to that at the earliest possible.
Sudhir, hi, great to have you with us on the show again. Investors pretty happy with the performance, and it's been so steady, right? I think another thing that the street is taking heart from is that this whole issue about the free cash flow and your investments and the whole confusion around the data center, that's a thing of the past. Correct me if I'm wrong, but the numbers that I have suggest that your free cash flow is back to about 37 million. So what is the guidance on the free cash flow and future investments, data center or otherwise? And just talk to us what this whole AI pivot will also mean, because I think you made a reference towards this even in the investor call. So tell us about some of this in the future investments.
Well, free cash flow, you're right. Our free cash flow to PAT for the quarter was 86%. Our guidance on a go-forward basis is that it will be our intent to keep the free cash flow to PAT metric somewhere between 70 to 80% on an ongoing basis. As far as AI is concerned, we've always said this, and we continue to maintain this, that what has differentiated us in our performance over the last 4 years has been an execution intensity that is uniquely our own. We've always said this, execution is not just about sharing plans or strategies and sharing them in public. It's more about making sure that what you share actually gets done. There is no place which exemplifies this ability of Team Coforge to bring execution to life than in our ability to not just embrace AI in our internal operations, but also to be able to create our own IP, our own frameworks, which we have, which are the ones that are actually driving the transformation that we are seeing and the revenue uptick that we talk about. When you look at Coforge, Code Insight AI, which is our platform, is the platform that we're using for some of the largest reverse engineering pieces of work that we're doing with code right now. When you look at Forgex, we're using that platform, again, our platform to drive transformation at scale. And if you consider Blue Swan, which is our orchestration and automation AI-based platform, that again is driving it. So AI, for us, our ability to embrace it, our ability to bring it to life and not just talk about it.
No, absolutely. No, absolutely, Sudhir. And that is driving the kind of revenue momentum that we're seeing. But what I'm just trying to understand is that from an investment point of view, whether it's organic or inorganic, is there a specific AI/data center related additional investment that you see ahead on the horizon that you can call out?
Absolutely not. There's going to be no further AI data center related investment that the investors should expect. And we were very categorical about that in our investor call as well.
Sudhir, just to get back to the point about growth and margins. Now, you've said the focus will be on growth rather than pushing margins beyond 14%. But at what point will that change? Will it change when the company's top line hits $2 billion, as is the first goalpost? Or would you like it to, say, hit $3 billion before you will look to also simultaneously expand on margins? Because some of your peers are operating at higher margins.
Well, I wish to be very clear. We haven't said that the intent is not to move beyond 14%, but what we did say and what I did say at the beginning of this year was that our first goal for fiscal year 26 will be to hit an EBIT of 14%. We feel confident with that guidance at the current point in time because Q2 EBIT itself was 14%. Having said that, we believe that once the 14% EBIT baseline is secured, that's the minimum threshold by way of ambition that we will retain for us on the margin side. The primary imperative is going to be growth, if possible, industry leading growth, as we clocked in FY25 and are likely to clock in FY26. EBIT will increase, but we aren't giving an EBIT increase guidance. As far as we are concerned, the pecking order is very clear. After we hit 14% EBIT, growth will be the primary imperative. EBIT, of course, given the operating scale-up that will happen, will continue to inch upwards.
All right, so the final couple of questions before we let you go. Why are the deal wins stuck at around $500 million? And now with Sabre fully ramped up, do you think there will be a slowdown on deal wins? So you can give us some kind of color with regard to deal wins on a quarterly run rate. And also your interest cost, it's holding around 40 crores per quarter. I think your total debt in your books is around 650, 700 crores. Explain this to us because that's an annualized interest cost of around 160 crores. I'm guessing there'll be some stretched working capital there. Go ahead.
Sure. I think why only $500 million is somewhat uncharitable because we hit the $500 million benchmark very recently. If you go back 2 years, the firm used to clock an order intake on an average of $300 million. So over the last 2 years, that number has moved dramatically. 500 million is a number that we take a lot of pride in. The intent is to keep inching upwards. But at this point in time, if you look at the next 12 months signed order book of Coforge, that is 26.7% higher than where that signed order book was just a year back. So 500 million, the intent is to continue pushing it upwards. If you look at our large deals, even in Q2, we've signed 5 large deals. In the first half this year, we've signed 10 large deals, contrasted with 14 that we signed through all of last year. So our large deal velocity is going up. Large deal median size is going up. And I think it's a matter of time before the 500 becomes a 600 or a 700. But as always, we aren't giving a timeline or a forecast around that.
Okay. All right. And the interest cost, you just want to comment on that?
I wouldn't have the numbers handy with me, so I can't give you those numbers offhand.
Okay. All right. So, thanks a lot for joining in. Good quarter. Sounding optimistic about the future as well. We'll track you to a few of these numbers that you've given us. Wishing you a good day ahead and a good quarter ahead as well.
Thanks very much.
Well, a quick note then for our viewers. As you can see on the screen, what's going to come up for you, there's a money control stock score just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, including both the current and the historical financial statements, the price charts, the technical indicators for each stock. Now, each of the individual parameters is considered for calculation of these 4 factors. They're assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or a sell recommendation. Any investor, viewer is advised to carry out the necessary diligence on their own or through a certified registered financial advisor for investment decisions. So take note of that. Well, time to slip into a short break, but up next we have Shweta of Elara Securities who will be joining in to talk about her expectations from the NBFC sector. Stay with us.
Well, as promised, it's time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, NBFCs are on our radar, and Gaurav joins us to tell us what do we expect from that space. Over to you, Gaurav.
Well, yes, when we look at NBFC space, let's see how are the quarterly updates and what's the landscape going ahead. So when we look at the quarterly updates, we have seen a quite mixed set so far. Retail focused NBFCs like Bajaj Finance and L&T Finance, they have reported healthy set of numbers on a year-on-year basis in terms of AUM growth. While on the other hand, M&M Finance, we saw a little bit of weakness. They reported around 13% growth in terms of the overall AUM. Now coming to the quarterly results expectations, when we head into second quarter, it is likely to be a tepid quarter for most of the NBFCs, but disbursement growth, that is expected to pick up, and this will be because of the asset quality front also. If you look at the challenges, they are likely to persist, but at the same time, we may see some kind of impact which will be offset by spread expansion. MSME and MFI, that is one thing that we should be watching out for, because here we may see some pressure to continue. But at the same time, when we look at the margins, they should get a lift, because this will be the first quarter where we will see the reflection of 100 basis point of repo rate cut completely. So that is something that we are expecting, that margins may actually increase. Now let's break it down in the segments. First, when we look at diversified financiers, now starting with this segment specifically, because we have seen already some of the updates coming up, and from here on it is likely to see that the disbursements, they are likely to pick up. Credit cost, that should stay steady, and at the same time, when we look at margins, we may see some kind of improvement in terms of margins. In fact, if we look at all these parameters, that is the reason why we've got some of the players who can expect profit to increase somewhere in the range of 12 to 30%. At the same time, when we look at credit costs, that is likely to remain contained, and that is the reason why ROAs, they are likely to remain stable for this quarter at least. When we move ahead to vehicle financiers, now AUM growth, that is likely to moderate, because if you look at Chola Investment, we have already seen they have cut down their growth guidance, and at the same time, if you look at the expectation, now Street is not expecting any kind of major growth, about 20% specifically in this sector. But when we look at the profitability, now that is still likely to stay strong, and this is because of the margin expansion from fixed rate vehicle loans. When we look at credit costs, that is something that we should be watching out for, because some of the brokerages, they expect credit costs to increase. In fact, when we look at some of the updates in likes of Kotak Mahindra Bank or some of the NBFCs, HDB Financial, we have already seen they are talking about retail CV and specifically some stress in CV segment. Now, second half, that could be better. That was because of the GST cuts improving demand and at the same time volume uptick. But for now, ROAs are likely to remain range bound for second quarter. When we move to housing finance companies, in this segment specifically, disbursements that are likely to remain strong, specifically for the players like Aavas and Aptus. In fact, when we look at some of the expectations, we are expecting, brokerages are expecting Aadhar Housing to remain a little bit of weak in terms of disbursements. But when we look at credit costs, that is likely to move down. We may see improvement in net interest margins as well. And at the same time, all these parameters, these will help these companies to expand their ROAs anywhere in the range of 0 to 20 basis point. Lastly, when we look at MFI segment, now this is something that we should be watching out for in terms of the asset quality, because in terms of disbursement, we are already expecting some kind of weakness here. And at the same time, when we look at credit costs, it is likely to remain higher. And at the same time, when we look at the return ratios as well, we may not see any kind of uptick here. But from here on, it is expected that this segment will reach its rock bottom, and that is the reason why we may see some kind of gradual pickup, and this will be because of the non-MFI diversification, new MFI guardrails that we have seen. We have already seen RBI also relaxing some of these guardrails, and at the same time MFI cycle, which is expected to bottom out. All this can actually give a boost to the expectation going ahead. Now, when we look at gold financials, finally, we've already seen a huge rally in gold prices, and specifically when it comes to Muthoot Finance and Manappuram, we are expecting gold loans specifically to remain strong. In fact, for Manappuram, although the overall loan growth can be a little lower, but when it comes to gold segment, we may see this growing at around 20% even in FY26. When we look at some of the metrics, we may also see net interest margins to expand healthily for Muthoot and Manappuram both. And at the same time, when it comes to Muthoot, we are expecting to see around 25% ROE sustaining for FY26, and for Manappuram, profitability will also improve because of the provisioning in its MFI arm, which is coming down. So overall, when it comes to NBFCs, we are entering into a phase of selective resilience is what we can say, where we will be seeing a well-capitalized and secured lenders which are at a better place, and at the same time, growth is actually moderating, but at the same time, we will also see some kind of new upticks and new point of view in terms of the second half of FY26, which is expected to be better for NBFCs, not in terms of growth, but also in terms of margins.
Thank you, Gaurav, for joining in. We have with us Shweta Daptardar, Vice President, Diversified Financials at Elara Securities, joining in. Shweta, so just first big picture between the consumer retail financiers, the auto vehicle loan financiers, the gold financiers, and the housing. If you just break it up, or maybe we'll add the fifth one, MFI. If you break it up into these five, which is the segment you're most bullish on, where we will see growth and valuations are comfortable? And then we'll get to individual stocks and expectations.
Yeah, hi, good morning. Thank you for having me. So definitely gold financiers and mortgage lenders continue to dominate the overall credit growth and demand in the current scheme of things. Laggards is the biggest. Laggards have been still credit cards, where we have seen, although asset quality challenges receding, but moderation in or the softer trends in cards in force edition. However, having said that, we have seen certain green shoots now surfacing on the MFI and MSME credit. I mean, we would be certainly believing that second half looks very strong for MSME credit uptick. Also, personal loans pain cycle is fully behind. So we believe personal loans and MSME credit to sort of start looking up in second half of this fiscal. And largely the benefits are now flowing from the numerous tailwinds that we are seeing in the sector. So one is, of course, the domestic policy easing. I also believe another 25 bips rate cut is in offing before the calendar year end. So definitely the peak of consolidation or fiscal consolidation is behind. On net, the time is ripe for the credit demand to pick up. And I think that bodes really well for NBFCs. Not to forget, of course, the GST simplifications.
Yeah. So, Shweta, you called out two segments specifically, which you think will be really hot in the second half. You mentioned personal loans and MSME credit. So tell us the stocks as well, the NBFCs that are the best plays on this.
Yeah, so clearly two biggest tailwinds will be emerging in second half of the fiscal. We have seen bank rate card transmission now happening for the NBFCs, which is already in offing, Q2 numbers, whichever the companies have declared. We have seen interest cost materially coming down on sequential basis. So rate card benefits are flowing through. Juxtaposed to that, we have GST simplifications, which happened only at the fag end of the quarter. So those benefits will be fueling this consumption story. So definitely Bajaj Finance, L&T Finance, few of these smaller emerging mid-cap and smaller players in the MSME credit space should also start looking up. So yeah, net, it's a positive picture for the overall credit demand.
All right. Hi, Shweta. Good to hear your thoughts as always. On gold finances, tell us how do you approach this space? Because, there are three notable players, so to call it. The large one is Muthoot, but that's trading at, I think, 3 times. You could correct me on that one, price to book. You have Manappuram, which could be the turnaround story with the new management in place, but that's at less than 2 times, I think so. And IFL Finance as well has an element out there. How do you play this theme? And are you still confident about the largest name, which is Muthoot, or do you have a neutral rating?
Yes, Nigel. So we continue to maintain a positive stance on Muthoot Finance, and largely it's emanating from the fact that geopolitical upheavals continue to keep gold price on the higher side. I mean, of course, knocking off the near term or the latest volatility. Having said that, as you rightly pointed out, Muthoot is already trading at 3x plus kind of valuations, FY27 price to book. What we are advising here to the clients is, so Muthoot is clearly an accumulate on every dip or correction, if at all it's happening, because even as we move ahead next year, even if you factor in certain volatility in the underlying gold prices, Muthoot is poised to deliver 20% plus growth and 20% ROE. So that's pretty strong and pretty much justifiable as against the current expensive valuations. Coming to Manappuram and IFL, yes, there is a turnaround story, both surfacing for both of these names, but apparently that's been largely priced in. So Manappuram, particularly the new management, the strategy, the kitchen sinking, the execution will now determine the second leg of re-rating. For IFL Finance, yes, the gold franchise is definitely picking up, but overall console ROEs, I think those are still not yet there to the desirable levels. So clearly, Muthoot is a winner, and I think we will definitely see the stock rally sustaining for another 1 year or so.
Okay, all right, Shweta, thanks very much. Very helpful conversation. So it seems good times are rolling in for NBFCs as well as general demand for credit picks up, and of course, perhaps we have slightly more generous RBI with a slightly looser policy in the coming months as well. Well, we're going to stay with the banking and financial services landscape. Like we pointed out, there's so much going on, so much of regulatory changes, including, of course, a whole host of new norms that were announced on Friday, draft regulations by the RBI. And let's not forget, Deal Street is buzzing. It's literally alive and kicking. And last week saw the culmination of another large transaction. Blackstone's picked up almost 10%, 9.9% stake in Federal Bank, marking another big investment in the financial sector, Indian financial sector. And this follows a string of deals. RBL Bank and Emirates NBD, then we have the Yes Bank deal, and even IDFC First, which managed to pick up private equity interest of late. So to decode what's fueling this excitement and this interest in Indian lenders, we have with us Amit Thawani, Managing Director and Head of Investment Banking at Nomura, India, and a veteran from the BFSI landscape, Mr. Rajneesh Kumar, former Chairman of State Bank of India. Gentlemen, thank you so much for joining in. Much needed perspective. Amit, if I could open with you, correct me if I'm wrong, I believe your team was involved in the deal. I know you won't get into deal specifics, but really, where is this interest coming in from? 6 months, 6 to 8 months, and a flurry of deals happening, and lots of equity capital pouring into Indian banks.
So, firstly, thank you for having me on the show. You're right. The last, call it this first half of the fiscal, has seen a flurry of transactions, not only in banks in general, on financial services space, both from private or strategic capital providers as well as capital markets. Let's not forget, I think we had discussed earlier in the year that you will see a flurry of deals on the capital markets, and actually that's happened. Large IPOs, large placements, etc. We are at the cusp where, when you look at from a growth perspective, hopefully the growth is kicking off quite fast now. You are at a stage where Reserve Bank of India has been very proactive and been nice to the industry in terms of bringing in norms which can help in terms of credit creation. And you are at a stage where the Indian banking sector, both from a technology perspective, both from a balance sheet perspective, is very well poised to capture this growth. And that's obviously attracted attention both of private equity capital providers as well as strategic capital providers. Although each deal has its own reason and own rationale for having, so there's no particular trend that you can identify, and they all happen to happen at the same time. But each deal has its own reason why it's happened. But the core of the matter is that you have a very strong economy, you have a very strong banking and financial sector, and that's, raring to grow.
Is it also that you have cheap valuations? Because some are already making that argument. I'll tell you, Sandeep Tandon of Quant Mutual Fund was on the channel last week, and they're large shareholders in RBL Bank. Again, not getting into specifics of a deal, but the argument of an existing shareholder in that case was that, look, you should have sold at a higher price. So what do you have to say about the prices at which these deals are being discussed and negotiated?
Well, the risk reward looks in favor. Let me put it this way.
Okay. And are there more such deals in the pipeline? At the start of the year, you said we were at the cusp of foreign, investors or private equity getting into the Indian banking. 3 are done. But do you see more such deals?
As I said, each deal has a different rationale, but we're busy.
We're busy, to say the least.
All right, let's get in Mr. Rajneesh Kumar as well, the former chairman of SBI, who joins us on the show. Hi, Mr. Kumar. Good morning. Good to see you. Ben, what are you making of this big infusion of money into a lot of these banks? How do you see things panning out? Right. It's not just positive for the banking names. It could be an industry tailwind as well. Please go ahead.
It is positive in the sense that it creates a reflection that the overseas investors, they have a positive outlook on the Indian banking sector and the Indian economy, and they see the growth opportunities. But we have to take a very balanced view. If you look at the market share of the foreign banks in India, it has declined. Actually, the kind of share they had before the economic reforms were ushered in the 90s and the private sector banks came on the scene, it was public sector banks and some market share for the foreign banks. With the advent of private banks, the whole scenario changed and the market share minuscule. Many banks have left also the domestic market, the latest example being of Citibank. So we should not go very gung-ho about it. But the fact of the matter is that there are certain banking institutions who are looking to have a foothold in Indian market. This could be their strategy to have presence in India. The most suitable segment in which these banks prefer is always wealth and personal banking, and wealth is growing in India. We know the middle class is growing, high net individuals are growing, and the wealth of a large section of Indian community is growing. So that makes it an attractive space. Competing in retail is always a tough task for any bank, whether it's even a large scale bank and operating in any jurisdiction, not to speak of India. So that is always a tough task. So to that extent, if these banks are taking a stake in a bank who have presence in retail, like we saw Yes Bank deal, RBL, earlier DBS acquired Lakshmi Vilas Bank. So it means that there are certain banking institutions who have interest in Indian market. But it's definitely a positive indication when it comes to the BFSI sector in India and the Indian economy as a whole.
Absolutely. Sir, and you know what's also very interesting, that all these deals are happening without that critical aspect of voting rights, without that changing or without any chatter around it, at least that we've heard. And Amit, comment on this, that, what are you hearing? I mean, is that still a conversation that voting rights are capped at 26%? Should we still get in? Because people have come in irrespective. So do you see this as maybe a build-up to again lobbying for some change there?
It's been going on for 25 years. And, RBI, in its own wisdom, will be very calibrated, and it is a sensitive matter. I don't think we should read too much into the strategic deals happening, being a build-up into changes on the regulatory front. The regulator, in its sharpest wisdom, will do the right things for the country. It is sensitive, as one would expect. I don't think we should read too much into what's happened, resulting in any regulatory changes as a sector.
Okay. There's also a lot of interest from Japanese players, right? I mean, actually interest from Middle Eastern players like Emirates we've seen. Then there is, there's names doing the round, Mitsubishi, UFJ. With the Yes Bank already we've seen Sumitomo, come through. Any particular color or take in terms of where all this foreign money is coming from and why?
So, Japan corridor or Asia corridor has been active. In the past also, you see SMFG buying Fullerton. That was a couple of $1 billion transactions, pretty large. You've seen Korean players taking a minority stake in Credila. So the Asian corridor has been active, and I'd say will remain active. They have been players who have been in India for a long period of time. A lot of them have operations in some form and shape, so are now comfortable with the lay of the land. And you will see strategic inbound coming in from Asia. DBS itself did a large acquisition. And the Middle Eastern corridor is a great one to look at because India and Middle East share a lot of commonality in terms of business, in terms of capital flows, in terms of culture, and can be a natural partner into India. So it's a great trend to watch out into.
Do you think it's an opportune time now, Government of India, to go ahead and divest IDBI Bank? We've been hearing about this forever. I've just reading a note that's coming from Macquarie. From a stock market perspective, they hope Kotak Mahindra Bank doesn't do it. They believe it's a de-rating event. That argument for another day. But do you think it's made government's job easier? It's an opportune time to go ahead and divest a bank that they've been talking about for the last 2-3 years.
See, it's a very strategic divestment. Let's not oversimplify it. It's a large bank.
Yeah.
And the government is doing the right things in terms of engaging with strategic players very deeply. Timing is a question of appetite in the market, which it is there.
Question for Mr. Rajneesh Kumar. Sir, while we take your point completely that the lay of the land when it comes to personal banking here in India, retail banking, is not easy. But would it be fair to say that perhaps for tier 2 or tier 3 PSU banks or even tier 2, tier 3 private sector banks, the competitive intensity is going to heat up because you have all this foreign capital coming in? And look at the Federal Bank press release. I mean, it goes on to categorically say that their ambition is to become the 5th largest bank in India. So what will change in terms of just the day-to-day operations over the next couple of months and quarters with this heightened foreign interest?
So when there is a competition market, you and I should smile because more competition means more benefit to the consumer.
Sure.
And again, I'm repeating the same point that if the banking reforms were not carried out in 90s and private sector banks would have come in, there would have been no competition and then there would have been no desire to improve the consumer experience or these services. So competition is good and we have a very good regulatory environment in the country. So I think as a consumer, we all will benefit.
But what does it mean? I mean, will it mean, sir, perhaps the need to raise capital? Again, I'm talking about tier 2, tier 3 banks, PSUs, as well as private. Will they have to shore up their capital buffers? There's going to be a fight for market share. So what does it mean in terms of business?
So it is all about the business strategy of a particular bank and the capital management, an efficient management of the capital. That itself requires a lot of attention from the board and the management. Capital is available, but is available only when that capital provider believes that you will be able to generate the returns commensurate to the expectation of the capital provider. In case of the government ownership, that is not as prominent because the public sector banks, they are to do certain businesses where it's not always driven by the commercial interest or the profit. So there is a different set of banks. You have public sector banks, they have the obligation to generate a decent return and perform well. But at the same time, they have obligations which are not necessarily very profitable, but they are bound to do it. It is their mandate. It is the desire of the government who owns the majority. The private capital or the private banks, it will always be returned to the shareholders. And in that sense, it's not a level playing field fully. Third is foreign capital or the foreign-owned banks, and their business strategy and the return on capital expectations are different. So we have 3 different set of people, 3 different targets or business strategies and the market segment in which they operate. Foreign banks will mostly operate in wholesale.
Okay. I think we just lost that line with Mr. Kumar. But you were saying that, strategies will evolve and it's large markets. Perhaps there'll be segmentation in any case. Amit, thank you so much. Very helpful conversation. And we heard you. You're saying it's continuing to be busy. It'll probably be busy and there are more to come. So we'll watch out for that. Thanks for joining us today.
Thank you very much.
Thank you. Okay, we take a very quick break. Come back with an update on the commodity markets in just a bit.
Welcome back. Let's talk commodities now. Manisha is joining in, and it's copper on her mind right now. Manisha.
Thank you for that, Rima. Well, it is because that is the reason copper is trading at an all-time highs, near all-time highs right now. If you look at the copper prices, we've gained up by nearly 25% in this year till time. The all-time high that copper has seen on LME has been in May 2024 at the tune of $11,104 a ton. Currently, we are trading at around 11,000. It seems to be really gyrating around those levels. But the point being that we've seen 11,060 in the markets on Friday. So that tells you that we're not too far away from its all-time highs. And as I said, copper has gained up by nearly 25% in this year until time. Well, there have been various supportive factors to begin with. It has been about the decline in US dollar index in sense of macros. And then the US and China meeting this week could result in a trade breakthrough. All the statements that we've been hearing over the weekend have been quite supportive. You have threat of 100% US tariff on China now off the table, as Secretary Bessent has said. And then Beijing also is expected to pause for a year its rare earth export control. So both sides seem to be working towards something. Remember, they are the largest consumer countries, and China, of course, is important in sense of producer and consumption as well. But apart from that, it is about mining concerns, which seems to be keeping copper on the higher side. To begin with, it's about Codelco's El Tenite mine in Chile, which has seen some disruptions coming in. It also has to do with major sites in Dominican Republic, which have seen some electrical issues, and that is the reason the mines there as well have seen some shutdowns. Democratic Republic of Congo also is looking at some mining concerns there. And then you have the Grasberg mine in Indonesia, the accident therein, and we haven't seen much of that still come on form. The expectations are that the Freeport mine could be looking at all of its production coming in only by the mid-2026 or even 27 for that matter. That is what is keeping the copper prices higher. As you can see on MCX as well, we're looking at 1,000 rupees a kg right now. So very, very strong gains coming in for this one. There also is a report from BHP which says that there is going to be a lot of decline that you're looking at in sense of global demand by 2050, and that would be driven by energy transition. Also, the markets will watch out for the central bank meetings this week. You have US Fed meeting where expectation of a 25 basis point of a rate cut pretty much has been factored in by the markets. And then you have European Central Bank and Bank of Japan monetary policy meetings also this week. So lots of event and data coming in. But the street does believe that by the time we close this year, you could be looking at 11,001 taken off. So that means new higher highs coming in for copper pretty soon.
Thank you very much for that. Get into a break. On the other side is our special segment, Indonomics. Lata speaks to veteran bankers Zareen Daruwala, former MD Standard Chartered, and Srini Varadarajan on RBI allowing banks to do acquisition finance and on the new foreign banks' interest to buy shares of Indian banks.
Welcome to Indianomics. We stick with banks. The ecosystem for banks is getting more dynamic. In the past 6 months, 2 foreign banks and 1 private equity have bought stakes in Indian banks for nearly 50,000 crore rupees. I'm referring to, of course, the NBD in RBL, SMBC Bank in Yes Bank, and Blackstone more recently in Federal. Separately, the Reserve Bank is removing old constraints on Indian banks. For the last 2 decades, Reserve Bank had insisted banks should only lend for capex, that is, create fresh assets, not to help corporates buy one another's assets. Now the Reserve Bank has announced draft rules allowing banks to do acquisition financing. More generally, ECB financing rules have also been eased. Does all this mean more business for banks and more competition? Will more foreign banks be attracted to India? Joining me to discuss whether we are on the threshold of a brave new banking in India, or at least an inflection point in Indian banking, are 2 veterans, Zareen Darwala, former CEO and Managing Director of Standard Chartered Bank, and Srini Varadarajan, another veteran banker who has done stints in Axis as DMD, before that in ICICI, where he probably worked with Zareen and was in the capital markets division along with JP Morgan. Zareen and Srini, thank you very much indeed for your time. Zareen, for starters, we saw Stanchart and Citi actually reduce their businesses in India. But now we have 2 banks from different geographies, Japan and Middle East, coming in to buy huge stakes in small Indian banks. Will we see more of this?
So first of all, Lata, I don't think Stanchart reduced its business in India. I'll clarify.
Okay.
It globally decided to exit unsecured lending, and that was a global decision. Otherwise, very much a large presence.
Okay.
Coming to, after SMBC and NBD, will more foreign banks buy? Yes, absolutely. I feel banking is a good barometer for the Indian economy, and we will see a lot of the smaller private sector banks which need more capital, certainly looking at this optionality. Also, I think the segment that we will see more attention coming in a few years is the small finance banks. Clearly, there will be some consolidation that may come through in that segment. And I think the last 2-3 deals are also a sort of reflection of the good geopolitical relationships in India-Japan corridor, UAE-India corridor, and the whole business momentum in these corridors will pick up, which will help these banks in their business in India. And I feel there'll be a trickle of strategic stakes, not a flood.
Oh, okay, trickle. Well, a similar question to you, Srini. On the one hand is the foreign interest, which of course will have to go through this voting rights issue as well. But separately, how many Indian promoters will be willing, sellers, or I'm only referring to banks now, will they be willing to give up a strategic stake to banks?
Yeah, I think if you look at the shareholding of banks, and what RBI tries to achieve is to have a diversified shareholding. And to that extent, you do not have any large shareholder as such in a bank, other than barring a couple of banks right now. So the opportunity for someone to take, and therefore most of these banks are professionally run. And therefore the opportunity for a financial investor or a strategic investor to come in and take a reasonably large chunk, which is broadly around 10%, and in some cases, as we're seeing, where RBI is slightly more liberal to more strategic stake, where a controlling stake is also happening. I think it's possible, but I don't think so there's any sponsor looking to sell. It is just banks clearly have need for capital, and that capital requirements can be met through incremental issuance to existing investors and domestic investors. But again, if there is strategic comes in and they believe have deep pockets, I think it's useful for the bank from a growth point of view to try and get those investors on board. And I think that's what we're seeing that's happening.
Okay. Well, Yes and RBL Yes has the advantage of being a digital bank. It's a new bank. And RBL has reasonable branches, not many. But, will the ROI be justified for, any global bank? Srini, you go first on that.
Yeah, I think if you look at the geographies from which these investments are coming from, I think these are really cash-rich geographies, and they are seeking long-term investment And the threshold returns, which possibly they're expecting, is more related to the growth in these entities rather than actual return on equity, which possibly will happen over a period of time. It gives them access to a market and customers which continue to grow, and the visibility of growth is very high. And they will ride the wave through the cycles. And I think that's the way I think both the RBL and the yes transactions have happened. In Federal Bank, I think it's more a financial transaction. I think it's a good, well-run bank, and therefore nothing changes from the way the bank runs, and it's a financial investor coming on board.
Yes, it's only a private equity. It's not a bank. But Zareen, you said that you don't see a flood but a trickle. I mean, it is a long way to build a retail interest in Indian banks, and the giants are already there. The top 5 banks are really big in India. So is that what is making you a little skeptical that foreign capital may not rush in?
No, I think the number of entities which are available or platforms is not that many for a foreign bank to come and, if you take the next tier of banks, they are quite small, some of them like Karnataka, Karur Vyasa, right?
Yeah.
And it's quite possible that some of those entities may not be very exciting for foreign banks.
Okay.
While RBL and Yes were much bigger banks, in the Indian scheme of things. Having said that, if a bank is very keen to have a ready-made platform, then yes, it provides a ready-made platform. But then culture-wise, it becomes a challenge for the foreign bank also sometimes, to sort of revitalize the culture, which is suited to global aspirations.
Yeah, I think in Federal Bank, the advantage was that they got a Stand Chart banker for a good 15 years, and then perhaps even now, it's only a private equity capital. Okay, Srini, time permitting, I'll return to this. But basically, you also agree that there could be a flood of capital.
I agree with Zareen. There's got to be no flood of capital. I think the thing is the visibility of growth is there, and therefore people are interested to invest for the long term or strategic perspective.
So more private equity than banks?
But as you said, I think the return expectations need to be moderate. I don't think so you can expect exciting returns or blockbuster returns from these things in a 3 to 5 year period. It's a long haul. I think foreign banks have struggled in the Indian context, as you said. The top Indian banks have given the foreign banks a run of their money, and clearly building a business here, both wholesale and corporate, both wholesale and retail, has not been easy for foreign banks. So I think it's more having a foothold in a market which is growing and trying to find your way rather than trying to say, I'm going to get exciting returns here.
Okay, fine. Time permitting, I'll return to this. The bigger, excitement for the entire Indian banking sector is the draft rules on providing money for acquisitions. Until now, banks could not do that. They will start from April 2026. Now, the rules are that the banks have to, the limit is 10% of their tier 1 capital for the entire banking system. That comes to about 4 to 5 trillion rupees, not a small amount. And the rules also are that it should be a profit-making bank. It should be a profit-making company whom they are financing, listed and profit-making for 3 years. Zareen, is this opening up a big line of business for Indian banks?
I would say it is definitely a segment which for many years has been close to Indian banks. And to a large extent, most of the M&As were getting funded from FPI or NBFC or AIFs. To that extent, it's clearly an area of opportunity for Indian banks to sort of step in. Having said that, as you rightly said, there are boundary conditions like debt equity ratio of 70-30. Similarly, the acquiring company has to be a listed entity. So there are boundary conditions, and also it eats into the CME exposure of banks, which is not a big headroom that banks have. A lot of banks have, CME exposure is sort of not that much headroom is available. To that extent, it is a new area and it's an opportunity for Indian banks.
Okay. Your thoughts, Srini? It's not just these constraints. Also, as Zareen pointed out, the overall 40% of Tier 1 remains as a cap for all capital market exposure. Will banks be interested? Banks have not shown much penchant for corporate lending itself.
Yeah, I agree that I think, again, here also one should moderate the excitement in terms of what investors and outside stakeholders think about what the RBI regulations will achieve as far as the banking sector is concerned. If you look at the tier one equity of banks, broadly, it's around 25 lakh crores. So if you look at 10% of that, it's about 2.5 to 3 lakh crores is what you will get.
Okay.
This is a limit which is not going to increase over the next at least 3 to 5 years. And if you look at any bank, I don't think so they're going to achieve 10% in 1 year. So if you assume they're going to achieve this 10% over 3 to 5 years, and you're talking about 50,000 crores.
Okay.
And similarly, as you said, that ICICI, HDFC Bank and SBI are almost 45 to 50% of the banking sector net worth. Yeah. So almost if you're 2.5 lakh crores, 1.25 lakh crores is with these guys. So the whole thing is, if one of these guys don't show much interest because other capital market exposures offer them much better returns, the amount of banks financing which can happen for this is much lower. So I would think it's a window which is open for exception trades to happen, meaning some trades will go through where listed entities which are acquiring good targets, I think, and highly rated will get financing. But to believe that every acquisition is going to be financed by banks, I think it's far away. I don't think so business of NBFCs and AIFs are anyway going to be affected by this. I think they play in a different segment. Sponsor financing is a big part of that. Oh. And with any acquisition debt, typically good corporates find a way to finance it through entities which offer almost slightly higher than debt financing rates. So sponsor financing is unaffected, and I think banks will slowly scale up. So I don't think so one should expect immediate growth from this. It will be a good start.
Okay. Well, thanks for pouring some cold water into, enthusiasm of the naive. Zareen, what's your take on this? Would you say that, this 3-year listing and 3-year profit should go? I mean, that will reduce the terrain so much. Do these guys, 3 years profit making and listed stocks, even want bank money?
No, so I think, sorry, I didn't get your question.
No, see, the rules are that you can finance acquisition only if the acquirer is a listed company and has 3 years of profit-making record. Such people will not even want money. No, they will have their own money. So do you think this is too restricting a qualification?
I think if most M&As, there is some funding because even if a company has surplus cash flow, they may have commitments for capex, etc. So they do come to the market. There are very few who are zero debt companies, like the tech companies or some of the MNCs who don't come for borrowing. So to that extent, I would say even if they're listed and they're profit making, they will access bank finance, stroke NBFC finance for acquisitions.
Okay. Well, I'm not done with my questions. There is another set of
Lata, I just want to add one thing. I think the way I'm looking at how RBI has changed its mindset here is that till now you are trying to tighten NBFC regulations to make it on par with banks. Now it's happening the other way, where RBI is saying, I will relax banking regulations to make it on par with NBFCs. So that process is starting, where you're trying to level the playing field. You level the playing field from one side. Now you're saying from the other side, I will level it.
Okay.
So we'll get to somewhere in between.
Okay, that is actually a headline. Yeah, Zareen?
I'd just like to say that what Srini said, this is a new lane which is created, not an autobahn.
Okay. Anyway, that's still important. Let's hope that the lanes will be expanded as Bombay is doing or as India is doing. Lanes will get expanded into multiple lanes. We have to take a break, but I'm not done with questions. There is this ECB financing also which has been relaxed. And I wanted your views on, the entire banking sector impact of this complex of rules and this change of attitude of the Reserve Bank. Back in a minute, Bazaar viewers, you will get to hear the whole thing after market hours.
Strong gains across the board as the Nifty inches back towards that 26,000 mark, very close to that, 50 points away. Oil and gas realty stocks are top gainers, while pharma and FMCG too see some muted action.
Kotak Mahindra Bank slips in trade following its Q2 results amid concerns over valuations. The bank's net interest income grew during the quarter, while the profit declined. The asset quality largely stable.
Go forward surges 5% as the top F&O gainer today after the company beat street estimates. The management tells CNBC-TV18 they're very close to achieving the $2 billion revenue run rate. Clark's too gains as the second quarter constant currency revenue grows and the board announces a buyback of 6.5 lakh shares.
SBI Life gains over 3% as the company's Q2 beat estimates on most parameters with its new business premium up 27%. SBI Card, on the other hand, falls short of expectations in the second quarter. It's down close to around 3%.
Zen Technology is down nearly 5% as the company's EBITDA and revenue declines in the second quarter. Meanwhile, Brigade Hotel surges after the company's second quarter sees a profit jump of 58% led by lower finance costs.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and it's a good start to the week. The Nifty, as you can see, is surging along. It's up more than 160 points. The Nifty Bank is participating as well as the breadth of the market, looking quite good. So, Mangalam, a good start to trade.
A good start indeed, and it's good to see the Nifty Bank participating after a couple of days of, a decline that we saw from the highs for the Nifty Bank. So it's led by a lot of the larger banks. HDFC Bank is at the high point of trade as we speak. But the broader market banks also continue to put their head up. So we have something like a Canara Bank, which is at the high point of trade. A lot of the PSU banks doing extremely well. And Federal Bank, in just the last few minutes, has seen a big surge. Federal Bank, too, has moved to the high point of trade as well. Where do we go from here? Let's get in Shivangi Sarda of Motilal Oswal Financial Services for a quick technical check on the market. Shivangi, the last time we crossed past that 26,000 mark, we saw some bit of supply. After which we saw some demand at lower levels, not too low, around 25,800, 25,750 itself. Now we're on our way back up. Do you think this range-bound trade will continue, or at current levels it is better to expect a breakout from here?
Very good morning, Mangalam and Nigel. Thank you for having me. So, absolutely rightly said, we are on our way up, and we've seen that in the last two trading sessions, after touching an immediate high, Nifty index, faced some sort of profit booking. But the good part is that a lot of put writers were strong at 25,700, which did not shift base and acted as a rebound level for the Nifty index for the bulls to buy in again. And overall, we've seen that, even though there was profit booking, but, stock-specific action continued to keep the broader market up. The strength was clearly visible. So we are going with buy on decline strategy. Of course, we are into the monthly expiry week, so a lot of volatility and momentum will be expected here out of this week. But overall, 26,250 is what we're expecting for Nifty index immediately, and then to surpass the immediate lifetime high levels. But this 2-day dip has been quite healthy for the index with a support of 25,700 marks. Talking about Bank Nifty, of course, this has been an outperformer, and this has contributed the most in this entire rally. We are going with buy on decline here as well, with the strength continuing in the PSU and the smaller banking names. So we're looking at immediate lifetime high levels, and then immediately we're looking at 58,500 and then 58,750 odd levels for Bank Nifty with a support of 57,850 marks.
Okay, all right. Hi Shivangi, good to see you. And as always, what's the view on Reliance Industries? The big boy is finding its form. If I pull up the last 10-day chart, you'll see it's actually been the outperformer. It's doing bulk of the heavy lifting. Where's it headed?
Of course, Reliance has done a lot of heavy lifting from the last 3 weeks, and we've seen that short covering has led to long build-up now. The stock has surpassed its key exponential moving averages as well. So, you must have seen after a lackluster move in the last 60-odd trading sessions, it's come out of its consolidative band at the higher zone of around about 1430 levels. So now, which is now acting as a support level. So clearly the role reversal has happened here, and we are actually looking at the immediate levels of 1500 and then 1520 levels for Reliance with a stop of 1460 zone.
All right, that's about Reliance. But what are the other stocks that are, you're flying into your radar today, this morning, as you expect the markets to move higher? Any particular trades?
Yes, Manglam. So having said the strength in the bank Nifty, we are going with the first preferred pick with Federal Bank, which has seen a fresh breakout today of the Poland flag pattern formation on the daily basis. Even on the weekly charts, we've seen that from the last 4 weeks, follow-up has been extremely strong. And the kind of volumes that we've seen this month so far has been exceptionally high. Of course, it's recouped most of the losses of the previous months, and of course, on the yearly basis, also this stock has been one of the strongest out of the entire lot. So, strength both in the immediate and the long-term basis. 245 is what we're looking at for Federal Bank immediately, and 230 is the support that we have to look out for. The second pick would be Bharti Airtel, which has seen a short covering move, and we've seen that RSI is turning positive for this one with a breakout on the monthly basis, which is giving room for a more upside here. It's quite sustainable stock, and any declines have been utilized for buying opportunities. So we're recommending this for an upside of 2160 levels for Bharti Airtel with a support of 2040 levels.
All right, Federal Bank and Bharti Airtel. Do you have a view on HDFC Bank? HDFC Bank is too doing fairly well in today's trading session. In fact, if you look at the contribution to the Nifty Bank, HDFC Bank, by virtue of its weight, is the top contributor on the way up today. 425 points higher on the Nifty Bank, a large part of it coming in from HDFC Bank. Do you think 1,000 rupee that it's crossed today is an important mark?
Absolutely, Manglam. If you look at the heavyweight, the pillars of Bank Nifty, in fact, even if you look at the ICICI or Kotak Bank, they have underperformed, but HDFC Bank has been one of the most resilient names in the entire banking private space name. So definitely this is quite strong. And we've seen that, the stock has actually consolidated from the last 4 months. So this consolidation is, calling in for a good up move here because it's getting ready to break out from its higher band. So HDFC Bank, we're looking at the next levels of around about 1040 zones in this one with a support of 990 levels.
All right, Shivangi, final question before we let you go. You have Coforge is higher in today's trading session, posts its results. Even eClerx actually is quite strong. But FirstSource is a stock actually that's also moving on very large volumes. How is FirstSource looking on the charts? Because that one has popped up. Let's get the intraday chart of that stock up for our viewers. It's up, I think, more than 5%. Any view out here? And currently at the high point of the day?
Of course, there's a lot of momentum that has been seen in this entire, space. If we talk about this stock specifically, of course, we've seen a lot of momentum today. The stock is up by more than 7%. But the stock has also come out of its consolidative band of the last 18 trading sessions, which has, caused a price volume spurt here. Now, the volumes have also added, so which confirms the up move here. But then it is important for the stock to hold above 342 levels, which is also an important exponential moving average level. So till the time it holds above 342 levels, we could expect, the up move towards 360 odd levels with a support of 342, of course.
All right, we take that point, Shivangi. Thank you so much for joining in and giving us a whole host of stock ideas and the view on indices as well. As we move into a short break, the broader markets is where a lot of the action is, specifically in the cash segments. We have Spencer's Retail, which has moved higher, moving on fair amount of volumes. Force Motors is the other one which has moved to the high point of trade. And GE Shipping continues to move higher as well. That's another stock which is up almost 3%, and a lot of volumes piling up on that one as well. Force Motors at the high point of trade. We have GE Shipping, which is buzzing around as well. What we'll do is take the short break, come back at you more on a lot of these buzzing stocks. Why exactly, are they moving around? And we'll get you some more details on that. Stay with us. 35 points away from the 26,000 mark on the Nifty. When we started the show, close to 25,950. Now we're moving from strength to strength. Let's see where we go from here. But if, there was one sector which had been buzzing over the last few trading sessions, it is the metal space. And Nigel joins in with a further update in specific on steel. Nigel, what's taking place out here?
Well, INCRED, they have come out to the north and they're sounding more optimistic on the prospects, particularly of the ferrous players. They have been relatively, negative on some of these stocks. Now, let's take it piece by piece. First, on Tata Steel, they have upgraded the stock to add. Earlier, it was reduced. The target price they have at around 224 rupees. They say that the company is a leverage play on India's industrial upcycle and Europe's post-war reconstruction boom. They also go on to mention that the Russian-Ukraine conflict appears that there is a negotiation underway, and we could see the end very, very closely. So they're saying that Europe is ready to rebuild the entire system out there, and that could be nearly around a $800 billion opportunity, which could push up demand for steel. Back home, that's in India, for Tata Steel India, they're saying that the policy of protectionism as well as strong domestic growth, that's what's going to help in anchoring visibility all the way till 2030. They also note that, yes, the captive mine auctions may lift costs, but India's self-reliance push should hold the margin line. So all in all, they're positive in Tata Steel. Moving to SAIL, out there, they've nearly doubled the target price. Now they've upgraded the stock to add. The target price moves to around 158 rupees per share. And they say the company is a tactical play on the protectionist stability, not just a cyclical upswing. They also go on to mention that the company is fully integrated on the iron ore front, which is a key built-in advantage. Operating leverage drives recovery, volumes are likely to rise. The finished steel as a proportion of the mix, well, that could move up as well. And staff costs could inch up only marginally, which has been otherwise a bit of an issue, particularly for a company like SAIL. On JSW Steel, though they maintain their reduced rating, they have upped the target price, 776 rupees to around 939 rupees. They say that, yes, the street loves its flawless execution, but the valuations test gravity at around 4 times price to book. They also put in a couple of numbers. They're saying consensus expects EBITDA number to be at around 34,000 crores for the entire FY26. However, at the half-year mark, they're at around 40,000 crores. So they believe getting to that mark could be a little difficult. So put all this together, INCRED sounding relatively more positive on the steel stocks.
All right, INCRED sounding positive on the steel stocks, all of them buzzing around. Let's see where they go from here on as well. But the financial space is in focus because the RBI has announced draft rules for allowing banks to finance acquisitions. Ritu joins in with more details on the prospects of what this does for the banking sector and, more importantly, what it does for acquisitions and mergers as well in our industry. Ritu.
The Reserve Bank of India has finally put out draft rules on capital markets and acquisition financing for banks, setting clear limits and safeguards. So a bank's total exposure to capital markets, both direct and indirect, is going to be capped at 40% of the Tier 1 capital. Within that, the direct exposure, which includes investments and acquisition finance, cannot exceed 20%. And specifically, acquisition finance is going to be capped at 10% of the Tier 1 capital. Now, on M&A financing, for the first time, RBI is allowing banks to lend to Indian companies that want to buy stakes in other companies in India or abroad. But RBI says these deals must be strategic and aimed at long-term growth and not short-term profits. To qualify, the acquiring company also has to be listed, have a positive net worth and must have been profitable for the last 3 years. Also, banks can only fund up to 70% of the deal value, while the remaining 30% has to come from the company's own equity. After the acquisition, RBI says the debt-to-equity ratio cannot exceed 3:1 and the loan must be fully backed by shares of the target company as security. Next, let's also talk about lending to capital market intermediaries. Banks can lend to them only if the loan is fully secured and the collateral actually belongs to the borrower, and there is a restriction where banks can't finance them for proprietary trading or investments of their own. Now, when it comes to IPO, FPO and ESOP financing, banks can lend up to 25 lakh rupees per person, but covering only 75% of the subscription value. Finally, loans against securities for individuals. Banks can lend up to rupees 1 crore per person. Within that, 25 lakh rupees can be used for buying shares in the secondary market. Now, while bankers we've been speaking to have welcomed the move overall, called it a good start, not all their requests have been addressed. So they will seek clarifications, for instance, whether banks can finance foreign companies looking looking to buy in India, not just Indian companies making acquisitions. Also, the clause on acquiring company being a listed entity, the profitability and the 3:1 debt to equity cap after acquisition has also raised some concerns among bankers, especially for deals that involved distressed assets. Public comments on this draft are invited by the 21st of November, and the final rules are expected to kick in from 1st of April next year.
All right, Ritu, stay with us. Let's turn our attention to ICICI Bank. Sandeep Bakshi's term as ICICI Bank CEO, that's up for renewal in about a year. But is he going to continue after the current term? Ritu, fill us in on the latest on this front.
Well, there's growing buzz around ICICI Bank and its CEO Sandeep Bakshi, whose term is up for renewal in about a year. And the big question that everyone's asking is, whether the man that turned ICICI Bank around stay on for another term. Now, that question actually came up during the bank's recent earnings call, where an analyst from Bank of America Securities asked Sandeep Bakshi directly about his intention to continue. The response came from the group CFO, Anindya Banerjee, who said there is still time and the board will take a call and make a disclosure at the appropriate time. Now, analysts say it really depends on Sandeep Bakshi himself whether he wants to continue or not. For instance, Suresh Ganapathy at Macquarie Capital notes that while personal factors could be at play, the board seems fully supportive of him staying on for another 3 years after his current term ends in October 2026. Now, under RBI rules, private bank CEOs can serve up to 15 years or until they turn 70 years of age, and Sandeep Bakshi at 65 years is well within that limit. Now, since taking charge after Chanda Kochar's exit, Sandeep Bakshi has led a remarkable turnaround for the bank, and investors have also rewarded that. For instance, ICICI Bank trades at 3 times its expected FY26 book value, higher than HDFC Bank's 2.7 times. So if Sandeep Bakshi decides to move on, Macquarie points out to Rakesh Shah, a long-time ICICI Bank executive, as a possible successor. Now, in response to our query on the matter, an ICICI Bank spokesperson said that the board will take a decision on the matter at the appropriate time.
Okay, all right, Ritu, thanks a lot for that. Well, here's a quick note for all our viewers. If you'd like to access expert-driven insights and actionable chart patterns, simply scan the QR code, which is up for you on the screen, and subscribe to Money Control Pro Super Pro and get daily expert calls, actionable charts, and insights to power your investment decisions. Plus, the festive season, there's more reason to celebrate. 10 lucky subscribers every day will win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro.
in the
Welcome back. The market continues to do, well right now, 150 points higher on the Nifty, but a lot of shareholder lock-ins are ending today, and as a result of which we may see some action on stock prices. Which are these companies and what is the lock-in which is ending? Nearly $2 billion. Hormaz joins in with that list. Hormaz.
10 companies and as you mentioned, almost $2 billion, so 17,000 crore almost, and a lion's share of that coming from one single company, Vari Energies. That stock is up and about in today's trading session with shares of almost 16,000 crores that are freeing up for trade. Of course, we need to highlight the fact that the shareholder lock-in ending does not mean that all of those shares will be sold in the open market. Of course, they only become eligible to be traded. But among the other companies aside of Vari, most of them are recent listings. Atlanta Electricals was one of them, shares worth almost 150 crores freeing up for trade. That stock is down today, but has done fairly well from its IPO price. Sensex Technologies is another one, shares worth almost 112 crores freeing up for trade. That stock is not doing much today, but is down almost 10% from its issue price. Another stock that has done well as a recent listing is GNG Electronics. Here, the 3-month lock-in period ends. Shares worth almost 100 crores freeing up for trade. The stock is up almost 40% when compared to its issue price. Now, some of the names that are not doing so well in comparison to their IPO price, IndiCube is one of them. Here, shares worth 150 crores free up for trade today as the 3-month lock-in ends. Jaro Institute was down 25% from its IPO price going into today's session, is down another 6% today. And here too, the 1-month lock-in ends. Shares worth 54 crores freeing up. Solar World Energy as well, shares worth 100 crores getting eligible to trade. Almost 31 lakh shares free up as the lock-in ends. Anand Rathi, that stock has done well as the recent listing. The shares in stockbrokers unit, shares worth close to 140 crores becoming eligible to trade. Ganesh Consumer, shares worth 50 crores become eligible to trade. The stock has is down from its issue price. Brigade Hotels is up and about today, is up around 3.5–4%. Here too, the shares worth almost 150 crores free up for trade. And of course, as I mentioned, Vari, almost 4 crore shares become eligible to trade worth almost 16,000 crore rupees. That stock is up almost 130% from its IPO price and doing very well for itself in today's session as well.
All right, Hormaz, thanks a lot for that. We take that point. A couple of stocks which are coming off the day's high right now include the likes of BHEL, Exide, Hinzink, and GMR Airports as well, which is currently at the low point of trade. No problems for the market though. All major indices fairly and squarely in the green, with the mid-caps and the Nifty Bank outperforming. With that, we take your leave on this edition of Chartbusters. Stay with us. The team of Trading Hour comes up next.
Hello and welcome to Trading Hour. We are live coming to you from Motilal Oswal CNBC-TV18 studios. I'm Sonal Bhutra. With me always Hormuz Fatakia. Hormuz, good morning. Well, as you were saying, we have snapped the twinning streak. But of course, the week has started in the green today. It's almost a 200-point uptick on the Nifty as we speak, closer to the day's high, 25,978, and a lot of contribution coming in from the PSU banking space. Reliance Industries is contributing meaningfully. We do have the oil and gas space, which is doing well. IT is up 0.8%. The only two sectors which are in the red right now, pharma and the media index. But other than that, you have good gains coming in from the mid caps, which is up 0.8%. Even the small cap index is contributing 0.6% higher there. So barring these two sectors that I spoke about, all of them are in the green, and a lot of earnings which are trickling in. We'll keep discussing that in greater detail and analyzing that for you as well. But let's go across to Hormuz. He's here with us as he puts the spotlight on top movers in the market as we speak. Hormuz.
You know, broader markets, they have taken a bit of a backseat considering the focus has been on the index and that move back towards the 26,000 mark. But of course, that does not take away from the fact that there are enough and more movers in the broader markets. They start off with a company called Bharat Wire Ropes today. The stock is up 20%. It's the biggest single day gain since February of 2020. The volumes today are the highest since January of 2020. And in this 20% upper circuit, we have had close to 90 lakh shares that have been traded. The 20-day average here is less than 50,000 shares. So you take a look at the volumes here. Now, the stock has now moved above its 100-day moving average convincingly, which is at 190. And it's despite this 20% up move, the stock is still down around 2.5% on a year-to-date basis. And this is after the stock had declined by almost a third in 2024. Now, RR Kabul is a stock that is in focus because it is among the top gainers on the Nifty 500 today, almost 8% higher on the stock. The biggest single day gain since May. We have had 14 lakh shares that have been traded on this stock, and the 20-day average here is even lesser, less than 35,000 shares. And the stock is in focus this week because it's going to report its results. The stock has moved above its 100-day moving average here as well, as 1,300 rupees was the 100 DMA. Another underperformer in 2025, down 7% so far, but is fairly okay from its IPO price of close to 30% higher from those levels. GPT Infra is the other one. The stock reacting to news flow, the biggest single day gain since May. I meant GPT Infra, not GR Infra. The stock is reacting to a 195 crore order win from the Ivory Coast. The stock has had close to 35 lakh shares that have been traded. The 20-day average here is only 36,000 shares. The stock is up 12% as we just spoke about it. The stock has moved above its 50 DMA of 114, and the 100 DMA on the upside now comes up to levels of around 121. So keep an eye out on those levels. Now the stock is down around 18% on a year-to-date basis. So another underperformer in the broader markets, but doing well today. And the stock has had positive annual returns since the start of 2020. And lastly on the list is Alicon Castalloy. The stock has seen its biggest single day gain since May. It's gained in 4 out of the last 5 trading sessions and had close to 9 lakh shares that have been traded on the stock. Look at the 20-day average here. It's less than 2,000 shares. And on less than 2,000 shares average, we've had close to 9 lakh shares that have been traded. The stock has moved above all of its key moving averages. And as a result of this move, the stock is up 17% in the month of October, which is turning out to be the second best month of the year. And the stock hasn't done much in the recent past. It has had single-digit returns in 3 out of the last 4 years on either side, Sonal.
Okay, all right, take that point. Thank you so much for joining us with those details on some of the buzzing stocks that we have on our radar. By the way, the other stocks which are buzzing in trade today, Greaves Cotton, for instance, up 6.5% as we speak. Welspun Corp is up 5%. We are awaiting Chennai Petroleum's numbers. So MRPL, that is the other one on our radar, reported good set of numbers a while back, and that stock is buzzing too in trade, up around 3-odd%. What we'll do is now we'll slip into a short before we slip into a short break, we'll do one thing. We'll go across to Gaurav. He's joining us with the update on SBI Card. Gaurav?
Well, when we look at the numbers for SBI Card, it was a weak set of number in terms of second quarter. And I'll tell you why. What happened is that in second quarter, in the end of second quarter, we saw festive season kicking in, and that is the reason why we saw some kind of weakness in terms of interest income for the business. And the reason being that most of its business is now booked under transactor category, and that is the reason why fee income that has gone up, but interest income that remained flat. As a result, revenue that increased almost by 12% on a year-on-year basis. on the other hand, when we look at net interest margins, we saw this impact there as well. Net interest margins remained flat. In fact, when we talk about yield on advances, now that has declined almost by 60 basis points. Apart from that, what happened is that because of the festive season, we saw OPEX growth that was also high. And as a result, when we talk about the other operating income, now that declined almost by 10% on a year-on-year basis. Now that was again a little bit lower than the street's expectation. When it comes to credit costs, now we saw a sign of relief because credit cost now came down to 9%. Remember, credit cost has been above 9% for the last 5 quarters. So after that, now management is saying that from here on, credit cost is likely to be below 9%. So that is something which is positive. But on the other hand, when we look at profit, that declined almost by 20% on a sequential basis. It was a bit lower than the street's expectation because they were expecting somewhere in the tune of 500 crores of PAT, which came in at around 450 crores. Now, when it comes to some of the positive points, we are seeing some positive commentary from the management, specifically in terms of credit cost, in terms of growth, and in terms of net interest margins. But overall, because of the weak set of numbers, we are seeing some kind of pressure in the stock price today.
Gaurav, thank you for that update. Earnings reaction on SBI cards, and 2.5% lower, slightly off the lows of the day, but some of the numbers that underwhelmed in the quarter gone by. And taking the conversation forward now onto a corporate discussion, and that's another earnings reaction, that is India Mart. Now, while the company missed its margin expectations, the revenue was up 5%, the profits were down on a sequential basis. We are now being joined by Dinesh Agarwal, the CEO of the company, to discuss the quarter gone by and the road ahead for the company. Mr. Agarwal, good morning. Thank you for joining in. Now, what led to this margin drop on a sequential basis? You were close to 36% in the first quarter. Your numbers came in at around 33 this time around. Do you see this as a one-off blip? Because the fact that your margins have been declining for almost 4 quarters now, you're 39% in the third quarter last year. When do you expect this trend to stabilize?
Yeah, as I have guided when the margins were at 39%, that those were one-off, and we had guided that the stable margin should be considered to be at about 33%, and that's where we are. Because those margins were since our collection comes upfront and the cost goes according to the collection. As the collections had slowed down over the time, the margins were showing elevated at that point of time. Now that the collections and revenues are more or less in line, that's why the margin is stabilizing. The second part is we have also started to do some little bit of an advertising, about 6 crores a quarter, and that is reflecting into about 2% of the margin decline. So that's where we are at 33%, and it will continue to be at around this percent.
Take that point, Mr. Agarwal. So those will be the normalized margins going forward. You spoke about how collections and revenues have also, become the levels which are expected going forward as well. So while we have seen ARPU improving on a quarter-on-quarter basis, it has grown by 7% on a YY basis as well. There is some softness which has come in collections. It was down 20.5% on a sequential basis in quarter one. This time it's a 5.5% sequential decline. What explains this divergence?
So for quarter 4 to quarter 1 is always decline, because quarter 4 is a bumper quarter, JFM quarter. So there is a lot of people who want to buy at that particular time, advertising. And between quarter 1 and quarter 2, if you historically also see, there has been a 5-6 crores of decline because of the number of working days and a little bit of holidays. So this is normally okay.
Okay, so what collection level is expected going forward? What kind of growth is expected overall in the financial year?
So as you can see that collections are trending at around 10% odd, and we are looking forward to doing a double-digit growth in this particular financial year.
Mr. Agarwal, you mentioned that you have started doing some advertising every quarter. Has that translated into any incremental positives in terms of business inquiries and addition to the paid subscriber list? Because your unique business inquiry growth has improved by about 12%. How much of that do you expect to continue going forward, and how much will this advertising contribute to it?
Yeah, advertising should have contributed about half of that growth. So about 6-7% came from the organic growth, and 5-6% came from the advertising-led growth, and that should continue going forward as well.
The company recently increased pricing for silver packages for new customers as well. Are price hikes for new silver tier subscribers expected to curb gross additions in Q3 and Q4? What's the highlight here? What's the expectation here?
Yeah, I guess every time you do a price hike, it takes about 2 quarters to stabilize. We did it from the 1st of September. So we expect that, the current quarter to be a little bit softer. And then probably in the last quarter, we'll match up the gross addition.
What about ARPUs, Mr. Agrawal? You started off, you have now gone up to 65,000. Same quarter last year, you were at 61. Do you see 65,000 as a normal number for ARPUs, or do you expect that to trend higher in the quarters ahead?
See, ARPU has been growing at around 6 to 8% historically, if you see many years. However, it doesn't grow like a exact 6 to 8% every quarter on quarter. Sometimes it grows at 10-12%. Sometimes it grows as 4-5%. Because the price hikes that happen and the customer seasonalities that happen. But we expect the 6 to 8% growth in the ARPU to continue going forward also.
All right. Thank you so much, Mr. Agrawal, for joining us today with insights on what the quarters coming ahead would look like for the company. That's the word coming in from India Mart. But with that, we'll do one thing. We'll slip into a short break. When we come back, we'll focus on the crypto market with Manisha Gupta on the other side. Stay tuned for that.
CNBC-TV18 presents Crypto Corner, powered by Coin DCX.
Welcome to Crypto Corner, and today we talk about on how crypto seems to be making very strong inroads as far as banks also are concerned. Remember, 2025 all has been about running prices and very strong adoption coming in from retail as well as institutions. But when you're talking about banks and once they start to make inroads and make crypto available for their clients, you really know that crypto perhaps is coming mainstream. That's exactly what we are looking at JP Morgan right now. There are various reports suggesting that the bank is working to now allow institutional clients to use crypto as a loan collateral. Remember, until now, it only has been about traditional asset classes like treasuries, gold, etc., bonds for that matter, that can be allowed as collateral. But what we do understand is that this would mark the clients may be now allowed to use Bitcoin and Ethereum as well for collateral as in sense of loans there. Well, this program will rely, of course, on a third party there. This will also mark one of the most direct integrations of crypto assets into Wall Street's credit systems. This would really bring it online, mainstream, etc. And that is where we have seen some of the gains come back in case of crypto yet again. The expectation is that the JP Morgan program will launch by the end of 2025. And that's not too far away, is the reaction that we are seeing cryptos really rejoice on the street there. The markets also are looking at strong following within the space itself. As I said, the JP Morgan program will rely to a third-party custodian when it comes to holding the pledged tokens there. This is going to be in line with the various other asset classes, which at this point in time are used in the collateral ecosystem. JP Morgan also perhaps is looking at using, it was earlier in June that they already decided to use crypto ETFs as collateral. So this is basically going one step ahead and using direct crypto within the collateral management as well. The crypto that can be used for ecosystem, of course, goes in addition to various other asset classes, which is gold, equities or treasuries therein. And it's not just about JP Morgan. Remember, the last 2 or 3 months have been quite busy where you've seen various other banks, corporates, treasuries, companies as well come in case of facilitating crypto usage in various ways. We did see BNY Mellon and Goldman Sachs come together in partnership to ensure, and this was in July 2025, by the way, this is launching the tokenized money market product for institutional clients therein. This has been, the bank really has been facilitating digital asset custody and settlement capabilities since 2021. And this is going just one way ahead, one step ahead to ensure that they are making it or facilitating it with more set of clients there. We also have seen a similar step being taken when it comes to Morgan Stanley as well. They are committed to enable retail clients on its trade platform. What we do understand as of now is that the retail clients can trade Bitcoin and Ethereum and Solana as well. And this can be as early as the second quarter of 2026. Remember, Morgan Stanley also seems to be expanding access to crypto funds across all client segments, not just institutional or wealthy clients, but this is also going across many other account types, including retirement accounts as well. So clearly widening its horizons, that is, and the markets are looking at gains in various crypto because of this today.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Still 170 points higher on the index, still finding some resistance at that 26,000 mark. But does the index have legs to cross that and then move towards the record highs? Nagaraj Shetty of HDFC Securities is joining in for a quick chart check and answer just that. Nagaraj, good morning. Thank you for joining in. 26,277. Do you believe that the Nifty has legs to cross those levels and move higher? Your call on the index and on specific stocks for the morning as well.
Hi, good morning, Hamans. Yes, certainly Nifty has been in a strong uptrend. Recently, we have seen some minor consolidation. The overall strength of the market remains very strong, and I'm expecting Nifty to move above the 26,100 level, initially the immediate hurdle, and eventually reach towards the 26,500 levels in the near term. And in the stocks, I have two stocks, one from Tata Elxsi. Chartically, Tata Elxsi has been in a constant downtrend over the last many months. Recently, the accumulation has been taking place at the lower levels, higher bottom formation, and eventually the upside breakout of the downsloping trend line indicates the revival of a trend. Currently trading around 5612 levels. One can look to buy at CMP. Upside target would be around the 5,900 levels, and 5450 is going to be the stop loss. Second one is Borosil Renewable Limited. This stock has been in a constant uprun over the last few weeks that we can observe high tops and bottoms on the daily charts, and the longer term charts like weekly and monthly is indicating a decisive upside breakout of a trend. Currently trading around 671, 672. One can look to buy at CMP. The immediate upside target would be around 715, 720 levels. One can place a stop loss at 655.
All right. Thank you so much, Nagaraj, for joining in and taking us through your top technical bets. But one of the big movers in the market is Reliance Industries. The company has formed a JV with global tech giant Meta as it bets big on AI. Rima is here with all the details and what this means for the stock. Rima.
Thanks so much for that. So as you rightly pointed out, Reliance Industries has launched REIL, Reliance Enterprise Intelligence Limited, which is a joint venture with the global technology company Meta. Reliance Industries will hold 70%. Meta will hold 30% in this joint venture. The initial commitment is for $97 million. Again, 70% will come in from Reliance, 30% from Meta. This is in line with what Mukesh Ambani had spoken at the AGM, where there was a lot of focus on AI everywhere, AI for everyone. It's a part of their entire AI playbook. So he had hinted about it in the AGM. He had spoken about it, and now this has been officially launched. Now, according to Morgan Stanley, the step one is about $100 million. But eventually, they do see Reliance making further investments, estimated between $12 to $15 billion, to build a 1 gigawatt AI data center infrastructure. And this is a part of the broader push highlighted by Mukesh Ambani at Reliance AGM. And considering the global AI tech majors demand very high valuations, the question is, once this fructifies and commercializes and grows in scale, what could be the kind of valuations it will attract? Back to you.
Indeed, and among the top gainers on the index today is Reliance Industries, heading towards that 1500 mark now. Rima, thank you for that update. Take a short break. On the other side, continue our conversation on the markets. Nikunj Doshi from Bay Capital joins in.
Welcome back. Well, Vodafone Idea, keep that stock on your radar. The hearing for the AGR case has begun in the Supreme Court, and we'll keep getting updates from them as well. And there is some update. The centre has told the Supreme Court that you change in circumstance. Government now has equity stake of 49%, and there are 20 crore customers for this particular company. If it suffers, will hurt competition, will hurt the market as well. And the Solicitor General for Centre to the Supreme Court has said, not going in recomputation of AGR dues, Centre is proposing a solution subject to court approval. So the hearing is undergoing, and we'll keep getting you updates on this one. For now, the stock, after falling from the highs, has seen some recovery from the lows as well. But let's go across to Mangalam now. He's getting us the latest trends from the F&O space this morning. Mangalam?
Well, if you look at, the market right now, it's moving higher, closer to that 26,000 mark on the Nifty. It's been led by the Nifty Bank. The Midcap Index doing fairly well as well. If you look at the Nifty contribution chart too, fairly well distributed. We're seeing a good performance coming in from the banking heavyweights. So HDFC Bank doing well. Reliance has been, on a tear ever since its results. So has been a strong supporter on the index as well. Bharti Airtel has been among the top contributors today as well. So across the board, we are seeing contribution from heavyweights coming in on the Nifty, and that's a positive. And all of this is backed by stronger, broader market action as well, with the advances outnumbering the declines by a bit. So 1,600 stocks in the green for about 1,400 in the red as well. But the important part that we have to look at now that the market has moved higher is the Nifty recent high of 26,104. Do we go ahead, cross past the 26,000 mark and cross the 26,104 mark as well? And the second part is that the India VIX ahead of the monthly expiry tomorrow is seeing a big surge. So are we in for some sort of congestion at the higher level or not is the big question that we will get an answer to over the next couple of hours of trade. Active options on the Nifty. Up move on today's trading session has been caused a lot by short covering in the 25,900 call, and we've seen some writing at the 26,000 put as well. 26,100 call, on the other hand, still sees some writing. So we are seeing 26,150 as an important resistance in the very near term. The Nifty put call ratio too has moved to around 1.16. Remember, tops out at around 1.2, 1.3. So the India VIX being higher and the Nifty put call ratio being higher ahead of expiry tomorrow are the only flies in the ointment that prevent the market from surging past the recent high of 26,104. If it does, then there could be further short covering as well. But talking about individual stocks, SBI Life is one that really stands out in terms of long positions being added. Coforge, Emphasis and Ashok Leyland are the ones which are fairly well, doing fairly well in trade today, but on the back of a fair amount of short covering in today's session so far.
Mangalam, thank you for that update. Some more updates coming in on Vodafone Idea. The stock has now moved to the highest point of the day. 4% higher, is now nearing the 10 rupee mark. And the government is also willing to reconsider the issue and take an appropriate decision if the court permits. And these are, of course, lines coming in from our colleague Ashmit from the Supreme Court. It's saying that the union is willing to examine the issue raised by Vodafone Idea. The fact that they filed a plea against this additional AGR demand seeking recomputation of the AGR dues. Of course, the Solicitor General has mentioned that they are not going in for a recomputation, but they are proposing a solution subject to approval from the court. And of course, we are yet to get more clarity on what that solution plan entails. This is what the Supreme Court, as what the government has proposed with regards to Vodafone Idea. But for now, the stock is surging in anticipation of some relief, 3.5% higher, nearing 10 rupees now.
But again, there is no finality on that issue or the problem that has to be solved as per the hearing which is underway currently. So we'll keep getting you update on that. But the Supreme Court says that in light of the government's take and considering the impact on 20 crore consumers, clarify that this is a matter within the policy domain of the centre. Larger public interest merits reconsideration of the AGR dues, the additional AGR dues that Vodafone Idea has been talking about. We are still to get, the Supreme Court also says, no reason why centre should be prevented from reconsidering the issue, and that is something which is exciting the investors as well. The stock has surged 5% higher, has crossed that 10 rupee mark as well, and it also indicates that in the peculiar facts, see no impediment in centre reconsidering the issue and taking an appropriate call. So this is the word coming in from the Supreme Court with respect to the additional AGR dues for Vodafone Idea. They've said that the government can go ahead and reconsider this issue and they should not be prevented from reconsidering this. They say order applicable only in the peculiar facts and circumstances of this case, given the equity stake and 20 crore customers. So it's about the additional AGR dues that they are talking about, and we'll keep getting you more more updates on this one. But for now, this has come in as a relief for the investors. The stock is higher in trade, 5.5% now. And our colleague Ashmit, of course, is sending us more updates on this one. But let's talk about Kotak Mahindra Bank. It has slipped in trade following its Q2 earnings. Gaurav is joining it with more specifics in our special segment, Big Story, on how private banks performed in this quarter. Gaurav, over to you.
Well, yes, when we look at private banks, all of the private banks, top 5 private banks, they have come up with the numbers. And if we look at the numbers, we've already seen good set of numbers barring IndusInd Bank. So I'll tell you why. When we look at the loan book growth, we have seen good set of number from Kotak Mahindra Bank. In fact, they have reported highest growth in terms of advances, around 16%. And at the same time, we also saw banks like HDFC Bank and Axis Bank actually giving some kind of surprise.
All right. Apologies, Gaurav. We have to get back to Vodafone Idea because we are getting more updates coming by on this one. There is, of course, a major relief that has come in from Vodafone Idea. The Supreme Court has allowed Centre to reconsider AGR issue to grant relief. And that is the reason that big surge on the stock is what we are seeing right now. 6.5% on that one. Of course, we'll ask our colleague Ashmit to join in with more details as well. But of course, it is important to note, Centre has not submitted any plan for resolution, but Supreme Court has granted the blessing to the Centre to figure out the resolution for Vodafone Idea, and that is something that the street seems to like. 7% higher on that stock because now it's a major relief which has come in. AGR dues, something that was impacting the balance sheet, that was impacting the performance on the PNL, higher interest dues that they had. So if there is a reconsideration of that amount, that will definitely be a relief for their financials.
No bad news is good news, right? Yeah. And that's what it is. And the resolution plan may not have been submitted yet, but they have at least received the go-ahead from the Supreme Court that they see no impediment in the Centre reconsidering this issue, and as a result of which the stock has also moved higher on this news. Vaibhav Kakkar is joining in for a quick comment on this. Mr. Kakkar, good morning. Thank you for joining in. Now, do you see this as a major relief for Vodafone Idea, considering the fact that the Supreme Court has removed any potential roadblocks in case of any relief that the company was likely to receive?
Absolutely. First of all, good morning to all of you. I think this is a very positive move. From the proceedings that I witnessed and I observed, it was very apparent that the Supreme Court was looking at different options and was willing to be accommodative. And I think they took on board Union of India's affidavit. And they have specifically remarked that given the fact that there are change in circumstances with the government owning 49% of Vodafone after the conversion of their debt, and the fact that there are 20 crore subscribers out there, that in public interest, the government should reconsider in line with the affidavit of the Union of India. So overall, a very positive move. Also, what the Supreme Court has remarked is that ultimately, aspects such as these are left to the domain of the executive, the Union of India, from a policy standpoint to take decisions. So I think it has given a lot of flexibility for the government to now reassess the AGR dues for the past period, taking into account the general direction that public interest will allow the government to look at things more I would say more sympathetically in light of today's decision.
Take that point, Mr. Kakkar. Just hold on. Let's go across to Ashmit, our colleague, who has been hearing the entire conversation. Ashmit, tell us more.
Well, this is a really long time coming for Vodafone Idea. They had been batting for a waiver of those dues. Now, there have been 3 adjournments that had been sought by the Centre. The Centre had asked for time. Today again, they appeared before the Apex Court. And while they have not given any specific resolution as far as the AGR issue is concerned, they have asked for more wiggle room from the Apex Court, which the Supreme Court has been happy to oblige them with. The Supreme Court saying that this is a unique situation. There is a case to be made for the government now holding 49% stake. By way of the government holding stake, there is now a case to be made for public interest in this matter. Speaking of public interest, there are over 20 crore customers. So to that end, the Apex Court giving the clarification that this is an issue for the policy domain, for the government to take a policy call. At the same time, the Supreme Court also saying that this is an issue. This is an issue where the apex court, the Supreme Court, is granting relief given the peculiar facts and circumstances of this case. Again, making a reference to the government stake of 49%, making a reference to the 20 crore customers that stand to get impacted, and while allowing that relief to the government to structure some form of relief for Vodafone Idea going forward. What that is, of course, is now an issue that the DOT, that the Department of Telecom will have to grapple with. But while allowing that flexibility and relief, the Supreme Court saying that this is applicable to Vodafone Idea given the peculiar facts and circumstances, which then also begs the question that any relief that comes from the government, will it be applicable only and only to Vodafone Idea, or will it be across the board to other players like Bharti Airtel as well? So another question that needs answering. For now, the Supreme Court granting its blessing for the apex court, for the government to structure some form of relief package for Vodafone Idea.
Ashmit, thank you for that update, and of course you'll continue to get more updates from Ashmit on this big news coming in on Vodafone Idea. We're also being joined by Sanjay Asher of Crawford Bailey and Company, and also by Balaji Subramaniam of IIFL Securities. Gentlemen, thank you for joining in. Mr. Asher, first to you, sir. The one line that the Supreme Court order mentions is that this is applicable only to the peculiar facts and circumstances of this case, given the equity stake that the government has and the 20 crore customers. Does this mean that the other telecom operators cannot use this as a precedent and seek similar relief for the additional AGR dues?
Yeah, one can interpret it that way, but I would interpret what CJI also clarified, that this is in the policy domain of the union. And there is no reason as to why the union should be prevented from considering the matter. So, to my mind, not necessarily it would apply only to Vodafone, but it could apply to the other telecom operators as well. Because if it is a policy decision, it should apply to everyone.
So it should apply to everyone. Let's just take a look at Bharti Airtel's stock price. It has seen some fall when this particular statement was being flashed that it applies only to that peculiar case or peculiar note. So it has come off from the highs of the day. But as Mr. Asher just mentioned, it should just not apply to one company. It should be for all the telecom operators. So that clarity is something that we are awaiting. But Balaji is joining us from IIFL. Balaji, what do you make of this? And do you think it will materially it will be a material positive for Vodafone Idea, and now the investors can look at the stock from a positive understanding?
Hi, good morning. Thanks for having me on the show. So my reading of the situation is that now the Supreme Court has blessed any movement from the government in terms of providing any potential relief measure. Now, what measure they come out with, we have to see, because it can be anything, right from giving a moratorium, which the Supreme Court input is not really required, to something like extending the timeline of the AGR payment, which currently stands at March 31st, 2031. And over a longer time, I wouldn't be surprised even if the government tries to, remove the calculation errors which the telcos have called out and the government itself has acknowledged in the past. So I think these are, some of the potential relief measures that can come. In what form and what combination of these will come is something which we'll have to see. But I think if any of these cash flow relief measures pan out, then it will become a lot easier for the company to complete its 25,000 crore bank debt funding that it has been talking about. So I think, that means that any concerns on the ability of the entity to survive after 2026 March or so, I think those concerns now recede, and there is a clear visibility in terms of the company's next 4 or 5 years.
All right, take that point. So some more clarity, of course, is required in certain aspects of this order. HP Ranina, the senior advocate at Supreme Court, is also joining us now. Mr. Ranina, good morning. Thank you for joining in. What's your take of this order that has come by, and what do you think should be the next step going forward?
Well, I think it's a very welcome order. It gives two things.
namely that Supreme Court will not interfere. It's a matter of government policy. So government has now been given free rein that you do what you like to help the telecom sector. So you can either give them some additional stake if you want, or you can give them more time, or you can reduce the amount. And obviously, once the government takes a policy, then they'll have to apply it uniformly to other telecom companies as well. They can't pick and choose. And therefore, I think there's a very good order from the industry point of view. All telecom companies will stand to gain. And Supreme Court will not interfere in this matter, but has really given a free hand to the central government. The ball is now in the central government's court.
Indeed, interesting. Indeed, that was the case, right, Mr. Ranina? But
Right.
Mr. Kakkar, as Mr. Ranina mentioned that the ball is now in the central government's court, was that already the prerogative for the government, right? Because they had made this very clear multiple times in the past that India needs to be a three-player market within the telecom space. And the fact that they are also an equity holder in the company, being the largest shareholder now. So the onus now lies on them to provide a resolution plan for Vodafone Idea, because the company had made it clear that unless and until there is any relief forthcoming, their ability to continue as a going concern was always under threat.
That's absolutely right. I think incidentally, just so that you know, we as a firm had represented Government of India in conversion of its dues to 49%. Remember, the limitation is that the government could not have crossed the 49% threshold for the fact that otherwise Vodafone would have become a government company, and that would have had its own set of complications from a corporate law standpoint. So I think overall this is a positive move. The way to look at this is that what the Supreme Court's order does today, that it gives a legal cover for Government of India to now look at Vodafone case somewhat differently in light of the fact that 49% of the equity is owned by the government itself. And in that backdrop, taking into account the unique facts and circumstances, come up with a relief and a rehabilitation package in a way that it is not used as a precedent value for other telecom operators. So I think given the fact that, BSNL and MTNL are obviously on its last breath, it's imperative that the government pushes through a plan which then ensures that at least three telco operators are there. Ultimately, competition in the market is an important policy objective that the government would like to achieve. So overall, a good day from Vodafone's standpoint. It does give the legal cover for government to look at Vodafone's case differently.
Totally take that point. In fact, let's get in our colleague Ashmit as well. Ashmit, first, that clarity, is it applicable only to Vodafone Idea or whether it goes across to all the other telecom operators as well? Because the experts who joined us now have been saying that government should not pick and choose. As Mr. Ranina mentioned, it should be applicable to all the operators. Is there any clarity on that? And what are the other parts that the investors should be aware of as well?
Well, a couple of aspects to bear in mind. Number one, Bharti Airtel was not before the Supreme Court. It was only Vodafone Idea that had moved this application seeking grant of relief. Having said that, a couple of things to bear in mind. Number one, this application filed by Vodafone Idea, a particular case was made by the government that, look, there are particular specific facts and circumstances with respect to Vodafone Idea. Those conditions were that, number one, the government is now a 49% equity holder. Number two, that there are as many as 20 crore customers, that if Vodafone Idea, the company, goes away, well, that will impact competition as well as the customers. And it is bearing these three aspects in mind that the Apex Court has granted its relief in terms of allowing the government to fashion a relief. Now, there are two aspects here to bear in mind. Number one, the Supreme Court says that, look, this is a policy decision. This is an aspect which the Supreme Court will not intervene in. It will not prevent the government from going ahead and working some kind of policy resolution to this matter. But again, reiterating that this is a policy matter that is to be placed in the hands of the government to decide which is the best course of action forward. But having said that, one caveat that the Supreme Court has slipped in, which is causing some debate, some confusion here, is that the Supreme Court saying that this will be limited, this order is being given with respect to the peculiar facts and circumstances pertaining to Vodafone Idea. So both these aspects have to be looked at. Again, no clear, no explicit direction being given by the Supreme Court, that any relief package will be limited only to Vodafone Idea, not to Bharti Airtel. But we also have to bear in mind that Bharti Airtel was not present here. The Supreme Court saying that this is a peculiar situation that Vodafone Idea is confronted with, that the government is confronted with now that they enjoy a 49% stake. But in the same breath also saying that, look, this is at the end of the day a policy decision, and that the Supreme Court shall not come in the way of the government, of the DOT, going about working towards a resolution of this AGR issue. So at this point, the Supreme Court playing it with an even keel. We'll of course have to see how the government chooses to respond to this blessing that has been granted by the Apex Court to go ahead and to work towards resolving the long-standing legacy issue of the AGR dispute.
Indeed, Ashmit, thank you for that update. And of course, we'll continue to get more from Ashmit over the course of the day. Just before we wrap up this conversation, one final word from you, Mr. Ranina. As you just heard Ashmit mentioning that one point of contention with regards to the peculiar facts, do you believe that this will at least now set a precedent for other telecom companies or the other telecom incumbents to ask for similar relief with regards to these additional AGR dues?
Yes, I think so, because on the one hand, Ashmit says this, the Supreme Court has clarified this is a policy of the government. And as you know, under our Constitution, the Supreme Court will not intervene wherever policy issues are involved. Therefore, I would feel that while they were confined this to Vodafone's case because the other party was not in the picture, obviously they will only give a direction to Vodafone, not to any other party. But the policy decision has been upheld. The policy issue has been upheld by the Supreme Court, which means that the central government can now give similar relief to others as well. In fact, they should, because they cannot pick and choose. If there's a policy, it must apply uniformly to the entire telecom industry. Therefore, my own view is that reading this judgment of the Supreme Court, the government has been given a free hand. Take a policy and apply it uniformly to all the to the entire telecom industry.
All right. Thank you for your insights, Mr. Ranina, and thank you to the other experts for joining us today, Mr. Kakkar, Mr. Ashar, Balaji. Thank you so much for taking out time and telling us what the outcome of this case is and analyzing that as well for us. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get more on the markets and stock-specific action. Stay tuned for that.
Welcome back. Nikunj Doshi from Bay Capital joins in to take the market conversation forward. Nikunj, firstly, good morning and thank you for patiently waiting while we addressed the big update from Vodafone Idea. What's your take? You heard the entire development taking place. Now, does that mean that Vodafone Idea at least now will survive as a going concern and India will remain a three-player telecom market? And if you are tracking this space, where among the preferences do your preferences lie?
So frankly speaking, we are not tracking this telecom as a space for investments. But whatever I have heard and whatever policy decisions if we see in the recent past of the government, one thing is very clear that government has become pro-industry and I would say corporate friendly. So all the policies that we are now seeing are helping corporates in growing and making big impact for the economy. So I think in that sense, it's a good, very positive development.
Okay, take that point, Nikunj. I wouldn't say we are halfway through the earnings season. We have a lot to go. But so far, what has stood out for you, especially from the BFSI space? We got Kotak Mahindra Bank's numbers over the weekend. Before that, it was all the other big banks, HDFC Bank, ICICI Bank. We are still awaiting SBI. But what's your take on the banking space overall?
So see, banking again means if we look at the results till date, obviously NIMs are under pressure because of the rate cuts by the RBI. And that was again on the expected lines. But one thing is that now we are seeing some credit offtake happening in the economy. And with whatever I would say policies are being framed, we are going to see a huge increase in the corporate capex. Also, if we see the trend in most of the banks and NBFCs, most of them are now looking at SME and MSME lending. And if you hear them say a couple of quarters back or few quarters back, they were focusing more on retail credit. So now the trend is changing from retail credit to the corporate lending. And I think that is a big positive as far as the banking sector is concerned.
Nikunj, I was going through your top 5 holdings. The one that stands out here is SBI Cards, and the recent quarter that went by, you can say that it flattered to deceive, if not more. What's your take? Do you believe that things will normalize for the company going forward in the second half, or are you now looking to reassess your positions after these results?
See, again, if we look at the consumption cycle as a whole, last, I would say 2 years, because of the wage inflation was lower than the actual food inflation, there was a restriction or I would say disposable income in the hands of the consumers were less, and also meanwhile RBI tightened the retail credit. So there was a squeeze on the consumption cycle, and that actually increased the I would say NPAs for our credit costs for all the NBFCs as well as the credit card companies. But now that cycle has reversed. Now with GST relief plus the food inflation under control, I think spending power is back in the hands of the consumers. And I think that will help them in reducing the credit cost as they have mentioned. So I would not go by the reaction of the market on the day of the result. And I will say that market perhaps is ignoring the longer term positive developments happening for the consumption as a cycle as well as for the credit card as a business. So I think we would stay with the investment, and I think H2 will be much better for SBI cards as compared to the H1.
All right. Take that point, Nikunj. Thank you so much for joining us. Waiting by patiently as well today. A lot of moving elements in the market today. But it was a pleasure speaking with you today as well. So that's the word coming in from B Capital. Their sectoral picks and some market fundamentals as well for the markets. 180-point uptick as we speak. Mid-caps are doing well. 0.9% higher there as well. And the Bank Nifty too is up around 0.7%. So all looks green for the markets now.
Go green for the bulls, and we take a leave on this edition of Trading Hour from Sonal and me. Thank you for watching. Numbers of Chennai Petro on your screen. Halftime report takes the action forward.
Stocks stage a strong comeback after the sell-off late last week. Realty and energy are the big gainers while healthcare drags.
Kotak Mahindra Bank sees margins crimp a little more than peers, even as the management is hopeful of improvement going forward. Most analysts remain positive, but valuation concerns linger.
And the Supreme Court allows a review of the AGR matter, saying it sees no reason to not allow the centre to reconsider the policy issue. The Apex Court's landmark observation allows the government to offer relief on AGR dues to Vodafone Idea.
SBI Life reports strong performance in the second quarter. Margins ahead of street expectations on better product mix. Growth in the second half of this year also expected to be stronger. The stock perks up.
Eyewear player Lenskart Solutions plans an over 7,000 crore mop-up via its IPO priced at 10 times sales and 230 times earnings. The management counters highlighting a long growth runway in India and overseas.
Hello, good afternoon. You're tuned into CNBC-TV18. You're watching Halftime Report with me, Vinny Motiwala, Mangalam Malu, as well as Ekta Batra. We're coming live from the CNBC-TV18 Motilal Oswal studios. Thank you so much, as always, for tuning in. And today seems like the momentum we saw last week, last couple of days of the week was not that good. But overall, the week ended on a positive footing last week. This today, when you start the week as well, good day coming in. 0.8% of gains. Mid-cap, small-cap, that's also managing to hold on to gains, as well as banks doing well.
Good day today indeed. You know, you have the Nifty very close to that 26,000 mark. The level last week that we hit was 26,104. Let's see whether we go past that or not. And if you look at the contribution chart of the Nifty as well, you know, all the heavyweights are batting for the bulls today. We have Reliance, which obviously post its numbers has been a solid support for the frontline index. And today we have HDFC Bank, which is doing well as well. So the top two heavyweights doing extremely well. Bharti Airtel, though marginally off highs, we are seeing that stock as well among the top contributors. The market breadth fairly advancing. And finally, we have some clarity on Vodafone Idea as well. The street likes it. The stock has seen a big move. In fact, that has been the story of the last hour or so. Vodafone Idea doing extremely well. That's about Reliance, but pull up the intraday chart of Vodafone Idea. You'd see that and the contribution chart. Hi.
Yes, so Vodafone Idea, hi guys, is the big story of the day at this point in time. So that stock is up around 5% but we do have a lot of other stocks in focus. So we're going to kick off the show with our movers and shakers segment, where we're going to track a whole host of stocks which are buzzing in trade. And Vinny, let's kick it off with you. You're watching eClocks.
Absolutely. eClocks, good numbers that have come in from the company this time. When you look at it in terms of the growth, 8% growth in terms of revenues. This is obviously on a sequential basis that we're comparing it. EBITDA margin seeing a good improvement of around 300 basis points. We're seeing profit seeing an improvement as well. So yes, 141 crores is what the profit was last time versus this quarter, 183 crores. So that is around a 31% growth in terms of profitability. CC growth in terms on sequential basis, 5.4% CC growth. Now, what is leading to this good performance? Overall, there were new deal wins that came in, ACV deal wins, which were worth around $46 million versus last quarter of around $32 million. So strong in terms of deal wins, new deal wins. Other than that, they've seen good growth across most of the sectors, except BFSI as well as fashion and luxury. Other than that, everything has done well. Geography-wise, also decent performance across geographies. Cash and cash equivalent on the book stands at around 1,250 crores. They've headcount has also seen an increase this time. So there's an increase of around 1,030 personals during this quarter in Q2 FY26. And do not forget, they've announced a buyback that is proposed at a price of 4,500 rupees. So today the stock is buzzing. Good numbers is something that is keeping the stock a buzz. And that's what we're keeping an eye out on.
All right, that's about eClocks doing fairly well in today's trading session, up around 7%, but it's a mid-cap IT sort of day as well. We're getting good numbers coming in from others as well. Coforge, for one, has been fairly strong. Commentary as well, good from the management for the second half. Rima joins in with more on that. Rima.
Thanks so much for that. As you pointed out, revenue growth strong, 5.9%. EBIT margins have improved by 80 basis points, hitting 14%, which was the company's goal. And not just that, even on free cash flow, where analysts were a bit concerned, the company in the current quarter achieved 85% free cash flow as a percentage of PAT, which is within the company's guidance of 70 to 80%, and the company is talking about maintaining that. And the second half of the year is also going to be very robust. H2 particularly is going to be strong, and for the full year, they're talking about maintaining margins at 14%. So it's done well on revenues, it's beaten expectations on margins, and it's allayed concerns on the free cash flow. JP Morgan has an overweight rating. They said that the company needed to deliver on margins and cash flow after the challenges last time, and they did exactly that. Jefferies too has a buy call, and they say the free cash flow conversion should allay concerns about profitability and the quality of growth. Morgan Stanley has raised the target price to 2030. They say with the Q2 print, the company has allayed several investor concerns, and such consistent execution on all fronts creates re-rating potential. And Nomura says Coforge is the top pick in the mid-cap IT basket.
Okay, all right, Reema. Thanks very much for that. So Coforge, as you can see, that stock is up around 4%. But we do have Vivek now joining in to take us through all of the stocks that are buzzing around at this time in trade. Vivek, over to you.
Well, thank you so much for that. You know, last half hour, especially the telecom pack has moved up higher, but in the broader markets today, not many laggards. Most of the stocks that you're seeing, especially in the broad end of the markets, advances far outpace the declines. Well, first on the list is MCX. You know, the company has gone ahead and launched the monthly options as far as MCX Bulldex is concerned. So analysts actually feel that this can be a significant kicker as far as EPS is concerned for MCX. The entire OMC pack today, so look at names like HPCL, BPCL, IOCL, some positive news flow coming in. One of the company where all of these three have a significant stake, which is Mozambique LNG project. Total Energies and Partners have lifted the force majeure that was on this particular name. So all of the OMCs today have over 2%. RR Kabel, one name from the broad end of the markets, one of the top gainers there. Very strong volumes as far as RR Kabel is concerned. The top gainer as far as the NSE 500 is concerned. And the entire PSU basket, we've been talking about how most of these stocks are doing well today. The PSU banking pack, another day, we're actually seeing significant gains. Bank of India up almost 3%. On the other hand, on the back of muted show as far as Q2 is concerned, SBI Cards, like we mentioned, that particular stock, one of the biggest laggards today, over 2%. CESC, one of the top laggards on the NSE 500 index. And Zen Technologies, muted Q2. Execution is delayed. That stock too seeing quite a bit of a sell-off in the session today. Zen Technologies is the one that we're discussing.
All right, Vivek, thanks a lot for that. So that's about all the stocks. Meanwhile, just before we move forward, look at Indus Towers. That's a stock which is up 5%. A favorable move coming in on Vodafone Idea. It means that Indus Tower also gets a benefit of that by virtue of one of their stronger clients or one of their clients, bigger clients, being in better hands right now. So after the Vodafone Idea verdict that came in, or the comments that came in from the Supreme Court, that stock moved higher, obviously, but the other beneficiary, Indus Towers, up nearly 5%. But let's talk about our Super Pro chart of the day. This is powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the market and help you understand the why behind the what. And here's today's chart and what it means for the next market move. Polycab India is a chart on your screen. As you can see, a falling trend line bullish breakout which signals a reversal from a downtrend as price breaks above the descending resistance line with volume. It shows a bullish momentum. And if you'd like to access more expert-driven insights and actionable chart patterns like what you're watching on the screen, simply scan the QR code which will come up for you on the screen and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate as well. 10 lucky subscribers every day win 1 gram of gold. So don't wait, just scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. Well, for the markets, it's doing well. So we currently have the Nifty, which is up around 200 odd points. We have the Bank Nifty, which is up around 460 odd points. Those are the Moschip numbers which are flashing on your screen. The EBITDA has come in at growth of around 4.4%. So just about a flattish performance, or a little bit of a subdued performance, you'd have to say, on the margins, which have come in at around 11.4% at this point. Net profit, however, up around 25%. But nonetheless, let's talk about one particular stock that came out with its numbers on a Friday evening, which is Dr. Reddy's. Now, I'm not going to talk about the numbers because everyone has gone through that threadbare. So I'm just going to talk about a couple of key important takeaways from Dr. Reddy's this time. So what they are talking about when it comes to the key opportunity, semaglutide, they're expecting feedback from Health Canada, which is going to be one of the key markets for them in the next few weeks on semaglutide. So that's going to be a big trigger to watch out for whether or not they get approval. Remember that the semaglutide patent in Canada expires in Jan 2026. But what the company did say, interestingly, is that they can't rule out a complete response letter for semaglutide in Canada. They expect the Canadian market, however, to be competitive. So that is something that they are acknowledging. They expect the SEMA opportunity via partners or directly in the next 12 to 15 months to be in 87 countries. So that's the number of countries they're probably going to be present in. Notable countries besides Canada will be India, Brazil, Turkey when it comes to Dr. Reddy's semaglutide opportunity. They expect the volumes of around 12 million pens, which is basically used for semaglutide, to be absorbed in other countries, if not Canada. So they're confident about the opportunity. In fact, they're scaling up their fill and finish capacity. They are challenging patents in India on semaglutide against Novo Nordisk. Currently, it's in the Delhi High Court and awaiting outcome. What they can do in India is that they can produce in India and export semaglutide. Currently, they can only launch in India when the patent expires in March 2026, only unless there is a favorable outcome from the Delhi High Court, unless there is a favorable outcome. With regards to the rituximab biosimilar, they have received a complete response letter, so there will be a delay there. Guidance, 25% margins. They're maintaining commitment on margins. Growth is dependent on the semaglutide opportunity. So in the next 2 years, they're confident in terms of growth and margins. India, they can maintain above Indian pharma market growth. Goldman Sachs, neutral, target price of 12.25. Jefferies, underperform, target price of 11.30. Macquarie is neutral with a target price of 11.90. Let's listen in to the management who spoke to us earlier.
Likely that we'll see similar trends in all the geographies. In particular, we do see sustainable growth now in India, emerging market, API, Europe. United States, naturally, we are in the end of the contract of lenalidomide, so which is the main impact of North America, and as well as some price erosion for some few other products. So overall, what you're going to see is similar, because also in the next quarters, we will continue to see the decline of lenalidomide. So in the United States, that's what we need to see. And from there, it will start to go up once we will launch semaglutide in Canada, etc. So overall, in the next coming quarters, we should see similar trends. We are absolutely, once we will not sell any lenalidomide, there will be an impact on our profit. And we said, and it's consistent with that we are planning the following. So to your question, yes, we are planning to continue to have a double-digit growth in our sales overall. And this, which means that the other markets will offset less growth in the United States. The second is we are maintaining and cautious about the cost. We are containing the cost. We are planning to grow the cost less than we grow the sales, which means more profitability. Focus on key products like we discussed, abatacept, semaglutide, and others, and business development. We believe that between the four, over time, we will absolutely maintain the trends that we discussed all the years, which means double-digit growth, profitability, and return on capital.
All right, with that, we'll take a short break. On the other side, Ruchit Jain of Motilal Oswal joins in with some trading strategies. The Nifty nears that 26,000 mark. The Midcap's doing a lot better. What stock should you bet on? Ruchit will tell you. Welcome back. As the Nifty moves higher, just keep an eye on one stock from the broader markets. That's Hatsun Agro. Reported its numbers a very short while ago. A 17% revenue growth, and that's led by the Milk Mantra acquisition that the company has done as well. And on top of that, we've seen the gross margins expand, and which has flown through all the way down to the EBITDA. The net profit has grown by 70%. So Hatsun Agro comes up for you on the screen, up 15% for that stock. Remember, has been a bit of an underperformer, has corrected about 15% from its 52-week high as well over the last 12 months or so. But good performance coming in, and the street taking note of that. But the other thing that the street has also taken note of over the last hour or so has been Vodafone Idea, as the Supreme Court has allowed the centre to reconsider the AGR issue. Ashmit joins in with more. Ashmit, it's a relief, a rope coming in for Vodafone Idea.
Well, indeed, a huge relief coming in. Vodafone Idea, of course, was here before the Apex Court asking for relief. They were asking for waiver of the penalty interest and the interest on penalty dues. There have been 4 adjournments sought by the centre. The centre kept asking for more time, saying that they're going back to the drawing board, coming out with a solution. Today, when the hearing began, they've not given a definitive structure of what the relief package will be like, but what they had sought for, essentially saying that allow us the flexibility to go ahead and to structure some form of resolution as far as this AGR issue is concerned. Now, the Apex Court taking note of 3 critical arguments. Number one, the facts on the ground have changed. Now, the government enjoys a 49% equity stake. In fact, at one point, the Solicitor General also remarked that by way of the government holding stake, it's also a case of public interest being at play. The second, the Solicitor General pointed out that, look, there are as many as 20 crore customers as far as Vodafone Idea is concerned. All of them will stand to get impacted. And finally, also saying that if the company goes away outside of the customers, competition in the sector will also get impacted. Now, on account of all of these factors, the Supreme Court saying that, look, this is a policy matter. The Supreme Court does not want to intervene, does not want to guide the hand of the centre. It does not want to prevent the centre from taking any measures for resolving this issue, and saying that given the peculiar facts and circumstances of this case, 49% stake, 20 crore customers at play, all of that factors coming into play, the Apex Court now allowing a free hand to the centre, saying that this is a policy matter. We don't want to come into the picture. The centre is now free. The DOT is now free to formulate, to restructure some form of solution as far as the AGR issue is concerned. The one question, of course, that many have left asking is that with this Supreme Court direction, will it be applicable to Bharti as well? That's a question that now the DOT, we understand, will have to give clarity on whether this relief package that the Supreme Court has granted blessings to will be pointed towards only one company or towards the wider sector. Back to you.
Okay, all right, Ashwin, thanks very much for that. So Vodafone at the best levels that we've seen since September of 2024. So good going for that particular stock, up around 4.5%. But let's go across to Mangalam now. He's at the F&O desk and he's going to tell us what he's watching in terms of F&O cues. Mangalam.
Just shy of that 26,000 mark. That's where we are at midday. And today has been a good start for the frontline index as well. And it's been led higher by the Nifty Bank. The broader market is doing a lot better as well. If you look at the contribution chart, you would see, the top contributors on the Nifty, all of them have been in good form lately. HDFC Bank has come to the party today. Reliance has been doing well ever since its second quarter numbers. And more importantly, now we have, Bharti Airtel, which marginally off highs, is also among the top contributors for the frontline index. But even if you look at the broader markets, you do have more stocks advancing than the number of stocks which are declining. So that would make people feel a little better. The only thing we'll have to watch out for from now on are 2 parts. One, post that 26,000 mark, are we going past that 26,104 mark, a level that we hit last week from where we saw a bit of a decline? And the second part is that ahead of expiry tomorrow, the India VIX is spiking. That makes the bulls a little jittery, because typically what you would want when the market is rallying is the India VIX to fall, because that would indicate that maybe put writers are fairly active in today's trading session. But that's not the case to be right now, because what's happened is it's more of a short covering move. We've seen the 25,900 call writers being caught on the wrong side, and as a result of which, as you can see, the open interest has come down, the premium has shot up, and that's caused a further up move in the market. But 26,000 put writers are equally active, telling you that support for the Nifty is around that 25,950 thereabouts. 26,100 call writers, they are still holding on to their position, so they don't believe that the Nifty goes past that 26,150 mark in tomorrow's trading session, which is the monthly expiry for October itself. And if you watch out for the put call ratio, it's coming at 1.16 as compared to 0.77. typically around 1.2, 1.25, it does tend to overheat and cool off. So short point, it's been a good rally so far. The next leg of an up move will come only past the 26,104 level that we hit last week. But a lot of stocks are fairly well bid. We've been talking about SBI Life, good numbers coming in, a lot of long positions backing that stock as well. Good numbers coming in for Coforge and Emphasis, also Midcap IT doing well. And a lot of the shorts are caught on the wrong side there too. So short covering is powering these stocks higher along with the likes of Ashok Leyland.
Okay, Mangalam, thank you so much for that. Let's also bring on board Richie Jain of Motilal Oswal Financial Services to talk to us about the technicals now in terms of the market. Richard, good afternoon. Thank you so much for joining us. In terms of levels, Mangalam was highlighting certain levels over there. What are you keeping an eye out on, and when do you see support or a resistance in terms of Nifty as well as Nifty Bank?
Yeah, hi, very good afternoon. Well, if you see last 3-4 trading sessions of the index fund, we have traded within this broad range where 26,000, around 26,000, we are witnessing some selling pressure. But that higher top, higher bottom structure, which we have been forming on the index of late, that is still intact. So this clearly indicates that whenever we are getting in between declines, that dips are being used as a buying opportunity. And I know that's why the support base is shifting higher. So immediately, I think from a very short-term perspective, 25,700 needs to be seen as a very important support. Until this is intact, we can see tad higher levels towards 26,150. So although on a broad basis, it remains within a range, but overall trend remains positive, and hence any kind of minor dips towards the support should be used as a buying opportunity. And in such market, I think it's wise to focus more on sectoral or a stock specific approach, where since the broader trend is positive, whichever stocks are in an uptrend, they are usually showing good relative outperformance compared to the broader markets. So the trend remains positive, but within that, I think stock selection remains a key for short-term trading.
Okay, stock selection is the key for short-term trading. What are your stocks which you're selecting today then, Richard?
So a couple of names, where we expect a good outperformance. One is Ashok Leyland from the auto space. We have seen a good uptrend, recently in most of the auto names post that GST rate cuts. Now the prices, stocks have seen some consolidation over last 1 month, but this entire consolidation just seems to be a time-wise correction within an uptrend. The 50 MI has been acting as a good support for Ashok Leyland. So we expect a resumption of the uptrend from here on. With the stop loss below 134, traders can go long for potential targets around 152. And CDSL we like within the capital market segment, where post recent correction, the risk reward ratio is quite favorable at current levels. So traders can even go long at CDSL with stop loss below 1570 for potential up move towards 1700.
Okay, Richard, thank you so much for those stocks as well, and thank you so much for joining in with us this afternoon. But on that note, we're going to actually step into a very short break now. On the other side, we'll have Manisha Gupta, who's going to be in conversation with Rishi Nathani, who is Chief Business Officer at MCX. Stay tuned in for that conversation.
Welcome back, and joining us on the show now is Rishi Nathani. He is Chief Business Officer at MCX. Rishi, hi, thank you for joining, and congratulations. Yet another product launch that happens today, and this is options on bullion index. What is the kind of participation moves that we've seen into this one? And this year clearly has worked out very well for MCX. More products being launched, records in sense of volumes as well. What does it new product that do for you?
Thanks, Manisha. This is, I feel, is a missing piece which we had in terms of binding both gold and silver together. So today you have a contract in the form of our Bulldex options, which have 60% gold and 40% silver, and it allows someone to take an exposure to both gold and silver in one shot. So it's early days yet, but we are seeing a pickup in participation, and I hope to see a lot more participation. And this is the first index product we've launched in the commodity derivatives markets, and I hope that this product will do well and pave the path for many more products to come.
Oh, absolutely. Rishi, also, what is the kind of participation do you see into this one? Because one, as you mentioned, it's a risk management tool, and two, this is cash settled. So would you see a different approach onto this one?
Yes, because today, if you see that there are various reasons why this contract is more suited for someone who wants to do an absolute price hedge. Because one, the underlying of this contract is the 1 kg gold contract and the 30 kg silver contract, whereby the notional of both would be almost 1.75 crores, whereas you're getting this contract at 8.5-9 lakhs. Secondly, this product is a basket of both gold and silver, so it makes it more simple. Thirdly, there is no devolvement of these options into futures since they are cash settled. So anyone can hold their positions right up to expiry and get the in case they are in the money and they bought the option, then they can get the differential paid directly to them without having to worry about delivery. So a lot of benefits here. So anyone who's looking for an absolute price hedge, whether it's a hedger, an investor, or an institutional participant, I would say this is for those people.
Rishi, talk to us also about the kind of volumes that MCX has done this year. We've seen various numbers continue to grow as much as we peaked in the last time there was a run-up like that. Where is this majorly coming in from, and how would you look at metals and, as you said, options perhaps on other things could be coming in as well? So is energy next or is base metals next?
So as you know, we already have two more indices. We have apart from the bullion index, we have a metal index and an energy index. Now, depending on the success of this contract and as well as the requirements for the market, we will look into those contracts, and after, as and when we get approvals, we may look, if we at all decide to go for those contracts, then we may look to launch. Nothing sure as yet. However, having said that, volumes are picking up and participation is picking up, and we are seeing an all-round participation from every participant base. So whether it be the institutional participants, which is also ticking up, or the hedgers, because given this kind of massive global volatility, the need for hedging increases humongously. And of course, there is a lot of investor participation. It's because gold and silver, as we all know, Indians are, it's in our DNA. So there is a lot of participation from investors as well.
Oh, I can bet on that. Yes, gold and silver is part of our DNA in some sense. Rishi, would be interesting to know on what are the kind of deliveries that the exchange is looking at across various segments, especially gold and silver.
So we've been seeing robust deliveries across all our products and across all the segments. While I don't have the absolute numbers for you right now, whether it be our base metals or our bullion contracts or the agri contracts, wherever we have deliverable contracts, we've been seeing decent deliveries. Having said that, I would just like to mention that the exchanges are a platform for price discovery and price risk management. Delivery is just a secondary part, just to ensure that prices are anchored to the reality of the markets.
Point taken. Rishi, 2025 has, as I said, has given you more products, more volumes as well overall the exchange. Any more new products that you're looking at that you can share with us that are in the pipeline yet?
Yeah, we always have a healthy pipeline, and I told you this some time back also that we will bring a lot of products for you, and we in the last few months, you've seen 4 products being launched, and this is the 5th today, and hopefully we'll see many more to go going forward.
Rishi, the way we've seen, risk management happen on the exchange side as well. We've been looking at margins being increased, not just on MCX. We saw that on CME as well, with the way gold and silver have been very, very volatile. Going ahead with the kind of open interest that we're looking at, and November is when that expiry also is, are we anticipating with the kind of price moves and the way the silver market especially was on a discount on MCX, premium perhaps in physical, all of that seems to be converging at this point in time, but how do you see the road ahead?
Margins are a function of volatility and risk management, and I feel that we've been rightly proactive in terms of increasing margins as and when the volatility increased. As we cannot predict the future, but if the markets remain volatile like this, I believe that the margins will be calibrated accordingly. So on that side, and in terms of volatility or volumes, it's very difficult to predict, because as an exchange, as I always say, we are a neutral platform. It's more of analysts who you should be talking to, who can tell you where the markets are headed.
All right, we take that point. Thanks a lot for that, and congratulations once again on the product launch. Thank you, Manisha, for taking us through that call. And just watch out for a couple of these dairy stocks. We were speaking about Hatsun Agro rising about 15% on the back of their numbers. Obviously, a lot of it is also aided by consolidation or acquisition of the Milk Mantra business. But watch out for Dodla Dairy and Parag Milk on the back of gross margin expansion that we've seen year on year. Both the other companies have also seen a spike. The street expects improvement in margins for these companies as well as we move into the second quarter results and thereafter as well. There was commentary on dairy milk procurement prices for Nestle as well, where they had said they expect milk procurement prices to come down, which is net margin positive for these guys. Take a short break, come back. We get chatting with the management of Supreme Petrochem to record their second quarter earnings. Stay with us.
Welcome back. Well, for the markets, it's turning out to be a steady session. So we are up around 0.7% at this point in time. We have the Bank Nifty, which is at around 58,120 as well. So good levels coming in there. But one particular company is showing some amount of weakness today. That's Supreme Petrochem, which came out with its numbers. It's down around 2% at this point in time, and on a month-to-date basis as well, it's lost around 5 to 6%. But you have to admit that on a year-to-date basis, it's still resilient with a gain of around 18 or 19%. But this time round, the numbers have looked weak. The revenue's down around 27%, margins at 7.05%, and the profit has been a steep decline of around 47% on a year-on-year basis. We have Rakesh Nair, who's the ED at Supreme Petrochem, to take us through the numbers this quarter. Mr. Nair, thank you very much for joining in. Well, definitely a disappointing quarter for you all. Just take us through your volumes this time. We understand that it fell around 5.6% this quarter. What led to that volume decline and the pricing? What was the pricing decline like this quarter, or the movement? And what can you guide on these two parameters for Q3?
Good afternoon. This quarter was tough for us. There were multiple reasons for that. One is the extended heavy monsoon, which dampened the sale of cooling devices, resulting in lower lifting by the OEMs. Secondly, the intimation of reduction in the GST rates in mid-August, which resulted in the deferment of buying decisions by the OEMs and their molders and the consumers also. Thirdly, the trade barriers all over set up by the US, which resulted in the change in the trade flows globally, and also weakening demand from Europe. And lastly, the styrene prices, because of the crude prices were also falling, the styrene prices also fell from almost a peak of $940 end June to $800, which is today now. So all these reasons, one, our selling prices dropped also because on the back of the lower raw material prices. And the margins were also under pressure, as well as the volumes, both in the domestic market as well as in the exports, they were under pressure.
So what is
all these reasons, sorry, yeah.
Go ahead, but what is Q3 looking like when it comes to pricing and volumes?
See, the pricing essentially is a matter of raw material price also. So if the raw material prices are at these levels, the prices will also be at the similar levels which are prevailing today. And as far as the volumes are concerned, generally December also, the first half of this third quarter is generally a weak quarter post Diwali. But then the issues like tariffs, barriers by US, and also the Europe demand being weak, and also large capacities built by China, they are the issues which very difficult to predict today. I wouldn't hazard any guess as far as the next 6 months are concerned, but I can only say that our volumes overall would be better than last year. But then at quarter-wise volumes, I won't make any guess today.
All right. So just roughly what proportion will they be higher by on a year-on-year basis?
I wouldn't make any guidance on that today because of all geoeconomic, geopolitical issues which are there today.
Right.
It's tough to predict.
Okay, we take that point. But what's also in your control and is among your triggers going forward is the ABS plant, which started commercial production. What could that do to your revenue? And you acquired Xmold as well, which obviously has exposure to the auto space. So with this ABS plant starting and Xmold, what could your mix be when it comes to business coming in from the auto sector? How much is it right now, and what would it be from here on?
No, right now, see, we just started our ABS production, and the trials are on with the various processors. And once the whole material is accepted by the market, and if any changes are needed to be made in certain grades, that would be made. And post that, I would say that the actual sales with the autos will start, and that would take at least next 5 to 6 months.
And what's your target here from the auto sector? How much do you sell to them right now?
No, we don't sell to them right now. We don't sell to them. Though our Xmold, which we acquired this year, has necessary approvals from the automobile sector. But currently our ABS is just started and we are not selling it to any automobile sector.
Right. Also, I just wanted a couple of points. I wanted clarification. So now, in terms of you highlighted points, why you saw weakness in Q2, but are you seeing better inquiries overall? And export also, if you could highlight that. Is there any improvement there, or are there any specific geographies which are still facing a lot more pressure?
Europe is facing a lot of pressure. US is practically no for us now. It's the Gulf, it's the Asian countries where we are concentrating right now.
Okay.
And as far as the domestic market is concerned, after Diwali, generally it's a lull period. But starting in mid-November, end November, the actual lifting will start by the OEMs also.
Okay, and for the full year, do you think you'll be able to maintain that 10 to 11% revenue from exports, or will it be lower maybe in FY26, given some geographies are facing issues?
Exports, we will still be able to manage, but then the overall volume guidance which we had earlier given, I don't think we'll be able to meet that with the kind of issues we are facing currently and the last 3 months we faced. So I wouldn't make any guess as far as the overall volumes are concerned, but domestic, I'm sure that we will be able to achieve 10% growth.
Okay, so domestic, you'll achieve 10% growth. What was your earlier volume guidance?
Sorry, I said we will achieve 10% growth on exports.
On exports. What was your earlier volume guidance, sir?
We had earlier given a volume guidance of 10 to 12% for the year as a whole for all products put together. But then I won't make any guess at the moment on that, as I explained earlier.
All right. That's a fair point there. But you did mention that you're focusing on the Gulf now. Do you think that when do you think business will start picking up in terms of momentum for you to formidably show in your numbers?
No, business is going on as far as the Gulf or the Asian countries are concerned. The business is going on.
No, for it to compensate on the lost on the businesses where, your geographies are showing pressure, for Gulf and other geographies to probably compensate for the others.
It's a work in progress always, and we are increasing our volumes there. We are concentrating, but then with the change in the trade flows, even there is a competition today because the other countries who are concentrating on the other markets are also focusing on these areas. So, but then we are there already there. We have customers there, so we have some kind of an edge, and we are working on that.
What's your outlook on margins from here on? And just to press further on that ABS point, 5-6 months you will get orders coming in, you will settle in on who your customers would be. You spent about, what, 850 crores, or that's the earmarked capex for this plant?
No, that was for both the phases.
Okay.
And we have only just completed the phase 1 and the infrastructure and the utilities for the second phase.
And what is the typical, asset turnover in a plant like this?
It's generally at 2 times.
So you can, from the current phase, do about 800 crores of revenue, and when both the phases are done, about 1700 crores overall.
Yes, that's so.
And that would be entirely from the auto space, or there would be other clients as well?
No. The auto space is one part of it, because in appliances it is used also. It is used in toys, it is used in stationery, it is used in multiple small appliances also. So ABS has multiple uses, 2-wheelers, batteries, everywhere they are there.
So what would the margin triggers then be?
In today's environment, very difficult to predict on the margins, please.
Okay, and just a quick one, value-added products in Q1, it was around 36% of your overall total revenue. You said it would move up somewhere around 40% because of this ABS plant coming in there. By when will this 40% come for value-added products then?
We hope that by the year end, we should be there at 40%.
By the year end, you will be there. So then, wouldn't that improve your margins a little bit more, given that you would see more value-added products?
Yes, margins would improve. On those, that 40% will certainly improve our margins. But then, as I explained, that everywhere else, the margins are under pressure today. So how much will it make total impact on overall volumes of the company is very difficult to predict today.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us, and best of luck for what seems to be a little tough environment for Supreme Petrochem. As you can see, the stock is down around 2.5% at this point in time. Well, we'll need to take a short break, but a quick note for our viewers. As you can see on the screen, there is a money control stock score just above the line graph. And this is a score which is assigned to each stock based on Money Control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.
Welcome back to Halftime Report on CNBC-TV18. Looking at the Nifty right now, it's come off the day's highest point. Right now, it's holding on to gains of 180 points. 25,977, around that mark is what the Nifty is trading at. So let's keep an eye out on that one. Nifty IT, that's the one also that has seen a bit of a downtick from the day's highest points. And the last one, a slight bit of a fall from the day's highest point. But nonetheless, they're still managing to hold on to gains. So there's no complaining on that front. Overall, when you're looking at it in terms of the top losers today, we have Zen Technologies, that's down and out. We have Gujarat Fluoro, that's among the top losers coming in for the Nifty 500, as well as Ola Electric, which is also seeing a sharp fall of almost 2 to 3% in today's trading session. Specifically, in the last 1 hour, what has not done well is Shipping Corporation of India. That's seen a fall of around 2% in just the last 1 hour. So that is something that we'll be keeping an eye out on. Other than that, Vodafone Idea has come off the day's highest point, still trading trading in the green after, the AGR case due announcements that has come in. And obviously positive for Vodafone Idea. We've seen an uptick coming in for Vodafone Idea Indus Towers, but that has come off the day's highest point. And last one, Poonawalla FinCorp. That's the next one. That has seen a bit of a fall. So keep an eye on that one. That also is down 2% in the last 1 hour. Overall, a lot of gainers in today's trading session. Look at First Source trading away in trade. Buzzing in trade, 8% gains there. Chennai Petro, E-Clerks, all of them managing to hold on to very good gains. But yes, a bit of the day's highest point is what we're closing halftime report with. Nonetheless, holding on to 0.5%, more than 0.5% of gain for the Nifty 50. With that, it's a goodbye from me as well as the team who put this show together. Thank you so much for tuning in.
Stocks stage a strong comeback after the sell-off late last week. Realty and energy are the big gainers while healthcare stocks drag. Kotak Mahindra Bank sees margins crimp a little more than peers even as the management is hopeful of them improving going forward. Most analysts remain positive, but concerns over valuations remain. The Supreme Court allows a review of the AGR matter, saying it sees no reason to not allow the centre to reconsider the policy issue. The Apex Court's landmark observation allows the government to offer relief on AGR dues to Vodafone Idea. It was a strong second quarter for SBI Life Insurance with margins beating street expectations on a better product mix. Growth in the second half of the year is also expected to be stronger. The stock perks up. An eyewear player, Lenskart Solutions, plans an 7,000 crore plus IPO, which is priced at 10 times sales and 230 times its earnings. The management counters, highlighting a long growth runway in India and overseas. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormus Fatakia, and on the penultimate day of the October series expiry, the indices are continuing from where they left off last week, barring a minor blip in the last 1.5 days of the trading session, the second half of Thursday and of course on Friday. But today the index did manage to cross that 26,000 mark intraday, still continuing to hover around those levels, 175 points higher on the index. The banking names doing well for themselves despite the drag coming in from Kotak Bank. The Nifty Bank now currently trading 400 points higher, back above the mark of 58,000 as well. And the broader markets too. Of course, we are heading into a very busy earnings day. We've come out with a couple of names just before the show began, starting off with Chennai Petro. That stock is up 7% after its results. The profit coming in for the quarter compared to a net loss in the previous one. So 6.5% higher for Chennai Petro. And Hatsun Agro, that stock came out with results a few minutes ago, and that stock too has seen a very, very sharp surge after its results, after an improvement that was seen in its profitability. And Hatsun Agro, the other earnings reaction, the stock up almost 20% as we speak. So as of now, the market's doing fairly well for themselves, and a lot of other earnings lined up, be it Indian Oil Corporation, be it Indus Towers, and of course Sona BLW, Mazagon Dock Shipbuilders. So a lot of earnings that are lined up going into the second half of the trading session. Of course, Indus Towers is also up because of the news related to Vodafone Idea, and that's our top story for the start of this show. And this is after the Supreme Court allowed a review of the AGR matter, saying that it sees no reason not to allow the centre to reconsider the policy issue. Ashmit is joining in with more details on this. Ashmit.
Indeed, a huge relief coming in. Vodafone Idea, of course, was here before the Apex Court asking for relief. They were asking for waiver of the penalty interest and the interest on penalty dues. There have been 4 adjournments sought by the centre. The centre kept asking for more time, saying that they're going back to the drawing board, coming out with a solution. Today, when the hearing began, they've not given a definitive structure of what the relief package will be like, but what they had sought for, essentially saying that allow us the flexibility to go ahead and to structure some form of resolution as far as this AGR issue is concerned. Now, the Apex Court taking note of 3 critical arguments. Number one, the facts on the ground have changed. Now, the government enjoys a 49% equity stake. In fact, at one point, the Solicitor General also remarked that by way of the government holding stake, it's also a case of public interest being at play. The second, the Solicitor General pointed out that, look, there are as many as 20 crore customers as far as Vodafone Idea is concerned. All of them will stand to get impacted. And finally, also saying that if the company goes away outside of the customers, competition in the sector will also get impacted. Now, on account of all of these factors, the Supreme Court saying that, look, this is a policy matter. The Supreme Court does not want to intervene, does not want to guide the hand of the centre. It does not want to prevent the centre from taking any measures for resolving this issue, and saying that given the peculiar facts and circumstances of this case, 49% stake, 20 crore customers at play, all of that factors coming into play, the Apex Court now allowing a free hand to the centre, saying that this is a policy matter. We don't want to come into the picture. The centre is now free. The DOT is now free to formulate, to restructure some form of solution as far as the AGR issue is concerned. The one question, of course, that many have left asking is that with this Supreme Court direction, will it be applicable to Bharti as well? That's a question that now the DOT, we understand, will have to give clarity on whether this relief package that the Supreme Court has granted blessings to will be pointed towards only one company or towards the wider sector. Back to you.
Indeed, that's the bigger question to watch out for. Ashmit, thank you for that. And staying with Vodafone Idea, Reema is now joining in to tell us what options does the government have with regards to giving any potential relief to Vodafone Idea. Reema.
Well, multiple options that we can think of right now. For starters, they could extend the timeline for Vodafone Idea to repay the AGR dues. As of now, it comes to an end in March of 2031. They say that you have an additional 20 years to repay those. Secondly, maybe they say that just repay the principal. Don't pay the interest or the penalty or the interest on penalty or pay part of that. And thirdly, the company has been, or the telcos have been arguing that there are mathematical, arithmetical errors. So maybe the government decides to rectify that. So we'll have to see what form and shape the relief and resolution takes place. But there are multiple options on the table. But this could be a game changer for Vodafone Idea because for starters, it will ease the cash flow burden. And two, it will help the company maybe go ahead and raise that much needed 25,000 crore of bank funding, which up until now banks were unwilling to lend to Vodafone Idea because of lack of clarity on what its prospects are going to be. But the stock also to watch will be Indus Towers, because once Vodafone Idea is in a better shape financially, it can resume its capex, which is positive for Indus Towers, and maybe it will help Indus Towers once again resume the dividend payouts, which investors have been waiting for. Back to you.
Indeed, but Vodafone Idea stock has cooled off very sharply from the highs of the day. The intraday high was 10.57, and since then the stock is now only 1.5% higher. At one point was up even almost 10% was Vodafone Idea. So a sharp cool off from the highs of the day. But Reema, stay on because Reliance Industries is the other one that is in focus, and that has now formed a JV with Meta as it is betting big on AI. Tell us more on that.
Indeed. So Reliance Industries has launched Reliance Enterprise Intelligence Limited, REIL, which is a joint venture with Meta. Reliance will hold a 70% stake. Meta will have a 30% stake. And the initial upfront committed capex is about $97 million. This ties in with what Mukesh Ambani had to say at the AGM, where he spoke about AI everywhere, AI for everyone. So once again, it goes back to the push that Mukesh Ambani had highlighted about, the broader AI push. But, according to Morgan Stanley, that the $97 million is only the upfront capex. Eventually, the company will be making further investments. They estimate it to be between $12 to $15 billion to build their 1 gigawatt AI data center infrastructure. And the question is, because global tech majors who are in the AI play are commanding such high valuations, once this REIL scales up, what could be the valuations it will command? And will that have a rub-off on the listed entity, Reliance Industry? We'll have to see how that plays out. Back to you.
Playing off well as of now, 2% higher on the stock, and nearing 1,500 is Reliance Industries among the top contributors to the Nifty gains in today's session. Moving on then, the Reserve Bank of India has announced draft rules for allowing banks to finance acquisitions. Ritu is joining in with more details on this. Ritu.
The Reserve Bank of India has finally put out draft rules on capital markets and acquisition financing for banks, setting clear limits and safeguards. So a bank's total exposure to capital markets, both direct and indirect, is going to be capped at 40% of the Tier 1 capital. Within that, the direct exposure, which includes investments and acquisition finance, cannot exceed 20%. And specifically, acquisition finance is going to be capped at 10% of the Tier 1 capital. Now, on M&A financing, for the first time, RBI is allowing banks to lend to Indian companies that want to buy stakes in other companies in India or abroad. But RBI says these deals must be strategic and aimed at long-term growth and not short-term profits. To qualify, the acquiring company also has to be listed, have a positive net worth, and must have been profitable for the last 3 years. Also, banks can only fund up to 70% of the deal value, while the remaining 30% has to come from the company's own equity. After the acquisition, RBI says the debt-to-equity ratio cannot exceed 3:1, and the loan must be fully backed by shares of the target company as security. Next, let's also talk about lending to capital market intermediaries. Banks can lend to them only if the loan is fully secured and the collateral actually belongs to the borrower, and there is a restriction where banks can't finance them for proprietary trading or investments of their own. Now, when it comes to IPO, FPO and ESOP financing, banks can lend up to 25 lakh rupees per person, but covering only 75% of the subscription value. Finally, loans against securities for individuals. Banks can lend up to rupees 1 crore per person. Within that, 25 lakh rupees can be used for buying shares in the secondary market. Now, while bankers we've been speaking to have welcomed the move overall, called it a good start, not all their requests have been addressed, so they will seek clarifications. For instance, whether banks can finance foreign companies looking to buy in India, not just Indian companies making acquisitions. Also, the clause on acquiring company being a listed entity, the profitability and the 3:1 debt to equity cap after acquisition has also raised some concerns among bankers, especially for deals that involved distressed assets. Public comments on this draft are invited by the 21st of November, and the final rules are expected to kick in from 1st of April next year.
Ritu, thank you for that update. We also spoke to a whole host of experts on the likely impact of these norms on the banking sector. Listen into what they had to say.
It is definitely a segment which for many years has been close to Indian banks. And to a large extent, most of the M&As were getting funded from FPI or NBFC or AIFs. To that extent, it's clearly an area of opportunity for Indian banks to sort of step in. Having said that, as you rightly said, there are boundary conditions like debt equity ratio of 70-30. Similarly, the acquiring company has to be a listed entity. So there are boundary conditions, and also it eats into the CME exposure of banks, which is not a big headroom that banks have. A lot of banks have, CME exposure is sort of not that much headroom is available. To that extent, it is a new area and it's an opportunity for Indian banks.
I think this is a good start. I don't believe this is any inflection point. This is just testing the waters, I would believe. I would believe that the banks have learned a lot over the last 10 years in terms of the cycle they've gone through. Banks have been a lot more risk averse than what possibly even the regulators anticipate. That's why you see corporate lending, in spite of the cycle having fully played out, I don't see much pickup in corporate credit. So the thing is that banks will be tipping their toes, not jumping in. I would think it's a good starting point, but banks will be cautious. Banks will take their time in terms of trying to build their own risk management capabilities as far as these are concerned. The last thing they would want is to repeat of the previous cycle, and therefore I believe that it'll be a slow turn up.
And you just heard from Zareen Daruwala on this subject, and news just coming in that she has been appointed Group CEO at PL Capital to spearhead their growth going forward. But Ritu, since you're still with us, let's also talk about ICICI Bank. Sandeep Bakshi's term as CEO is up for renewal in about a year's time. But is he going to continue after the current term?
Well, there's growing buzz around ICICI Bank and its CEO Sandeep Bakshi, whose term is up for renewal in about a year. And the big question that everyone's asking is, whether the man that turned ICICI Bank around stay on for another term. Now, that question actually came up during the bank's recent earnings call, where an analyst from Bank of America Securities asked Sandeep Bakshi directly about his intention to continue. The response came from the group CFO, Anindya Banerjee, who said there is still time and the board will take a call and make a disclosure at the appropriate time. Now, analysts say it really depends on Sandeep Bakshi himself whether he wants to continue or not. For instance, Suresh Ganapathy at Macquarie Capital notes that while personal factors could be at play, the board seems fully supportive of him staying on for another 3 years after his current term ends in October 2026. Now, under RBI rules, private bank CEOs can serve up to 15 years or until they turn 70 years of age, and Sandeep Bakshi at 65 years is well within that limit. Now, since taking charge after Chanda Kochar's exit, Sandeep Bakshi has led a remarkable turnaround for the bank, and investors have also rewarded that. For instance, ICICI Bank trades at 3 times its expected FY26 book value, higher than HDFC Bank's 2.7 times. So if Sandeep Bakshi decides to move on, Macquarie points out to Rakesh Shah, a long-time ICICI Bank executive, as a possible successor. Now, in response to our query on the matter, an ICICI Bank spokesperson said that the board will take a decision on the matter at the appropriate time.
Ritu, thank you for that update. The other drag that's coming in on the banking stocks today is Kotak Mahindra Bank, and that's after its second quarter results. Gaurav is joining in with more specifics in the big story on how private banks have performed in this quarter. Gaurav.
Well, yes, when we look at private bank, the top 5 private banks, they have reported their numbers. And let's go back in time and let's see how they are reported. When we look at Kotak Mahindra Bank, the loan growth remains strongest across the pack at around 16% growth. But at the same time, we also saw some banks like HDFC who surprised with the loan book growth at around 10%, which actually is merging with the system level growth. Apart from that, Axis Bank, they also reported very strong set of numbers. In fact, double-digit growth after 3 quarters of single-digit growth. When it comes to ICICI Bank, the growth remained in double digits, but a little bit lower than its own trajectory. And at the same time, IndusInd Bank, they reported around 8 to 9% decline in terms of advances. When it comes to deposits, we did not see any kind of negative surprise there. In fact, for HDFC Bank, we saw deposit growth on a sequential basis was higher, and that is the reason that LDR ratio was one of the things that increased. Apart from that, when we talk about CASA, now here as well, Kotak Mahindra Bank is actually leading the pack, at least in this quarter, because 140 basis point of increase in CASA ratio is what we saw sequentially. Apart from that, if we look at ICICI Bank, they also did manage their CASA very well. HDFC Bank remained flat on a sequential basis, while IndusInd Bank and Axis Bank both saw some decline. Now, coming to the net interest margins part, when we look at net interest margins, when we look at ICICI Bank, they have delivered very great set of numbers. In fact, just 4 basis point of fall. And after that, we also saw surprise coming up from Axis Bank, where we saw just 7 basis point of fall in terms of net interest margins. We saw HDFC Bank, who reported good set of numbers. We saw 8 basis point of fall there. But apart from that, IndusInd Bank also reported inline set of number. What was negative is that the Kotak Mahindra Bank, not negative though, but a bit higher than the expected fall of around 11 basis point. Now, when it comes to asset quality as well, we saw good set of numbers, but all in all, across the parameters, we saw ICICI Bank actually still leading the pack. Apart from that, HDFC Bank and Axis Bank doing great job. Kotak Mahindra Bank saw a bit of a dip, and the reason being that valuations are high. And lastly, IndusInd Bank, decline in loan book growth. That is what we saw in second quarter so far.
Indeed, interesting analysis there. Gaurav, thank you for that update. Take a short break. More news continues on the other side. Stay tuned. Welcome back. Now, the big global cue this week will be US President Donald Trump's meeting with Chinese President Xi Jinping, ahead of which US Treasury Secretary Scott Bessent stated that Donald Trump's threat of an additional 100% tariff on Chinese goods is effectively off the table, hinting at a trade deal that may take place soon. Listen to what he had to say.
This was the fifth meeting that I've had with my Chinese counterpart, the Vice Premier, Hu Lifeng, and we covered a wide range of issues, and I think we've reached a substantial framework for the two leaders who will meet in Korea next Thursday. So, on the table, the president had given me maximum leverage when he threatened 100% tariffs if the Chinese imposed their rare earth global export controls. So I think we have averted that, so that the tariffs will be averted. And we have a regular quarterly meeting with the Chinese. It was scheduled for November 10th or before November 10th. I don't think we will have to have that. So we have been rolling the tariffs quarterly. So we agreed on that. We also agreed on substantial agriculture purchases for U.S. farmers. We agreed that the Chinese would begin to help us with the precursor chemicals for this terrible fentanyl epidemic that's ravaging our country. So I would say that it was a very good meeting overall.
Has also signed a flurry of deals on trade and critical minerals with Thailand, Malaysia, Cambodia and Vietnam at the 47th ASEAN Summit. CNBC's JP Ong gets us the details.
A lot of highlights in just about 36 hours since the ASEAN Summit officially kicked off, and a lot of this really being driven by the presence of U.S. President Donald Trump, who is, as you mentioned, on his way or is about to land in Tokyo, actually, for the next leg of his Asia deal. As we know, this was probably one of the more important or more substantial ASEAN summits we've had in years, actually. Also because it seems that framework or that groundwork that was laid to try and pave the way for a potential meeting between Trump and Chinese President Xi Jinping was laid out here in Kuala Lumpur on the sidelines of the ASEAN Summit. And also because they did ink a number of trade deals, as you mentioned, with 4 ASEAN countries, the likes of Cambodia and Vietnam, saw their trade deals finalized. Thailand, seeing a framework that has been laid out that will mean that they were this close or very close to actually finalizing that trade deal that will see them getting a tariff of about 19%. Arguably the most important or the most interesting one was the one that the U.S. signed with Malaysia, not just because Malaysia is the host of the ASEAN, holds the chairmanship of ASEAN this year, but also because there were key elements, there are key components in that particular agreement that involved rare earths, establishing a pipeline of rare earths between Malaysia and the United States. According to Malaysia, they did some initial studies and said that there are indicative potential resources or rare earth resources that could be as much as 16 million metric tons if this is indeed verified, which means there's a huge opportunity for Malaysia to actually court some of these investments and also take a bigger role in the rare earth industry. And so far, they have actually cemented at least an agreement to potentially supply these to the United States. But keep in mind, Malaysia is also talking with the Chinese to possibly bring in rare earth investments into Malaysia. So again, this puts them in a very interesting position because there's a lot of opportunity for them in the rare earth space, but also a lot of steps and a lot of miles they have to travel, and also a lot of relations that will have to be maintained between the United States and China, who are competing in this very, very critical sector.
JP Ong, thank you for that update. Numbers from Supreme Industries at the bottom of your screens. Margins have narrowed close to around 170 basis points, 12.5% from 14% last year. There has been a marginal increase in the top line. On the profitability front, well, the profits have come down as well. 207 crores in the base quarter, 165 crores this time around. It's a 20% drop in its net profit. The stock currently remaining flat. All eyes on the company's guidance. Take a short break. More news and updates on the other side. Welcome back. Chief Justice of India Bhushan Gawai is set to appoint his successor by recommending Justice Surya Kant, the senior-most judge of the Supreme Court, to the Union government. Justice Kant, who is next in line for the role based on seniority, will be eligible to assume office upon Justice Gawai's retirement on the 23rd of November. Once notified by the government, he will become the 53rd Chief Justice of India and is expected to serve until his retirement on the 9th of February 2027. That will be a tenure of around 14 months. With that, we call time on this edition of Business Lunch from me and the team. Thank you for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. Markets in green today. We have come up from the highs, but we have snapped that two-day losing streak. Let's see whether that continues through the course of the day or not. The midcaps high by 0.8%.
Good afternoon, Sonal. Like you mentioned, markets in the green, but off the day's high. But despite that, the midcap index still up 0.8%, and that's some positive view, especially given the fact that the broader end of the market, you're seeing the advanced decline ratio to be quite sharp up. But we have a lot lined up on the show, some important corporate conversations as well. So let's start off with the top headlines. Market comes off day's high. Nifty, Sensex gain about 0.5% each, while midcaps outperform. Realty, PSU banks and metals are the big gainers, while pharma drags.
Laurus Labs surges in trade, gains over 1.5%. Analysts say the company is a potential beneficiary of US FDA compliance issues at Hetero Drugs.
The Supreme Court allows a review of the AGR matter, saying it sees no reason not to allow the centre to reconsider the policy issue. The APEC Court's landmark observation allows the government to offer relief on AGR dues to Voda Idea.
SBI card slips over 2% after reporting its Q2 numbers. Mrs. Street estimates festive season and Q2 end led to lower translation of revolver rate and a sharp fall in yield on loans.
Zen Technology is under pressure as the company's EBITDA and revenue declines in Q2, stock down over 4%.
All right, those are the top headlines that we are tracking for you. Let's talk about some mid-cap movers because that's the focus point. Bharat Wire Ropes, for instance, is up 20% as we speak, a big surge on that one. We do have PSP Projects, which is sitting with gains of around 15.5% as we speak. Alicon, Castelloy, the first source stock also has surged to the day's high. It's up 7.5%. Manali Petro is the other one. Some of these refiners, the oil marketing companies and standalone refiners are doing really well. Chennai Petro reported numbers a while back. It was a strong growth on a sequential basis. That is something which is surging in trade. It has come up from the highs of the day, but we do have a management conversation which is lined up later in the day. So we'll get you more details on that one. IOCL, BPCL, HPCL, all of them are higher in trade and they continue to be on our radar as well. Apart from that, if we look at some other names, something like an Hudson Agro, which reported numbers, that is logged in upper circuit right now, 20% higher on that. Supreme Industries, important update there. They have cut their volume guidance. Of course, another conversation lined up with Supreme Industries as well. We'll get you all details on that one. The stock has slipped to the day's low. But that's about the secondary market. There's so much action in the primary market as well, right? Eyewear retailer Lenskart is set to launch its 7,278 rupee crore initial public offering on Friday, October 31st, with a price band of 382 to 420 per share. My colleague Manglam Malu caught up with the management of the company. Listen into what they had to say.
I think overall, if we look at eyewear as a problem or eyewear as a market, today almost 7 out of 10 adults need glasses.
Yeah.
And this number has been growing from 5 or 6 to about 7. Even if you look at children, about 20% kids used to have myopia. Now that number, as of FY25, has become 40%. And we are seeing that number is growing. If we keep that in mind, our view is that the market will continue to grow. Market will continue to grow. And at Lenskart, as long as I think we can do more and more eye tests, which we have been compounding more than 50%. FY23, we did about 6 million eye tests. And FY25, we did 16 million eye tests. And India needs light. We have almost, very soon going to have over 500 million people who need glasses, without glasses. So I think as long as we can continue to do that, there's a lot of opportunity.
The organized market obviously likely to grow nearly 1.6 times the unorganized market. Let me ask you the numbers specifically. What rate is the market projected to grow at? In the past, what have you been growing versus the market? And is that sustainable in the future as well?
So Indian market in eyewear category has been growing at about 13%, caused by both the increasing myopia rates, increasing adoption, and people buying more eyewear per head. We have been outperforming the market, and we think we will continue to do that in the foreseeable future.
By a factor of how much?
Similar to what we have done in the past.
What has been that number in the past?
We did about 24-25% growth. And we've been adding to our share.
So 2x of the market is a number that is sustainable. Let's talk about the margins as well. Your operating leverage has begun to kick in. The international operations, which have a lot more margins as well, all of that has meant that your margins are just sub 18% at the end of the previous quarter, the numbers that you've reported so far. What are the levers for the margins to go further from here, and what's the headroom here?
Yeah, if you see our last 3 years, we have increased our EBITDA margins by almost 8 to 9%. And that has come as a combination of product margin expansion, operating leverage, and marketing efficiencies. So all these 3 levers continue to be relevant. And as we look at future, they will keep adding to the margin profile. There is a natural operating leverage in our business. And given that this is a high product margin business, the flow-through helps in overall, EBITDA expansion.
Gross margins of almost 68%, employee costs at 25%, your EBITDA margins are close to 18%. So realistically speaking, if all things work, your margins have a headroom to go all the way up to 25 to 30%. Is that directionally an aspirational number?
I would not get into direction of margin right now. I think as a business, I would still say that we are very early in the journey. Like I said, right now, of course, the business has hit a certain scale, and we like to believe that we are creating a lot of value for the customer, and we want to do that even further. It is too early, I think, in the journey for us to really set expectations for the numbers that you're talking about right now. I think our goal right now is how do we take our 16 million eye tests to 100 million eye tests a year. As long as we can do that, I think we would like to be focused towards that. Margins is a outcome. They have been, we have been fortunate that they are coming along, and let's see where they go. I'm sure we continue to surprise everybody.
Well, you better be surprising people. The reason why I say that is because, you're saying you don't want to set expectations for people so early in your journey and speak about adding value to customers and all of that and stuff. In the secondary market is the valuation that matters the most. And I'm looking at your numbers, you're seeking a post-money valuation for almost 70,000 crores in terms of market cap. Just basis trailing numbers, you are, offered at a little over 230 times price to earnings, nearly 10.5 times sales. Even if you triple your profits from current levels over the next few years, you would be at around 70 times, right? So what I'm trying to understand is how much value do you think personally you've left on the table for people who are entering right now?
I would say that firstly, as a company and as an entrepreneur, our job is to create value for the customer.
Yeah.
Right?
And now increasingly shareholder as well.
Yes. And the shareholder, as far as valuation is concerned, it is what the market decides. Even if we look at the valuation, there are investors who are selling shares, there are investors who are coming in, and they have done a lot of working to arrive at these numbers. All I can say is they'll be very close to comparables. They won't be off. Sometimes when you look at things without looking at the full perspective, they look different, but yeah, be rest assured that everything will be in line with what they should be. I don't expect anything abnormal here.
All right, we take that point. Let's wrap this up with a quick rapid fire, and we'd like you to, give as many numbers or as many, nuggets as possible in as little time. So let's start with the first one. Let's, market share.
No projections.
No projections. Current market close to 70,000 crores. Your revenue 6,600 crores. Sub 8% market share in India. Where do you see this headed?
Well, it's too early. I mean, we would want to, like I said, Maruti gave the comfort of four-wheeler to India. We would like to give the comfort of vision to India. We would want to give vision to 1 billion people eventually.
All right. Your margins from here on go how much higher?
Higher.
Higher. Much higher, not much higher, or very much higher?
It is. I would say.
I think priority is right now growth. We are very small market share.
Okay.
But we will, the naturally flow through will be the compounding of margin.
All right. And
very early in the journey, let's see.
Revenue growth aspirations. You said growth is your target, India and international markets. Give us a sense. And
we have been growing well. I think can we do more? Yes.
30% CAGR over the last 3 years.
I won't set any expectations.
No, that's been happening over the last 3 years. So obviously.
Yeah. Let's see. I think I would say that we are still very early in the journey.
Okay. 2x market growth is what he had spoken about earlier that you've been doing. Perhaps that happens. Your revenue mix, 60%.
I don't think he said that. I think you...
I said market is growing, and then our numbers are out there for people to...
I'm allowed to make those projections, you're not. So, I'll just ask you whether directionally that's correct or not. 60% revenue from India, 40% internationally. Does that mix stay the same?
It will keep changing depending, how things are at different stages. Like now in India, we are in a high scale mode. We have been adding about 300 plus stores a year. International, we are integrating our tech. I think less relevant, I would say. It is something that you will see will evolve over the years. But international continues to be a good focus for the company.
4,000 stores by 2030?
Again, I would say...
Possible?
Definitely. I mean, India has 80,000 eyewear stores, approximately, conservatively. And that Abhishek said we have 60 stores for 1 million people. We have 20 times more jewelry stores in India. So one would say, can you add at least another 80,000 optical stores as a country? Yes. Right? Out of that 80,000, let's see how many Lenskart adds.
All right. Your favorite Lenskart pair?
Hustler.
Yours is Hustler as well?
as of now, but very soon it's going to be something else. I'm looking forward to wear our camera glasses. I keep playing with them. There's one in my bag right now. I don't want to show anyone.
I like the new Meller as well.
You like the new Meller as well?
Actually, yes. The Meller is quite cool.
All right, that's the Lenskart management. We'll be watching out for this one. But we are tracking earnings as well, and SRF will be reporting numbers today. So let's talk about what's expected this time. Strong set in Q2, where a revenue growth of 12.4%. EBITDA is expected to see an increase of 55.5%. Margins should come in at 21.7%, which compares with 15.7%. Of course, that is a low base as well. Profits will see a growth of 126% on a YOY basis. What will support growth this quarter? It will be the export business, which will do well, and that is the reason you will see the sharp uptick in revenues as well. Do remember, refrigerant gas price is one of their major products. That is something that saw sharp uptick in prices, but that came down in the month of August as well. And in terms of segmental revenue, if we look at those numbers, these are Jefferies estimates. Technical textiles revenues will decline by 16%, but chemicals will see a growth of 49%. Packaging films will be down 9% on a YOY basis. And if we talk about the segmental EBIT as well, technical textiles will continue to see a decline, down 50% on a YOY basis, but chemicals will see an EBIT improvement of around 122%. Packaging films will be up 66%. So the main thing to be watching out for will be management commentary post the numbers, which comes out in a press release after the P&L is reported. So that will be an important thing, because SRF is a chemical major, which sets the tone for the entire chemical industry. And that is something we'll be watching out very, very closely now.
Well, thank you so much for that. Especially seen as a harbinger as far as the entire chemical pack is concerned. Well, another stock that's doing quite well in the session today is SBI Life Insurance. It gains in trade after reporting a strong set of Q2 numbers. New business premium came in line. Total APE and VNB margin beat estimates. In fact, my colleague Yash Jain caught up with Amit Jingran of SBI Life, who's the MD and CEO there, and began by asking him about the quarter gone by and how they see growth going forward. Let's listen.
If you look at the first half number, the growth on IRP basis is around 7.2%, whereas on APE basis it is closer to 10%. What we have seen during the first half year, that the base of last year for SBI Life was pretty high, as our agency was firing on all cylinders in last half year. But in the current half year, because of this base effect, the sales were a little muted. The growth being shown was a little muted. But if you look at the month-wise figures, when we came into September, the growth came back pretty strongly in both agency as well as banca channel, and that helped us close first half year with decent set of numbers. What we are seeing in the month of October is also pretty strong growth, and based on that, and with the help of the GST impact, we expect that the second half growth will be higher, and we will be able to stick to our growth of 13-14% on APE basis.
So you expect H2 growth to be about 18%?
Yes, much better.
Okay. If we speak about the month of September, which helped you largely to register a very strong growth for Q2, your NBP grew at 32%, AP at 16%, and retail AP at 15%. How does the month of October look? Would the numbers be as strong as the month of September? And then Q3, what is the expectation?
So on NBP basis, there was some group business also which was booked in the month of September, but group, as you know, is a lumpy kind of business. It may or may not happen every month. So on NBP basis, I will not say, would not like to comment, but as on date, the September numbers are looking good on, October numbers are looking good on IRP basis also.
Okay, IRP basis as good as the month of September, about
yeah, it is still work in progress, so we will see how the last week pans out, but with the number of holidays etc. in the month of October, the growth looks pretty decent.
Okay, just want to understand what portion of the total premium came post September 22nd, and also as far as the impact of that change of September 22nd, that is the changes with respect to GST is concerned, what is the impact that it's expected to have on your VNB and margins for FY26, which is H2, and then FY27?
There was kind of 0.2% effect of the business of the last week on the entire half year numbers. But for the entire year, there may be an impact of around 1.5 to 1.6% on VONB. But we have certain levers on which we are working, and we expect to cover the margin through those levers. You see that our product mix is changing for the better. We are doing more of value accretive business. The share of ULIP is coming down, and that is helping us in creating more value for the company.
Okay. You're guided for margins, as you spoke about, between 26 to 28%. Now, at that time, of course, the GST changes were not expected. Despite those changes and the impact, do you expect to remain in that range of 26 to 28% for FY26? And just to understand, since we are halfway through the year, just to understand this number better, would this be closer to FY28? Would it be closer to 28%, or would it be closer to 26%?
So if you look at the first half year numbers, we reported a margin of 27.8%. For the Q2, it was 28%. And this accretion in margin is coming, as I already told you, on the back of our product mix. We are maintaining the sales of ULIP. If you look at the absolute numbers, it is almost as much as we sold last year. But whatever growth is coming from the non-linked portfolio, that is the non-participating products, non-participating products and protection products. So these are value accretive businesses, and since growth is coming from that, they are giving good accretion to the margin. Going forward, we expect that with the help of this product mix and the impact of GST will be balancing out, so we will stick to the range of 26 to 28% for the entire year.
Okay. Any indication on closer to which number out of the two?
I think the range is good enough, and it will depend on the execution capabilities of the company, of the sales force, that how much better number we can report for the quarter.
Okay. I just want to understand one thing on product mix as well as channel mix. The ULIP portion of your product mix has come down in the second quarter to about 57% from 61% a year ago. And the agency channel mix has come down to about 27% from 30%. On the product mix, do you expect ULIPs to remain at around 55 to 57%, or can it come down further? And on the channel mix, agency, as you said, fired in the month of September, and we saw the results coming in for your premium growth. Do you expect for the balance part of the year, the agency channel mix will continue to perform in the same way?
As far as ULIP mix is concerned, we look at it more from the IRP angle than on the APE angle, because this is purely individual business. So on IRP basis, the ULIP contribution has come down to almost 65% from 69% last year. And agency channel, the product mix has been better than this, which is below 60% almost. And that is also one of the reasons that has affected the growth on the agency channel side. But going forward, we would like to stick for the year at around 65% and maybe try to bring it further down, which will help in help the company in 65% on IRP basis.
On IRP basis, okay. One question as far as commissions are concerned. Different companies taking different approach when it comes to passing on that additional cost to distributors. Have you also passed on the cost to distributors? Largely, banking is our biggest distributor. Have you also done that, and different kinds of distributors? Is that the strategy that you've taken?
As of now, our company has not considered reducing the commission to distributors.
Okay.
We were the lowest cost operators in the industry, and we continue to stick to the same position. We have certain other levers on which we are working, and we are sure that with those levers we will be able to maintain our profitability and margins.
investing.
Welcome back to Midcap Radar. Well, now on to a CNBC-TV18 exclusive. Sources tell us that there may be a deal brewing between Stylem Industries and the Japanese chemical major Aika Kogyo, which earlier our colleague Yash had reported. Yash joins in with all the details.
Well, that is correct. So what we've been able to pick up from our sources is that the deal between Stylem Industries and Japan-based laminates and plywoods major Aika Kogyo is believed to be in an advanced stage. What we've been given to understand from our sources is that the share purchase agreement between the two companies, that is Stylem Industries and Aika Kogyo, is likely to be signed soon. Now, this was first reported by us at CNBC-TV18 back in 2024, but back then the deal had hit a roadblock. But now we've been given to understand that a couple of months ago is when the deal was revived, and now it's reached an advanced stage. What we've been given to understand from our sources is that Aika Kogyo aims to acquire a controlling stake, which will be about 51% or more, in Stylem Industries. First 25% of this 51% of controlling stake is expected to be acquired from the promoters of Stylem Industries itself, and balance is expected to be acquired through an open offer, which will be triggered post this particular first tranche of the transaction. Depending on how much Aika Kogyo receives from the open offer, if it does receive the entire 26%, then it crosses that 51% mark. But if it does not, then whatever falls short to that 51% mark will be again acquired from the promoters of Stylem Industries again. What we've been given to understand from our sources that this particular transaction is expected to take place between the price of about 2,200 to 2,500 rupees per share. As far as promoters are concerned, promoter and promoter family of Stylem Industries currently owns about 52.19% stake in the company, and we've written to all parties involved in this transaction, including Aika Kogyo and Stylem Industries, but a response from the parties is still awaited.
All right, Yash, thank you so much for joining us with all those details. So Stylem Industries in focus. The stock is high by 6.5% as we speak. But with that, we are out of time on Midcap Radar. Your stock when we return.
Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, and today Sonal is also there with us. Sonal, good afternoon, and surely a good day and a good afternoon coming in for the markets. You know, what we're seeing in terms of a move, 0.6% of gain. Though at one point of time, we were seeing higher gains, but no complaining. It's still holding on to the green. So no complaining on that front. Broader end of the market is also managing to hold on to gains. Look at the Nifty Midcap, right? That's seeing a bit of an outperformance versus the benchmark indices. So keep an eye out on that. 0.9% of gain is what we're seeing coming in for the Nifty Midcap. Nifty Small Cap is also managing to hold on to good gains in today's trading session. So overall, advanced decline ratio. Let's pull that up and see where that's headed. More stocks on the advanced side versus decline, and that is what we'll be keeping an eye out on. Just a bit of, it's nearing down in terms of the gap that you're seeing coming in. But important to watch out now in the second half of the trading session as well, Sonal.
You know, that's very interesting because while mid-caps are outperforming on an index level, we are seeing a merger of those lines almost there actually. It's absolutely in line with each other, the advances to the declining stocks. So that'll be very, very important to track because there have been times when mid-cap indexes outperformed the benchmarks, but still advanced decline ratio has been in favor of the decline. So underneath that big index, we are seeing some weakness that has come by. A lot of stocks which are on our radar, Hats and Agro is up 20% on the back of a good set of numbers. We have other names like Sharda Cropchem, which is up around 5%. But one stock that is on our radar is Supreme Industries. That company posted a subdued set of Q2 earnings versus what the street was working with. Net profit down 20% YY. EBITDA declined 7% on a YY basis. To talk more about the numbers, we have with us Mr. MP Taparia, who is the Managing Director of the company. Mr. Taparia, good afternoon. Thank you so much for joining us, sir. Always a pleasure speaking with you. This time around, there has been a cut in volume guidance from the earlier levels. Can you explain the reason? Why has there been a cut? Are you seeing some demand issues? Is there some issue in the supply side? Can you talk more about that?
No, there is no issue of supply side problem. At demand side, there was low demand due to the extended rain, early break of rain. So demand in piping business from agriculture segment went down. But still, overall, for the first half, we have grown by 11% in piping system. Otherwise, we would have grown much better. But the margins have been lower due to the frequent reduction in the PVC prices, not only by the local producer, but the import playing a big role. And 2/3 of the volume in India of PVC is made from imports. So we have to keep a balance between the open market price and local price, and accordingly there was loss in our stock and inventory loss. So our margins are down in the first half of the year.
Okay, because of, the PVC prices, you're saying there was some impact coming in on the margins of the company as well. So that is the decline that we're seeing in the first half of the year. Mr. Taparia, what are we expecting now in terms of margins for the second half of the year? Will you be able to come back to that 14-15% mark? Or maybe the full year is what we'll see is going to be 12-13%?
No, second half is going to be far better than first half. We anticipate overall company to grow in volume between 12 to 14%. And in plastic piping system, we expect to grow between 15 to 17%.
And margins, sir?
Optimistic of the performance in second half.
And margins will be what, sir, for FY26 as a whole?
Margin for the overall for the year will be between 14.5% to 15%.
Okay. All right. You spoke about PVC pricing going lower. A lot of it is impacted by imports as well. There was an element of anti-dumping duty on PVC prices, right? Has that not helped the industry? Can you talk more about that, sir?
No, anti-dumping duty, the injury has been announced by the Director General Trade Remedies on 14th August. The notification from Finance Ministry is still awaited. Normally, they take up to 90 days. So 12th November is the final date. Before that, we anticipate that anti-dumping duty may be imposed by Finance Ministry.
Okay. And once that anti-dumping duty is levied, will it be beneficial for the industry? If yes, how much will PVC prices rise by because of that?
Maybe it may increase by 4 to 5 rupees.
Okay. And how much lower was it in Q2?
Q2 it went down, but as I told you earlier, apart from the local price, the import price is quite low. and import price and local price difference remain between 4 to 5 rupees a kilo.
Okay.
Also, sir, just in terms of your protective packaging segment, you have a target of 1,000 crores in terms of reaching this for this segment in terms of revenue by FY26. What has the revenue been this quarter?
Revenue this quarter, protected packaging, maybe, I think we will grow this year by more than 18%.
You will close with more than how much, sir? Pardon me?
Protective packaging division, we may grow by more than 18% in volume.
Okay, 18% in volume. And for the full year, is that target of 1,000 crores still stands, or maybe it will be a bit lower?
It stands that we will achieve 1,000 crore turnover.
Okay. All right. You said you have received positive response for PTMT faucets, and that's why you will be getting into or diversifying into PTMT showers as well. How much is PTMT faucets as a percentage of overall revenues? What kind of growth did you see there? And will the new diversification require you to put in more capacity, more investment, or is it fungible?
Now, new diversification, a big way is coming in the matching window, customized window. We'll be launching customized window in December this year. And we have launched silent pipe system yesterday.
No. So what I wanted to ask, will you make fresh investments there, sir?
Sorry, say it again.
Will you make fresh investments into PTMT showers?
PTMT, we are already making PTMT fittings.
Okay, okay, all right. So it is something which is already existing. Last question before we let you go. What are the sectors which are working well for you? Because you did say demand has been an issue because of unseasonal rains, but any space which has continued to see stronger growth?
All the segment what we are working today, all are doing better business except industrial component. The industrial component, our customer who are supplying the final product, the customer related to our company, their demand is not to our satisfaction. Other than industrial component, all our 7 verticals are doing better.
Okay, sir, thank you so much for joining us this afternoon, explaining us the outlook for the company going forward and what were the factors that actually impacted in Q2 FY26. Thank you so much, sir, for joining in. But on that note, we're going to slip into a very short break, and a quick note for our viewers. If you did like to access expert-driven insights and actionable chart patterns, simply scan the QR code on your screen and subscribe to the Money Control Super Pro and get daily expert calls, actionable charts and insights to power your investing decision. Plus, this festive season, there is more to reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe and make your portfolio shine brighter with Super Pro.
Welcome back. You're still tuned into Your Stocks. Let's talk about Chennai Petroleum. The company reported a strong set of Q2 earnings. Revenues registered 10% growth. Margins have also risen. The stock surged around 6% but has come off from the highs of the day. To talk more about the numbers, we have with us Mr. Shankar, who is the Managing Director in charge at the company. Mr. Shankar, good afternoon. Thank you so much for joining in. Well, what have the cracks been like for diesel and petrol this quarter? Have you seen a sequential rise? And is this a trend that will continue in coming quarters as well? I believe there's another shutdown that will be taking place in Q3. If you can confirm that.
No. To begin with, let me clarify that we had taken a shutdown during the end of Q2 and beginning of Q3, and we have completed all the shutdowns. So now we do not have any more shutdowns coming up. We are going to have a continuous, very steady operation Q3 and Q4. And coming back to this cracks question, I think we have had a slight increase in the cracks between the Q1 and Q2. Now we have seen almost it is sustained. I would say that the cracks are almost at a sustainable level. And the Q1 to Q2, of course, there has been a slight increase, yes.
How much has it improved by, and has that continued in Q3 so far?
Q3, it has not really improved quite a significant way. There has been a slight increase, you can say, from about 17 that we were seeing in Q2. Now it is close to 19-20 range diesel we are seeing. And between the Q1 and Q2, of course, we have seen in the range of 12 to 13 to an increase of 16, 17 we have seen. So it is not a very great increase, but of course it is there on record, yes.
Okay. Good afternoon, Mr. Shankar. What was the improvement you said was led by inventory gains as well, I believe, and that's what you've highlighted, right?
Yeah, see, the point is the crude has seen a good amount of volatility in the last 2 quarters. So if you had looked at our performance with respect to Q1 and Q2, if you see the comparable figures of this financial year, you would notice that whatever the crude fluctuation led to a gain or loss during the last quarter, it is more or less negative. It's totally 180 degrees apart if you look at the current scenario. So the crude is definitely playing a very significant part in our profitability, because if you look at our performance, physical performance, it has been quite very steady. You can see both Q1 and Q2, we saw almost 114% capacity utilization with very good energy efficiency bringing in place. But then the crude, of course, is a very significant player in the market, yes.
Absolutely.
Okay, all right. No, so the point taken, 114% in terms of capacity utilization. Your throughput has increased as well on a quarter-on-quarter basis. Mr. Shankar, there's a clarity required, of course, on a crude sourcing front. First up, what was your sourcing from Russia in the quarter gone by? And has there been any communication from the government to reduce Russian imports now?
See, let me first clarify this matter that CPCL has got about a mix of 160 varieties of crude that we have the capability of processing. And at the same time, the crudes which were coming from the Russian market has slowly started coming down significantly. If you look at our processing earlier days and what we have done in the previous quarter, in fact, the previous quarter saw a very low margin of Russian crudes being used in our entire crude processing. And to that effect, we have also expanded our crude basket by adding 3 different grades of crudes in the last quarter. We got one from the US, one we got from the Western Africa, one we got from the Middle East also. So we are constantly trying to innovate and also try to see how the new crudes will also be able to be absorbed in our system. So that much flexibility we have in our system. But of course, the margins that were available, the kind of discounts that were available from the opportunity crudes, that is no longer available. But it gives us confidence that we are in a process to use the kind of different crudes that are available in the market as an opportunity.
So was it 19% earlier, the Russian crude sourcing? And how much has it come down to now?
No. Russian crudes, at some time, we were also doing very high levels, almost to the extent of 40% we have been doing. Okay. But it is now below 20% range we are doing. And we are constantly looking at that's all a part of the crude sourcing strategy. Like we look at the economics part, we look at the availability in the market, we look at our own processing requirement. For example, one of our blocks requires a crude which is good for the lube and wax production. So irrespective of the availability in the market, we need to look at those specific crudes which have to be processed to meet my operational requirements. So it's all a combination of economics and also a part of our operational requirements. And as you very well know, since Indian Oil is doing the entire crude procurement process for us, we are on a very strong footing there in that matter.
Right. Mr. Shankar, you've recently received that nod to foray into marketing retail of petrol and diesel as well. What's your plan here? What is the capex that, you're putting into this as well? And when does this go and live now?
Yeah, we got an approval from our board in the month of January to set up about 300 retail outlets. Around 400 crores has been earmarked for this project. And this is a very specialized line for us, because all the while we have been always looking at ourselves as a refiner, and now we are entering into this domain of marketing. And we got the approval from the ministry also to set up 300 numbers of fuel retail outlets. And we are working on it now. We are trying to identify the areas where we can start our business. It will be a very different kind of a setup that we plan. We want to have our own brand also available, earmarked for this project. And we are also looking at some specifics with regard to the service conditions with respect to our own brand image that needs to be associated with this retail outlet. So very soon we are planning that
yes,
in a position to,
Yes, of course, it's a big leap for any business to get into retail, right? For marketing retail of fuels. So what kind of business positives will it get? You earlier had indicated it could be some savings for you. Can you explain what kind of savings and how will it impact your P&L?
Yeah, we are looking at two important streams that are important for this strategic decision that we have taken. One of the decisions is that since we are totally dependent on the volatility of the crude and product, though there is a huge risk which is associated with our business as a standalone refiner. So what we are doing is this will be one of our risk mitigation measures, where we can have a steady flow of marketing margin coming in our P&L. And also we are looking at moving into other domains and getting our footprint expanded in the rest of the country. So that are the two visibility parts. Second one is the strategic foray into this line. So these are the two areas that we are actually looking at.
Okay. Last question before we let you go. You had spoken about how you are sourcing, or IOCL is the source of crude oil for you. There was also a JV with IOCL. What has been the update? Because earlier when we had spoken to IOCL, they said that it could be an abeyance, it would not be refining, it could be something else. What's the update there?
See, the JV that we are having with Indian Oil is for the Nagapattinam Kaveri Refinery, Basin Refinery and Petrochemical project. There we have originally planned this project as a fuel-based refinery, and having a phase 2 part of it where we would like to venture into the petrochemical sector also. Right now we are looking at the market, the kind of the economics part of the project. We are looking at if we can bring more value to that project by increasing the petrochemical component, by reconfiguring the entire process, entire plant. So we are looking at that. We are also talking to the government, state government also, for bringing in this kind of element. Otherwise, it was originally a fuel component. So we are looking at increasing the petrochemical component of the project. And we are looking at support from our parent company and also from the state government with respect to the incentives that would be provided for this venture. So we are now in the, you can say, discussions with the government, and maybe in a couple of months' time, more clarity will emerge out of it.
Okay, Mr. Shankar, thank you so much for joining us on the show this afternoon, talking to us about the outlook of the company and a lot more details in terms from the global point of view as well. Thank you so much for that important commentary coming in that Russian sourcing that was 40% earlier now has come down below 20%. So keep an eye out on that as well. But on that note, we're absolutely out of time. Actually, we're going to wind down this edition, but a quick note for our viewers. You must have noticed that there is a money control stock score just above the line graph. This is the score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameter considered for calculation for the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, B factor score and T factor score. Remember, this is not a buy or sell recommendation. Any investor viewer is advised to carry out the necessary diligence on their own or through a certified registered financial advisor for investment decisions. And with that, it's a goodbye from Sonal, me, as well as the team who put the show together. Thank you so much for tuning in. Up next, your closing bell.
Beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a positive start, tracking all the global developments that have taken place over the weekend.
I think we've reached a substantial framework for the two leaders who will meet in Korea next Thursday.
If we get a breakout above 26,100, that could really turbocharge bulls and resume the upside momentum once again.
RBI has finally put out these draft rules on capital markets and acquisition financing for banks, setting some clear limits and safeguards for this kind of lending by banks.
25,830, 840. This is the vicinity around which we have opened up.
Hence, if the consumer uptake that we have seen in the last 1 month sustains, I think credit growth also picks up at least by 200 basis points. And that will be good news for financials.
The week has started in the green today. It's almost a 200-point uptick on the Nifty.
The resolution plan may not have been submitted yet, but they have at least received the go-ahead from the Supreme Court that they see no impediment in the centre reconsidering this issue.
Markets in green today. We have come up from the highs, but we have snapped that 2-day losing streak.
Well, good day so far. A good Monday trade. The Nifty is not at 26,000, though it did hit it on an intraday basis, but still boasting of a 180-point gain on the Nifty, 600 points in the Sensex. Midcaps outperforming with a near 1% up move. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema, with me, Surbi and Nigel. Hi, guys.
Well, hi. Really good trading session, actually. But, that's for the headline index, because you look at the advanced decline ratio, it's pat in the middle, 1,400 stocks apiece. So portfolio is not feeling that good. But I'll tell you what, towards the end of today's trading session, you'll want to end somewhere here, because tomorrow is the monthly, the weekly expiry that plays out. And that's what could cause a further short covering bout. So you want to hold around these levels. Last two sessions, we have not been able to hold on to the highs. In fact, we've come off close to 160 to 200 points from the day's high on the last two sessions. So we end here, it'll be a good outcome. Next 60 minutes, crucial.
Absolutely. And, actually today has been better than Friday for sure, because look at the composition of stocks that are moving higher. Some well-tracked, big mid-cap stocks that are actually finding fair amount of traction. Look at First Source, 8% up on First Source. Look at a stock like Hatsun Agro, which is reacting to numbers, 20%. That's the kind of rally that you've got going. Yeah, that's a large cap screen, and we'll talk more about large caps in just a bit. But I'm saying even the mid-cap action is telling you that the mid-cap market, the broader market, is alive and kicking. I'll just throw out some more names. Look at RR Kabel, 6% up on RR. Hudson we'll talk about as we go forward. More names, that are up and about. HBL Engineering, Aether Energy, 5-6% on these names as well. And of course, there are individual stocks reacting to earnings or news flow, the likes of Vodafone Idea, and we'll get to that one as well in just a bit. So short point is the mid-cap market is not too bad, and the headline index is holding up rather well. So very decent session, consolidating, taking steady steps, and at least for now, no sign of faltering. Let's pull up the Nifty. The good news is that at least it's managing to hold these gains, unlike Friday when everything was just getting fizzled out. Yeah, that's the Nifty. So far, so good.
And then you've got stocks like Reliance Industries batting for the bulls with a gain of about 2%. We'll talk all this. Let's tell you what we have for you on our show today. The indices kickstart a brand new week on an upbeat footing. The Nifty consistently perched above 25,900, a relative outperformance seen by the broader indices. Meanwhile, it's the metals, PSU banks and metal stocks leading from the front. Big relief coming in from Vodafone Idea. The Supreme Court allows the centre to reconsider the issue of reassessment of the AGR dues. Both Vodafone Idea and Industars higher in trade. Shares of SBI Life rally following a robust show in Q2. The company is eyeing a 13 to 14% growth rate in the current fiscal. Excerpts of our chat coming up in just a bit. Stylem Industries enjoying a strong day. Sources tell your channel that a deal between the company and Japan, Aika Kogyo, may be back on the table. That's a CNBC-TV18 exclusive. A couple of counters reacting to strong numbers, the likes of Hatsun Agro, Coforge. So detailed analysis coming up on these two in just a bit.
How do you position yourself, though, in the final hour of trade? We've got Mitesh Thakur, who joins us back on the show from Bonanza Portfolio. Hi, Mitesh. Good afternoon. Good outcome, right? I mean, we're still holding with close to 180 points. What would that level you'll be looking at in terms of a resistance level? And if you had a positive bias, where does that get negated?
Nigel, I think there's some problem with the video. Can you hear me?
Yeah, Mitesh, we can see you and we can hear you clearly. So if you could give us your call on the Nifty, which is holding with a gain of around 180 points. Please go ahead.
So on the Nifty, I believe that we are heading towards this retest of previous highs of 26,180 to about 26,230. These are the closing basis numbers. And once we clear them, I think we could even gather or gain more momentum because the medium-term charts are strong. In case we fail, I think we can come back to about 25,800 and in the worst-case scenario, 25,600. On the stock side, I have a buy on Grasim with a stop at about 28.80 for targets of 3,000. And Imber is a buy with a stop at 84.60 for targets of 85.50 plus.
Okay. All right, got it. Mitesh, thank you very much for that. Well, let's straight away get to the big story of the day. And it indeed is a big story because after several years, there seems to be some sort of a change in the works when it comes to the AGR issue and Vodafone Idea. The Supreme Court today has allowed a review of the AGR matter, saying it sees no reason not to allow the centre to reconsider the policy stance. Ashmit is here with more details. How many times, Ashmit, Vodafone Idea has gone to court asking for some sort of a relief? So tell us exactly what's happened today and whether this indeed opens up some options for the government.
Well, it indeed does. Vodafone Idea knocking on the doors of the Apex Court on multiple occasions, finally getting a positive response. Bear in mind that this time the government was batting in their support. The government was saying that, look, there is a complete change in facts and circumstances. The government said that we now hold 49%, and by virtue of the government stake, that necessarily means there's public interest involved as well. Went on to say that over 20 crore customers will stand to be impacted if Vodafone Idea goes south, and also said that this will also affect the competition in the larger telecom sector. Now, all of these aspects weighing on the minds of the Supreme Court saying that, look, this is a policy matter. We do not want to intervene. And on the contrary, the Supreme Court saying we want to give the centre a free hand. Given that it is a policy matter, the centre should be the one to decide the future course of action, to any relief that needs to be worked out, any structure that needs to be given as far as the AGR issue is concerned, legacy issue going back a couple of decades here. The centre finally now being given a free hand in terms of deciding in what shape and form they want to grant relief as far as Vodafone Idea is concerned. One aspect, one caveat to bear in mind, the Supreme Court also pointing out that they're granting this relief, they're granting this blessing on account of the peculiar facts and circumstances of this particular case, which of course then raises the question that will it also be applicable for any relief that is to be granted to Bharti Airtel as well. Clearly the ball is in the DOT's court. They will now have to take a call on what shape and form the future course of action will take. The Supreme Court saying we will have none of it. The DOT, the Supreme Court opening up, freeing up DOT's options.
For the last several years now, not even months or quarters, but for years, Ashmit has been at the Supreme Court giving us the latest updates on this case. But now I think Ashmit is going to be at the Department of Telecom to get us the latest moves on this story. Ashmit, thank you so much for that. Actually, let's toss it to Rima. I mean, our in-house expert on telecom. Rima, we got so tired of constantly hearing the matter being struck down at the courts. Yeah. But now the centre can exercise options. But what sort of options are we talking about here?
Well, I can think of three, and maybe there are there may be other aces up their sleeves. But the three that I can think of up front is one, extend the timeline by which Vodafone Idea has to repay their AGR dues. Remember, when the telecom relief package was struck, they got a 4-year period. You don't make any payments. And after that, over a period of 5 years, repay those dues. So the moratorium, the repayment period comes to an end in March of 2031. Maybe the government says take another 20 years, right? Extend the timeline. That's one. Secondly, remember the AGR dues has a component of principal, interest, penalty, and interest and penalty. Maybe they can say that only pay the principal amount, don't pay at least pay part of the interest, or don't pay the interest on the penalty, don't pay the penalty.
And the total, including the original amount, the interest, the penalty, all of that is running into about 70,000.
Some say 80, some say, it goes up to 84, 85,000 roughly. And the third thing is that the company, all the telcos actually have been saying that there are mathematical errors. There's been double counting, right? So maybe the government sees that, listens to that advice and rectifies some of those. So that's some of the options that we can think of. Maybe there will be something different. But how does it help? Vodafone Idea could be a game changer because one, it eases the cash flow burden, and two, it will help the company maybe go ahead and get that bank funding of 25,000 crore rupees, which up until now has been elusive. inclusive. What is unclear right now is whether any form of government relief will be applicable only to Vodafone Idea, or does it extend to the other telcos? Because as Ashmit pointed out, the Supreme Court order, the order states that this is applicable only in the peculiar facts and circumstances of this case, given the 49% equity holding of the government and the 20 crore customers. But the lawyers we spoke to pointed out that since now the matter is in the government's hand, they have the flexibility, they have a free hand, they have a legal cover. So if they want, maybe they can extend it to the other telecom companies as well. But the other beneficiary is Indus Towers, because a stronger Vodafone Idea will help the company resume its capex spending. Its capex will directly benefit Indus Towers. And remember, Indus Towers, because of the financial constraints at Vodafone Idea, had stopped paying dividend. And investors were waiting for the company to resume dividend payouts. So, I mean, it's an entire chain of events. But if Vodafone Idea gets stronger, if and when it does, then it starts its capex, which eases the cash flow burden of Indus Towers, and then it can start repaying dividends. So let's get in. Dipan Mehta, Director, Elixir Equities. Dipan, you want to weigh in on the matters of the court?
Rima, good afternoon and thank you for having me on your show. I think it's very, very positive news for Vodafone, because from whatever you reported, and I heard it here first, it kind of gives an open-ended canvas for the government to work out how to make Vodafone viable again. And I particularly like the fact that in the submission they have said that they are worried about competition, they're worried about 26 lakh subscribers. So the whole tone and tenor does appear that anyhow they will keep Vodafone alive, and sooner or later it should get back into profitability. So I think it's great news for Vodafone. And I think a lot of investor interest also may come back, because at the end of the day, the telecom industry has created a great deal of value. I think look at the stocks which are done really well. Bharti Airtel has been a stark outperformer, and a lot of Reliance Industries gains have come because of Jio as well. So if you have one more vehicle to invest in the telecom industry, I think investors look at it quite closely. So I'm now going to track Vodafone far more closely than before. I had written off this company, but let's see what the government has plans for. And if they eventually, as expected, merge BSNL also into it, then you would have a solid third player, and then hopefully efficiencies will start to kick in.
Okay. Dipan, hi. Good afternoon. Good to have you in. Reliance Industries. Let's talk about the big boy. I mean, it's really getting fired up, right? I'm not sure about it. It actually started after the results, with the retail arm doing really well and telecom's been very steady. Plus, of course, all the new investments that they're making on their the new businesses, the joint venture with Meta, their investments in AI. There's so much going on. What thoughts now at this price?
Yes, will be good afternoon. The only thoughts is that is it going to become a holding company? I mean, clearly the indication from the management is that they are going to launch an IPO for Jio platforms. And that means that as minority shareholders of Reliance Industries, there's not, as of now, doesn't appear to be much to gain from, because the holding company discounts will start to creep in. And a lot of the investors who are buying Reliance Industries because of the telecom initiative may now sell Reliance Industries and just buy Jio platform when it gets listed. So I've always felt that, the way the Adani Group has kept on splitting its holding company and listing separate businesses and creating value, that should be the route which Reliance should have taken. But anyway, management is wiser and they feel that they should do IPOs. But from a minority shareholder, that doesn't work out for us as well. And generally, it's a very, very complicated company also now. So it's got a large weightage in Nifty and Sensex, so you can't avoid it. You have to have it in your portfolio. But I'm not so sure that it can, Reliance Industries per se, as a holding company, can provide a decent outperformance as compared to Nifty and Sensex.
Dipan, in the past, you've liked some product-related IT companies. But what about a company like Coforge, which has been delivering quarter after quarter, and now it's even addressed the free cash flow issues, the concerns the investors had. What are your thoughts on that?
So, Rima, you're also an expert on tech. You tell me there are two companies in the software services businesses, only two companies, Persistent and Coforge, which defy all expectations. And at the end of the day, they appear to be like any of the other software services companies like Infosys, TCS, Emphasis, and LTI, Mindtree, and all of these companies. Yet these two companies, I'm sure, are doing something different, which is why they're able to generate these kind of growth rates. And very, very impressed with both these companies. As a measure of disclosure, they're the only two companies in the software services space which we are positive on and have invested in. So I think that it's a consistent trend that these are outliers. and they're trading at extremely high P multiples, fully justified. So as such, I would remain invested in them and look for buying opportunities at corrections.
Okay, all right. Dipan requested to stay with us. Let's shift focus to the top Nifty gainer, SBI Life. This morning, Yash told us these numbers look good and bang on. It's doing pretty well. Yash joins us actually to now break it down for us. What's worked for the insurer in the past quarter? Yash, take it away.
Well, Nigel, as we discussed in the morning, the numbers were pretty strong ahead of what the street was anticipating, and the stock responding perfectly to those numbers. As far as the numbers itself are concerned, a beat as far as CNBC-TV18 estimates are concerned on most counts. Total AP was a beat, retail AP was a beat, VNB was a beat, and most importantly, the margins, they came in about 100 basis points, higher than what they did last year in the same quarter. That was the first reason, strong numbers. The second reason was the stock positioning itself. The stock hadn't done much in the last 3 months, in the last 1 month. In the last 3 months, it was up just by about 1.5%. In the last 1 month, up by about 3%. So, of course, it had that runway to respond well to a strong set of numbers, which it did. Finally, as far as valuations are concerned, not the cheapest, but not the most expensive stock. Also trades at 1.9 times price to embedded value, FY27 forward, compared to HDFC Life and Max Life, which trade at 2.2 times FY27 price to embedded value. That was the next reason. And the final reason, strong management commentary. Despite the big GST shakeup which came, which meant additional cost for insurance companies, SBI Life management has gone ahead and maintained the guidance when it comes to growth. That is 13 to 14% for APE as well as VNB, as well as on the margins, that is 26 to 28%. All these four factors working well and reflecting in the stock move. Today, we spoke to the management, the MD and CEO, Mr. Amit Jhingran. Here's a slice of that small conversation.
What we are seeing in the month of October is also pretty strong growth, and based on that and with the help of the GST impact, we expect that the second half growth will be higher and we will be able to stick to our growth of 13-14% on APE basis.
So you expect H2 growth to be about 18%?
Yes, much better. Going forward, we expect that with the help of this product mix and the impact of GST will be balancing out, so we will stick to the range of 26 to 28% for the entire year.
Okay, all right. Deepan, what do you think? SBI Life coming back to life, stock doing very, very well and good numbers appreciated. But when the stock holds on to those gains, that's how the street likes it. What's your view?
Oh, Nigel, I think insurance companies generally have been doing decently well. Even HDFC Life, ICICI Pru, decent numbers coming through. They appear to be steady compounders. Typically, the way to value them is based on the embedded value. And the embedded value keeps on growing up by about 15%, 10 to 15% or so. So these are great compounding stories, good defensive stocks as well. And in a way, I think with financialization of savings, insurance companies will benefit. But end of the day, there's hardly any scope for innovation and it's heavily regulated. And if you see the kind of growth in the life insurance companies, their growth rates are generally kind of, they converge to a particular level in the industry as a whole. So from that point of view, it's a nice, sedate business to be invested in. But in markets like this, Nigel, I think, which are about to break out, I think investors should expect higher returns. So I would say insurance companies are great defensive bets, but depending on the market conditions, there could be better opportunities.
Okay, that's SBI Life. By the way, I just want to point out, look at some of the exporters, the garment exporters, and this is what we were saying on Friday as well. You need to be a little careful while looking at some of these trades because they were very excited on Friday, actually towards the end of last week, on prospects of this India-US trade deal, but they're cooling off today. Kitex Garments, for instance, is down 5-6%. Gokuldas Exports is down about 1% as well. So let's pull up Pearl Global if we can as well. Yeah, Kitex is down 6% now. Basically, no sign of clarity or actual concrete progress, at least as of now. So some of the stocks are cooling off. Deepan, what else? Anything new in the mid-cap market? Anything that's, caught your attention looking at the earnings?
Oh, that's quite an open-ended question.
Yeah. Take your pick. Give us anything new?
No. I don't think that these kind of where they're going to regulatory issues over here. But I've always maintained that we like the platform companies per se. And one company which comes to mind again, usual disclosure, we and our clients are invested in it for a long time. Zaggle prepaid numbers, we're looking forward to it quite keenly. And it's a great fintech company on a longer term basis as well. It has come up from its high significantly, providing an entry opportunity. I've been tracking it from listing that there was 60, 70 times P multiple. Now I think it's more about 50 times or so. And they're keeping on increasing their market share. No competitor which is listed or which is somewhat close to what they are doing. And I think they provide excellent services to corporates who want to improve and get more cost savings from what they pay their customers, what they pay their vendors and their employees. So generally positive on this company. Having said that, it's a company in which we are invested, so our views could be a bit biased.
Dipan, hold on. We wanted to get your views in on this CNBC-TV18 exclusive where sources say a deal between Stylum Industries and Aika Kogyo is back on the table. Yash joins in with the details. Yash, am I pronouncing it correct?
Well, that's correct. You're pronouncing it correct. And what we've been given to understand from our sources is that the transaction between the Indian-listed Stylum Industries and Japanese-based Aika Kogyo is at an advanced stage. What we've been given to understand is that a share purchase agreement between the two companies could be signed soon. Remember, CNBC-TV18 had reported on this transaction about a year ago, after which it hit a roadblock. But what we've been given to understand is that the deal got revived about a few months ago, and now it's reached an advanced stage. What we've been given to understand is that Aika Kogyo is looking to acquire a majority stake, which is 51% or more stake in Stylum Industries. And this could be done in a way where the first 25% is expected to be acquired from the promoter and the promoter family of Stylum Industries, which would then trigger an open offer whereby Aika Kogyo would look to acquire about 26% stake, depending on how much stake comes through that open offer. If entirely 26% comes through, then of course they reach that 51% mark. But if it doesn't, then for what the stake falls short to that 51%, they would acquire additional stake from the promoter and promoter family of Stylum Industries. Importantly, what we've been told by our sources is that the deal is expected to happen between 2,200 to 2,500 rupees per share. So that's an important update as far as the valuation and the pricing of the transaction is concerned. And as always, we've written to all parties involved in this particular deal, including Aika Kogyo and Stylum Industries. A response from both of them is still awaited.
All right, thanks a lot for that, Yash. That pricing point last time was a deal breaker. So let's see whether or not it does come through. Deepan, any view on this name, Stylum? I recall explaining this company around 7-8 years ago. It was very small at that point of time. Most of its focus is on exports. And the promoter entity, that's the Guptas, they have been having a bit of a feud between both the parties. They'll have to come on board, then this deal is to get through. And in fact, the pricing has to be favorable as well. Your view on the company at around 2,000 rupees or?
You are looking for new ideas. I think this is certainly a new idea. And valuations are reasonable. And the promoter change to a Japanese company will be very well received by the investors. Generally, there's a great deal of fancy for MNC companies or these FERA companies, for lack of a better word. And building products per se, we're very positive on that industry because of rapid urbanization. And export markets also are great for such companies. And with a foreign holding company coming into place, that could be an impetus area. So generally looks interesting to me. And let's all track this particular development if it actually comes through or no, comes through or so. And if it does, I think there's certainly a good trading rally possible in this stock.
Okay, we'll leave the conversation here for now. Thank you very much, Dipan, for joining in. We will get into a break, but as we do that, it's time to highlight our Super Pro chart of the day, powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the markets and help you understand the why behind the what. Here is today's chart and what it means for your next market move. Bharti Airtel is a stock on your screen. And as you can see, a rectangle pattern, bullish breakout, indicates a period of consolidation followed by a strong upward move, signaling trend continuation with high volume support.
And if you'd like to access more expert-driven insights and actionable chart patterns like this one, Simply scan the QR code on your screen and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. So the markets had a steady day of trade so far, and actually the mid-cap market is doing pretty okay because the mid-cap index itself is up far more than the Nifty, almost 1% higher. Hormuz is here to go beneath the surface and tell us where the action exactly is. Hormuz?
Beneath the surface, of course, now you have earnings reactions, and that's how it's going to be over the next few days. And you start off with Hats and Agro, that's topping the list today for obvious reasons. The earnings reaction, 20% circuit, the biggest single day gain that the stock has had since February of 2020. And the stock has gained in 3 out of the last 4 sessions. But the volumes today, of course, before that 20% circuit, with 17 lakh shares have changed hands today. The 20-day average is only 1 lakh for Hats and Agro, and as a result of this 20% move, the stock has moved higher than all of its key moving averages. And also as a result of this move, October has become the best month of 2025 for Hats and Agro. And as a result of this move, the stock has also turned positive on a year-to-date basis. It was an underperformer last year. It was down 12%. Now, PSP Projects is the other one. There's no specific news trigger behind this. Still, the stock is up 17%. It's the biggest single-day gain that the stock has seen since listing. And the stock has gained in 4 out of the last 5 sessions. The volumes are the highest since July, so just a 3-month high. But close to 75 lakh shares have been traded on PSP Projects today. The 20-day average here is only 85,000 shares. And here too, October has become the best month of the year, and it's had a pretty good year so far. It's up for 43% year to date, the best year that it has had since 2022. Now, Wanbury is the third name on the list today. Before this move, the stock had a 7-day losing streak between the 10th to the 20th of October, and it has recovered all of those losses in this move that it had had during those 7 days, and the stock is up almost 9% in the last 2 sessions. And today's session has had close to 6 lakh shares that have been traded. The 20-day average here as well is only 75,000 shares on very strong volumes again. The stock is just above its 200 DMA at 253. Now the next level comes up to the 50 DMA, which is at 259. Still an underperformer this year, down 13%, but the previous 2 years the stock had more than doubled in value in both 2024 and in 2023. And lastly, some profit booking finally coming in GM Breweries. The stock, this is only the 3rd day that the stock has declined in the month of October itself, and from start of the month till last Friday the stock was up 80% in the month of October. But today's fall, the 10% circuit, is on volumes that are lower than its 20-day average. So 20 lakh shares have been traded. The 20-day average is 25 lakh shares, and that's of course courtesy the heightened trading activity that you have seen in this month. And despite this 10% downtick, the stock is still up 62% just in the month of October itself, and the stock was up 44% in 2024.
Okay, all right. Thanks a lot for that, Hormuz. Let's get in our market expert then. We have Mithun Ashwath, Managing Partner at Kiba Advisors, who joins in. Hi Mithun, good afternoon. Good to see you in. Hope Diwali was rocking for you. Well, this seems to be a bottoms-up market. So if you could tell us, you could share a couple of ideas with us first from, if you're looking at it from a 12 to 18 months time horizon, what would that be? Which one would it be?
Yeah, afternoon, Nigel. I may not want to discuss names because we may be in the, we may have advised clients just recently.
All right, I think that line has snapped a little bit, so we'll wait to get Mithun, back on the show. But he was going to share something with us, so hopefully we get him back. By the way, pull up the intraday chart of EPAC prefab. The stock recall was down close to 3%, and the volumes are quite large. I don't know whether something has happened to that, but the stock has suddenly, seen a big spurt up, volume spurt, as well as, the stock has moved into the green from trading in the red. So that's one stock actually that comes up for you. And Agility should come up for you. That's up 2%, but the entire 2% has come in this arm. Mithun, you were sharing that idea with us. Please go ahead.
Yes. I may not divulge names right now, but I will just give you a sense of what we're thinking. I think, the last few months, we've seen the markets kind of consolidate and really not correct that much because of domestic inflows. But what we actually I think we're coming to a juncture where, global markets have done well and India is doing a little bit of a catch up. We do expect, maybe even the foreign institutional investors to start investing into India. And we could go a lot higher in the near to medium term over the next couple of quarters, primarily because, I think the results in Q3 and Q4 are going to be good compared to last year. Also, we do think a trade deal is kind of in the offing. It may happen maybe post the Bihar elections is our sense. So this is a good time to look at ideas, good companies, which may have just been in a range for the last year or so, or 6 to 9 months, primarily because of the concerns on the geopolitical front. So the kind of names on the textile front, you could buy the leaders there, which have kind of consolidated, good businesses, but have been hampered by this extra tariffs. There could be several plays even because of this tariff correction. So I think there's an opportunity there where you can spot good companies which have corrected only because of this reason. And as you know, right, the company's value is not just based on 2 quarters results, but if you do a DCF to the future, a lot of these companies present good opportunities.
Mithun, name a couple of companies, right, with due disclosures. What have you all bought recently? Not a recommendation, all disclosures taken on board.
Sure. Something that we have been looking at is, I think we've held it earlier as well, a company like Arvind Limited, something that we are quite positive on. We've also liked Gokuldas Exports, but it has run up quite a bit. But these are the type of names that come to mind, which could be opportunities. They have gone up a bit in the recent past. So one should look at maybe corrections because obviously the volatility based on these trade negotiations keep happening. But I think these are a couple of good businesses for the long run. say, for example, Arvind not only has the garments business, it also has the advanced textiles business as well, which they have now subsidiarized. So that could also form a type of value unlocking in the future.
Got that. Arvind, by the way, there's some news coming in from reports. The first hike post-2019.
The government is, approved an increase in ad rate for print media by close to around 26%. This revised ad rates are likely to apply to government ads in newspapers from the second week of November 2025. And this will be the first hike post-2019. So because of that, the stocks are excited. HT Media seen a big spike up in the stock. Even DB Corp as well.
5% surging away at 26% from the government, and that's coming ahead of the Bihar elections as well. So, I mean, this is a hike from the central government. Bihar elections, so separate state phenomena. Yeah, Nigel?
So some back of the envelope calculation suggests that, DB Corp, I'm reading a note coming in from Elara yesterday. DB Corp could see a 3% revenue boost in the next couple of years on the lower band of 17% ad share. So, that's a rough number. Margins could improve as well. EPS could improve by close to around, I think it is 9% approximately in FY27 as well as FY28. The overall ad revenues is 70% of DB Corp's revenues, of which print contributes a major 64%.
Okay, all right. Big move on these stocks. Mithun, hi, good afternoon. Good to have you in. Almost a forgotten sector, right? And there are very few pure play print media listed stocks. DB obviously is reacting, it's one of them. But overall, any interest in the media space?
No, Surabhi. I don't think we've looked at anything on the media space directly. We've tend to maybe more be positive on the internet sort of companies where they'll obviously gain from sort of from media spends. But not any of these, the old age media companies. They're obviously very valuable in terms of because most of them have net cash and trade at very low multiples. But I don't think there is any real trigger for these stocks to re-rate.
The question is, will it come before the Bihar election or after? Because there is that moral code of conduct for the Bihar Assembly election. So will they wait for it to be lifted before the hike comes into effect? Mithun, I remember from our previous conversation, the broader tilt was more towards capex. So you had liked a couple of these defense names, BML, HAL, Bharat Dynamics. I may get the numbers wrong, but there was this tilt towards manufacturing defense. Now, increasingly, the interest has come back in consumption names. How is your portfolio now looking in consumption? Which are the stocks that you are active in or present in that you're recommending?
So I think on the consumption side, I think last time we spoke about and has done quite well is TVS Holdings. On the auto side, it's the holding company of TVS Motors and trades at a massive discount to the value of TVS Motors that it has. It's almost a 65 to 70% discount. They have about 51% in TVS Motors. They've also got bought into a stake into a NBFC business as well, which should add value to their portfolio going forward. So I think that primarily is going to be an NBFC plus the value of the TVS Motors that it has. So we've been kind of positive on the auto discretionary space. I think those are going to benefit obviously from this GST cuts that we've seen. We've already seen the numbers in terms of the sales really perk up. And I think that will be visible in the Q3 numbers, less so in the Q2 numbers. I think also, there's been spaces like the consumer durable side, which also should show good growth in Q3. So I think that's something that we like. Having said that, I think we continue to be very positive on the defense space. I think that's a multi-year sort of a story. We've spoken about companies that we've liked earlier, like Bharat Forge, which is more of a holistic play, not only defense, it also has exposure to auto and the exports. So the tariff situation kind of blows over, that again becomes an incremental positive for companies like that.
Okay. All right, Mithun, we'll leave it on that note for today. Thank you very much for joining in. Good conversation as always, and we look forward to the Next one, that's SRF. Numbers coming through 21.3% versus a poll of 21.7%, more or less in line.
I think there's a
at
bit
least
of
at
a
the
miss
operational level.
on the profits. And revenue is also about 7-8% lower. There you have. The net profit is a bit of a dampener. 388. We'll wait for the versus figure. But 388 is a miss compared to the 450 crore we were anticipating.
Yeah, and even the top line at 3640 is lower by about 200 crores versus at least the estimates. That explains the sluggishness on the stock.
But the versus for PAT is actually 201.
Okay.
So in that context, it's still, I think, what, an 80% up
It's
move?
a jump,
Yeah,
but
it's a jump.
maybe the street was expecting more.
Street was expecting more. I think the only estimate was Jeffries. I'm not sure if... I think we'll just wait for Sonal, but it looks like a bit of a miss.
Okay, well, in the meantime, let's do one thing. Let's go across and figure out what's happening in the FNO market, what the cues are there. Like, Nigel, fill us in.
Well, we're approaching expiry day, right? So the call writers, well, they are getting a little bit nervous with the kind of move that we have seen. But we'll need to get past the 26,000 odd mark to expect a bigger short covering bounce. And I'll tell you why. Just take a look at the 25,900 call. You know, those call writers, they were sitting pretty. Last couple of trading sessions, the bulls, you know, they couldn't hold on to higher levels. But today, there's big unwinding out there. All those call writers, they're scampering for cover. On the flip side, the put writers are coming back into the game. So you have the 25,900 put. The premium out there is down by more than 60%. So those writers, you know, the premium at the start of today was close to 150 rupees. That's come down to 30 rupees. Now they are counting on the 25,750 odd mark, holding out in the near term. If you look at the 26,000 put, the premium out there is down by close to around 70%. So there's aggressive writing being seen out there. The premium at the start of today, by the way, was around 225 rupees or thereabouts. So just in the near term, that's tomorrow the expiry that plays out, you don't want this 25,700, 25,750 mark to hold out on the downside. And you'd like to get past the 26,100 on the upside. Stocks in focus, big boy Reliance Industries. The last 10 trading sessions, that's been the outperformer. That's been doing the heavy lifting. And the clear signs of fresh buying on that particular name. On Polycab, the street seems to be sensing something, because there's a big open interest built up out there in the next contract. In the near-term contract, there is a bit of a rollover that's taking place, and the stock is up close to 2.5%. Massive volume in this one. The street is sniffing something, so we'll keep an eye out on that stock. And SBI Cards as well, one of the biggest underperformers for the last couple of years or so. Out there in the near term, there is some unwinding of positions, and there are shorts being taken in the next series. That's in the November series. So that's about all the action for the time being. You know, just one trading session to go in this series. It's been a good one for the bulls, but the 26,100 seems to be a bit of a resistance mark. Back to you.
Thank you very much for that. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter and a few BTST calls.
Welcome back. Well, pull out Welspun Specialty Solutions. That's been a company, that's been unable to really ramp up revenues. But just prima facie, looking at the set of numbers that they've delivered, this time around, the revenues have spiked up. I think they had a part shutdown, but despite of that, 239 crores is what they've delivered, and they've swung into profits. Welspun Specialty Solutions, I think we should get that stock up for you. There's a big surge out there, and it appears there's an operational beat, in that particular set of numbers. That's why that stock is surging away. And remember, they'd raised some money last year, so that's why the finance cost has come down drastically from around 11 crores run rate on a quarterly run rate. That's come down to around 4 crores in terms of the finance cost. So explains why that stock is spiked up. But it's that time of the day where we get a quick check in D-Street Chatter. Nimesh joins us to help us out with that. Nimesh, what are you picking up? How are you looking at trade first?
Hi, Nigel. Very strong day for the markets. The Nifty is up almost 170 points. But the good part is that now it's spreading over to the broader markets as well. The mid-cap index is up nearly 1%. A lot of individual stocks are up between 10 to 20%. So clearly, after what we saw in the last 10 days, only Nifty participating. Now it's turning a little broad-based as well. From a flow perspective, again, a mixed day. I still feel there could be a small sell figure from the FIs. But two sectors which stands out in terms of buying is OMCs as well as the PSU banks. These are two sectors where there is well bid and buying as well from large institutions. So clearly that stands out. I guess from a very near term, apart from the earnings, the Indo-US trade deal, that's a big trigger to watch out for. If that gets taken place, you'll see further short covering and fresh buying as well from the FI. So November could be quite interesting, largely from the fact that if the US deal has to happen, you might see further short covering rally. So that's the base for the new series. But looks like now it's spreading out, and there is a larger participation in the broader markets as well from institutional investors.
What about stocks, Nimesh?
Well, so the first stock on my list is Bajaj Finance. It's not showing up in the move today, but I understand there is very strong delivery-based buying in Bajaj Finance today. Looks like some large FIs seems to be accumulating Bajaj Finance at this level. So watch out for that first name. The second name is Indegene. The stock has been consolidating of late, but I understand the selling pressure from a leading AIF is largely over with today's block. There is a small block today, and it looks like it's a clean out trade from that particular fund. So maybe disclosures could be interesting there. The last name is Shriram Finance. That's been buzzing in the last couple of days. But again, there is a lot of anticipation and buzz of a large deal in Shriram Finance as well. But interestingly, for the second day running, there is a very strong FI selling. So while the stock has been in momentum, it looks like some larger FI seems to be at least trimming the positions in Bajaj Finance.
Okay, all right, got that. Nimesh, thank you very much for joining in. Indeed, there's a lot of buzz around Shriram Finance. So let's see whether something's indeed coming through. With that, let's head back to Mitesh for some final ideas for the day. Mitesh, fill us in. Any new trades coming to mind?
Yeah, I have BTST on emphasis. I think that's closing with strength. So BTST with a stop at 28.75 for targets of 29.10. 29.15 for tomorrow.
Okay.
And the other one is the other one is General Steel and Power. I'll just finish that. General Steel and Power is a BTST with a stop at 1,027 for targets of 1,050.
Okay, fair enough. I think we'll have Ambrish joining us in the next couple of minutes as well. We'll discuss more stocks with him. Before we get to Ambrish, we have Mangalam to tell us what exactly has Hatsun Agro done in the second quarter that the stock has become a rocket 20% on Hatsun Agro. Clearly, those numbers have hit the mark and more. Mangalam, tell us, circuit.
It was a strong performance that came in from Hatsun Agro in their second quarter. A consolidated revenue growth of nearly 17%, also further aided by their acquisition of Milk Mantra. But overall, the margins were good. Year on year, there was an improvement in the gross margins, which we saw in the previous quarter as well. So quarter on quarter, they were largely stable. A mild decline is what we saw. But that has supported the EBITDA growth, and that has gone all the way down to the bottom line. So 17% revenue growth has resulted in a 35% EBITDA growth. Margins came in from 11.6% to around 13.5%. And the net profit on that base increased from 64 crores to 109 crores, which is almost a 70% jump. Gross margins staying stable around that 31-32% mark, so that's a positive. And more importantly, remember, the stock hadn't seen a big rally. In fact, it was about 15% away from its 52-week high going into these numbers, and as a result of which, we saw that big move after a good set coming in for the second straight quarter. More importantly, what this also did was caused a rally in all the other dairy stocks. So if you pull up something like a Parag Milk or even a Dodla Dhamala Dairy, all these stocks saw a big surge after Hatsun Agro's numbers. But importantly, even Nestle in its commentary did point out that going forward, milk prices, procurement prices are likely to decline, which is largely margin accretive for all these dairy companies.
Okay, there's more news on SRF, by the way. The CFO is stepping down, effective 12th of December. We'll just see if they've given out any specific reason or whether he's just moving on for personal reasons. That's led to an immediate downtick on the stock. SRF now down 2.5% after anyway revenue and profit that's missed expectations in this quarter. More on SRF with Ambrish and of course many other stocks to discuss as well. Now, Ambrish is also, by the way, the money control super pro expert. He's a SEBI-registered market professional who tracks market movements and identifies trade-worthy trends for super pro subscribers every day. Ambrish, good to have you in, and good for the money control super pro subscribers that you're offering all of this advice over there. Actually, let's start with SRF. What thoughts? Clearly, the numbers are a bit of a miss, and then there is the CFO resignation.
Yeah, I mean, that's, I think, a bit of a negative. I mean, both the numbers as well as the CFO resignation. But then I would say that this could be a short-term negative. In fact, I expect the numbers to be better possibly over the next 2 or 3 quarters. So this correction, in case we see a decent correction, I think it's a good opportunity to buy.
Okay, correction is a good opportunity to buy. By the way, there's one mid-cap IT company which has hit a new high, and that is eClerx. It's a small BPO sort of, it used to be earlier more of a BPO company, but it's a stock which is up 37% year to date. In the last 1 year, up 72%. And today, it's a fresh 52-week high on eClerx. So at a time when many of the IT companies are 15-20% away from peak levels, you've got this company which continues to surge. Ambrish, any thoughts on Lenskart? Have you done any early analysis? Because while there is a growth story, there is opportunity of penetration.
Absolutely.
It's also expensive.
It is expensive, but then with some marquee investors supporting it, I think that's the reason why there is decent amount of interest in the market as far as Lenskart is concerned. But let me tell you that I've not really done a deep dive into the figures, which I should do over the next 2 or 3 days. But overall, like rightly said, it is expensive, but then I think it can give a decent amount of bump up on listing. And that's what most of the IPO investors look at as to what sort of a listing gain one can make.
Okay, all right, Ambrish, I'll tell you what, we give you a few minutes to think. We'll take a short break, come back. Ambrish will give us the stock that he has on his radar. You stay with us, get into that break and come back.
Welcome back. Interesting news coming in on Reuters that the government may allow direct FDI in PSU banks up to 49% versus the current limit of 20%. So this means the government of India will retain majority control. But there has been interest by foreign entities in the Indian banking system. But for PSU banks in particular, although the current limit is 20%, many of them actually have very high ownership of the government of India going up to 90%. But any money which comes into the PSU banks will be a big vote of confidence for PSU banks. That's what government sources seem to indicate to Reuters. Amrish,
I think the one that spiked up is IDBI Bank. Because that's the next one on the government's radar. So we'll have to keep an eye on that.
Actually, all of them, like Bank of Maharashtra, Bank of India, PNB, State Bank of India has been strong. But across the board, you can see some uptick coming through in these stocks. Amrish, a quick comment if this does come through, does go through, I'm sorry.
I think this is very positive because, first of all, we've been seeing that the earnings have been improving for these banks, PSU banks, in the last couple of quarters. And now, in fact, there's a talk of consolidation. So we'll finally end up with possibly 5 or 6 large PSU banks. And along with that, if, like foreign institutions are allowed to invest more than what they could earlier, I think that's clearly positive.
Okay. By the way, there's also some news coming in on EMS companies. The government has announced 6 companies that have received approval for the electronic component manufacturing scheme. The names are obviously well known. Keynes, Syrma. They've all received approval. Actually, even SRF has received some sort of an approval on this. And the total investment on this scheme stands at a little over 5,500 crore rupees. Amrish, EMS, any picks here where the valuations still look attractive enough and the growth prospects justify those valuations?
I mean, growth prospects are great, but most of the stocks are already quite expensive. But then because of this news, it can move up some more. You could see possibly another bump up of about 8 to 10%. But from an investment perspective, at these levels, I will possibly be a bit cautious. I'll just stay out.
All right. The stocks actually are seeing a bit of an uptick. If you look at Keynes as well, it's positive rub-off. The stock has moved up. Syrma as well, I think, is cutting its losses. So that stock as well has moved up a little bit in the last few minutes or so. Amrish, I want to ask you quickly about OMCs. You had CPCL and MRPL that came out with a set of numbers. No problems on the refining GRMs. Now the street is saying the marketing margins as well could look okay. And from midday itself, you're seeing HPCL, BPCL, IOC. IOC, I think, comes out with a set of numbers. They're actually doing well. Very risky and tactical play, but do you think OMCs is something you look at?
See, there are 2 things. I mean, on the positive side, we clearly have the Singapore GRMs really shooting up. So I think from that point of view, it is positive for most of the refineries as well as these OMCs. But on the other hand, there is a possibility that crude can move up some more from here. In fact, in case it moves beyond 70, 75, then it could be negative for the OMCs. So we need to keep both these things in mind.
Okay. All right, Amrish, we'll leave it on that note. But that was a really insightful session. So thank you for that. For our viewers who want to access these kind of actionable insights daily, do check out Money Control Super Pro, where market expertise meets technology. You can subscribe now and get ad-free, data-rich and globally connected experiences. Here's a festive bonus. 10 lucky subscribers every day stand a chance to win gold coins. Just scan the QR code on your screen or download the Money Control app to know more.
All right, let's wrap down then on the markets for today. We go with solid gains, and it's good. After a while, we end with gains closer to the high point of the day. So 26,000 was within kissing distance and a little shy of that. What did well? SBI Life, good set of numbers, valuation support. The street likes it. Grasim, up close to around 3%, maybe some kind of positive rub-off. That the companies that it holds stake in are doing pretty okay. Novelis should turn around. That is good. And also Vodafone Idea may not be in that big trouble. So that's good as well. Bharti Airtel, positive rub-off. There's going to be some kind of leniency to Vodafone Idea. Maybe they also get some kind of leniency. Stock is up 2.5%. SBI and Reliance Industries, both of them led the way up. Then they went through a bit of a break. And now they're doing the heavy lifting. So good uptick is what we're seeing on both of them. What didn't do too well then? From the Nifty pack itself, we had Kotak Mahindra Bank that was down 1.5%. Various fears with regard to the numbers, valuations, and will they look at IDBI banks, very seriously? Some part of the street believes that it will be very, very dilutive. Infosys, in fact, there was an X date with regard to the dividend. That's why that stock actually appeared down. So X of that, it was more or less flattish. And BEL came in for some profit taking. The big movers were from the broader markets. Hudson Agro up 20%. PSP Projects up 15%. You had Elecon Castle that was up more than 10%. Saturn Credit up close to around 7%. Welspun Specialty, that one came out with the set of numbers late in trade. That was up close to around 7% as well. What didn't do too well? Well, you had a couple of stocks actually that did see selling. SRF, case in point, sudden resignation at the top. So that stock was down. And in fact, the results as well didn't look too good. SBI Cards, wonder when they'll turn around. Last few years, underperformer, continues to underperform even in today's trading session. So all in all, it was actually a good session for the bulls. Number of stocks advancing, a little more than the number of stocks declining, and the headline index goes home with nearly a double century. On that note, we'll wrap up on this edition of Closing Bell. Don't go anywhere though. Markets Forward comes up next.
Oh. Dalal Street regains all of Friday's losses. The Nifty and Sensex gain nearly 1%. The Nifty crosses 26,000 but ends just below that mark. The large caps like Reliance, SBI and HDFC Bank lift the market higher. The broader markets mildly outperform the blue chips.
Nifty heavyweight Reliance forms a joint venture with global tech giant Meta as it bets big on AI. Morgan Stanley is overweight on the stock and believes Reliance Industries is likely to spend $12 to $15 billion on AI infrastructure with an estimated return on capital employed of 11% on initial investments.
Kotak Mahindra Bank sees margins crimp a little more than peers even as the management is hopeful of improvement going forward. Most analysts remain positive but valuation concerns remain.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day. I'm Sonal Bhutra and with me is my colleague Hormiz Fatakia. Hormiz, what a day, right? We zoomed past that 26,000 mark, but so close yet so far. But yes, it was a decent day. We snapped the 2-day losing streak across the indices. It was a good set in terms of movement. Mid-caps, they outperformed. But you know, the advanced decline ratio, those two lines almost merged towards the end.
Indeed, and it was, you can say that there is no reason to complain for the bulls, more particularly so because unlike Thursday and unlike last Friday, there was no exhaustion or no resistance seen at higher levels, no profit booking seen at higher levels. Yes, there was some congestion at that 26,000 mark, but the Nifty has managed to close near that mark compared to farther away from it as what happened last week. But the broader markets, of course, we have a plethora of earnings lined up even during the course of the evening from companies like Masgao Dock, from Indian Oil Corporation and a whole host of others, Indus Towers included as well. So tomorrow also promises to be an equally action-packed session, if not more. So here's a lineup of what we have in store for you today. Start off with the top movers and shakers of the day with Vivek. A slew of stocks gained in trade today. Reliance Industries was up following its JV formation with Meta. Vodafone Idea had a volatile day but ended higher after the Supreme Court's ruling on AGR. And Hatsun Agro, a 20% upper circuit after a strong FY second quarter performance. And last but not the least, we also delve into the key market events to watch out for going into tomorrow's trading session. But on to the first segment of the day. Vivek is here to tell us all the big movers and shakers of the day gone by. Vivek, over to you.
Well, thank you so much for that. Well, you know, clearly a session where it belonged to the bulls. Advanced decline ratio very much in favor of the advances. First on the list today in terms of the gainers, you know, look at MCX. Now, the company had highlighted, you know, at the start of the month that they would be launching monthly options on MDX Bulldex, and on the back of that, you know, analysts expect significant volumes from this particular segment itself. On the back of that, higher by over 3%. Coforge, very strong set of results, you know, consensus EPS estimate upgrades coming in there, over 4% higher. All of the three OMCs today doing quite well. You know, Total Energies and Partners actually lift force majeure on Mozambique LNG project. All of the OMCs have a stake there. All these three companies ended higher by over 3%. RR Kabel, one particular name from the broader end of the markets. In fact, the top gainer as far as the NSE 500 was concerned. Strong volumes too. And PSU banks, you know, especially towards the last 15 minutes of the session, you saw a significant up move. Talks or reports indicating that there could be a higher FDI limit that would be allowed as far as PSU banks are concerned. Most of the names ended the session sharply higher. On the other hand, quite a few laggards as well. SBI Cards, a significant miss as far as packed estimates are concerned. That particular stock ended lower by over 3%. CESC, one of the top laggards as far as the NSE 500 was concerned today. And Zen Technologies, you know, this particular stock, very muted Q2 and execution has been delayed significantly. And Supreme Industries, a volume growth guidance cut is something that the management alluded to. Recovered significantly towards the end of the session, but despite that, was under pressure for most of the session today.
Well, yes, interesting names there. Thank you so much for joining us with all those details, Vivek. In fact, let's go across to our guests for today. Sudeep Bandyopadhyay, Group Chairman at Indi Trade Capital, and Jay Thakur of ICICI Securities. Gentlemen, good afternoon. Thank you so much for joining in. Sudeep, let me start with you. We have snapped that 2-day losing streak for now. But what are the markets factoring in now, especially when as far as earnings are concerned?
I think, Sunal, very clearly the earnings have been better than what the market was expecting. And that's been a very, very big positive surprise. Leave aside one or two outliers. By and large, the results have been better than what the consensus analyst estimates were. So I think that's been a very good development. On the other hand, there has been some positive development on the trade war front as well. You know, one doesn't know for sure what's going to happen, but things, at least the statements coming from all the sides, have been much better than what it was, say, about a fortnight back. And there is a hope for some kind of a trade deal happening in the near future. That's, again, a big positive. The third thing I would say is that I think, you know, the kind of the way the oil prices have moved, it's a little unfortunate, but still with the kind of the new developments, which is like the Mozambique embargo getting lifted, does encourage the entire oil market and ensures that the oil remains within a range. And that's definitely a good development for Indian capital markets.
Indeed. Sudeep, thank you for joining in. Moving on to the first one, the big name that kept the Nifty higher today, that was Reliance Industries, and that was after the joint venture announcement with Meta to establish Reliance Enterprise Intelligence. Rima is joining in with more details on this. Rima.
Thanks so much for that. As you rightly pointed out, Reliance Industries has launched Reliance Enterprise Intelligence Limited, REIL, which is a joint venture with Meta, where Reliance Industries will hold 70%, Meta will hold 30%. As a part of the initial commitment, $97 million has been agreed upon. And this was hinted and spoken about by Mukesh Ambani at the AGM, where it was all about AI everywhere, AI for everyone. So this is in line with that. But according to Morgan Stanley, this is only step one. Reliance Industries is expected to make significant further investments, estimated between $12 to $15 billion, to build a 1 gigawatt AI data center infrastructure. The question is that we know the kind of high valuations that global AI companies enjoy. So once REIL scales up, what will be the valuation premium, the valuations that it can command?
Thank you so much, Rima, for joining us with all those details. Jay, technically, how is Reliance Industries looking right now?
Reliance is really witnessing the short covering. I mean, ahead of the results, what was noticed, Sonal, that the stock had formed a nice base, around the levels of 1350 odd levels. And post results, it saw a good short covering happening, although not major of the shorts are covered out here. And technically, it had formed that base triangular pattern as well, from which it broke out. Since then, we are seeing some short covering, but there are yet quite a lot of shorts yet to cover. And on the upside, because of which, back of this positive news as well as short covering, I think it's heading towards the levels of 1560. So 1560 is the near-term target, Sonal, and I think about those levels, if it makes a breakout, it will inch towards this previous highs of 1600 as well. So now I think that till 1350 levels are held on a positional perspective, Reliance is in a short to medium term uptrend.
Okay, short to medium uptrend. That's the outlook on Reliance Industries. SIF is the other stock which is on our radar today. So let's talk about the numbers. Q2 numbers came during closing hours today. It was slightly a miss versus the expectations as well. But yes, YOY, it is still a higher number. If we compare it with Pole, revenues at 3,640 crore rupees, EBITDA came in at 775 crore rupees, margins came in at 21.2%, and profits came in at 388 crore rupees, which is lower than the Pole. But on a YOY basis, revenues up 6%, EBITDA 44%, margins up 550 basis points, and profits are up 85%. If we talk about the split in terms of segmental performance, the technical textiles business did not do so well, down 11%, but the chemicals business did well. That's where the growth came in from, 23% higher there. And if we talk about the EBIT as well, it was technical textiles which saw a decline of 41%, chemicals was up 96%, and packaging was up 44%. The company says that yes, they did good performance led by chemicals business, but they are dealing with uncertain environment and they remain confident to finish a good year this time around. One of the reasons why the stock also ended lower is because their CFO Rahul Jain resigned with effect from December. Now do remember, he was with the company since 2008, so that was 17 years of service with the company, and the company has grown multifolds in this period of time as well, so that also was a bit of a dampener, and the numbers slightly lower than estimates is something that the street did not like.
Did not like. The stock also ended almost 2% lower. Sudeep, all of these chemical companies had a dream run at the start of 2020 onwards for the first couple of years, but the last few years have been a bit of a dampener. The stocks haven't gone anywhere, but the valuations remain stretched. Does this leave very little room for disappointment in the case of SRF and most of its peers as well?
Well, Harmaz, we have been mildly positive on the entire specialty chemicals and agrochemicals pack. You're absolutely right. I think these stocks didn't go anywhere. The performance was not really good. In fact, most of the quarters, they were disappointing the analyst expectations. And, we were all trying to stay away from this pack. But having said that, I think a lot of things have started falling in place. I think the China Plus One was how these companies started getting traction. That still remains very much valid. As far as the destocking in China, I think that level is complete, and to an extent, the demand is coming back. domestic demand is robust. And I think at some level, the overall demand scenario is also going to improve. So we believe that probably most of these stocks have seen the worst. Things will start improving from here on. So if you are a bit aggressive investor, it is definitely worthwhile looking at buying into some of these stocks. In fact, even SRF numbers, I did see the numbers and I did like the numbers quite a bit. I think there are very clearly green shoots visible in the numbers of the chemical and specialty chemical companies.
And the outlook from the management is very important. They expect to finish the year on a strong note. So we'll watch out for that as well. But let's go across to the next stock. The Supreme Court has allowed a review of the AGR matter, saying it sees no reason not to allow the centre to reconsider the policy issue. Let's get in more details on this one.
Indeed, a huge relief coming in. Vodafone Idea, of course, was here before the Apex Court asking for relief. They were asking for waiver of the penalty interest and the interest on penalty dues. There have been 4 adjournments sought by the centre. The centre kept asking for more time, saying that they're going back to the drawing board, coming out with a solution. Today, when the hearing began, they've not given a definitive structure of what the relief package will be like, but what they had sought for, essentially saying that allow us the flexibility to go ahead and to structure some form of resolution as far as this AGR issue is concerned. Now, the Apex Court taking note of 3 critical arguments. Number one, the facts on the ground have changed. Now, the government enjoys a 49% equity stake. In fact, at one point, the Solicitor General also remarked that by way of the government holding stake, it's also a case of public interest being at play. The second, the Solicitor General pointed out that, look, there are as many as 20 crore customers as far as Vodafone Idea is concerned. All of them will stand to get impacted. And finally, also saying that if the company goes away outside of the customers, competition in the sector will also get impacted. Now, on account of all of these factors, the Supreme Court saying that, look, this is a policy matter. The Supreme Court does not want to intervene, does not want to guide the hand of the centre. It does not want to prevent the centre from taking any measures for resolving this issue, and saying that given the peculiar facts and circumstances of this case, 49% stake, 20 crore customers at play, all of that factors coming into play, the Apex Court now allowing a free hand to the centre, saying that this is a policy matter. We don't want to come into the picture. The centre is now free. The DOT is now free to formulate, to restructure some form of solution as far as the AGR issue is concerned. The one question, of course, that many have left asking is that with this Supreme Court direction, will it be applicable to Bharti as well? That's a question that now the DOT, we understand, will have to give clarity on whether this relief package that the Supreme Court has granted blessings to will be pointed towards only one company or towards the wider sector. Back to you.
Ashmit, thank you for that update. In fact, Vodafone Idea has also informed the exchanges with regards to the Supreme Court hearing, where they say that they closely look forward to working with the Department of Telecommunications to resolve this matter with regards to these pending AGR dues. But Jay, you heard Ashmit saying that Vodafone Idea has 20 crore customers, but it also has 60 lakh retail shareholders. They also want to know where is the stock headed now. It did cross that 10 rupee mark in intraday trading. It's just closed around that levels. Does it have legs to go up to 11 rupees, which is the FPO price? What are the charts indicating?
You rightly said it, almost now there are, so many investors into Vodafone Idea, and I think all of them are really waiting for these levels to come. In fact, it had happened once, post those levels of, FPO, it had moved to 18 levels, but then, the hopes were quite high at that point of time too. And people were anticipating, higher levels, much higher levels at that point of time, but then it just slipped from those levels back to 7, 8 levels. But now, looking at the current chart structure and the FNO data, obviously most of the time you see long build up out there. The volumes have definitely increased since the FPO time, and now it is the second time, Homas, it's coming, in the double digits. In this calendar year. So it had come once in Jan, and now it's coming back into, double digits. I think if it sustains about 11, which is the price of FPO, then I think it will head towards, the previous highs of 18 or so. So I think the immediate hurdle should be 11, because many of them who would have got at those levels or entered at those levels would like to exit. But if the stock price manages to surpass those levels, then I think there could be a much broader rally on the upside. So from here on, there is less downside risk and higher potential of an upside.
All right, potential of an upside on Vodafone Idea stock. Of course, a lot depends on the final plan as well when it comes to those additional AGR dues. Let's talk about the next stock, which is on our radar now. Hudson Agro. It hit an upper circuit, gaining nearly 20%. The company reported its Q2 earnings. Let's go across to our colleague Mangalam Malu, who is here to analyze the numbers. Mangalam.
It was a strong performance that came in from Hudson Agro in their second quarter. A consolidated revenue growth of nearly 17%, also further aided by their acquisition of Milk Mantra. But overall, the margins were good. Year on year, there was an improvement in the gross margins, which we saw in the previous quarter as well. So quarter on quarter, they were largely stable. A mild decline is what we saw. But that has supported the EBITDA growth, and that has gone all the way down to the bottom line. So 17% revenue growth has resulted in a 35% EBITDA growth. Margins came in from 11.6% to around 13.5%. And the net profit on that base increased from 64 crores to 109 crores, which is almost a 70% jump. Gross margins staying stable around that 31-32% mark, so that's a positive. And more importantly, remember, the stock hadn't seen a big rally. In fact, it was about 15% away from its 52-week high going into these numbers, and as a result of which, we saw that big move after a good set coming in for the second straight quarter. More importantly, what this also did was caused a rally in all the other dairy stocks. So if you pull up something like a Parag Milk or even a Dodla Dairy, all these stocks saw a big surge after Hudson Agro's numbers. But importantly, even Nestle in its commentary did point out that going forward, milk prices, procurement prices are likely to decline, which is largely margin accretive for all these dairy companies.
On upper circuit, 20%. Mangalam, thank you for that update. Now, Sudeep, Hudson Agro, if you have gone through those numbers, not just that, but the entire dairy space has been in focus because of these GST reforms and so on. It's been in the news. Any preferences within this dairy space? Parag, Hudson, Dodla?
Well, we do like Hudson. In fact, what he mentioned, and I think we noted from the Nestle commentary also, that the procurement price of milk is going to come down over the next few quarters. And that's very, very encouraging, because that will straightway help the bottom line as far as these companies are concerned. The margin will keep moving up. And that's pretty much what we are seeing getting played out in the Hudson numbers as well. I think we can expect next 6 to 12 months to be a good period for all these companies as far as financial numbers are concerned.
Okay, good for the financial numbers going forward. Thank you so much, Sandeep, for joining in with your thoughts on this particular sector overall. Hudson Agro, of course, the first one, which is up 20%, and Jay Thakkar as well for joining us with all his insights on the technical trends that are in the markets for now. With that, it's time for a short break now. When we come back, we'll get to the top corporate poises along with the key market events to watch out for on the other side.
You're still with us here on Markets Forward. Let's go across to some top corporate voices that we had through the course of the day. Now, the management of Coforge has stated that the third quarter is seasonally weak. However, it expects stabilization in the fourth one. It expects the EBIT margins to be at 14% for the full year as well. And the management has added that ESOP costs will fall, which will be a further tailwind for their margins. Now, the company also added that FY26 will be a year of robust growth and that it is very close to achieving its $2 billion revenue run rate.
And next up, the management of SBI Life expects robust growth in October, with growth projected to be in the range of 17 to 18% in second half of FY26. Overall growth in FY26 is expected to be around 14%, and the GST rate change may impact the value of new business this financial year by nearly 1.6%.
And next up is Chennai Petro. The management stated that it has trimmed down its sourcing from Russia, sourcing of crude, and now that has come down to 20%. Meanwhile, it has started importing more from the United States. Now, the company is not anticipating any shutdowns related to routine maintenance. Meanwhile, crude price fluctuations have also led to neither a loss nor inventory gain this time around, is what the management of Chennai Petro stated.
Okay, all right. Those are some important management comments coming in. And before we wrap, we bring you some key market events to watch out for. Gaurav is standing by the big wall with the key events to focus on for tomorrow. Gaurav.
Yes. First, let's talk about Indian markets. And when it comes to Indian market, remember, result season is still going and we have a range of stocks who will come up with the results. So we've got Tata Capital, Adani Green Energy, Happiest Minds, some of the key companies who will come up with the results. Apart from that, let's also focus on Jindal Steel and Power. We also have Mahindra and Mahindra Financial Services, Shree Cement, TVS Motors. These are some big names who will announce their result, and at the same time, Credit Access Grameen. Now, this name, we have already seen some move in the stock price. So definitely watching out on all these stocks. Apart from that, from the macro level, we will be getting the IIP data, which is India production data. So let's watch out on that as well. From the global front, first is that the FOMC meeting that will take place. It is key thing to watch out as how the decision is going to come, and that is something that we will be tracking. And lastly, let's also not forget about Trump's visit to Japan. Remember, he will be meeting with the Prime Minister of Japan. And as always, we will have some talks and some speculation around the meeting and also about the trade. So definitely on the global front, we are watching on that. And in the Indian markets, we will be watching out on all the earnings that are likely to come tomorrow.
We'll keep an eye out on all of this. Gaurav, thank you for joining in. And with that, we call time on this edition of Markets Forward. From Sonal and me, thank you for watching. More news and updates continue on this other side. So stay tuned to CNBC-TV18.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. It's a day of steady gains as the Lal Street regains all of Friday's losses. The Nifty and the Sensex gain over 0.5%, led higher by large caps like Reliance, SBI and HDFC Bank. The Nifty crosses 26,000 in intraday trade but ends lower. Major relief for Vodafone Idea. The Supreme Court allows the centre to reconsider the cash-strapped company's AGR dues worth 93,000 crores, observes that the matter is within the policy domain of the centre and in the larger public interest, merits reconsideration. The stock hits a one-year high. The US President Donald Trump finalizes a crucial trade-related pact with Malaysia, Thailand, Cambodia and Vietnam in the first leg of his South Asia trip. Also signs an expanded truce between Thailand and Cambodia that he helped broker in July. China presses for stronger economic ties and more open trade with ASEAN nations. Trump says Washington and Beijing are poised to come away with a trade deal ahead of his scheduled meeting with China's Xi Jinping later this week. Adds he could sign a final deal on TikTok as early as Thursday. Treasury Secretary Scott Bessent says both nations have reached a substantial framework and 100% tariffs have been averted. The Indian government plans to hike FDI limit in PSU banks from the current 20% to 49% as per Reuters, citing sources. This comes on the back of renewed foreign investor interest in the private banking space. RBI issues draft norms for capital market financing by banks with guardrails, caps acquisition financing to 10% of the bank's core Tier 1 capital, says acquirers must be listed, show profits for the past 3 years, adding that the acquisition must be for long-term value creation and not short-term financial gains. The Lal Street gears up for another week of billion-dollar IPOs led by Lenskart and MTR Foods parent Orkla. Lenskart's 7,200 crore rupee IPO opens this Friday. The company targets a market cap of 69,500 crores. The management tells CNBC-TV18 that 4,000 stores by 2030 is mission possible. Reliance and Meta incorporate their new AI joint venture, name it Reliance Enterprise Intelligence Limited. Both companies have jointly committed an initial investment of 855 crores. Reliance will own 70% stake in the joint venture. Outgoing Chief Justice B.R. Gavai recommends Justice Surya Kant as his successor. Justice Kant was elevated as the judge of the Apex Court in May 2019. If approved by the Law Ministry, Justice Kant will serve as the Chief Justice till February 2027, a tenure longer than that of his predecessor. Well, let's head straight to the day's market action. It's been a strong start to the week after the Lal Street regained all of Friday's losses. The Nifty and the Sensex gained nearly 1%, led higher by large caps like Reliance, SBI and HDFC Bank. The Nifty crossing 26,000 in intraday trade, but ending mildly lower, 25,966, still higher by about 170 points, 560 higher on the Sensex. The Nifty Midcap 1% higher, and similar story playing out for the Nifty Bank, which added about 0.5% as well. So strong start for our markets. And gold prices, meanwhile, continue to fall as the broader sentiment in the bullion market turned cautious. This after progress in the US-China trade negotiations dampened demand for safe haven assets. Profit taking and a stronger dollar also weighing on prices. Silver also followed suit after 2 months of gains. Now, the Finance Ministry's monthly economic report highlighted that India's economy has continued to gather strength despite global economic uncertainties and trade disruptions. And this was largely supported by robust domestic demand, strong activity and contained inflation. The report also said that global economic activity remained steady over the past few months despite adverse trade policy disruptions. The report further highlighted that lower GST rate is expected to support a positive demand outlook and stimulate consumption and investment across sectors. But the top story this evening, major relief for Vodafone Idea after the Supreme Court allowed the centre to reconsider the cash-strapped company's AGR dues worth 93,000 crores. Now, the Apex Court observed that the matter is within the policy domain of the centre, adding that the larger public interest merits reconsideration. Remember, Vodafone Idea's AGR dues currently stand at over 93,000 crores. The stock hit a one-year high after the order was pronounced. Ashmit joins us now with more on the order from the Supreme Court, but more importantly, the options before the government. Big relief coming in there for Vodafone Idea, Ashmit.
Well, it indeed does. Vodafone Idea knocking on the doors of the Apex Court on multiple occasions, finally getting a positive response. Bear in mind that this time the government was batting in their support. The government was saying that, look, there is a complete change in facts and circumstances. The government said that we now hold 49%, and by virtue of the government stake, that necessarily means there's public interest involved as well. Went on to say that over 20 crore customers will stand to be impacted if Vodafone Idea goes south, and also said that this will also affect the competition in the larger telecom sector. Now, all of these aspects weighing on the minds of the Supreme Court saying that, look, this is a policy matter. We do not want to intervene. And on the contrary, the Supreme Court saying we want to give the centre a free hand. Given that it is a policy matter, the centre should be the one to decide the future course of action, to any relief that needs to be worked out, any structure that needs to be given as far as the AGR issue is concerned, legacy issue going back a couple of decades here. The centre finally now being given a free hand in terms of deciding in what shape and form they want to grant relief as far as Vodafone Idea is concerned. One aspect, one caveat to bear in mind, the Supreme Court also pointing out that they're granting this relief, they're granting this blessing on account of the peculiar facts and circumstances of this particular case, which of course then raises the question that will it also be applicable for any relief that is to be granted to Bharti Airtel as well. Clearly the ball is in the DOT's court. They will now have to take a call on what shape and form the future course of action will take. The Supreme Court saying we will have none of it. The DOT, the Supreme Court opening up, freeing up DOT's options.
This is in the policy domain of the union. And there is no reason as to why the union should be prevented from considering the matter. So, to my mind, not necessarily it would apply only to Vodafone, but it could apply to the other telecom operators as well. Because if it is a policy decision, it should apply to everyone.
Once the government takes a policy, then they'll have to apply it uniformly to other telecom companies as well. They can't pick and choose. And therefore, I think there's a very good order from the industry point of view. All telecom companies will stand to gain. And Supreme Court will not interfere in this matter, but has really given a free hand to the central government. The ball is now in the central government's court.
Well, relief there for Vodafone Idea. Of course, the contours of the relief yet to be worked out. The big global story this evening. President Trump has said that Washington and Beijing are poised to come away with the trade deal ahead of his scheduled meeting with China's Xi Jinping, which takes place later this week. Now, the Treasury Secretary Scott Bessent has said that both nations have reached a substantial framework and 100% tariffs have been averted for now. Take a look.
Very interesting couple of days. We have Japan, and then we have South Korea, but we have China coming, and it's going to be very interesting. I have a lot of respect for President Xi, and we are going to, I think we're going to come away with a deal, but I really feel good. Our country's doing so well economically. It's doing so incredibly well. The Democrats should let it open. I guess they don't do that because it's doing so well. It's too bad, but on the, the macro scale, it's not having that kind of event. We just want people to get paid. We think it's very unfair.
So this was the fifth meeting that I've had with my Chinese counterpart, the Vice Premier, Hu Lifeng, and we covered a wide range of issues, and I think we've reached a substantial framework for the two leaders who will meet in Korea next Thursday. So, on the table, the president had given me maximum leverage when he threatened 100% tariffs if the Chinese imposed their rare earth global export controls. So I think we have averted that so that the tariffs will be averted. We also agreed on substantial agriculture purchases for U.S. farmers. We agreed that the Chinese would begin to help us with the precursor chemicals for this terrible fentanyl epidemic that's ravaging our country. So I would say that it was a very good meeting overall.
Well, that's the Treasury Secretary Scott Bessent there. The U.S. has finalized deals related to trade and critical minerals with 4 South Asian countries that took place over the weekend. Now, the agreements were signed during President Trump's visits to Kuala Lumpur for a summit of the ASEAN nations. The Trump administration has said that Malaysia and Cambodia have signed trade deals, adding the countries have agreed to cut tariffs on a variety of U.S. exports. The deals also facilitate U.S. access to critical minerals. The countries will in turn receive certain exemptions from Trump's so-called reciprocal tariffs. The White House also said that Thailand and Vietnam have agreed to frameworks for trade deals. Both countries agreed to cut tariffs on nearly all U.S. goods and reduce regulations on American companies. In return, the U.S. has agreed to identify goods it would exempt from its tariffs on the countries. The president also presided over the signing of a ceasefire deal between Thailand and Cambodia. CNBC's JP Ong explains the importance of these agreements.
This was probably one of the more important or more substantial ASEAN summits we've had in years, actually, also because it seems that that framework or that groundwork that was laid to try and pave the way for a potential meeting between Trump and Chinese President Xi Jinping was laid out here in Kuala Lumpur on the sidelines of the ASEAN summit. And also because they did ink a number of trade deals, as you mentioned, with 4 ASEAN countries, the likes of Cambodia and Vietnam, saw their trade deals finalized. Thailand, seeing a framework that has been laid out that will mean that they were this close or very close to actually finalizing that trade deal that will see them getting a tariff of about 19%. Arguably the most important or the most interesting one was the one that the U.S. signed with Malaysia, not just because Malaysia is the host of the ASEAN, holds the chairmanship of ASEAN this year, but also because there were key elements, there are key components in that particular agreement that involved rare earths, establishing a pipeline of rare earths between Malaysia and the United States. According to Malaysia, they did some initial studies and said that there are indicative potential resources or rare earth resources that could be as much as 16 million metric tons if this is indeed verified, which means there's a huge opportunity for Malaysia to actually court some of these investments and also take a bigger role in the rare earth industry. And so far, they have actually cemented at least an agreement to potentially supply these to the United States. But keep in mind, Malaysia is also talking with the Chinese to possibly bring in rare earth investments into Malaysia. So again, this puts them in a very interesting position because there's a lot of opportunity for them in the rare earth space, but also a lot of steps and a lot of miles they have to travel, and also a lot of relations that they'll have to maintain between the United States and China, who are competing in this very, very critical sector.
Well, the JP Ong there reporting from Kuala Lumpur. President Trump has once again claimed that India is going to stop buying oil from Russia. Speaking to reporters yesterday, Trump reiterated that India will completely cut back its Russian oil purchases, while China will cut back very substantially.
Will you discuss purchases of Russian oil with Xi Jinping? Are you worried about the Chinese buying Russian oil?
I may be discussing it, but you know, China's, I don't know, you probably saw it today, China's cutting back very substantially on the purchase of Russia oil, and India's cutting back completely, and we've done sanctions. Thank you very much, everybody.
President Trump reiterating his claim on Russian oil. President Trump also met Brazil's President Lula da Silva on the sidelines of the ASEAN summit in Malaysia. Lula termed the talks as constructive. This was the first time the two leaders met face-to-face since the U.S. decided to impose 50% tariffs on the country. Remember, like India, Brazil has also been hit with 50% tariffs. President Trump said that both nations should be able to make some pretty good deals. He added, and I quote, "We've been speaking and I think we will end up having a very good relationship. We have always had a good relationship. I think it will continue," end of quote. Meanwhile, Brazil's president said he had a great meeting with President Trump. They've agreed that their teams will meet immediately to advance solutions to the tariffs and sanctions against Brazil. Lula also said that President Trump guaranteed that the two leaders will make a deal. Prime Minister Modi said that the 21st century belongs to India and the ASEAN nations. Addressing the summit virtually, the Prime Minister emphasized India's vision for a shared, inclusive and sustainable future in its partnership with Southeast Asia. He also reaffirmed India's steadfast support for its ASEAN partners and announced 2026 as the ASEAN-India Year of Maritime Cooperation.
Friends, 21वीं सदी हमारी सदी है, भारत और आसियान की सदी है। मुझे विश्वास है कि आसियान कम्युनिटी विजन 2045 और विकसित भारत 2047 का लक्ष्य पूरी मानवता के लिए एक उज्जवल भविष्य का निर्माण करेगा।
That's the Prime Minister addressing the ASEAN summit. India and China have resumed direct commercial flights after 5 years. Indigo's first flight took off from Kolkata to Guangzhou, carrying 180 passengers. The External Affairs Ministry has called this move a gradual normalization of bilateral exchanges. Chinese officials said that this was a very important day for India and China's relationship. Remember, the government had suspended flights to China in 2020 after the Galwan clashes, and now the resumption of flights taking place. President Trump arrived in Japan's capital of Tokyo today. This is the second stop on his three-country Asia tour. He met with Japan's emperor at the Imperial Palace amidst heightened security due to protests in the city. Speaking to reporters when he landed, Trump said he was excited to meet Japan's new Prime Minister, Sane Takaichi, tomorrow. The trip comes amidst a $550 billion investment pledge from Japan, which is in exchange for easing U.S. import tariffs. External Affairs Minister S. Jaishankar met U.S. Secretary of State Marco Rubio on the sidelines of the ASEAN summit. Both leaders discussed bilateral ties along with key regional and global issues. The meeting comes amidst the ongoing trade talks between both sides. We will head to a break, but up next, Reliance and Meta incorporate their new AI joint venture. Name it Reliance Enterprise Intelligence. That and more when we get back. The Reserve Bank of India has issued draft directions opening the window for banks to finance acquisitions by Indian companies in India and abroad. However, these directives come with certain guardrails. The new capital market exposure framework rules will be effective from the 1st of April. Ritu's here to take us through the details. Ritu, take us through what the implications will be of these new rules.
The Reserve Bank of India has finally put out draft rules on capital markets and acquisition financing for banks, setting clear limits and safeguards. So a bank's total exposure to capital markets, both direct and indirect, is going to be capped at 40% of the Tier 1 capital. Within that, the direct exposure, which includes investments and acquisition finance, cannot exceed 20%. And specifically, acquisition finance is going to be capped at 10% of the Tier 1 capital. Now, on M&A financing, for the first time, RBI is allowing banks to lend to Indian companies that want to buy stakes in other companies in India or abroad. But RBI says these deals must be strategic and aimed at long-term growth and not short-term profits. To qualify, the acquiring company also has to be listed, have a positive net worth and must have been profitable for the last 3 years. Also, banks can only fund up to 70% of the deal value, while the remaining 30% has to come from the company's own equity. After the acquisition, RBI says the debt-to-equity ratio cannot exceed 3:1 and the loan must be fully backed by shares of the target company as security. Next, let's also talk about lending to capital market intermediaries. Banks can lend to them only if the loan is fully secured and the collateral actually belongs to the borrower, and there is a restriction where banks can't finance them for proprietary trading or investments of their own. Now, when it comes to IPO, FPO and ESOP financing, banks can lend up to 25 lakh rupees per person, but covering only 75% of the subscription value. Finally, loans against securities for individuals, banks can lend up to rupees 1 crore per person. Within that, 25 lakh rupees can be used for buying shares in the secondary market. Now, while bankers we've been speaking to have welcomed the move overall, called it a good start, not all their requests have been addressed, so they will seek clarifications. For instance, whether banks can finance foreign companies looking to buy in India, not just Indian companies making acquisitions. Also, the clause on acquiring company being a listed entity, the profitability and the 3:1 debt to equity cap after acquisition has also raised some concerns among bankers, especially for deals that involved distressed assets. Public comments on this draft are invited by the 21st of November, and the final rules are expected to kick in from 1st of April next year.
Ritu, many thanks. Kotak Mahindra Bank second quarter earnings in line with street estimates. Net profit dipped nearly 3%, while net interest income rose over 4%. On an annual basis, the bank's asset quality improved in the quarter on a sequential basis. And staying with earnings, shares of SBI Life surging after the insurer posted a strong Q2 that surpassed expectations. Annual premium equivalent rose 10%, while the value of new business grew 14%. Premiums from new business also up 28%. SBI Life's management told CNBC-TV18 that growth in the second half of the fiscal will be close to 18%. The government has announced that 6 companies have received approvals under the government's electronic component manufacturing scheme. The investment that has been approved for the companies stand at 5,532 crore rupees. Union Minister Ashwini Vaishnav has said that with these approvals, India will save 20,000 crore rupees on its import bill. Eyewear retailer Lenskart is set to launch its IPO on October 31st. The firm is looking to raise 7,278 crore rupees through a combination of fresh equity and an offer for sale. The 3-day subscription window will close on the 4th of November. The price band has been set between 382 to 402 rupees a piece. The IPO comprises fresh issue of 2150 crores and an OFS of 5,128 crore rupees. Lenskart will deploy the capital towards setting up new company-owned and company-operated stores, lease, rent and license agreements, investing in technology and brand marketing.
International continues to be a good focus for the company.
4,000 stores by 2030?
Again, I would say...
Possible?
Definitely. I mean, India has 80,000 eyewear stores, approximately, conservatively. And that Abhishek said we have 60 stores for 1 million people. We have 20 times more jewelry stores in India. So one would say, can you add at least another 80,000 optical stores as a country? Yes, right? Out of that 80,000, let's see how many Lenskart adds.
Well, that's Lenskart getting ready for the Lal Street. And the Lal Street is gearing up for another week of billion-dollar issues. Apart from Lenskart, together 3 companies which opened for subscription this week plan to raise nearly 9,500 crores. MTR's parent company, Orkla India, will raise 1,600 crore rupees via an offer for sale. The company is likely to have a market cap of 10,000 crore rupees. Helmet manufacturer Studs Accessories 455 crore rupee issue will also be open for subscription on Thursday. The company is likely to have a market cap of 2,000 crore rupees, so plenty buzzing in IPO corner. Financial services company PL Capital has appointed Zareen Daruwala as its new Group Chief Executive Officer from the 13th of October. PL Capital is a member of the Prabhudas Leeladhar Group. Daruwala is a veteran banker who previously served as the CEO for India and South Asia at Standard Chartered Bank. She retired recently. Swiss drug maker Novartis has agreed to acquire US biotech company Avidity Biosciences for around $12 billion. Novartis will pay Avidity shareholders $72 per share in cash. This as a premium of 46% of the company's Friday closing price. In a statement, the Novartis said that the deal is expected to close in the first half of 2026. Reliance and Meta have incorporated their new AI joint venture named IT Reliance Enterprises Intelligence Limited. Shares of Reliance Industries rose over 2% in trade. The new company will develop, market and distribute artificial intelligence services in India. Rima is here to take us through the contours of the deal. Rima.
Indeed. So Reliance Industries has launched Reliance Enterprise Intelligence Limited, REIL, which is a joint venture with Meta. Reliance will hold a 70% stake. Meta will have a 30% stake. And the initial upfront committed capex is about $97 million. This ties in with what Mukesh Ambani had to say at the AGM, where he spoke about AI everywhere, AI for everyone. So once again, it goes back to the push that Mukesh Ambani had highlighted about, the broader AI push. But, according to Morgan Stanley, that the $97 million is only the upfront capex. Eventually, the company will be making further investments. They estimate it to be between $12 to $15 billion to build their 1 gigawatt AI data center infrastructure. And the question is, because global tech majors who are in the AI play are commanding such high valuations, once this REIL scales up, what could be the valuations it will command? And I think, and will that have a rub-off on the listed entity, Reliance Industry? We'll have to see how that plays out. Back to you.
All right, Rima, many thanks. Outgoing Chief Justice B.R. Gavai has recommended Justice Surya Kant as his successor. Justice Kant was elevated as the judge of the Apex Court in May of 2019. If approved by the Law Ministry, Justice Kant will serve as the CJI till February 2027, a tenure longer than that of his predecessor. In international news, the United Nations has claimed that Israel is continuing to deny the entry of aid into Gaza. Hamas is working with the Red Cross and Egyptian authorities to find 13 remaining bodies of Israeli captives in Gaza. The Israeli Prime Minister has said Israel will determine which foreign forces enter Gaza as part of a planned international force to secure the ceasefire there. Ukraine has launched a major drone attack on Moscow overnight, forcing Russia to close 2 of the city's 4 airports. Russian forces shot down 2 AT-1 drones but did not disclose the extent of the damage. Kyiv has said that the attacks aimed at destroying infrastructure, which is key to conducting Russia's war in Ukraine. Meanwhile, Russia also hit Ukraine's capital of Kyiv with drone strikes, killing 3 people. And the war continues. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. We've got plenty more lined up for you. Stay tuned. We're back in a moment.
It's wonderful to have you with us today, Tanuj. Thanks so much for joining us here this evening, and it's great to see you back in India. You've spent the last few days touring a little bit, so what's the first read on India now that you're back here?
I was just saying to the minister, hence I was a few seconds delayed, that I'm disappointed he's leaving because I was going to tell him a very pro-Chennai story in what
I can call him back.
I've given him the headlines in what Standard Chartered is doing. But look, it's great to be back. I've been in Mumbai, Delhi, came in this afternoon, and India is shining. Business is doing very well. Standard Chartered is doing very well. I've come here to open our new center in Chennai. We're inaugurating the center day after tomorrow, which is our biggest GCC in India. So massively excited.
Well, kudos to you on that. So let's talk a little bit about this center that you're opening in Chennai, which is going to be your biggest GCC in India yet. But I also want to talk about this from the prism of where things started for Standard Chartered in India, going back to 2001 as far as the GCC story was concerned specifically, and where you are today and the evolution.
No, look, you're right, Shireen. We opened our first GCC in India, in Chennai, in 2001. And for those of you who were around at that point in time, it was called Scope. Scope International is where our origins come from. Chennai is, we've got now centers in other parts of India. We employ 22,000 people. We employ 28,000 people in Standard Chartered in India, 22,000 in our GCCs. And Chennai continues to be our biggest center. You're absolutely right. It started off with, servicing standard operations. We used to call it back office in those days.
There was no GCC concept then,
absolutely.
Right?
It was service centers, back office centers. I was speaking earlier on our table, and things have changed so much over the last 25 years. So it started off with centralizing operations. So, the first step in our journey was centralizing operations significantly, but then has been moving up the value chain. So, just to give you some examples, if I look at our center in Chennai, that manages all of our retail and investment banking products globally. That's done out of Chennai. I've got colleagues of our finance organization here. I remember when it started, the team did accounts payable. Now they are complex joint venture transactions, balance sheet optimization work, treasury services that are being done out of here. We've got our people services team here. Our global people services team has been rated among the top 12% teams in all of GCCs in India. And as our head of our GPS is here, and he told me today, Tanuj, apart from interviewing people, we do everything out of Chennai as far as managing our 86,000 workforce is concerned. So it's been transformational. I mean, if I look at the 25-year journey and across all parts of our operation, the real move up to capability centers and serving global needs in very complex products and services.
No, that's great to hear, and I think that is going to be a focus of the conversations that we will have. But what I want to talk to you now about, Tanuj, is where you see the next 25 years. We've gone from the service centers, the contact centers, to the low-cost arbitrage opportunities, to now really moving up the value chain, as you said, complex things being done out of GCCs here in India, not just for Standard Chartered, for a whole bunch of other companies as well. But what do you see as the next phase, the next wave?
I mean, I think the minister touched on this, and, he used the word agentic AI.
Yes.
These days, you cannot go in the first 5 minutes without talking AI and increasingly agentic AI. But look, the biggest advantage in India, and I can say this from a position of seeing our GCCs across the world. So we also have centers in China, in Philippines, in Poland. So, we've got centers all over. One of the biggest advantages in India is what the Prime Minister says, the demographic dividend, and the focus on education and skills, especially in areas of emerging tech. So last time I was here, I was in Bangalore. I attended a session with NASSCOM, and the amount of investment that's being done on skill building around these advanced technology areas. So digital skills, data skills, AI, generative AI, and I think that's the future. So I think, days of labor arbitrage are long gone.
Yes.
It's about how do you create these centers to become a source of competitive differentiation for the brand, and how do you leverage these centers to accelerate the delivery of your strategy? And I think that's the name of the game. So to me, it's going to be about significantly higher capability. It's going to be about leveraging technology very differently. Human AI collaboration is something I talk about quite a bit. And I think these centers will become the heart of that human AI collaboration.
So let's dig a little deeper into this human AI collaboration, because everybody's trying to understand what this world is going to be, you know, agentic AI and so on and so forth. What happens to the workforce? What happens to people? How much do you hire? Who do you hire? What kind of skills do you do? I mean, this is your passion project. You've got a whole book on it as well, Tanuj. So let's talk a little bit about that. How do you see this collaboration moving forward? What are we prepared to do at this point in time?
No, I mean, you're right, Shireen. I had a book came out last year on how to pivot to become a much more skills-powered organization. And I think the principles are as relevant to economies, nation-states, governments. I think a lot of ministers spoke about is to pivot to becoming much more skills-based as a state. And the underlying premise of the book is that, you know, the way companies are structured today is a product of post-second industrial revolution, where a job was the currency of work, you know, so it was job descriptions, reporting lines, factories. With what's happening today, we are what people call the post-fourth industrial revolution. Skills become a currency of work. So no more is this traditional construct of job, you know, people not being defined by their job description, but people being defined by the collection of skills that they have and the skills they will acquire and work happening on that basis. What does that mean, right? Especially with the amount of disruption that's happening at AI. With AI, I fundamentally believe that there are going to be tasks which will be disrupted. And as a result, companies are going to have to take a very forensic view of their talent landscape. So what are the skills they have? What are the skills they need to buy? What are the skills they need to borrow? And that's a very different mindset to thinking about FTE in the old way, you know, so this idea of, and we are beginning to change the language in our own company, right? We've always said 10,000 people in the center. We are now talking about what are the kind of skills we have in the center? What are the skills we are going to grow in this center? What skills are going away? What is the kind of reskilling that we are going to do? So the idea is to pivot away from jobs being a currency of work and beginning to talk about skills. And then focusing at length on reskilling, upskilling our workforce at scale to be able to deal with the future of work.
So, you know, at Standard Chartered, have you done your forensic exercise of skills at this point in time? And, you know, what are you bracing yourself for in terms of upskilling, in terms of reskilling, in terms of skills that you believe are no longer relevant to the future? What do you do with those people then?
Yeah, you know, our journey started 5 years ago. And 5 years ago, we did a piece of work which basically said, what are the skills that are not going to be needed in this business? We started with jobs because that's the architecture, but pivoted to skills in 5 years from today, 8 years from today, 10 years from today. And that led to a very focused, what I call build, buy discussion with our board. And we found that for us, it was significantly cheaper. We put a dollar number to it, which is now very well published, to reskill and redeploy as opposed to hiring externally every time a job came up. And you know, the way our business was changing, we were talking about millions of dollars. So we embarked on a very, very big reskilling exercise in both technical skills. So, you know, we are teaching our colleagues to be digital data literate. Now it's about AI skills. We've launched our AI Learning Hub for all of our colleagues, but also human skills, because it became very clear to us that there was a shrinking half-life of technical skills with AI, right? You know, I smiled when the minister said, we are sending people, we are teaching our workforce German and other languages. And I was thinking to myself, with generative AI, you can actually code in your own language. You know, I've been in Silicon Valley and I've seen scientists speaking in Tamil and with Copilot and actually coding. So, you know, the technical skills are getting disrupted. It's going to be the human skills around resilience, adaptability. So we've been on a big reskilling journey, which has led to our internal deployment rates, even in our GCSEs, increasing significantly.
So, you know, when you look at India now, and from a GCC standpoint, from a talent standpoint, as you open this large center, another large center here in India, the importance of India for the bank outside of banking has disproportionately increased, hasn't it?
You know, I always, you know, when I talk to our customers overseas, I always, and we talk about India, and I say, look, the power of, I call it the soft power of India in the ecosystem of Standard Chartered. I mean, even the hard power is very, India is our third most profitable country in the world. It's a strategically very important business. I don't know how many people in the audience know the first ever branch of Standard Chartered ever, 170 years ago, was in Calcutta. You know it, Shireen.
Yes.
So, India is, from a business perspective, incredibly important. But to me, the way we are using the GCCs to leverage the acceleration of our strategy. And again, I was talking to the teams this afternoon. Digital assets is a big strategic imperative for us. A lot of the work for technical work for digital assets is happening in our GCCs in Bangalore and Chennai. Private bank, which is one of our, affluent is one of our two strategic pillars. A lot of the risk modeling work for our private banking, advanced private banking clients happens out of GCCs. So you are actually looking at acceleration of our strategy. We are a cross-border affluent bank, 53 plus markets. But if you look at the big investments we are making in GCCs, it's about accelerating our strategy globally, not just the business we make in India, which is pretty material as well. So I think that's quite important.
it's ironic that you talk about the work that the India GCC is doing on digital assets, when in India there is still a grey as far as how far we want to go as far as digital assets are concerned. I mean, outside of the CBDC, and that conversation is still sort of stuck between the regulator and the government. But, you know, you talked about this, and this is a big change that we're seeing that's happening today, and especially in the US with the Genius Act coming in and so on and so forth.
What are the digital assets broadly? And, you know, the moment you say digital assets, people very quickly get to crypto. And I don't want to...
Which is why I didn't say crypto.
Agreed. You know, Shirin, you're an experienced interviewer, and you spend a lot of time with banks and bankers. We are very bullish on digital assets. You know, we feel technology in this space is moving very fast. We feel banking competitors are getting disrupted very quickly. We are very respectful of regulation, of course. You know, we wouldn't be around for 170 years if we were not. But we are very strategically thinking of partnerships in this space so that we can meet the needs of our clients, both our corporate clients and our private high net worth clients. That's sort of one thing which we are very bullish on. We continue to be very excited about the sustainability agenda. You know, we think the way, the markets we call home, the level of transition that's happening in these economies and the role that we can play there is significant. So that's the other piece that we are. And the third thing in financial services for me, which is becoming increasingly spoken about, is private credit. And, you know, private credit and what that means, we've done a very interesting partnership in that space as well with Apollo, and I think that's going to become a big trend. Not just for sort of your corporates or commercial, but actually for high net worth individual clients as well. They want to play in that space. And I think that is for us the third really exciting big opportunity.
You know, what's also exciting in India is, of course, the fintech story, which in the last 10 years has seen a significant inflection point. In fact, we've got a congregation of fintechs in Mumbai currently to talk about what the road ahead looks like. In your context of build, borrow, buy, where does the India fintech story stack up?
Well, I mean, look, I have always been a massive believer in partnerships. I think the days of businesses wanting to do everything themselves are long gone. And I've always said at StanChart, we are an ecosystem. We are an ecosystem of bringing expertise together, right? My title is Strategy and Talent. People just assume that talent means people. And I keep saying talent means the capabilities that help us deliver on our strategy. So, you know, while I oversee our HR agenda, I also see our entire supply chain management organization because we are thinking about strategic partnerships to augment sort of capability. And I think the fintech play, especially with regards to digital assets, the three things is massive. I mean, you know, some of the fintechs in that space and the opportunity for investments is massive. So for me, India, the speed of innovation is significant. You know, I always say, people say to me, why is India important? And I say, I always start and end with our strategy. We are a cross-border bank that provides differentiated services to our corporate clients. And we are as well as to our private high net worth individual. That's what we are. We are a cross-border affluent bank. And if you look at India, India is at the forefront of both of these trends. Economy growing at 7%, incoming if FDI high double digit. It's a very attractive investment destination for our corporate clients. If you look at our affluent proposition, the fastest growing number of millionaires anywhere in the world today. And it's a hugely attractive story from an affluent perspective. And finally, if you look at skills, I mentioned this previously, demographic dividend, under 35 years of age, the public sector, private sector partnerships that are happening in skill building. So both in terms of the two aspects of our strategy, underpinned by focus on skills, India is hugely important for us.
Tanuj, I want to understand from your lens, since you manage strategy as well as talent, and what we're seeing today, specifically in the context of AI, is this big talent war out there, specifically in Silicon Valley at this point in time. I mean, jaw-dropping numbers being thrown at people to draw in talent. What's the specific challenge that you believe banks like yours, companies in general, who are not tech, traditionally seen as tech, are going to face, but as you try and draw in the kind of talent that you just talked about?
I mean, the first thing I will say, it's very controversial for the technologists in this room, but I think adoption of AI at scale is not a tech talent. It's not a tech challenge. It's actually a skills, leadership, and a culture challenge, right? So, you know, don't get me wrong, technology is very important, but without having the skills to be able to adopt technology at scale, and the culture and leadership, you will make limited progress, right? I mean, the one thing is the rebranding of banks to become tech magnets for tech talent has been going on for a long time, right? We employ more technologists than mid-sized tech companies. So, and, that's something that we have focused a lot on. So the kind of institutes we go to, the way we brand our employment proposition, our benefits. I mean, we took a very progressive stand as a bank on our flexible working policies because we realized that the best talent wants that level of flexibility, right? Not just where they work, but how they work, why they work. And so in terms of our proposition, we've been evolving it to be attractive to tech talent for a very long time. The piece I will say about AI is I don't believe businesses can buy their way into the kind of talent that is needed with the pace of change that's happening. There is just not enough talent to go by. So, and don't get me wrong, you do need specialist talent and you need to buy them. But I think companies are going to have to really think about how do they build skills and talent from within. And how do they get the right model where you're augmenting the deep specialist skills with the many other things that are needed, risk management, ethics, you're looking at product development.
Yeah.
But actually building those skills from within. And the borrow piece is looking at strategic partnerships from vendors, from your customers. There are many partners in the room today. So I think it's going to be those days of, I've got the money, I'm just going to throw it and get the best talent. Yeah, you hear eye-watering numbers coming out of Silicon Valley, but that's not the reality of most businesses. I think it's a much more nuanced approach in terms of what you build internally and where do you make those big strategic investments.
So Tanuj, I asked the minister, let me ask you as well, what's on the to-do list for you specifically, in terms of what you've been able to do so far, but more importantly, in light of the many opportunities, but also challenges that you foresee, what's the priorities that you're going to be focused on? And is there another book coming?
So the first priority is to do a grand opening of our Chennai center. It's been 7 years in the making. It's a real labor of love. And we are hugely excited. And I want to spend time with the team. And, it's been a big move. We were at Haddocks Road for those of you in Chennai. It was a very emotional venue for us as Standard Chartered. So that's the really major priority. But, I think the big piece for us is, our CEO and our management team and our board talk about this very often. In the time of deep volatility is the biggest opportunity for a business like ours. We are an advisory business. We stand by our clients, both corporate, institutional, as well as individual clients, when they are going through uncertainty and change. And a huge amount of work that me and my organization are doing is how do we pivot to being front of mind for our clients in the advisory support that we are doing, the way we are talking about our proposition, the way we are telling the story, the way we are engaging with clients, events like this, I think is really important because when there is so much of volatility and change in the world, bankers, a bit like your doctors and your therapists, become people you come to for advice. And what do we need to do to capitalize this moment in terms of being the go-to bank for our customers is really top of mind and huge amount of focus. With regards to a book, there's definitely a book that's going to happen, but not anytime soon. It's a lot of hard work.
That it most certainly is. But Tanuj, thank you so much for a fabulous conversation. But we wish you the very best of luck with this new center and look forward to seeing much more of you here in India. Ladies and gentlemen, a big round of applause. Thank you very, very much for joining us here today.
Hello and welcome to News Center. I'm Parikshit Luthra. The Election Commission announced a pan-India special intensive revision of electoral rolls that has already muddied the political waters in Bihar. Elections are due in the state next month. Speaking at a press conference earlier today, the CEC, the Chief Election Commissioner Ganesh Kumar, said and laid out the blueprint of the pan-India drive, which will kickstart tomorrow. He said that the exercise would cover 12 states, including West Bengal, Kerala, Tamil Nadu, where elections are due next year. Assam also goes to polls next year, but was not included in the list. Kumar explained that all chief electoral officers and district electoral officers have been directed to meet political parties and brief them of the special intensive revision of electoral rolls process by day after tomorrow. The Chief Election Commissioner said that the first phase of SIR was completed in Bihar with 0 appeals.
एक से जगह ज्यादा रजिस्टर होने वाले वोटर्स, कई बार किसी की डेथ होने के बाद भी उसका नाम न हटाया जाना या गलती से किसी भी विदेशी नागरिक का नाम मतदाता सूची में आ जाना, इन चारों कारणों की वजह से चुनाव आयोग ने निर्णय लिया कि पूरे देश में चरणबद्ध तरीके से SIR कराया जाए और इसकी पहली कड़ी बिहार आपके सामने समाप्त भी हो चुकी है और बड़े सफलतापूर्वक लोगों ने चुनाव आयोग पर विश्वास भी जताया है.
To take this discussion forward, I'm now joined by political analyst Sandeep Shastri, BJP spokesperson Syed Zafar Islam and Sujata Paul, Congress spokesperson. Thank you very much for joining us. Sujata Paul, let me get your first reaction. A big point that the CEC made was that when the draft rolls were put out after the SIR exercise was completed in Bihar, there were 0 appeals. And even now, there will be an extensive period of appeal that will be allowed, and Election Commission officials will visit the house, every house, at least 2 to 3 times. Do you feel now that the opposition's concerns around this exercise have been addressed?
We'll have to wait and watch as to what happens next in these 12 states and union territories. But as far as Bihar SIR is concerned, it was a complete failure. And if it was a success, then clearly the government at the center is an illegal one, because the 65 lakh voters who were disenfranchised were the ones who had whose names were there in the voters list for the Lok Sabha elections also. But what is very important is that the results of SIR Bihar have proved that it is still, asking for a lot, because there have been questions on the 5 lakh duplicate voters, the 1 lakh voters without names, the A, B, hash kind of names that are there. And most importantly, when questions have been raised on this, the CEC has said time and again that it was the responsibility of the BLOs to be, the BLAs to be appealing. But the fact of the matter is, it is the responsibility of the Election Commission to ensure that every single eligible citizen is included in the electoral roll. But that is not happening clearly. When you first shift the onus of proof on the citizen to ensure that the name, his or her name is included in the list. And secondly, when you shift the burden onto a political party and their electoral officers, it is solely and wholly the mandate of the ECI which has been given to it by the Constitution of India. They haven't mentioned what has happened to the migratory population who is not present in Bihar at this point of time. Supposing, let's presume that those people, some of those people are not able to return and vote. Is it fair that their names are excluded from there because nobody was present in their homes to ensure that their names were included? You know what has happened when the matter went to the Supreme Court and the 11 documents were being considered. So now we have to wait and watch and see what exactly happens. Because if you remember, the census of 2001 had taken place, after which the 2003 SIR took place, which was basically 1 year before the Lok Sabha and 2 years before the Vidhan Sabha elections in Bihar. And clearly, if you are looking at what is happening now, there is no data. Where is that data? Why is the census not complete? There are a whole lot of questions, and certainly we will have to wait and see what exactly the plan of the ECI is, because clearly it has been working for the BJP, and we are still not sure of it.
Zafar Islam, how do you respond to Sujata Paul? The point that the opposition is making, and this is what DMK Stalin also raised earlier today, that the BJP, the NDA, the Election Commission, they are trying to disenfranchise voters in the country, especially those which are not going to vote favorably for the BJP. And this is something that goes against minorities and backward classes. How do you respond to that?
Well, it's absolutely baseless. There is absolutely no truth in whatever the allegation which has been made by the opposition parties. The fact that we welcome this initiative of the Election Commission, because the Election Commission is only trying to establish two things: that the voter list is clean, transparent, and free from any anomalies. And that is what their intention is, that every data should be accurate, and it has to be made accurate by conducting this SIR. Because this will help, this entire process will help to ensure that people who have died because of urbanization, there are a lot of people who have migrated. So people who have died, their name is still there. That name needs to be excluded from the list of electoral people. And people who have migrated and now become voters in some other states, their name needs to be excluded from where they are not residing at the moment. So our intention is very clear that we need to support any initiative by the authority. In this case, Election Commission is the authority which is conducting a process, a process to clean the electoral roll and ensure that it is accurate from every possible way, and it is fairer for every party, not only for X party or Y party. It is fair for every party, because everybody will know that this list is clean from, and there is no duplication of vote. There is nobody who is not resident of the country or is not a bona fide resident of the country is also part of the electoral roll. Those needs to be removed. So I think we have supported it, the initiative of the Election Commission. But if the opposition has an issue, they must go and engage Election Commission, because the Election Commission now is engaging every political party. Their feedback is important. They are taking feedback from them before conducting the exercise. And more importantly, even if they have some observation, they have their concern. They're always open to going to court and approach the court if they find it something which is working against their interest. But their interest is that the name of those voters who are not even citizens of this country, who have died, who have migrated from one place to another, that it should continue in the same electoral list. That will not happen. That has to be removed. And that is something that's why we are supporting. This is fairer, accurate, and it is clean and transparent.
All right, let me get in Mr. Sandeep Shastri at this point. Mr. Shastri, how important was this to conduct this exercise? The last time it happened was 21 years ago. It happened in 2004. The special intensive revision has happened 8 times in our electoral history. This is what the CEC had said. The politicians, the opposition has objections to it, but the sheer importance of this exercise, according to you?
Parikshit, I would strongly endorse what both my co-panelists have said, because the points they have made are important. It is beyond a shadow of doubt that we must have clean electoral rolls. Those who have passed away, their names should be taken out. Those who don't live in an area or have their names in more than one place should be out. So there are errors of omission and commission which need to be corrected. My question would be, while this needs to be done, on which there is no second question, a special intensive revision needs to be done possibly, but I am, Parikshit, going to focus on another SIR, which is sureness, identity, and result. For me, that is more important. The sureness of the process we are taking forward. Are we 100% sure that that process will invoke the trust of the citizen? Have we made sure that all are covered, enough time is given, and there are opportunities for any remedies to be there? Secondly, have we made sure that the multiple identities for proof that people use are now able to be used? The Supreme Court in its last move on this said the Aadhaar should be something that should be permitted. So are we allowing for various legitimate identities to be used? And finally, does the result of this exercise demonstrate that it will lead to a cleaner electoral list? So I'm making 2 points, Pariksha. SIR is important. Revision of rolls is important. Cleaning of rolls is important. Authentic voters list is important. But while it is important, the process is equally important. And does that process ensure sureness? Does that process ensure recognition of all
Let
valid
me put that question to Sujata Paul.
and let that process ensure the right results?
Right. Sujata Paul, is that your concern, that there is 1 month to file an appeal after the draft is published? You feel that the current process does not allow people a good amount of time to appeal against this, and also there is concerns among people who are working in different states but maybe from another state?
That's exactly what I said. There will never be enough time if you give a time of 1 month. And especially, my more important point is that how is it that you call this a foolproof system when actually speaking there is no system which is foolproof, and that is why in a democracy we should always question our systems to strengthen them. But here, what I find amazing is that the BJP clearly says that everything that is being done by the ECI is foolproof, it is correct, and there is no problem. Now, if they wanted to strengthen the system, they would also find some problems somewhere. But no, this is a near perfect system according to them, whereas people who migrate from every state, it's not only about Bihar, it's about every state. Now, let me talk about Assam also. 19 lakh people, 19 lakh people were supposedly infiltrators according to the NRC of Assam.
All right.
But look, how many were proved to be infiltrators? Only 30,000 people. So that clearly shows that if a system is being supported by one and only one particular party, then there are going to be questions which will be raised that the ECI and BJP are in cahoots with each other.
All right, Syed Zafar Islam, how do you respond to Sujata Paul, especially about the sureness of the process? Do you feel, and do you think this is something that BJP would agree to, that at least more time should be given for appeal?
Well, we are not interfering in the process. We are just endorsing the concept. The concept of initiating this exercise where we have a clear electoral role, all these things which we have narrated in the earlier. That is the objective, and we support this objective in case we find or they find, because the Election Commission is open to discussing any political parties. If they feel that this process which is being initiated and the process which has been outlined, if they, for strengthening the process, if you need to do X, Y, Z, they are most welcome to suggest the Election Commission. Who is saying that they cannot approach the Election Commission? Election Commission already stated that they will engage every political parties to take their feedback. They also want that the process should be smooth, foolproof, effective, and objective driven. And if there are political parties who can contribute for better execution, more than welcome. The Election Commission is welcoming them. But the fact that the mindset that everything what Election Commission does, it does wrong, is something which they need to change. The Election Commission is an authority. They will not do what you want. They will not do what I want. They will do what it is being done to ensure these are the objective which has been already stated. So to meet the stated objective, they have to comply with the process. That's all. Process you can contribute as a political
Sandeep
party.
Shastri?
You are free to contribute.
All right. Sandeep Shastri, in the current form, do you feel that there are political parties who stand to lose?
Parikshit, that would be a difficult conclusion to come to. As has been said by both my co-panelists, we need clean electoral rolls. We are one in believing that the objective of a clean electoral roll is correct. There may be differences in terms of the way we would address the process. But at the end of the day, for me, the process also is crucial, because what I think should happen is the citizen, the voter, needs to have that confidence that cleaning of the roll has happened, and those who should be included should have been included, and those excluded should have been excluded. I would plead for as I said, the SIR I talked about, and also two more things: a little more transparency in the process and a little more participation of multiple stakeholders in this process. I think if these two things are done, participation and transparency, the level of trust in what we are doing as part of the SIR would be much higher, I believe.
All right.
Can I just come in for 10 seconds?
Time, but thank you very much.
10 seconds.
Yeah, Mr. Zafar Islam.
See, the whole objective of this exercise to make it more transparent, and every stakeholders are welcome. And this is what I'm not stating, this is what is stated by the election commissioner. Secondly, that yes, there could be some observation you have. You must come and discuss with the election commission, and if your BLA needs to be activated, your BLAs are not activated. They are only trying to speak in the media, but
we're running out of time, Zafar Islam.
ECI doesn't engage with parties other than the BJP, and they don't need to engage with the BJP because they're working for the BJP and carrying out a special intensive removal exercise. That's what it is all about.
Okay, strong statements from all sides. Thank you very much for joining us on the program. We're taking a short break on News Center, but coming up, Donald Trump is confident of a trade deal with China ahead of his scheduled meeting with Xi Jinping later this week. A special discussion with Amitabh Palit, Senior Research Fellow at the Institute of South Asian Studies at the National University of Singapore. We speak to him about US's 4 trade deals that have been struck in Malaysia on the sidelines of the ASEAN summit. Welcome back. You are watching News Center. The big global story this evening. US President Donald Trump believes that the United States and China are close to a much-awaited trade deal. Speaking aboard Air Force One en route to Japan from Malaysia, Trump insisted that the agreement could be finalized ahead of a scheduled meeting with China's Xi Jinping later this week. US Treasury Secretary Scott Bessent echoed the US leader's sentiment. Speaking to ABC News, Bessent said that both nations have reached a substantial framework and 100% tariffs have been averted. The US president is on a three-country Asia tour. The White House said that he signed trade-related deals with 4 Southeast Asian countries in the first leg of his tour in Kuala Lumpur at a summit of the ASEAN nations. Under the trade deals with Malaysia and Cambodia, the countries will cut tariffs on a variety of US exports. The deals also facilitate US access to critical minerals. The nations will in turn receive certain exemptions from Trump's so-called reciprocal tariffs. Meanwhile, Thailand and Vietnam agreed to frameworks for trade deals. Both nations agreed to cut tariffs on nearly all US goods and reduce regulations on American companies. In return, US has agreed to identify goods it would exempt from its tariffs on these countries. Joining us right now is Amitendu Palit. Mr. Palit, thank you very much for joining us on this discussion. Give us a sense of how these 4 trade agreements, including 2 trade frameworks, will benefit these South Asian countries and how they would leave India.
Parikshit, thank you. Thank you very much for inviting me to speak with you. A pleasure as always. I think the feature that comes out of these 4 trade deals is something that we've seen with respect to all trade deals that the US has signed. These are vague, opaque, and really doesn't reveal much about what exactly are the commitments that US has got into with these countries. So in terms of the more specific ones that are available with us, which are respect to Malaysia and Cambodia, we see them broadly ending with similar levels of reciprocal tariffs. There are a couple of commitments that are interesting in both the deals. One of them is that both have committed not to go ahead and impose digital sales taxes, which are an important point as far as US tech companies and their businesses in these countries are concerned. Both have also committed not to take measures on exports of critical materials in a way which is inconsistent with those of the policies and rules that the United States announces. And there is something similar, which we are expecting to see in the critical minerals agreement that the US is having with Thailand and what it produces with Vietnam. So at the end of the day, Parikshit, I have 2 thoughts on this. First is, I think that these are largely symbolic as far as the US is concerned. With respect to Southeast Asia, it brings a sense of relief because Southeast Asia was really most of the economies with whom these deals have come. They are indeed dependent upon the American market very significantly in terms of their exports. So that is a vulnerability.
Mr. Palit
has used that.
Yeah, Mr. Palit, do you feel that India has to take a cue from some of these trade agreements that have been signed? And possibly if we look at an average tariff rate, it may not be 15%, it may be something in the range of 19 and 20% that we may finally get?
I'm sure we can get somewhere there, Parikshit, but there is a point which I would like to raise here. You know, there is a very, very strong possibility that this reciprocal tariffs might get thrown out of the window by the US Supreme Court in another 5 to 6 weeks' time, because a final judgment is expected on that. Now, if that happens, then this entire negotiating effort that has gone into these deals, including for a country like India, would have gone to waste. In that case, we would be going back to a situation where Section 232 product tariffs and Section 301 tariffs will remain prominent, and we will not have any country-specific tariffs. And within those, there will be, various machinations that the United States will employ. So the question that we come back to now, Parikshit, is that for a country like India and for most other countries, what exactly is the benefit that they are hoping to obtain at the end of getting these deals, whatever be the character of these deals? On surface, there might be a level playing field established as far as the parity between reciprocal tariffs are concerned. But if the reciprocal tariffs don't exist in the first place, then what exactly would the parity be all about?
Right. My question also on critical minerals. The deals that he has signed with nations, especially on critical minerals with Thailand and Malaysia. With this, do you think the US will be able to safeguard its supply chain?
Malaysia and Thailand, Parikshit, are countries which are not yet proven to be major exporters of rare earths in the global market. They might be having with them a certain amount of endowments. Now, there is one trajectory that I think you and I are both aware of. There is a race in the world, particularly among developing countries, to make it prominent to the United States that they hold rare earths. And as a result of their holding rare earths, they are very valuable, and the US should cut deals with them. But I think the US is being very preemptive in this regard and wanting to safeguard itself from any possible responses on part of China. And if China is entering into similar kinds of agreements with these countries, which it really doesn't need to, given the authority it holds on supply chains right now, then that would be a preemptive safeguard for the United States. So in a sense, this is something which is being done in haste. This is being done in an anticipatory manner. If Southeast Asia produces reserves of rare earth, that might make them influential in some respect in critical earth supply chains, the US would want to be ahead in that game and making sure they have access to those ahead of China.
All right, Amita Indupale, thank you very much for joining us with that very important perspective and a roundup of Donald Trump's trade deals over the weekend. Let's see what happens in Japan and, of course, in China later this week. With that, it's a wrap on this edition of News Center. Thank you for watching. Goodbye.
Welcome to Indonomics. We stick with banks. The ecosystem for banks is getting more dynamic. In the past 6 months, 2 foreign banks and 1 private equity have bought stakes in Indian banks for nearly 50,000 crore rupees. I'm referring to, of course, the NBD in RBL, SMBC Bank in Yes Bank, and Blackstone more recently in Federal. Separately, the Reserve Bank is removing old constraints on Indian banks. For the last 2 decades, Reserve Bank had insisted banks should only lend for capex, that is, create fresh assets, not to help corporates buy one another's assets. Now the Reserve Bank has announced draft rules allowing banks to do acquisition financing. More generally, ECB financing rules have also been eased. Does all this mean more business for banks and more competition? Will more foreign banks be attracted to India? Joining me to discuss whether we are on the threshold of a brave new banking in India, or at least an inflection point in Indian banking, are 2 veterans, Zareen Darwala, former CEO and Managing Director of Standard Chartered Bank, and Srini Varadarajan, another veteran banker who has done stints in Axis as DMD, before that in ICICI, where he probably worked with Zareen and was in the capital markets division along with JP Morgan. Zareen and Srini, thank you very much indeed for your time. Zareen, for starters, we saw Stanchart and Citi actually reduce their businesses in India, but now we have 2 banks from different geographies, Japan and Middle East, coming in to buy huge stakes in small Indian banks. Will we see more of this?
So first of all, Lata, I don't think Stanchart reduced its business in India. I'll clarify.
Okay.
It globally decided to exit unsecured lending, and that was a global decision. Otherwise, very much a large presence.
Okay.
Coming to, after SMBC and NBD, will more foreign banks buy? Yes, absolutely. I feel banking is a good barometer for the Indian economy, and we will see a lot of the smaller private sector banks which need more capital, certainly looking at this optionality. Also, I think the segment that we will see more attention coming in a few years is the small finance banks. Clearly, there will be some consolidation that may come through in that segment. And I think the last 2-3 deals are also a sort of reflection of the good geopolitical relationships in India-Japan corridor, UAE-India corridor, and the whole business momentum in these corridors will pick up, which will help these banks in their business in India. And I feel there'll be a trickle of strategic stakes, not a flood.
Oh, okay, trickle. Well, a similar question to you, Srini. On the one hand is the foreign interest, which of course will have to go through this voting rights issue as well. But separately, how many Indian promoters will be willing, sellers, or I'm only referring to banks now, will they be willing to give up a strategic stake to banks?
Yeah, I think if you look at the shareholding of banks, and what RBI tries to achieve is to have a diversified shareholding. And to that extent, you do not have any large shareholder as such in a bank, other than barring a couple of banks right now. So the opportunity for someone to take, and therefore most of these banks are professionally run. And therefore the opportunity for for a financial investor or a strategic investor to come in and take a reasonably large chunk, which is broadly around 10%, and in some cases, as we're seeing, where RBI is slightly more liberal, to more strategic stake, where a controlling stake is also happening. I think it's possible, but I don't think so there's any sponsor looking to sell. It is just banks clearly have need for capital, and that capital requirements can be met through incremental issuance to existing investors and domestic investors. But again, if there a strategic comes in and they believe have deep pockets, I think it's useful for the bank from a growth point of view to try and get those investors on board. And I think that's what we're seeing that's happening.
Okay. Well, Yes and RBL Yes has the advantage of being a digital bank. It's a new bank. And RBL has reasonable branches, not many. But, will the ROI be justified for, any global bank? Srini, you go first on that.
Yeah, I think if you look at the geographies from which these investments are coming from, I think these are really cash-rich geographies, and they are seeking long-term investment, and the threshold returns which possibly they're expecting is is more related to the growth in these entities rather than actual return on equity, which possibly will happen over a period of time. It gives them access to a market and customers which continue to grow, and the visibility of growth is very high. And they will ride the wave through the cycles. And I think that's the way I think both the RBL and the yes transactions have happened. In Federal Bank, I think it's more a financial transaction. I think it's a good, well-run bank, and therefore nothing changes from the way the bank runs, and it's a financial investor coming on board.
Yes, it's only a private equity. It's not a bank. But Zareen, you said that you don't see a flood but a trickle. I mean, it is a long way to build a retail interest in Indian banks, and the giants are already there. The top 5 banks are really big in India. So is that what is making you a little skeptical that foreign capital may not rush in?
No, I think the number of entities which are available or platforms is not that many for a foreign bank to come and, if you take the next tier of banks, they are quite small, some of them like Karnataka, Karur Vyasa, right?
Yeah.
And it's quite possible that some of those entities may not be very exciting for foreign banks.
Okay.
While RBL and Yes were much bigger banks, in the Indian scheme of things. Having said that, if a bank is very keen to have a ready-made platform, then yes, it provides a ready-made platform. But then culture-wise, it becomes a challenge for the foreign bank also sometimes, to sort of revitalize the culture, which is suited to global aspirations.
Yeah, I think in Federal Bank, the advantage was that they got a stand-chart banker for a good 15 years. And then perhaps even now, it's only a private equity capital. Okay, Srini, time permitting, I'll return to this. But basically, you also agree that there could be a flood of capital.
I agree with Zareen. There's got to be no flood of capital. I think the thing is the visibility of growth is there, and therefore people are interested to invest for the long term or strategic perspective.
So more private equity than banks?
But as you said, I think the return expectations need to be moderate. I don't think so you can expect exciting returns or blockbuster returns from these things in a 3 to 5 year period. It's a long haul. I think foreign banks have struggled in the Indian context, as you said. The top Indian banks have given the foreign banks a run of their money, and clearly building a business here, both wholesale and corporate, both wholesale and retail, has not been easy for foreign banks. So I think it's more having a foothold in a market which is growing and trying to find your way rather than trying to say, I'm going to get exciting returns here.
Okay, fine. Time permitting, I'll return to this. The bigger, excitement for the entire Indian banking sector is the draft rules on providing money for acquisitions. Until now, banks could not do that. They will start from April 2026. Now, the rules are that the banks have to, the limit is 10% of their tier 1 capital for the entire banking system. That comes to about 4 to 5 trillion rupees, not a small amount. And the rules also are that it should be a profit-making bank. It should be a profit-making company whom they are financing, listed and profit-making for 3 years. Zareen, is this opening up a big line of business for Indian banks?
I would say it is definitely a segment which for many years has been close to Indian banks. And to a large extent, most of the M&As were getting funded from FPI or NBFC or AIFs. To that extent, it's clearly an area of opportunity for Indian banks to sort of step in. Having said that, as you rightly said, there are boundary conditions like debt equity ratio of 70-30. Similarly, the acquiring company has to be a listed entity. So there are boundary conditions, and also it eats into the CME exposure of banks, which is not a big headroom that banks have. A lot of banks have, CME exposure is sort of not that much headroom is available. To that extent, it is a new area and it's an opportunity for Indian banks.
Okay. Your thoughts, Srini? It's not just these constraints. Also, as Zareen pointed out, the overall 40% of Tier 1 remains as a cap for all capital market exposure. Will banks be interested? Banks have not shown much penchant for corporate lending itself.
Yeah, I agree that I think again, here also one should moderate the excitement in terms of what investors and outside stakeholders think about what the RBI regulations will achieve as far as the banking sector is concerned. If you look at the tier 1 equity of banks, broadly it's around 25 lakh crores. So if you look at 10% of that, it's about 2.5 to 3 lakh crores is what you will get.
Okay.
This is a limit which is not going to increase over the next at least 3 to 5 years. And if you look at any bank, I don't think so they're going to achieve 10% in 1 year. So if you assume they're going to achieve this 10% over 3 to 5 years, and you're talking about 50,000 crores. Okay. And similarly, as you said, that ICICI, HDFC Bank and SBI are almost 45 to 50% of the banking sector net worth. Yeah. So almost if you're 2.5 lakh crores, 1.25 lakh crores is with these guys. So the whole thing is, if one of these guys don't show much interest because other capital market exposures offer them much better returns, the amount of banks financing which can happen for this is much lower. So I would think it's a window which is open for exception trades to happen, meaning some trades will go through where listed entities which are acquiring good targets, I think, and highly rated will get financing. But to believe that every acquisition is going to be financed by banks, I think it's far away. I don't think so business of NBFCs and AIFs are anyway going to be affected by this. I think they play in a different segment. Sponsor financing is a big part of that. And any acquisition debt, typically good corporates find a way to finance it through entities which offer almost slightly higher than debt financing rates. So sponsor financing is unaffected. And I think banks will slowly scale up. So I don't think so one should expect immediate growth from this. It will be a good start.
Okay. Well, thanks for pouring some cold water into, enthusiasm of the naive. Zareen, what's your take on this? Would you say that, this 3-year listing and 3-year profit should go? I mean, that will reduce the terrain so much. Do these guys, 3 years profit making and listed stocks, even want bank money?
No, so I think, sorry, I didn't get your question.
No, see, the rules are that you can finance acquisition only if the acquirer is a listed company and has 3 years of profit making record. Such people will not even want money. No, they will have their own money. So do you think this is too restricting a qualification?
I think most M&As, there is some funding because even if a company has surplus cash flow, they may have commitments for capex, etc. So they do come to the market. There are very few who are zero debt companies like the tech companies or some of the MNCs who don't come for borrowing. So to that extent, I would say even if they're listed and they're profit making, they will access bank finance stroke NBFC finance for acquisitions.
Okay. Well, I'm not done with my questions. There is another set of...
Lata, I just want to add one thing. I think the way I'm looking at how RBI has changed its mindset here is that till now, you are trying to tighten NBFC regulations to make it on par with banks. Now it's happening the other way, where RBI is saying, I will relax banking regulations to make it on par with NBFCs. So that process is starting where you're trying to level the playing field. You level the playing field from one side. Now you're saying from the other side, I will level it.
Okay.
So we will get to somewhere in between.
Okay. That is actually a headline. Yeah, Zareen?
I'd just like to say that what Srini said, this is a new lane which is created, not an autobahn.
Oh, that's a nice metaphor. It is only a lane that has been opened and not an autobahn for Indian banks. Point taken. Well, I have more questions for both of you on the ECB rules that have been relaxed and whether that opens up an autobahn. Those questions after the break. Welcome back to Indianomics. We have been discussing the many changes to the Indian banking space with two veteran bankers, Zareen Darwala, formerly of Standard Chartered Bank, and Srini Varadarajan, formerly of Axis, and before that with ICICI as well. Srini, Zareen, thank you very much for your patience. I want to also discuss the ECB rules which have been relaxed. Primarily, companies wanting to take over can now raise foreign capital for foreign loans, for buying up Indian companies. Also, there are no price restrictions. Absolutely no price restrictions. You can raise the loan at any price, and you can raise it for shorter terms, 3 years, and not necessarily 5 to 10 years, which were the older rules. Again, draft rules. Well, Zareen, do you see this as... Now, this is more an India Inc. question. Do you think this will be resorted to a great deal?
Yes, I think it's a great development. See, the minimum tenure was a constraint. So being from a foreign bank, I can share that clients would prefer to borrow rupee because they could prepay anytime. Minimum tenure of 5 years, average maturity, was something that clients were saying, listen, if I have a surplus, then I'll not be able to prepay. You can prepay, but with RBI approval. So there was a procedural leg to it. The other, I think, very important thing that is there is the cap on the interest rate.
Yes.
Actually, enables BBB rated kind of corporates also to access the bond market, for example, globally. It enables A- kind of companies also to access the global markets in a different form. It may not come through ECB, but maybe a dollar bond. So those kinds of flexibilities are certainly there. Also, allowing companies to borrow more than $750 million, which is $1 billion or 3x their net worth, that also enables the large corporate conglomerates to also go and access the dollar market when the pricing is attractive. So there are multiple things. And then the end-use restrictions, which is, now you can use it for general corporate purpose.
You can use it for real estate development, which was clearly not allowed previously.
I think the real estate, again, a very, very good development for the builders because they have to pay for the FSI, Floor Space Index. And, that used to be extremely expensive. They could borrow from the NBFCs or from private credit. Private credit rates were 16-18%. Better rated builders will be able to access ECBs for the floor space index. So that's a really good development for the real estate sector also.
Okay. Srini, your thoughts? Do you think together, with both ECB relaxations and bank financing permissions given, at least an initial okay, banks with foreign branches will be at an advantage? Is the complex of rules good for banks and India Inc.?
No, I think first looking at the banks, I think it's good for foreign banks. I don't think so. Indian banks will participate.
What Indian banks with lots of foreign branches like BOB, SBI?
I think the NIMs are so low. If you look at they are BBB entities and they borrow dollar money at almost close to rates which India Inc. will also borrow in terms of when they are BBB or BB. Okay. So the NIMs on these transactions for Indian banks is going to be very well. So therefore, that's why you don't see Indian banks expanding actually dollar balance sheets as much. And if you see that as a percentage of their global balance sheet, I think offshore balance sheet is not growing as much. It will not be growing because the NIMs offshore assets are much lower. So therefore, I would think it's as Zareen was saying, it all helps for India Inc. Gives them more flexibility in diversifying their sources of finance and gives foreign banks an opportunity to lend to them at good rates. So I would think it's a big plus for foreign banks. I don't think it's as much a gift for Indian banks as much as foreign banks.
But certainly for India Inc.
India Inc. It benefits. I think you should look at ECBs as diversifying sources of finance. If you look at guys who are borrowing ECBs, are primarily NBFCs over the last few years, where they need all the money they can get, whether it's ECBs, whether it's bilateral loans, club loans, whether it's bonds. I think they've been big borrowers. Otherwise, people who have dollar earnings, I think, are the ones who access ECBs because cost of funds becomes lower. Otherwise, for people who have a pure rupee P&L with revenues and costs in rupees, rupee financing has been cheaper, and you would resort to ECBs only when rupee financing is not available to the extent you need. and therefore things don't change much for them. So it's mainly for people who want to diversify away from Indian sources of finance, as well as access banks who otherwise are not here.
Okay. Well, winding up thoughts from both of you, and pluses and minuses, I would like to hear from you. Zareen, is this a sea change in regulatory attitude? Will we see an inflection point for banking business? First, the positives.
I think it's very positive because it opens up a gamut of areas where you can bring ECBs, InvITs, REITs, which hitherto were not able to borrow. So I think the whole spectrum of industries and borrowers is really widened. Secondly, it allows, if you read the guideline, it even allows an NRI to lend.
Yes.
So, it's really opening up from the borrower side and the lender side, a whole new segment of people who can come to the market. Just one thing I wanted to mention, that for foreign banks, while the cost of funds is low, but the India risk-weighted assets becomes higher. So for example, a foreign bank where the parent is, say, AA rated, actually India becomes BBB. And to that extent, the risk weight at the parent level is higher.
It's going up, yeah.
Premium that you need, while your cost of funds may be low, your risk premium that you need for lending to an Indian corporate is always higher. To that extent, the Indian banks also, for Indian banks, a AA corporate will be, the spread will be much lesser than for a foreign bank lending to a AA rated corporate, because the risk premium is higher.
Okay, so you'll be able to keep lower risk weights compared to the foreign bank. Srini, I wanted your opinion on the entire complex. In the last 6 months, several things have happened. More foreign interest in Indian banks, acquisition finance, ECB. Your comment on the whole thing, and also the negative. Foreign banks did worry when we had the last financial crisis. So, should the Reserve Bank and the authorities be a little wary? Will we see through the downturn as well?
No, I think this is a good start. I don't believe this is any inflection point. This is just testing the waters, I would believe. I would believe that the banks have learned a lot over the last 10 years in terms of the cycle they've gone through. Banks have been a lot more risk averse than what possibly even the regulators anticipate. That's why you see corporate lending, in spite of the cycle having fully played out. Yeah. I don't see much pickup in corporate credit. So the thing is that banks will be tipping their toes, not jumping in. Okay. This is just a starting point, not necessarily inflection point, which shows bank credit growth just sort of skyrocket from say a single digit level. So I would think it's a good starting point, but banks will be cautious. Banks will take their time in terms of trying to build their own risk management capabilities as far as these are concerned. The last thing they would want is to repeat of the previous cycle. Okay. And therefore, I believe that it'll be a slow turn up. And as I said, I think the idea is that banks are better credit intermediaries than NBFCs. NBFCs have been growing faster. And I think the ability that and the sort of progress banks have made, capabilities they have, I think gives RBI the confidence that they can, to some extent, go into areas which have been sort of explored by NBFCs before. Okay. And that confidence is what is reflected in the sort of regulations.
Got it.
So I wouldn't say negative. I think from the capital market perspective, the only thing is, I would still think on the retail side, when there's a bit of exuberance, whether timing is something which could have been different. That's the only thing you can feel about.
Thank you very much, Srini and Zareen, for joining me and helping us understand these changes. We wrap up on economics. On that note, more news and headlines await for you.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. It's a day of steady gains as the Lal Street regains all of Friday's losses. The Nifty and the Sensex gain over 0.5%, led higher by large caps like Reliance, SBI and HDFC Bank. The Nifty crosses 26,000 in intraday trade but ends lower. Major relief for Vodafone Idea. The Supreme Court allows the centre to reconsider the cash-strapped company's AGR dues worth 93,000 crores. Observes that the matter is within the policy domain of the centre and in the larger public interest, merits reconsideration. The stock hits a one-year high. The US President Donald Trump finalizes a crucial trade-related pact with Malaysia, Thailand, Cambodia and Vietnam in the first leg of his South Asia trip. Also signs an expanded truce between Thailand and Cambodia that he helped broker in July. China presses for stronger economic ties and more open trade with ASEAN nations. Trump says Washington and Beijing are poised to come away with a trade deal ahead of his scheduled meeting with China's Xi Jinping later this week. Adds he could sign a final deal on TikTok as early as Thursday. Treasury Secretary Scott Bessent says both nations have reached a substantial framework and 100% tariffs have been averted. The Indian government plans to hike FDI limit in PSU banks from the current 20% to 49% as per Reuters, citing sources. This comes on the back of renewed foreign investor interest in the private banking space. RBI issues draft norms for capital market financing by banks with guardrails, caps acquisition financing to 10% of the bank's core Tier 1 capital, says acquirers must be listed, show profits for the past 3 years, adding that the acquisition must be for long-term value creation and not short-term financial gains. The Lal Street gears up for another week of billion-dollar IPOs led by Lenskart and MTR Foods parent Orkla. Lenskart 7,200 crore rupee IPO opens this Friday. The company targets a market cap of 69,500 crores. The management tells CNBC-TV18 that 4,000 stores by 2030 is mission possible. Reliance and Meta incorporate their new AI joint venture. Name it Reliance Enterprise Intelligence Limited. Both companies have jointly committed an initial investment of 855 crores. Reliance will own 70% stake in the joint venture. Outgoing Chief Justice B.R. Gavai recommends Justice Surya Kant as his successor. Justice Kant was elevated as the judge of the Apex Court in May 2019. If approved by the Law Ministry, Justice Kant will serve as the Chief Justice till February 2027, a tenure longer than that of his predecessor. Well, let's head straight to the day's market action. It's been a strong start to the week after the Lal Street regained all of Friday's losses. The Nifty and the Sensex gained nearly 1%, led higher by large caps like Reliance, SBI and HDFC Bank. The Nifty crossing 26,000 in intraday trade, but ending mildly lower, 25,966, still higher by about 170 points, 560 higher on the Sensex. The Nifty Midcap 1% higher, and similar story playing out for the Nifty Bank, which added about 0.5% as well. So strong start for our markets. And gold prices, meanwhile, continue to fall as the broader sentiment in the bullion market turned cautious. This after progress in the US-China trade negotiations dampened demand for safe haven assets. Profit taking and a stronger dollar also weighing on prices. Silver also followed suit after 2 months of gains. Now, the Finance Ministry's monthly economic report highlighted that India's economy has continued to gather strength despite global economic uncertainties and trade disruptions. And this was largely supported by robust domestic demand, strong activity and contained inflation. The report also said that global economic activity remained steady over the past few months despite adverse trade policy disruptions. The report further highlighted that lower GST rate is expected to support a positive demand outlook and stimulate consumption and investment across sectors. But the top story this evening, major relief for Vodafone Idea after the Supreme Court allowed the centre to reconsider the cash-strapped company's AGR dues worth 93,000 crores. Now, the Apex Court observed that the matter is within the policy domain of the centre, adding that the larger public interest merits reconsideration. Remember, Vodafone Idea's AGR dues currently stand at over 93,000 crores. The stock hit a one-year high after the order was pronounced. Ashmit joins us now with more on the order from the Supreme Court, but more importantly, the options before the government. Big relief coming in there for Vodafone Idea, Ashmit.
Well, it indeed does. Vodafone Idea knocking on the doors of the Apex Court on multiple occasions, finally getting a positive response. Bear in mind that this time the government was batting in their support. The government was saying that, look, there is a complete change in facts and circumstances. The government said that we now hold 49%, and by virtue of the government stake, that necessarily means there's public interest involved as well. Went on to say that over 20 crore customers will stand to be impacted if Vodafone Idea goes south, and also said that this will also affect the competition in the larger telecom sector. Now, all of these aspects weighing on the minds of the Supreme Court saying that, look, this is a policy matter. We do not want to intervene. And on the contrary, the Supreme Court saying we want to give the centre a free hand. Given that it is a policy matter, the centre should be the one to decide the future course of action, to any relief that needs to be worked out, any structure that needs to be given as far as the AGR issue is concerned, legacy issue going back a couple of decades here. The centre finally now being given a free hand in terms of deciding in what shape and form they want to grant relief as far as Vodafone Idea is concerned. One aspect, one caveat to bear in mind, the Supreme Court also pointing out that they're granting this relief, they're granting this blessing on account of the peculiar facts and circumstances of this particular case, which of course then raises the question that will it also be applicable for any relief that is to be granted to Bharti Airtel as well. Clearly the ball is in the DOT's court. They will now have to take a call on what shape and form the future course of action will take. The Supreme Court saying we will have none of it. The DOT, the Supreme Court opening up, freeing up DOT's options.
This is in the policy domain of the union. And there is no reason as to why the union should be prevented from considering the matter. So, to my mind, not necessarily it would apply only to Vodafone, but it could apply to the other telecom operators as well. Because if it is a policy decision, it should apply to everyone.
Once the government takes a policy, then they'll have to apply it uniformly to other telecom companies as well. They can't pick and choose. And therefore, I think there's a very good order from the industry point of view. All telecom companies will stand to gain. And Supreme Court will not interfere in this matter, but has really given a free hand to the central government. The ball is now in the central government's court.
Well, relief there for Vodafone Idea. Of course, the contours of the relief yet to be worked out. The big global story this evening. President Trump has said that Washington and Beijing are poised to come away with a trade deal ahead of his scheduled meeting with China's Xi Jinping, which takes place later this week. Now, the Treasury Secretary Scott Bessent has said that both nations have reached a substantial framework and 100% tariffs have been averted for now. Take a look.
Very interesting couple of days. We have Japan, and then we have South Korea, but we have China coming, and it's going to be very interesting. I have a lot of respect for President Xi, and we are going to, I think we're going to come away with a deal, but I really feel good. Our country's doing so well economically. It's doing so incredibly well. The Democrats should let it open. I guess they don't do that because it's doing so well. It's too bad, but on the, the macro scale, it's not having that kind of effect. We just want people to get paid. We think it's very unfair.
So this was the fifth meeting that I've had with my Chinese counterpart, the Vice Premier, Hu Lifeng, and we covered a wide range of issues, and I think we've reached a substantial framework for the two leaders who will meet in Korea next Thursday. So, on the table, the president had given me maximum leverage when he threatened 100% tariffs if the Chinese imposed their rare earth global export controls. So I think we have averted that so that the tariffs will be averted. We also agreed on substantial agriculture purchases for U.S. farmers. We agreed that the Chinese would begin to help us with the precursor chemicals for this terrible fentanyl epidemic that's ravaging our country. So I would say that it was a very good meeting overall.
Well, that's the Treasury Secretary Scott Bessent there. The U.S. has finalized deals related to trade and critical minerals with 4 South Asian countries that took place over the weekend. Now, the agreements were signed during President Trump's visits to Kuala Lumpur for a summit of the ASEAN nations. The Trump administration has said that Malaysia and Cambodia have signed trade deals, adding that the countries have agreed to cut tariffs on a variety of U.S. exports. The deals also facilitate U.S. access to critical minerals. The countries will in turn receive certain exemptions from Trump's so-called reciprocal tariffs. tariffs. The White House also said that Thailand and Vietnam have agreed to frameworks for trade deals. Both countries agreed to cut tariffs on nearly all U.S. goods and reduce regulations on American companies. In return, the U.S. has agreed to identify goods it would exempt from its tariffs on the countries. The president also presided over the signing of a ceasefire deal between Thailand and Cambodia. CNBC's JP Ong explains the importance of these agreements.
This was probably one of the more important or more substantial ASEAN summits we've had in years, actually. Also because it seems that that framework or that groundwork that was laid to try and pave the way for a potential meeting between Trump and Chinese President Xi Jinping was laid out here in Kuala Lumpur on the sidelines of the ASEAN summit. And also because they did ink a number of trade deals, as you mentioned, with 4 ASEAN countries, the likes of Cambodia and Vietnam, saw their trade deals finalized. Thailand, seeing a framework that has been laid out that will mean that they were this close or very close to actually finalizing that trade deal that will see them getting a tariff of about 19%. Arguably the most important or the most interesting one was the one that the U.S. signed with Malaysia, not just because Malaysia is the host of the ASEAN, holds the chairmanship of ASEAN this year, but also because there were key elements, there are key components in that particular agreement that involved rare earths, establishing a pipeline of rare earths between Malaysia and the United States. According to Malaysia, they did some initial studies and said that there are indicative potential resources or rare earth resources that could be as much as 16 million metric tons if this is indeed verified, which means there's a huge opportunity for Malaysia to actually court some of these investments and also take a bigger role in the rare earth industry. And so far, they have actually cemented at least an agreement to potentially supply these to the United States. But keep in mind, Malaysia is also talking with the Chinese to possibly bring in rare earth investments into Malaysia. So again, this puts them in a very interesting position because there's a lot of opportunity for them in the rare earth space, but also a lot of steps and a lot of miles they have to travel, and also a lot of relations that they'll have to maintain between the United States and China, who are competing in this very, very critical sector.
Well, the JP Ong there reporting from Kuala Lumpur. President Trump has once again claimed that India is going to stop buying oil from Russia. Speaking to reporters yesterday, Trump reiterated that India will completely cut back its Russian oil purchases, while China will cut back very substantially.
Will you discuss purchases of Russian oil with Xi Jinping? Are you worried about the Chinese buying Russian
oil? I may be discussing it, but you know, China's, I don't know, you probably saw today, China's cutting back very substantially on the purchase of Russia oil, and India's cutting back completely, and we've done sanctions. Thank you very much, everybody.
President Trump reiterating his claim on Russian oil. President Trump also met Brazil's President Lula da Silva on the sidelines of the ASEAN summit in Malaysia. Lula termed the talks as constructive. This was the first time the two leaders met face-to-face since the U.S. decided to impose 50% tariffs on the country. Remember, like India, Brazil has also been hit with 50% tariffs. President Trump said that both nations should be able to make some pretty good deals. He added, and I quote, "We've been speaking and I think we will end up having a very good relationship. We have always had a good relationship. I think it will continue," end of quote. Meanwhile, Brazil's president said he had a great meeting with President Trump. They've agreed that their teams will meet immediately to advance solutions to the tariffs and sanctions against Brazil. Lula also said that President Trump guaranteed that the two leaders will make a deal. Prime Minister Modi said that the 21st century belongs to India and the ASEAN nations. Addressing the summit virtually, the Prime Minister emphasized India's vision for a shared, inclusive and sustainable future in its partnership with Southeast Asia. He also reaffirmed India's steadfast support for its ASEAN partners and announced 2026 as the ASEAN-India Year of Maritime Cooperation.
Friends, 21वीं सदी हमारी सदी है, भारत और आसियान की सदी है। मुझे विश्वास है कि आसियान कम्युनिटी विजन 2045 और विकसित भारत 2047 का लक्ष्य पूरी मानवता के लिए एक उज्जवल भविष्य का निर्माण करेगा।
That's the Prime Minister addressing the ASEAN summit. India and China have resumed direct commercial flights after 5 years. Indigo's first flight took off from Kolkata to Guangzhou, carrying 180 passengers. The External Affairs Ministry has called this move a gradual normalization of bilateral exchanges. Chinese officials said that this was a very important day for India and China's relationship. Remember, the government had suspended flights to China in 2020 after the Galwan clashes, and now the resumption of flights taking place. President Trump arrived in Japan's capital of Tokyo today. This is the second stop on his three-country Asia tour. He met with Japan's emperor at the Imperial Palace amidst heightened security due to protests in the city. Speaking to reporters when he landed, Trump said he was excited to meet Japan's new Prime Minister, Sane Takaichi, tomorrow. The trip comes amidst a $550 billion investment pledge from Japan, which is in exchange for easing U.S. import tariffs. External Affairs Minister S. Jaishankar met U.S. Secretary of State Marco Rubio on the sidelines of the ASEAN summit. Both leaders discussed bilateral ties along with key regional and global issues. The meeting comes amidst the ongoing trade talks between both sides. We will head to a break, but up next, Reliance and Meta incorporate their new AI joint venture. Name it Reliance Enterprise Intelligence. That and more when we get back. The Reserve Bank of India has issued draft directions opening the window for banks to finance acquisitions by Indian companies in India and abroad. However, these directives come with certain guardrails. The new capital market exposure framework rules will be effective from the 1st of April. Ritu's here to take us through the details. Ritu, take us through what the implications will be of these new rules.
The Reserve Bank of India has finally put out draft rules on capital markets and acquisition financing for banks, setting clear limits and safeguards. So a bank's total exposure to capital markets, both direct and indirect, is going to be capped at 40% of the Tier 1 capital. Within that, the direct exposure, which includes investments and acquisition finance, cannot exceed 20%. And specifically, acquisition finance is going to be capped at 10% of the Tier 1 capital. Now, on M&A financing, for the first time, RBI is allowing banks to lend to Indian companies that want to buy stakes in other companies in India or abroad. But RBI says these deals must be strategic and aimed at long-term growth and not short-term profits. To qualify, the acquiring company also has to be listed, have a positive net worth, and must have been profitable for the last 3 years. Also, banks can only fund up to 70% of the deal value, while the remaining 30% has to come from the company's own equity. After the acquisition, RBI says the debt-to-equity ratio cannot exceed 3:1, and the loan must be fully backed by shares of the target company as security. Next, let's also talk about lending to capital market intermediaries. Banks can lend to them only if the loan is fully secured and the collateral actually belongs to the borrower, and there is a restriction where banks can't finance them for proprietary trading or investments of their own. Now, when it comes to IPO, FPO and ESOP financing, banks can lend up to 25 lakh rupees per person, but covering only 75% of the subscription value. Finally, loans against securities for individuals. Banks can lend up to rupees 1 crore per person. Within that, 25 lakh rupees can be used for buying shares in the secondary market. Now, while bankers we've been speaking to have welcomed the move overall, called it a good start, not all their requests have been addressed. So they will seek clarifications, for instance, whether banks can finance foreign companies looking to buy in India, not just Indian companies making acquisitions. Also, the clause on acquiring company being a listed entity, the profitability and the 3:1 debt to equity cap after acquisition has also raised some concerns among bankers, especially for deals that involved distressed assets. Public comments on this draft are invited by the 21st of November, and the final rules are expected to kick in from 1st of April next year.
Ritu, many thanks. Kotak Mahindra Bank second quarter earnings in line with street estimates. Net profit dipped nearly 3%, while net interest income rose over 4%. On an annual basis, the bank's asset quality improved in the quarter on a sequential basis. And staying with earnings, shares of SBI Life surging after the insurer posted a strong Q2 that surpassed expectations. Annual premium equivalent rose 10%, while the value of new business grew 14%. Premiums from new business also up 28%. SBI Life's management told CNBC-TV18 that growth in the second half of the fiscal will be close to 18%. The government has announced that 6 companies have received approvals under the government's electronic component manufacturing scheme. The investment that has been approved for the companies stand at 5,532 crore rupees. Union Minister Ashwini Vaishnav has said that with these approvals, India will save 20,000 crore rupees on its import bill. Eyewear retailer Lenskart is set to launch its IPO on October 31st. The firm is looking to raise 7,278 crore rupees through a combination of fresh equity and an offer for sale. The 3-day subscription window will close on the 4th of November. The price band has been set between 382 to 402 rupees a piece. The IPO comprises fresh issue of 2150 crores and an OFS of 5,128 crore rupees. Lenskart will deploy the capital towards setting up new company-owned and company-operated stores, lease, rent and license agreements, investing in technology and brand marketing.
International continues to be a good focus for the company.
4,000 stores by 2030?
Again, I would say...
Possible?
Definitely. I mean, India has 80,000 eyewear stores, approximately, conservatively. And that Abhishek said, we have 60 stores for 1 million people. We have 20 times more jewelry stores in India. So one would say, can you add at least another 80,000 optical stores as a country? Yes, right? Out of that 80,000, let's see how many Lenskart has.
Well, that's Lenskart getting ready for the Lal Street. And the Lal Street is gearing up for another week of billion-dollar issues. Apart from Lenskart, together 3 companies which opened for subscription this week plan to raise nearly 9,500 crores. MTR's parent company, Orkla India, will raise 1,600 crore rupees via an offer for sale. The company is likely to have a market cap of 10,000 crore rupees. Helmet manufacturer Studs Accessories 455 crore rupee issue will also be open for subscription on Thursday. The company is likely to have a market cap of 2,000 crore rupees, so plenty buzzing in IPO corner. Financial services company PL Capital has appointed Zareen Daruwala as its new Group Chief Executive Officer from the 13th of October. PL Capital is a member of the Prabhudas Leeladhar Group. Daruwala is a veteran banker who previously served as the CEO for India and South Asia at Standard Chartered Bank. She retired recently. Swiss drug maker Novartis has agreed to acquire US biotech company Avidity Biosciences for around $12 billion. Novartis will pay Avidity shareholders $72 per share in cash. This as a premium of 46% of the company's Friday closing price. In a statement, the Novartis said that the deal is expected to close in the first half of 2026. Reliance and Meta have incorporated their new AI joint venture named IT Reliance Enterprises Intelligence Limited. Shares of Reliance Industries rose over 2% in trade. The new company will develop, market and distribute artificial intelligence services in India. Rima is here to take us through the contours of the deal. Rima.
Indeed. So Reliance Industries has launched Reliance Enterprise Intelligence Limited, REIL, which is a joint venture with Meta. Reliance will hold a 70% stake. Meta will have a 30% stake. And the initial upfront committed capex is about $97 million. This ties in with what Mukesh Ambani had to say at the AGM, where he spoke about AI everywhere, AI for everyone. So once again, it goes back to the push that Mukesh Ambani had highlighted about, the broader AI push. But, according to Morgan Stanley, that the $97 million is only the upfront capex. Eventually, the company will be making further investments. They estimate it to be between $12 to $15 billion to build their 1 gigawatt AI data center infrastructure. And the question is, because global tech majors who are in the AI play are commanding such high valuations, once this REIL scales up, what could be the valuations it will command? And I think, and will that have a rub-off on the listed entity, Reliance Industry? We'll have to see how that plays out. Back to you.
All right, Reema, many thanks. Outgoing Chief Justice B.R. Gavai has recommended Justice Surya Kant as his successor. Justice Kant was elevated as the judge of the Apex Court in May of 2019. If approved by the Law Ministry, Justice Kant will serve as the CJI till February 2027, a tenure longer than that of his predecessor. In international news, the United Nations has claimed that Israel is continuing to deny the entry of aid into Gaza. Hamas is working with the Red Cross and Egyptian authorities to find 13 remaining bodies of Israeli captives in Gaza. The Israeli Prime Minister has said Israel will determine which foreign forces enter Gaza as part of a planned international force to secure the ceasefire there. Ukraine has launched a major drone attack on Moscow overnight, forcing Russia to close 2 of the city's 4 airports. Russian forces shot down 2 AT-1 drones but did not disclose the extent of the damage. Kyiv has said that the attacks aimed at destroying infrastructure, which is key to conducting Russia's war in Ukraine. Meanwhile, Russia also hit Ukraine's capital of Kyiv with drone strikes, killing 3 people. And the war continues. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. We've got plenty more lined up for you. Stay tuned. We're back in a moment.
And welcome to Startup Street. I'm Ritu Singh, and with me from the Mumbai studio is Arundhati Ramanan. Here are the key headlines from the startup space. Eyewear retailer Lenskart is set to launch its initial public offering on the 31st of October. The firm is looking to raise 7,278 crore rupees through a combination of fresh equity and an offer for sale. The 3-day subscription window will close on the 4th of November. The price band has been set between 382 to 400 rupees a piece.
Heidgen, a deep tech startup, has raised $5 million in a mix of equity and debt round led by Transition VC with participation from Cloudberry, Pioneer Investments and others. The investment will accelerate Heidgen's efforts to make ultra-pure, cost-efficient hydrogen available directly at the point of use through its proprietary anion exchange membrane electrolyzer technology.
Beyond Next Ventures, Japan's deep tech-focused venture capital firm has announced its investment in Final Layer, an AI infrastructure company. This marks the second investment from Beyond Next Ventures' India One Investment Partnership, BNV's maiden fund specifically dedicated to early-stage ventures for Indian entrepreneurs.
New Life, an R&D-focused performance nutrition brand, has raised $1 million in its maiden seed funding round, co-led by Shubhkam Ventures and Singularity Ventures. The funds will be used for product innovation, enhancing research and clinical trials, and expansion of product portfolio.
Reliance and Meta incorporate their new AI joint venture, name it Reliance Enterprise Intelligence Limited. Both the companies have jointly committed an initial investment of 855 crores. Reliance will own 70% stake in this joint venture. Those are the headlines that we're tracking for you today. In what's brewing, New York-based Unify Apps has just raised $50 million in its Series B funding round that was led by Westbridge Capital with participation from Iconic and others to build what it calls the enterprise operating system for AI. The company, founded in 2023, says it is helping CIOs turn fragmented Gen AI experiments into scalable, production-grade AI systems. Now, Unify Apps claims that it has over 600% year-on-year revenue growth as enterprises are seeking a unified AI foundation. To take this conversation forward, let me welcome Raji Thomas, who has come on board as the chairman and co-CEO of the company. Raji, congratulations on your appointment and thank you so much for your time here on CNBC-TV18. You know, most enterprises are still struggling with isolated Gen AI pilots. Start by telling us how Unify Apps practically helps them transition from experimenting to being AI native, and what does that transformation actually look like inside a large organization?
Thank you, Ritu. Let's level set on the problem. 95% of enterprise generative AI pilots and projects are failing, just producing zero business outcomes. That's a problem that we're struggling with. And the reason it fails is because the enterprise AI landscape is very different from the consumer AI landscape. We're all great users of ChatGPT, but when you try to apply LLMs to an enterprise, it fails because number one, it can't find the data. The data is stuck in siloed systems, hundreds and thousands of them. And when you find the data and act on it, how do you bring it back to the employees and customers where they're currently doing their business? And that's not a trivial task to solve. And that's what Unify Apps does. We have built a platform that connects to over 1,000 enterprise systems that companies use today, and then just drag and drop capabilities to build AI apps and agents that produce real business outcomes.
Well, you know, Raji, Unify Apps really describes itself as LLM agnostic. Now, in a market where, you know, most startups are tied to one or the other model, whether that is OpenAI, Anthropic, or some other, what is your strategy for staying neutral, and how do you ensure that there is consistent results across these different models?
Well, the key is to make sure that you're using the right model for the right problem. These LLMs are fantastic. They're primarily built and trained on publicly available data. When a business is using it, let's say you're a bank, you really want to tune it up for what your data and your needs are. So the bank will need models that are tuned, and they need to use all the models that are available. And that's why we take an LLM agnostic approach, where you can create a workflow of 20 steps, and 15 of those could use different models that are perfectly suited for what they're supposed to do for that task.
Okay, let's get to that funding then. The $50 million check that you've got. How are you going to deploy it? What will be the focus area? And how big do you believe this market for AI operating systems can become over the next 5 years, which, this capital is going to help you get to?
Well, we have three primary uses of capital that we're going to use it for. Well, number one, we're going to use it to expand the platform. The AI transformation is just starting in the enterprise, and it's going to play out over the next 5 to 10 years. So we are building fast and furious and hiring as quickly as we can on the product side. Number two, we want to expand into new markets. So we're opening up Europe and doubling down on the US, and it's just present salespeople in these markets to sell and service customers. And lastly, we're building a go-to-market foundation that would allow us to build a very large company. The market for AI transformation in the enterprise is going to be very big. The easy way to think about it is it's going to be bigger than the web transformation. And as you know, the digital transformation projects is still underway 30 years later. Every piece of technology that was built before AI is going to get redone for AI.
That's quite a big market that you're talking about there. If you'd like to put any numbers to it. And also, you say the company's grown about 600% year on year, but of course, this is coming on a smaller base, and it is serving global enterprises across sectors. Just give us a future trajectory you have in mind. I mean, is this 600% kind of a growth sustainable? How do you expect it to play out? And, what will really be the bigger drivers across these geographies you're planning to expand to? You said Europe and going deeper in the US as well.
Well, I've been doing this for 30 years across multiple companies. I've never seen market demand and from across geographies like this. Everybody understands the power of AI and the need to transform to become AI native, which is reimagining the business with AI, and the tools are simply not there. So we're on track to grow somewhere between 600 and 900% year on year this year, and I believe it's sustainable for many years to come. So the key is to put in the foundation of go-to-market, of marketing, selling, servicing, and taking care of customers in a way that we don't have to go back and revisit these as we scale up.
All right, sustainable for many years to come, a 600% kind of a growth rate. But Raji, before we let you go, since you've just taken on this new position at Unify Apps, just tell us briefly how this dual CEO role is going to work. Of course, you're also the chairman. And what, to your mind, as the new leader, should be the top priorities for the company?
We've done very well. I'm going to be focused on strategy and go-to-market and all the stuff that company needs externally, while Paviter is going to be very focused on building and executing and delivering against this vision that we've set for ourselves, which is very ambitious. And so this is going to be something that we've done very well and we enjoy doing.
Well, Raji, if I may add, quickly in terms of competition, where you see that and what your moat is going to be. I guess what I'm trying to ask is what your architectural, breakthrough really is that is letting you solve for this unique problem you've identified.
Let's give all the companies a lot of credit for what they're doing. Every enterprise software company today is relabeling themselves as an AI company. We think of those as functional or vertical AI solutions. People are going to bring AI to whatever they do, customer-facing systems, marketing systems, supply chain. That's great. What we're advocating for and what CIOs are buying from Unify Apps is a horizontal AI platform that allows all those other platforms to work together and for CIOs to build AI apps and agents across them. So if you are a retail fast food chain, you really want to build an inventory management and forecasting system across your supply chain, across your point of sale, and across your marketing tools. So if you run a campaign, you're not running out of ingredients and having to take the product off the menu. And that's the secret sauce that we bring. We bring three things. We bring next generation connectivity to over 1,000 existing enterprise systems. We bring a LLM agnostic approach, and we bring a complete platform for data.
Well, Raji, there was one more clarification I wanted before we finally let you go. Just for our ease of understanding, could you break down what that is?
Well, what does an operating system do when you buy a laptop or a phone? What it allows people to do is to build apps and take advantage of all the capabilities that the phone brings or the laptop brings and everything else to work with each other and build on top of each other. That's exactly what we do for the enterprise. You can bring your CRM system, your supply chain system, your marketing, sales, financial tools, all in one place, and then transform them, transcend them, build on top of them, because that's what the AI transformation is truly about.
All right, we're going to have to leave it at that, Raji. Thanks so much for your time here today and for answering all of our questions, and we wish you the best with this ahead. Thanks very much.
Thank you, Ritu.
And moving on, Delhi NCR-based Wonderland Foods has raised 140 crore rupees in its first institutional funding round, led by Asha Ventures and British International Investments. Now, the company plans to use the funds to expand its product portfolio, strengthen its distribution, and set up a 250 crore rupee greenfield processing facility in Greater Noida, a move that will create over 1,000 new jobs, most of them for women. The investment marks a big step in Wonderland's growth journey and reflects rising investor confidence in India's fast-growing branded dry fruits and nuts segment. Joining me now to discuss this further, Abhinav Gupta, the Managing Director of Wonderland Foods, and Amit Mehta, the Managing Partner at Asha Ventures. Gentlemen, thank you so much for taking time out and being here with us on Startup Street. Anubhav, let me start with you, right? Wonderland has built this strong brand in the dry fruits and nuts category. Which of your product lines are performing best right now, and what kind of innovations can consumers look forward to? Also, how are you sort of staying ahead of competition? It is intensifying in this space increasingly.
So, hi, thanks for having us here. So, see, dry fruits is originating from our old traditions, where our forefathers and mothers have always told us to have almonds and walnuts and all sorts of nuts in the morning. So the maximum sales is coming from the classic raw nuts, but with the evolving customer needs, with the urban customers coming in, we have seen a sharp increase in value-added nuts and dry fruits, like the flavored dry fruits, the dates and date concoctions. Going ahead, we are looking into adding loads of healthy snacking products, which gives the customer the taste and convenience along with the health aspect.
Sure.
So that's the segment that we're looking for in the future.
All right. And this is Wonderland's first institutional round, right? So how will this 140 crore rupee fundraise accelerate your next phase of growth and product innovation?
So, so we're looking to expand our product portfolio, like I said. So a lot of it is going to be used for new product development. In the new facility that we're coming up, we have a dedicated research and development wing for coming up with new products. We're looking to also increase our presence in the distribution part. We want our products to be available in every part of the country, and also the branding and the marketing side of the brand.
Few things there that you will be spending your funds on. But Amit, let me bring you into this conversation, right? What sort of convinced Asha Ventures to back Wonderland Foods? What stood out about the company's business model, brand, or like the impact potential?
Thank you for having me on the show. While we are broadly bullish about the whole healthy snacking category, I think what stood out for Wonderland was the customer love and strong brand that Wonderland has been able to create over the last few years. Also, the strong execution focus and the capital efficient manner in which Anubhav has grown the business over the last couple of years has been a strong differentiator for Wonderland as compared to some of the other players in the market, and that stood out strongly for us.
Sure. So, you did say you're bullish on the healthy snacking segment, and that is sort of rapidly seeing growth in India, right? So how do you see this space evolving, and where does Wonderland fit within that broader consumer shift?
Sure. So healthy snacking is clearly a secular multi-decade trend, and that trend is sort of bolstered by increasing urban disposable income and massive growth in the quick commerce segment, which our country is witnessing. We think Wonderland is a market leader in the healthy snacking category, and we expect the category as a whole to grow at more than 30% over the next couple of years.
So big opportunity there in that space. But, Anubhav, coming back to you, right? You're setting up this 250 crore rupee greenfield processing unit in Greater Noida that's going to create over 1,000 new jobs. Can you tell us, how this facility will transform your production capabilities and empower women in the workforce?
So, like I said, we are going to change the way nuts and dry fruits and the healthy snacking products are being produced in the country. To start with, we are going to have an additional employment of 1,000 more women workers, unskilled women workers, that will also improve the livelihood of the local families around the factory. Also coming in towards the enhancement of our production capacity, we are going to implement state-of-the-art technology that will make sure that the products are more fresh and crispier when they reach the customers. And the new research and development wing will help us getting new and newer products to the customers.
All right. And can you share how Wonderland's revenues have grown over the past few years and the kind of growth trajectory you're targeting post this fundraise?
So not giving a lot of specifics, but in the last 5 years, we have grown 7-folds. So it's been a 7x journey in the last 5 years. We are growing strong and steady. And we look forward to carry on this growth in the next 3 to 5 years. With the help of Asha Ventures and BAI, two strong partners, I'm sure we will be able to continue with this growth or probably even cross that.
Sure. So 7x growth is what you've been seeing over the last 5 years, and you hope to continue that as well going forward. But, Amit, Asha Ventures focuses sort of on sustainable and inclusive growth, right? So what other sectors are you betting big on? What does the next year look like for the startup ecosystem?
So, as a fund, besides the consumer sector, we are bullish on sustainability as a theme, healthcare and financial sector, which are all sort of sectors where growth is driven by the domestic demand, which is at the core of India's story. And we believe that, the startup ecosystem in India will continue to innovate to cater to the demand of domestic customers. And that's what we want to continue to back as a fund house.
Sure. And, Anubhav, you're currently, if you could take us through your current presence across the country, and how do you plan to grow that further and reach more households?
So currently we are available across the country through all the modern retail chains, quick commerce and e-commerce. Going forward, we are wanting to grow our presence into the general trade market so that we are available. We want to penetrate into the deeper parts of the country, so that each and every person has access to our products.
So you want to go deeper into the country. Which sectors in which part of India is doing the best for you at this point, where you're seeing the most amount of demand?
So obviously metros leading the front, but in the last couple of years, we have seen the tier 2, tier 3 cities performing really, really well, especially with e-commerce and quick commerce becoming really strong. The convenience factor has really kicked in the tier 2, tier 3 cities. And we have seen tremendous growth in those parts of the country as well now.
Sure. And quickly, before I let you go, you've already built a strong impact footprint by employing mostly women across your facilities, right? So what are some of the key initiatives that support their training, growth and long-term inclusion?
So, in our factory, we have regular hygiene training. We have a crèche facility, so women workers who have kids, so that they can just get their kids and they can be in the crèche while they can work in the factory. So there are things like this that we promote, and it's easier for them to come and work and at the same time take care of the family.
Sure, absolutely. Great initiative there. All right, Anubhav and Amit, thank you so much for taking time out and being here with us on Startup Street.
So much for having us.
Okay, we have a lot more lined up, but don't go anywhere. We will take a short break. Up next at Salesforce's annual flagship event, Dreamforce 2025 in San Francisco, the spotlight will be firmly on AI and its growing impact across global markets. We bring you an exclusive chat with Arundhati Bhattacharya of Salesforce India, who discusses India's role in the company's growth story.
Welcome back. You're still with us on Startup Street. At Salesforce's annual flagship event, Dreamforce 2025 in San Francisco, the spotlight was firmly on AI and its growing impact across global markets. In an exclusive conversation with CNBC-TV18's Aishwarya Anand, she caught up with Arundhati Bhattacharya, the chairperson and CEO of Salesforce India, to talk about India's surging role in the company's growth story, new AI investments, and what the big Agentic Force 360 launch means for Indian enterprises. Take a look.
India is considered to be like one of the fastest growing markets for Salesforce, right? Last year, you've clocked revenues upwards of 9,000 crores. So I want to understand that what role today do you think India plays in Salesforce's global AI strategy?
Today at 13,000 plus, only about 1,000 people are in sales and distribution.
Yeah.
The rest of them, about 3,000 would be in delivery. Okay, so that still leaves 9,000. Of which most of them are in products, are in engineering, are in R&D. So to that extent, there is a lot of innovation coming out of India. However, most of our teams, they work across the globe. Whether innovation is coming out of India, 100% it's coming out of India as well. But is it coming out of India alone? No, not really. But having said that, our engineering talent in India is very, very important to the entire way that Salesforce has been innovating, and it will continue to remain so.
Salesforce has invested nearly $18 billion in San Francisco and has made huge investments in other parts of the countries as well. So when we talk about R&D and the kind of investments that's required in India, what is the plan of action on that front?
So, you know, I don't have the number for that, really speaking, but consider the fact that 5 years back when I had come into the country, we had only 2,200 people.
Yeah.
Okay. Today we have more than 13,000, and actually it's quite appreciably more. And then we've just done another acquisition, and those people will be joining us too. So that will be close to 1,500, 2,000 people that will be joining us there. So, you know, organically and inorganically, we have grown multiple times, okay? So there is obviously a fair bit of investment that we have done. Besides that, we used to have just one office in Hyderabad, which was our center of excellence. Today we have 6 offices, and probably we will be having one more, you know, on account of the acquisition. On the other hand, we've also declared a tower in Bangalore, which will be available for our use sometime by December of next year. Okay, so if you look at all of it, the investment in India has been solid. And it is going to continue because that's the way we intend to grow.
Talking about one of the recent developments that has happened at Dreamforce has been Agent Force 360. So are there some early pilot numbers or traction that you're seeing? What is the adoption like in India right now? Could you shed some light on that?
So, most of the clients that we have made presentations to them. We have shown them what we can do by increasing their productivity, their efficiency. And there are all kinds of agents, some can give you quantitative measures, some can improve the qualitative measures that you are tracking, but there is a ROI attached to every one of these initiatives. Number of them are in the pilot phase. A few of them have gone live in production as well. And those that are in production, by the way, are extremely happy about it.
Yeah.
Now, we will be doing a Dreamforce to you in India very shortly after this. I think there have been developments that have been declared over here, things like the agent builder, and we hope to bring them all together and showcase to our Indian clients.
So that does bring me to this question, which is like India has its own set of problems, right? We talk about, the diversity issue. We talk about data quality, regulatory frameworks. So when we talk about global products like, Agent Force 360, are you localizing them for customers there? And not just tier, and I'm not talking about the top tier customers, okay? I'm talking about the SMBs as well.
Whatever are the regulatory issues, we will be compliant to them.
Yeah.
We are already compliant to
Data
GDPR.
protection bill is almost about to come.
Yeah,
So
exactly.
it'll
But
raise
we
a lot
are
of
compliant to
issues,
GDPR.
Correct.
If you are compliant to GDPR, the hope is that we will definitely be able to comply with DPDP.
Correct.
Okay, when it comes. We already know what could be the framework or the outlines, and we know that we fall within those outlines. So that's a non-negotiable. I think the SMBs at long last can aspire to do what the enterprises have been doing, because today we are able to provide them a platform which gives them digital labor. What are we doing in order to localize things? Localizing, I think one of the biggest things that we need to do is the voice. Because there are so many languages in India, and it's not pure languages either. Something like English is a mixture of languages, and we need to cater to that as well. So we have been doing a lot of work on voice, and that's something, while it has been GA over here, a lot of the local languages will get added in the forthcoming few months.
Well, lots to look out for from Salesforce in India. But moving on, eyewear retailer Lenskart is all set to launch its initial public offering on the 31st of October. The firm is looking to raise 7,278 crore rupees through a combination of fresh equity and an offer for sale. Now, this 3-day subscription window is going to close on the 4th of November, and the price band has been set between 382 to 402 rupees a piece. The IPO comprises of a fresh issue of 2,150 crore rupees and an OFS of 5,128 crore rupees.
International continues to be a good focus for the company.
4,000 stores by 2030?
Again, I would say...
Possible?
Definitely. I mean, India has 80,000 eyewear stores, approximately, conservatively. And that Abhishek said, we have 60 stores for 1 million people. We have 20 times more jewelry stores in India. So one would say, can you add at least another 80,000 optical stores as a country? Yes. Right? Out of that 80,000, let's see how many Lenskart adds.
Amazon has surpassed its $20 billion milestone for e-commerce exports from India ahead of its 2025 deadline. The company aims to hit the $80 billion target by 2030. Speaking to CNBC-TV18, Srinidhi Kalvapudi, head of Amazon Global Selling in India, has said that the company's seller base has grown 30% in the last 1 year. He added that the USA is still a dominant market for Indian exporters on the company's platform. Take a look.
We continue to see a lot of interest. For example, our seller base has grown by around 30% only in the last 1 year.
When it comes to
right?
US?
Across, right? And the second point is that we are also present across 18 plus marketplaces, via which sellers can actually reach out to 200 plus countries, right? So that's how I would look at it. So yes, US continues to be dominant, right? But our access to our sellers and brands is across 18 plus marketplaces.
All right, on that note, it's a wrap on this edition of Startup Street. Thanks very much for tuning in, but stay with CNBC-TV18. More news and updates will continue on the other side.
are trying to communicate something, I better engage you. If I don't engage you, then I'm talking to a wall. हर घर चुपचाप से ये कहता है कि कोई आजाद देशवासी यहीं पे रहता है. It's was written from here. So I think these are things that one would remember always.
कौन इस मकान में अपना घर बसाता है? हर घर चुपचाप से ये कहता है कि अंदर इसमें कौन रहता है?
India is a funny country. Numbers don't show you everything. There is a heart and the number which has to be matched.
The heart of incredible India, Madhya Pradesh.
What is the story behind this mustache?
Number one story is that I keep with the times, so it's totally organic.
Do you feel कि यार बस हो गया अभी नहीं कर सकते?
Why am I thinking of leaving? Otherwise I should leave. It's my place.
नया सेंटर शॉक च्युइंग गम हिला के रख दे.
I think I get it from the people of India. I see so much of energy around me. I think it's just one life, Shireen, and let's make the most of it.
One life and make the most of it. This is Remembering Piyush Pandey, a special show where we pay our tributes to a creative genius, a cultural storyteller, a visionary who changed the grammar, the soul of Indian advertising, and more importantly, believed that advertisements must touch hearts and souls. Padma Shri Piyush Pandey, the iconic ad filmmaker, passed away earlier this morning at the age of 70. Born in Jaipur in 1955, he began his journey far from the boardrooms of big agencies. In fact, he dabbled in cricket, under 22 in Rajasthan, tea tasting and even construction before finding his true calling. In 1982, as a 27-year-old, he joined Ogilvy India and over the next 4 decades would revolutionize how brands speak and India listens. More importantly, he just did not make ads. He crafted stories rooted in our everyday lives, from Fevicol Ka Jod to Kuch Khas Hai from Cadbury. His work just didn't sell products. It became a part of India's cultural fabric. As a wicketkeeper batsman who represented Rajasthan in Ranji cricket, Piyush had a strong grip over his understanding of the Indian society. We mourn his passing, but even more, we celebrate his legacy that will live on in every brand story that is ever told from India. As he often said, I don't write ads, I tell stories. We here on CNBC-TV18 gather to tell his story. And who better than the people that we have today to tell that story? Amitabh Kant, who's the former CEO of the Niti Aayog, a good friend of Piyush Pandey and his batchmate at St. Stephen's College. Along with him, Arun Lal, former Indian cricketer. Piyush had earlier mentioned that it was his friend Arun who pushed him towards advertising. In fact, Piyush first went into tea tasting because of Arun Lal as well. We also have ad guru K.V. Sridhar, who we all know as Pops, and our managing editor Shireen Bhan, who's over the years conducted multiple interviews with Piyush Pandey, also wrote a blurb for his book. Thanks a lot, lady and gentlemen, for joining in. Well, let's start with Mr. Kant first. You were his mate in St. Stephen's. Over the years, what did not diminish was his zest for life. If you had to remember Piyush through a few moments, what would they be according to you?
Firstly, Piyush was unique because he captured really the heart and soul of India. Before he got into the world of advertising, the world of ad was all about nuanced English. The thinking process was all anglicized. When he got in, he really turned it upside down. And he never aped the West. That was what was unique about him. Secondly, I've never seen such great clarity of mind in a creative person. There was no clutter. Thirdly, I thought Piyush was unique because he never believed in research. He never believed in going back to the consumer. He believed in absolute hardcore instinct of the creative man. And to that extent, he was a creative genius in many ways. Fourthly, when I started working with him on the Incredible India campaign, I was a pretty young officer, but he taught me this KISS principle. keep it simple and stupid. And that is what really made him unique. This entire shift from anglicized to thinking from the heart of India, that was unique. But Piyush was also unique in many ways because he wasn't actually from the world of advertising. He started at a very low level in O&M. And he went on to rise and rise and rise to become the creative head of Ogilvy and Mather worldwide. I mean, nobody has had this impeccable rise for a man whose thinking process was in Hindi to become the global head of the largest advertising company in the world. That is what made Piyush Pandey the most unique advertising man in the world.
Right, Mr. Kant, as Piyush was a great storyteller, we remember him by some of the stories. Let's go across to Shireen. Shireen, you've had multiple conversations with him. We've had the, pleasure of listening to his insights every now and then. And his famous line, stop looking into the computer for data because upar dekhoge to duniya dikhegi. That instinct that Amitabh is talking about. Could you narrate a few stories that stay with you?
Well, Mangalam, today is a terribly awful day, but it's also a very personal loss for a lot of us. And for me particularly, I remember meeting him for the very first time, maybe about 20 odd years ago. I was a young reporter. There was no reason for him to spend the kind of time that he spent with me, to treat me in the manner that he did. I think Maya Angelou's words that people will always remember how you made them feel stands so true for Piyush Pandey, because he made you feel like you were the only one in the room that he was talking to. He made you feel special. He made you feel seen and valued. And over the course of the last 20 years, we've had many occasions to do interviews together, many to mark his milestones. We've got that clip of him at Cannes where he was being celebrated. And of course, he's been with us through so many of our events. I remember him being at the India Business Leader Awards when we were honoring Amitabh Kant, and I called him and I said, sir, will you come in and surprise Mr. Kant by being up on stage? And he's like, done, partner. And he would always address me as either partner or champ. And, it was always, you could get a call from him at 7 o'clock in the morning, and then he would sort of say, I have an idea, partner, I have an idea, champ, and then regale you with the ideas that he had. So he was, he was so much more than just an advertising man. And I think what was perhaps the most unique quality about him is that he understood people. He understood relationships, and that reflects in every single campaign that we've seen. Why is it that these campaigns have touched hearts, are timeless, are almost immortal? Is because he understood people. He could make that connect with people. And, to Mr. Kant's point about moving away from the anglicized world of advertising to really the heart and soul of Indian advertising in Hindi, and bringing in Hindi and the idiom of Indian culture into advertising. I think, as he said, that we've got our culture is our biggest USP. We have stories, that go over 2 continents, and why should we not celebrate that? Why should we not honor our own legacy and our own culture? And that's why I think he had his storytelling was so impactful, because it really connected with India at its very core. There's so many more stories, Mangalam, to tell, but, I usually never come onto our shows as a guest, as you know, but this is an exception I made because he was such a special individual.
Take that point, Shireen, and what you said about partner, that's how he called everyone. That was his generosity, because you would remember it and I would remember it as well. The relationship that we had was more mentor-mentee-like. It was only his generosity that he chose to keep us as an equal and call us partner, and that's what he did with a lot of his clients as well. But, the one person he could genuinely call partner is Arun Lal, because we've known each other from childhood, pre-advertising days, the cricket days, and in fact so much so that he followed Arun Lal to become a tea taster, because that's what Arun Lal was doing as well. Arun, a very sad day indeed. But if you could, relive some of the older days with Piyush Pandey. We all know him as this ad genius, creative genius, this, the father-like figure for the Indian advertising community. But there's a lot more to him than that from before as well. If you could share some of those stories.
Oh, well, Mangalam, first of all, let me say that, it might surprise many of you guys who have known him for the last 20 years, that, he, despite his enormous achievements and reaching the pinnacle of his endeavors and career, his career was not his ambition. His ambition actually was a contented life, a holistic life, a happy life, a helpful life. And I think if I had to pick one number one passion of his life was his family and friends. He made the best family member. He, adored his family. He did for his family. His heart beat for his family, as it did for India and Indian advertising. And Shireen before me just said everything about him, because he believed not in numbers. He believed not in planning. He believed not so much in what you've read in the book, but go out there and experience it for yourself. Understand people and actually let your heart beat for whatever you do. So he was best friend. Like me, he was emotional. He couldn't say what he wanted to at times like this.
Completely take your emotion, Mr. Lal. We've all been feeling that lump in our throat through the day, and it's only fair that we celebrate his life. The last time he called me in one of those calls was actually when we were doing a tribute to Zakir Hussain, and he said that throughout the show, Mangalam, I remembered Zakir, and I was shedding a lot of tears. Today, he is meeting Zakir Hussain, perhaps in heaven as well. Let's go across to Pops, KV Sridhar. KV, known as the advertising legend, the doyen, the father figure, the Bhishma Pitama of Indian advertising, if you had to summarize his life in a few stories or your experiences with him, how do you do that?
I think we have been contemporaries. We have known each other for more than 42 years now, which is quite a long time. We came to advertising, I came a little earlier than him, though he's a couple of years older than me, and then we always used to fight who is senior and who is older. And I think, I reflect a lot of things which Arun Lal said. He had no agendas, absolutely no agendas. Life is the only agenda he has. He lived life to the fullest. He loved hearty love, and he always used to say that, ideas come from life. And then he really lived life. And most of insights which he had used in advertising, they all came from personal experiences in life. So one of the things, we always used to talk about those days, people used to search for ideas in a black book, that's where the all the pictures and advertising used to be. And he always used to tell people, ideas don't come from black book, they come from your life. Search your life, you will always have. And he always, found ideas from life. And whenever we met, we have been competitors fiercely. We used to fight for talent, for business. And at the same time, we used to collaborate. We used to work for the same clients. We worked for Cadbury together, Bajaj together, Unilever, from different agencies. While I was fronting from Lintas, he used to come from Ogilvy. So, apart from all that, he's been a personal friend for so many years because of one reason, just for life. And then the value for relationships, and then the value of really honesty and integrity, that I put above everything else. If you're pure and simple, it reflects in every work which you do. And he's just for life, he's a reflection of everything, for instance, there was one particular one, which my mother loved and then called me, your advertising has helped. I said, it is not my advertising, I'll tell. It is done by my friend Piyush Pandey. It was an ad for SBI something. Husband comes and then gives her a gift, and it happens to be a diamond ring. And then the wife says that, what will I do with a diamond? And then the husband says, Hire ko kya pata, pehne wale ki umar, pen le. And then that made my father actually wanting to gift a diamond to my mother. And my mother called me and said, you're advertising. made your father wanting to buy a diamond to me. I called Piyush, and then he had a hearty laugh, saying that, that's what it is. And that is how simple his thinking was. And that is what has inspired. If you were to say, where will all the people who inspire people get their inspiration from? Will come from people like him. He really has inspired not one generation, but several generations of marketers, advertising creatives, above all, a nation feeling proud about itself and discovering their whole cultural role. So his role is quite enormous in everything which he did.
That's such a fulfilling story that you speak about, no malice. And, he would draw from a lot of personal experiences. That story actually happened with his own mother, Prasoon and Piyush. When they earned a little money, they wanted to give a diamond necklace to the mother. And that's where, the line came, Hero ko kya pata, pehnne wale ki umar. These lines are what he's known for, but more importantly, tugging at our heartstrings as well. Mr. Kant, you've worked extensively with him on a lot of the tourism campaigns as well. He's known for, portraying MP in a certain way. I don't remember a better tourism campaign than Hindustan Ka Dil Dekho, or even what he did for the state of Rajasthan or the Gujarat tourism ads, etc. as well. All of that into Incredible India. So if you could, give us some of those experiences that you had with him while working with him on such of these iconic campaigns, some memories that stay with you.
So he had the important thing is that he brought in Desi idioms. He brought in Hindi slogans and, faces which looked very Indian. And he built a vernacular vocabulary for persuasion. So it was not merely tourism. From Fevicol, ka jod hai, tootega nahi, to Cadbury, Dairy Milk, kuch khas hai, or Asian Paint, har ghar kuch kehta hai. All this proves that, authenticity really connects much deeper than imported gloss. And that is what Piyush proved. So when, I'd moved from Kerala tourism to India tourism as a young officer, I got in touch with him, got him to do Incredible India. And I think India has never been captured. It's a large country, bigger than 24 countries of Europe. But he captured it in such magnificence and such beauty. He captured really the heart, the soul, the essence of India. And he brought in the drama of India. And there was no other word which could capture India better than incredible. And then later, he went on to do the Gujarat campaign. And he went on to do the Madhya Pradesh tourism. All of them were remarkable hits. But there are unique, charming stories about him. For instance, there are, Har Ghar Kuch Kehta Hai was actually meant to be said by Amitabh Bachchan. But Piyush had actually said it in his way, and then he went to Amitabh Bachchan. And Amitabh Bachchan said that it sounds much better, much sharper, much crisper in your voice than my voice. And it continued with Piyush's voice. And that was really the drama of it all. And he also, the great thing about Piyush was his instinct, his guts, his humor, all of them grounded to the Indian soil. And that is why he could get really the feel of Incredible India. That is why he could get the feel of Madhya Pradesh as Hindustan Ka Dil. And he could get the real feel of Gujarat tourism through Amitabh Bachchan. He really, really was grounded to the soil of India. And it was, he was, I would say he was one of the greatest. He's probably one of the greatest creative geniuses the world has seen in the field of advertising, but he's definitely the most creative man in the world of advertising in India.
I take that point entirely, and that booming voice. I was lucky enough to hear Har Ghar Kuch Kehta Hai with him next to me, and he's narrating that to me, and that still rings in my ear. Shireen, any other story that really stands out? For me, one of them was when we were doing that conversation with all the masters at Fevicol. It was the 60th year, and Piyush Pandey actually showed us 2 clips of the ad, actually asking us which one do we think is better. One would have had to pinch themselves to know that at some point in life, Piyush Pandey would be standing next to you, showcasing 2 pieces of an ad, and then asking us for our humble opinion on what we make of whether the voice version is good or the musical version is good. That's something that I remember and stays with me.
You know, Mangalam, and what that tells you, and I think that was once again a reiteration of the humility. I mean, I think, you know, Piyush Pandey was a master class in humility. And I so distinctly remember I'd invited him to come and speak to the Young Turks at our Young Turks conclave for one of our milestone years. And what he said to all of these young entrepreneurs, all of these young startups, was don't take yourself seriously. Commit yourself to your passion. Commit yourself to what your purpose is. Commit yourself to your team. Commit yourself to a higher calling. Don't commit yourself to your own individual aspiration, because at the end of the day, if you take yourself too seriously, you're going to limit yourself. You're going to end up constraining yourself. And that's really, I think, how he lived his life. You know, the last book launch that we did was for Open House here in New Delhi a couple of years ago. And, you know, I asked him, I said, what is your trip now in life? And he said, you know, my greatest ambition today is to get young people in this country to think differently, to chase their dreams, to follow their heart. I want to basically be the compass that guides them to live the dream that they've always had. And I think that was what was motivating him. It was not about individual ambition and individual aspiration. It was about the collective aspiration of the organization. And I would dare say, I think India was his greatest love story ever.
India was indeed his greatest love story ever, which is why it was only fair that he spoke about the brands that built India and India on, you know, in itself on the 75th Independence Day. And one could see the reverence. He actually, you know, joined his hands and bowed his head when we spoke about Bharat Mata. And, you know, the OG Make in India sort of man, or the OG Bharat brand ambassador, as we would call him. As we are coming to close on this, as we celebrate his life, and obviously there'll be a lot of moments where we would remember him and perhaps get his wisdom out in our lives as well. Just to wrap this, we have to get the best advertisements that we remember Piyush by. Let's start with Arun. You know, if you could give us some of your best memory with him on a cricket field, and the ad that you love the most, which was made by Piyush.
Okay, Piyush and I were playing a cricket match, actually a Ranji Trophy match. We were both very young into both our teams. He was playing for Rajasthan. I was playing for Delhi, and we were living out of my home. So we went to Firozshah Kotla in Delhi. He was staying with me. My father was posted in Delhi at that time. So the two of us went to play the match together. He was keeping and I was batting. And then, you know, it was one of those games that I was batting overnight 100. And Salim Durrani was bowling. And I thought, you know, this is my chance to take him apart. I'm going to get a double 100 the next day. And the first over, the ball, Salim was bowling down the leg side. So I moved a little towards the leg stump. The ball suddenly turned right across me and just flicked the off bail. And, you know, and I looked at him and I said, buddy, I wasn't sure whether I was bowled or not. And so I looked at him and I said, buddy, and you know what he said? That's the pavilion. So, you know, I said, hey, what's the matter with you? But the fact was that he was a fantastic cricketer. He loved cricket. You know, he equated cricket with life. He was very competitive in whatever he did, but he had a heart, and a heart that was, if you can say it, bigger than he himself. So everything ruled him through his heart. And on the cricket field, just the fact that he was unsettled about his cricket, otherwise he would have gone on to play a lot more. He was a tremendous wicketkeeper and a fabulous, fabulous batsman.
Cricket's loss was the advertising agencies or the advertising industry's gain and India's gain at large as well. Just to wrap this up, KV, you had told us that, you know, your favorite ad of his is the SBI Life ad. But if you had to celebrate him tonight with something, what would that be? That would be a glass of bourbon? Would that be a Cuban cigar? Would that be, you know, a chai, or maybe some kachori? What would that be?
I think, you know, one of the greatest things, you know, which both of us discovered when we were at Cannes in late or mid-90s, when Cannes was not such a popular thing and India never was at the global stage.